Okay, fine. We are good to go then. So before starting with CFR Evo, you just have you just want to have an understanding of what all the chapters which are there and what should be our importance. Because if you observe, good morning Banutej, good morning. Okay, good morning Renuka. So we'll quickly start with the things. So before starting any subject, you just have to analyze how much importance it is holding from the examination perspective. So based on that only, we have to plan our preparation strategy because you cannot do donkey work. If you observe what is the meaning of donkey work is you cannot give equal importance to all the chapters. It is not possible for you to get maximum amount of marks if you are planning in such a manner. So it is very, very important for you to understand what are the important chapters from the examination perspective. So wherein we have to keep more efforts and all, you have to really analyze before starting any subject. Okay? Yes, sir. So before starting with that, I just wanted to highlight the few chapters which I have given here. So through this, our preparation strategy is going to be in this exam oriented batch. Okay? Yes, sir. We all know that our syllabus in CFR will be comprising of few specific Indian accounting standards which are grouped into one category, and there are other sections also which are grouped into other categories. Okay? Yes, sir. So quickly, let us look at the syllabus. So first we are having the basics. From basics, I am not expecting any question. So we will not waste any time with discussing this basics. Okay. If any few basics are required, I will be discussing while solving respective chapter related problems. Then we have few A category indices. Sir, why you have categorized these chapters as A category and B category and C category also, I will explain a little bit shortly. Okay. But first, the main A category standards which we have to focus are A category, and there are other chapters also, A category chapters, which you should not miss. Okay, so first let me give you an overview of what all the A category chapters which are there, and then we will be starting. So the first A category standard according to me is Ind AS 16, which is relating to PPE, which is very, very short standard. You have already have an idea with respect to CMA Inter. So most of the standard is exactly same as in Ind AS 16 also. So this is very short standard and very, very important from examination perspective also. So the second very, very important standard is Ind AS 38, which is relating to intangible assets. Okay, this is also very important. They have been asking continuous question from this standard also. And another super important standard is this Ind AS 36, which is relating to impairment of assets. So according to me, these three standards are the most important standards which a student should never miss. And then comes the next category, which is Ind AS 115, which is a very, very comprehensive standard which deals with revenue from contracts with customers. That is also very comprehensive standard, but our institute is not focusing that much. So we will only discuss whatever the things which are there in our study material, and how much things are important from examination perspective. I am going to cover all those areas. So this revenue also will be an A category standard because we are expecting continuous questions from this in our examination. Then comes this Ind AS 116. Here I have written it B category, but the thing is, it is also equally important as other standards. So what we will be doing is, this Ind AS 116, though we have to discuss this very comprehensively. So that is not possible for me in this exam oriented batch. So what I will be doing is, currently my focus is only on these A category chapters. So then what about Ind AS 116? With respect to Ind AS 116, I will be making a detailed video and I will be releasing it in YouTube. Okay, you can take the complete benefit out of this, but this Ind AS 116 also is very, 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 very important category. Here I have written it as B category, but still if question have asked it, they will ask the very toughest question. Okay, fine. Next, if you observe, we are having Ind AS 102. Other standards are C category only. So now I am not placing any focus on this. Okay, fine. Just a moment. Okay. So yes, sorry for that. It's a little bit emergency, so I have taken. So fine. This Ind AS 102 is also another important standard. So here also I have written as B category, but it is not possible for me to cover this Ind AS 102 also quickly in this exam oriented batch. So what I will be doing is I will be promising that I will be making a separate video for this Ind AS 116 and this Ind AS 102 also. YouTube videos I will be releasing, which are very, very comprehensive, and those are also important from examination perspective. Here I have written B category, but still those are very, very important. Coming to that next section of the chapters, super important are all these chapters from chapter number 14 till chapter number 21. We are expecting a compulsory question in almost all the examinations from all these sections. So it is very, 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 very important for a student to focus on all these areas. We will be covering almost all these areas from exam perspective in this exam oriented batch. So you no need to worry at all. Okay. Valuation of shares, definite question, A category. Financial instruments also, definite question, A category. NBFC also definite question. What they are doing is alternative attempts may they are asking either a question from financial instruments or one question from NBFC. Okay, so this also is totally fine. Business combination, mandatory question. You should never miss this. Okay, many of the students are feeling this business combination and CFS are difficult chapters, but trust me, in this exam oriented batch, your opinion is going to get changed. Okay, this business combination and consolidated financial statements, highest weighted chapters according to me, because if they want to twist any chapter, they may twist. But if they want to twist this business combination and CFS, they cannot do so. Routine questions only they are going to ask. So if you just able to practice some 10 questions from business combination and 5 to 6 questions from CFS, the same questions are going to come in your examination. And compulsory question for this internal reconstruction also they are going to ask. And these theory chapters, recent trends in financial reporting and government accounting also, from this chapter also they are going to ask. Okay, so I just wanted to confirm, are these categorization of A, B, and C are clear for you or not? So please give me a heads up if you guys have understood our approach. So our approach is we will be covering all these A category chapters in this exam oriented batch. Along with this, I will be coming up with a separate video for this Ind AS 102 and this Ind AS 116 in YouTube. Okay, so please give me a heads up if you have understood the categorization of chapters and what all the things which we are going to cover in this EVO. Okay, fine. Yes. Yes, I'm receiving responses. So fine. Now what we'll be doing is, thank you so much for your responses. Yeah, fine. Now what we'll be doing is, sir, on what basis you have categorized these chapters as A, B, and C? Let us try to understand the same basis also. Sir, on what basis I have basically done this kind of analysis is on the basis of past paper examinations only. I have categorized all this analysis. If you look at the screen, I have shared the past paper analysis starting from June 2025 till December 2023 onwards. Okay, this see, I'm not focusing on MCQs currently. MCQs ke liye I'll be coming up with another video on YouTube, so that also will be available. Okay, we are focusing only on descriptive portion. If you check the descriptive portion, 2A, 2B, 3A, these three questions they will be focusing on specific Indian accounting standards. Out of these also, if you observe, whatever the categories which I have, whatever the chapters which I have categorized as A, those only repeating in all the examinations. 16 is there, 36 is there, 115 is there, 16, 36, 102, 16, 36, 38, 113. 113 though they have asked in one attempt, but that is not that much important. Okay, 116, 36, 115. If you observe, whatever the specific Indian accounting standards which I have highlighted, only those specific Indian accounting standards are there in this 2A, 2B, 3A. Fine, yes. So 3B, if you observe goodwill ka calculation or intrinsic value of the shares, they are asking. Maximum cases, they are only focused on this goodwill ka calculation, but some attempt pe they have asked the intrinsic value of the shares also. This is nothing but valuation ka chapter, which I have categorized again as an A category. Okay, sir. Yes. If you observe this 4A, they are mainly focused on financial instruments. Alternatively, they may focus on this NBFC provisioning norms also, which is again making this chapter very, very important. And 4B, one standard question which they are asking, internal reconstruction, internal reconstruction, internal reconstruction. This is also, if you just spent quality 3 hours of understanding same questions are going to repeat in your examination. So you no need to worry at all with respect to this internal reconstruction. Next, question number 5, a 14 mark, which is totally related to business combination. In all the items, they are asking a question from Index 103, which is making this business combination as highly important. Okay? Yes. Sixth question also, they are completely focusing on consolidated financial statements. They have not missed in any attempt with this question in days 110, which is making these two chapters, according to me, a very important. Next, if you observe, 7A, they are mainly focused on recent developments in financial reporting, and 7B also, they are mainly focused on recent developments in financial reporting. So other than this 8A, 8B, they are completely focused on theoretical chapter, which is government accounting. And last bay, if you observe 8C also, it has some interlinking between goodwill calculation. I mean, goodwill related to business combination. So if you observe the total categorization of the paper, the most crucial important chapter, according to me, which have not been skipped in any attempt, is internal reconstruction, business combination, and consolidation, which is making our exam oriented batch to move towards that way, which the institute is currently focusing. So with this, so whatever the A category chapters which I have analyzed are completely based on the past attempts is what you have understood. Okay, if your understanding is completed, if you got a detailed understanding, so what we'll be doing is we'll be immediately starting with our first A category chapter, first A category standard, which is this Index 16. Okay, so please give me a heads up if your understanding is clear. If yes, we will be immediately starting with Index 16, which is the most comprehensive standard. Actually, most of the Index 16 is what you have studied in your AS 10 only. So most of the things are very, just a moment. Okay, fine. Yes. So now what we'll be starting is, we'll be immediately starting with this Index 16. So the name of the standard is basically property, plant and equipment. So whatever the standard which you have already studied at your CMA Inter, which is AS10, most of the standard is basically exactly copy paste of this Index 16. So they have changed this standard AS10 according to the requirements of this Index 16. So that is the reason why this Index 16, to most of the points you will be recollecting that you have already learned in this AS10. Okay, in this chapter what we'll be doing is majority of the important questions also I will be discussing here only. Okay, yes. So quickly try to understand this objective of this Index 16. Okay, not that much important from examination perspective. So I'll be just little bit going through quickly over these areas. So the first one is, if any PPE you have purchased, PPE as in property, plant and equipment. If you have purchased any property, plant and equipment, at what value you have to recognize in your books of accounts, that will be explained in the standard. Second one, measurement. At what value you have to measure, when to recognize, at what value to measure that, and presentation, where exactly you have to do the presentation, and last may any disclosures if there are. So all these points are basically covered in this property, plant and equipment. They will not ask any question based on this objective, but while starting any standard you should have a detailed understanding, at least a brief understanding also you should have as to what in this standard is going to cover. Okay, so recognition it will cover, when to recognize and how to recognize. Measurement as in initial measurement, also at the time of purchase, also at what value you have to measure, that also they will be highlighting. And even at every reporting period, whatever the value which you have to measure, the same thing also is explained in the standard. Next comes the presentation, and finally the disclosure requirements also. So all these points are basically covered in this Index 16. Okay, sir? Yes. Next, if you observe, there are some there are some items which are clearly excluded from the Index 16. There are some standards which are clearly excluded from Ind AS 16. In this case, what you have to do is, if there is any item which is out of the scope of this Ind AS 16, what they are trying to say is they are already covered under any other standard. Since they are already covered under other standard, what you have to do is we have to quickly ignore Ind AS 16 for these items. So what is the first item which is covered? First item is Ind AS 105. This Ind AS 105 basically talks about all the non-current assets which are held for sale. This is not there in our syllabus. So my focus is not that much on this. Normally, if there is any PPE, for that PPE, Ind AS 16 is applicable. But if that PPE is held for sale, then in that case, this is completely out of the scope of the Ind AS 16. Okay, fine. Second one is biological assets. But here I have excluded bearer plant. Bearer plants are excluded. So all other biological assets other than this bearer plant related to the agricultural property. Sir, what is the meaning of bearer plant? We will be having a detailed discussion just below this. Okay. So all biological assets other than bearer plant are excluded from the scope of the Ind AS 16. So third point, if you observe, mineral rights and mineral reserves. For these items, basically, we are having a separate standard, which is not at all there in our syllabus. So you just have to ignore that. You just have to read and remember once and you can forget that. No issues at all. And the last one is exploration and evaluation assets. For this also, we are having a separate standard. So the reason why all these items are excluded from the scope is we are having a separate detailed standard for these items. Okay. Yes, sir. So these also not that much important from examination perspective. So I'll be moving quickly. Now comes the little bit important discussion, which is called as a biological asset. Sir, all biological assets excluded from the scope of Ind AS 16. The answer is no. Biological assets may, if it is a bearer plant, it is covered under Ind AS 16. Sir, if it is not a bearer plant, then it is completely excluded from the scope of Ind AS 16. Okay, let us try to understand first of all what is the meaning of biological asset and what is the meaning of bearer plant also. We will be slowly understanding the thing. Okay, yes, sir. So the meaning of biological asset is it related to any kind of a living plant. Biological asset is called as any living plant. Living plant means it should not be dead. Okay, it have to be still living. So only a living plant will be treated as a biological asset. It also includes animals also. Sir, what is the meaning of animals? For example, cows, buffaloes. If you observe these kind of items, sir, are these kind of items also assets? Ind AS is recognizing even these animals also as an assets. For example, if you observe Amul company, so Amul pay many cows and many buffaloes are there. Sir, are they treated as assets? Answer is yes. It is going to satisfy the definition of this PPE. If it is satisfying the definition of the PPE, then it also will become an asset. First of all, it will be satisfying the definition of an asset. Since it is satisfying the definition of an asset, it will be treated as a biological asset. Okay. Yes, sir. So whatever the animals which are there, now for those animals, Ind AS 16 is not applicable. For those animals, we are having a separate standard, which is this Ind AS 41. For those animals, we are having a separate standard, which is Ind AS 41. But if you observe, for any living plants, those are categorized again into two types. So what is the first one? First one is bearer plant. Second one is other than bearer plant. If it is bearer plant, only this is covered in Ind AS 16. So what about other than bearer plants? So it is covered under Ind AS 41. This Ind AS 41 is also, unfortunately, is not there in our syllabus. So currently we are only concerned about this bearer plant, which is covered in Ind AS 16. Okay. So biological asset includes either living plants or animals, but animals also covered under Ind AS 41. Living plants also, other than bearer plants, they are also covered under Ind AS 41, but only one plant which is covered, and that is nothing but bearer plant. Okay. Yes, sir. Sir, what is the meaning of bearer plant? First, let us try to understand this bearer plant with the help of an example. Okay. First, let us understand the definition of this bearer plant. Sir, what is the definition of this bearer plant? First, let me give you an example. Through that example, you will be understanding. Okay, imagine a mango plant. Imagine a mango tree which is there. So, as and when the summer season gets completed, you will be actually taking the benefit of the mangoes from that mango tree. So, my question is, once the mango season is completed, Once the mango season is completed, will you only pluck the mangoes or will you cut the entire mango tree? So based on that answer only, whether it is a bearer plant or not, we will be slowly understanding. Okay, so once the mango season is completed, will you just only pluck the mangoes or will you cut the mango tree entirely? Okay, so based on this only, your classification for the asset as a bearer plant is going to get changed. If you observe the definition of the bearer plant is nothing but a living plant which is used in the production of agricultural produce. In our example, mangoes are there now. That mangoes are nothing but agricultural produce. If bearer plant is any living plant which is used in the production of an agricultural produce, and they are saying expected to produce for more than one period. Every mango tree is expected to produce for more than one period only. It is obvious, one period as in more than one period as in more than 1 year. We already know that every mango tree is going to give produces for more than 1 year only. And last one is plant itself is not intended to be sold, which means you are not selling the entire plant. You are only selling the product of the plant. You are only selling the product of the plant rather than selling the entire plant. If you are only selling the product of the plant, and if the expected to be produced for more than one period, and if it is used in the production of agricultural produce, then only it will be treated as a bearer plant. If you observe this mango tree example with any machinery, for example, assume you have purchased one machinery. That machinery, what you are doing, you are using that machinery to produce some goods. So once those goods are produced, you will be selling those goods in the market without selling such machinery. Correct or not? So in the same example, if you observe the definition of this bearer plant also, in this bearer plant also, sir, what I am doing is you are only selling the produce of the bearer plant without selling the bearer plant. Okay, so yes sir, so in this case, if all the definitions are satisfied, then only that item will be called as a bearer plant. If it is a bearer plant, it is covered in this Ind AS 16. Okay, yes sir. Apple orchards also, so same like mango trees, if any apple orchard is there, that is also same definition of bearer plant, it is also satisfying. So because of same reason, even this apple orchard also will be treated as a bearer plant. So if it is a bearer plant, it is going to be covered under Ind AS 16. Okay, but next, if you observe annual crops like wheat or maize, etc., or bamboo trees, they are not a bearer plants. Even if you observe the sugarcane also, once the sugarcane is grown, we will be cutting the entire crop of the sugarcane. Okay, and again we have to harvest a complete new set of a crop. In the same manner, this wheat or maize also, these are never expected to produce for more than one period. So once one period is completed, then probably we will be entirely doing the harvest once again. Okay, which fails to satisfy the definition of a bearer plant. Okay, sugarcane example also, if you observe, so once the crop is completed, we have to cut the entire plant, which means that the plant itself is intended to be sold. Hence, it is not satisfying the definition of the bearer plant. If any biological asset fails to satisfy the definition of PPE, then basically what they're trying to say is it should be excluded from the scope of the PPE. But if it is a bearer plant, it is included in the scope of Ind AS 16. Okay, so please confirm if you have understood this biological asset definition and what all the items which are covered in Ind AS 16 and what all the items which are not covered in Ind AS 16. If you have got a basic idea, then what we'll be doing is we will be moving to the important discussion. So what we'll be doing is this definition of PPE, which is important from examination perspective. Here, numerical problems are there. So if you observe these numerical items, these are exactly important from examination perspective. Okay, so just give me a heads up if you have understood till here. Then we will be starting with the definition of PPE and we'll start with the continue. I will continue the discussion. Okay, fine, Pankaj. Thanks for the response. Understood. Brilliant. Now what we'll be doing is definition of PPE. So let us slowly understand the definition of PPE. Fine, sir. Sir, what is the meaning of PPE? Try to understand. Sir, PPE refers to tangible asset. PPE refers to tangible asset. It should be used in the production of the goods, or it should be used in the rendering of services, or it should be used for holding for rental to others except land and buildings. And last one, administrative purposes. I will be quickly giving few examples. So which will be understanding nicely. Okay. Production of the goods. What is this? Production of the goods. Sir, what is the meaning of production of the goods? Assume I have purchased one plant and machinery, and through that plant and machinery, I am basically producing the goods. Okay, in this case, that plant and machinery becomes a tangible asset because I'm able to touch the plant and machinery and I'm able to feel the plant and machinery. And since it is being used in the production of the goods, it is a PPE. This is the first one. Second one, rendering of services. For example, if you have any tangible asset and you are using the tangible asset for the purpose of rendering of the services, again that also satisfies the definition of PPE. Sir, what is the meaning of rendering of services? Please give me an example. Fine. So in order to conduct the class plus classes, I have one laptop which is there. I have a document camera also which is there. I have one light stand also which is there, and I have a projector also which is there. So all these are PPE, and I am using this PPE in order to provide you the classes, correct? Which means that is also a tangible asset. So all those items are tangible assets, and I am using those tangible assets in the purpose of rendering the services, which means again it satisfies the definition of PPE. And third one, sir, if you are holding any tangible asset and your intention is holding that asset for giving as rental to others, in this case also that will be satisfying the definition of PPE. For example, I am having one car, I am giving that car as a rental to others. Since you are using the tangible asset in order to give as rent to others, that is also a PPE. But remember, it should not be land and building. If you are having a building and if you are giving that building as a rent to others, that is not covered under this PPE. Sir, why it is not covered under this PPE? Because if you are having any land or building and if your intention is to hold the asset for the rental purposes, we are having a separate standard because that will be treated as an investment property. Again, that is also not there in our syllabus. So no need to worry at all. Okay, held for rental to others except land and building. For example, car you are there, bike you are having, any kind of machinery we are having. If your intention is to give that machinery as rent to others, that is also a PPE. And last one, though, for administrative purposes, if you are having any PPE, that also will be satisfying the definition of this PPE. Sir, what is the meaning of this administrative purposes? For example, one head office building is there. Through that head office building only, I will be carrying out my day-to-day operations. So that head office building why I have hold is basically for this administrative purposes. Okay? Yes. So tangible asset, any item, it should be used for the production of goods, either for rendering of services, either for held for rental to others except the land and building. And last one though, even for administrative purposes also, if you are holding any kind of an asset, that will be satisfying the definition of PPE. But the most important part is it should be expected to be used for more than one period. So whatever the items which they have mentioned here, it is expected to be used for more than one period. Only then it should be satisfying the definition of PPE. Okay, fine. This definition also, you can aram se check for once. Okay, the reason why I am explaining all these definitions is you just have to understand, you have to get the feeling of PPE. Only then we will be solving questions with respect to this standard. Okay, fine. So now comes a little bit important discussion with respect to practical examples. And these items, so you have to remember few items and you have to exactly replicate these kind of wordings in your exam. Okay, so you have to remember whatever the items which I have been saying from now. So be focused, you have to understand. So the first one what they are saying is recognition criteria. Sir, what is the meaning of this recognition criteria? Try to understand. Every PPE you will not recognize in your books of accounts. You have to recognize only such PPE when it satisfies this recognition criteria. You will not be recognizing all the PPE in your books of accounts. You will be recognizing the PPE only when it satisfies the two conditions. Sir, what is the first condition? First condition is it should be probable that future economic benefits will flow to the entity. Because of that PPE, if it is probable that future may, if you are getting economic benefits, sir, what is the meaning of economic benefits? Economic benefits means cash flows. You should get future may, you should get the cash flows, and only when it is probable that future economic benefits will flow to the entity, and then cost can be measured reliably. You should be able to measure the cost. Only when these two conditions are satisfied, you have to recognize the PPE. Cost should be measured reliably means at least you should have any basis. For example, if you purchase any cost for, if you purchase any asset for 1 lakh rupees, you are able to measure the cost of the item as 1 lakh rupees, which means if you are able to measure the cost reliably, only then you have to recognize the PPE. Okay. Yes, sir. PPE will be recognized when it is probable that future economic benefits will flow to the entity. And second condition is cost can be measured reliably. So only when these two conditions are satisfied, we have to recognize the PPE. Okay. Yes, sir. Next part. This also I am going a little bit quickly because the main discussion comes with this initial recognition of PPE. Okay. So this also a little bit I will be going quickly. Sir, what is the meaning of this? Try to understand with the help of an example. If you are having any spare parts or accessories or any standby equipment, sir, how this standard is going to address all these types of items, let us try to analyze. Fine, sir. If these items satisfy the definition of PPE, then you have to recognize as PPE. If these items, any spare part, any kind of accessories or any standby equipments, if these items have satisfied the definition of PPE, then you have to recognize them as PPE. If PPE definition is not satisfied, you have to treat them as inventory. You will understand with the help of an examples only. Okay. Assume I am using currently one documentary camera for this recording purposes. Sir, what if suddenly this camera have any issue? So if suddenly any issue pop-ups, I should not stop my recordings, correct? So that is the reason what I have did is I have taken one extra projector or extra camera for recording setup, which is a spare part in this case. So since this is a spare part, what this standard is trying to say is if it satisfies the definition of PPE. So what is the meaning of satisfying the definition of PPE? These two items we have to check. This recognition criteria we have to check, and you also have to check the definition of the PPE. Definition of the PPE as in if that is a tangible asset used in the rendering of services. Sir, is this extra projector or camera also, is it also used for rendering of services? Answer is yes. If suddenly any issue comes up, then it is this extra projector or camera only which is going to render me extra kind of a future economic benefits. So that is the reason what the standard is saying is okay, even if you are having any generator, spare parts, any accessories, or any extra cameras or any generator also for that matter. See, generator also you will not be using always. Only when there is a power cut, you will be using the generator. Correct? So till then, it is also treated as a standby equipment. So what the standard is saying is, okay, if these items are satisfying the definition of PPE, then what you will be doing is you will be recognizing the same as PPE. But for example, I am having this remote which is used to control the projector. So in this, I am having some batteries. Okay, I have maintained the spare batteries also. If you observe these batteries are not a PPE. Okay, those are very, very immaterial. And even if you observe also, they do not directly contribute in generating the future economic benefits of the entity. So considering the materiality perspective also, these batteries will never be treated as a PPE. So in this case, what we have to do is we have to treat them as an inventory. Okay, again, I am saying not that much important. You just have to understand these items. So if any spare parts and accessories, any standby equipment is there, if it satisfies the definition of PPE, we have to recognize as PPE. Otherwise, you have to treat them as inventory. So this is the portion which you have to understand. Next, if you observe, sir, individually insignificant items such as screws, tools, molds, etc. may be aggregated for recognition. Sir, what is the meaning of this? Let us try to understand. individually insignificant items. For example, I am having one toolkit which contains of 10,000 screws. 10,000 screws I am having, and also some tools are also there, but 5,000 to 50,000 tools are also there. Some kind of molds are also there. So what the standard is saying is, if you observe each screw ka value, that is very insignificant. Correct? So what this is doing is, those items are there now. Those items are individually insignificant, but still, for the purpose of this, they may be aggregated for recognition. They may be aggregated for recognition. Sir, what is the meaning of aggregated? You can combine those 1,000 screws and you can combine those entire toolkits as a one PPE. For the purpose of recognition, you can aggregate all those items. It is not necessary to bifurcate and do the accounting for all those items individually. Okay, since those are individually very insignificant, what the standard is saying is they may be aggregated for the purpose of recognition. Okay, yes sir. Next, if you observe the next point, last point of theoretical discussion, after this we are having one beautiful problem, so we'll try to understand the problem. Okay, yes sir. So check this: assets acquired for environmental or safety reasons. Let us try to understand with the help of an example. You all know about these chimneys which are installed in factory premises, correct? Normally, if any factory is constructed, obviously they will be installing some chimneys also in order to dispose the waste, correct? Yes sir. If you purchase those chimney, and if you have installed that in your factory premises, now you have to tell me, through that chimney, are you going to get any extra future economic benefits? Answer is no, because even if the chimney is not there, still it will not affect your production, correct? You are able to still produce the same amount of goods even if this chimney is not present. But if you understand, in A16 also recognizes this kind of assets also. Sir, how they are basically, okay, just give me a moment. This chimney is there now. If this chimney is installed in factory premises, this is also treated as an enabler asset, is what they are trying to say. Sir, what is the meaning of enabler asset? Enabler asset is nothing but if they are necessary to derive the benefit from other assets. If they are necessary to derive the benefit from other assets, that will be treated as enabler assets. Okay? Yes, sir. So these items do not directly produce future economic benefits. So then what these are trying to do, these items to indirectly will help other PPE to generate the future economic benefits. Okay, so that is the reason Ind AS 16 also recognizes this enabler assets ka recognition also, which means even those chimneys, if they are installed in factory premises also, those are also should be treated as a PPE, is what they are trying to say. Okay, yes sir. So now comes the practical part. Which is nothing but initial recognition of PPE. Okay, fine. So just go through these items which are being displayed on the screen. Just go through these items. So these are the items which they will be asking few questions. Okay, just go through these items. I will be coming up shortly within 1 or 2 minutes. Okay, just go these items because these items questions will be coming. Numerical part of the standard. So you have to focus on these items. So what all the items we have to include in the cost of the PPE, based on this they are going to ask the questions. So quickly go through these items. I will be discussing all these items in depth. Okay, but just you have to go through these all items and you have to remember these items. But the thing is, you no need to worry at all, because till now what I have explained are completely basics. So what I have did is I have just explained whatever the category analysis of what all the chapters which are going to be covered in this EVO and all related topics only I have been explained. So nothing important from examination perspective is what I have explained. But still, whatever the video which I have explained earlier, that will be again available in your course. So once this is done, you can later also revisit that. It is totally fine. So it has no interlinking with whatever we are yet to discuss. So currently, whatever we are yet to discuss, that is very important from exam perspective, because from here only numerical questions will be asking. Okay, so let's place our complete focus. So don't worry about what you have missed. As I am saying earlier, I have explained only about the category analysis and all, A category, B category, those analysis only I have explained. Okay, some part of this in day 16 also I have started, wherein I have just explained the definition of PPE. Those two you have already know that thing. Okay, whatever the recognition criteria, those are not that much important from exam perspective, but still that will be again available in your recording ka section. You can aram say check that after this class is done. Okay, so don't worry about that. So currently your focus should be on this initial recognition of PPE, because exam may questions are going to come from this aspect only. Okay, yes sir. So first one, initial recognition of PPE should be always done at cost. Should be always done at cost. There are many modes depending upon how you have acquired the asset. Your initial recognition is going to be dependent upon. Okay, yes sir. Sir, what is the first one? In case of acquired asset. In case of acquired asset, if you have purchased the asset from any other person, obviously there is something which is called as purchase price. So whatever the purchase price which is there, that purchase price, so you have to include in the cost of the asset. If that purchase price includes import duties, if that purchase price includes import duties which you are paying at the time of importing, if you are importing any item, if you are importing any asset from outside India, at that time obviously you will be paying import duty. So that import duties also will be added to the cost. Along with that, non-refundable taxes. Non-refundable taxes, these are also called as taxes for which credit is not availed. So what is the meaning of this taxes for which credit is not availed in your GST? There is one topic which is called as ITC. If for any asset, if you do not get input tax credit, only those items should be capitalized. Only those taxes for which credit is not availed, that ITC only is going to be added. If for any item you are going to get the benefit of ITC, take the benefit of ITC and don't include in the cost of the asset. Okay, I hope this is a very basic point, so this point may be clear for all of you. Fine sir, purchase price, but if it is non-refundable, for means if for any tax credit is not availed, that only you have to include in the cost of the asset. Okay sir. Next one, if any trade discount they have given in the question and any rebate also which is there. Trade discount means if you purchase in bulk, obviously you will be getting few discount kind of things. So those discounts, so if they have given in the question, always you have to adjust that trade discount also in the acquired asset ka cost. And any rebate or any price concessions if they have given in the question, all those items you have to adjust in the purchase price of the asset. Okay sir, yes sir, but remember only one thing. Remember only one thing, cash discounts will not be deducted. Sir, what is the meaning of cash discount? Cash discounts means some discounts will be there. If you make early payments, they may give you extra discounts. So those discounts are there now. Those discounts will never be adjusted in the cost of the asset. This point you have to remember. Cash discounts should not be adjusted. Okay? Yes, sir. Next comes this important part, which is directly attributable cost to bring the asset to its intended condition and location. Purchase price, I mean, whatever the acquired asset cost is there now, on that, so purchase price will be definitely added. Along with purchase price, whatever the directly attributable costs which are there to bring the asset to its intended condition and location used by the management. For example, I purchased one AC. Okay, so whatever the AC which I have purchased, from the location of the seller till my home, I have to transport that AC. So whatever the transport charges which I have incurred, if that transport charges have not incurred, I cannot use the asset as per my intention. I cannot bring the asset to the location where I wanted to use. So not only the purchase price, whatever the directly attributable costs which are there to bring the asset to its intended condition and location to be used by the management, all those costs should be added. All those costs should be added. And there is one more item which is called as initial estimate or present value of dismantling, removal, and site restoration cost at the time of purchase. Initial estimate or present value of dismantling, removal, or site restoration cost at the time of purchase. Okay, I will make you understand this with the help of an example. Assume I was there. I have taken building as a rent from one of my friends, building as a lease from one of my friends. So what I have did is I'm a practicing chartered accountant. Assume this. So what I have did is I have constructed one office in that building. In that office though, I have constructed different cubicles for each of the article assistants for whatever the clients which are coming. I have constructed one conference room also. Everything I have constructed in that building itself. So initially at the time of entering the agreement itself that we have decided, after 5 years, my lease period will be completed. So once this lease period is completed, it is my responsibility to completely demolish the asset. So whatever the constructions which I have happened, all those things have to be demolished, and only then I have to restore the asset back to the original condition of how I have taken. That is whose responsibility? My responsibility only it is. So at the time of entering the contract itself, there is one liability which have arisen, sir, and what is that liability is? It is my responsibility only to completely destroy the asset, to completely dismantle the asset and restore the asset back to the original condition. So Indes is saying, Are Baba, this cost also you have to add to the cost of acquisition. See, complete comfort you will get only after solving the question. Initially, you have to remember all these items. Okay, fine, sir. If there is any initial estimate or present value of dismantling, removal, and site restoration cost at the time of purchase, that also will be added to the cost of the asset. Okay, yes, sir. You have to remember few examples of directly attributable costs which will be added to the cost of the asset. Sir, what is the first item which I have to add to the cost of the asset? Very simple. If it is initial delivery and handling cost. If it is initial delivery and handling cost, that should be added to the cost of the PPE. And second one, site preparation cost. You have to remember these items. Site preparation cost also you have to add back to the cost of the PPE. And installation and assembly cost. Because if installation is not done, you cannot use the asset. If this assembling is not done, you cannot use the asset. And employee benefit cost arising from constructing or acquiring PPE. For example, you have completely dedicated 2 employees only for the purpose of constructing one PPE. So whatever the salaries which you are paying to those employees ka salary ka cost also will be added in the cost of the PPE. Professional fees. Sir, what is the meaning of this professional fees? Assume in order to purchase which asset I have to purchase, that is basically very big asset, huge machinery it is. So I cannot make any kind of a decision based on my experience. What I have taken is I have did one consultation with professional, and that professional have guided me which asset you have to purchase. So I am paying professional fees to that person. So whatever the professional fees which you have paid also, even that cost also should be added to the cost of the PPE. And last one though, trial run expenses. Whatever the trial run you have conducted, because after completion of trial run only, you can use the machine as per your requirement. Trial run is mandatory. Before this trial run, you cannot use any kind of machinery. I'm not saying about small machineries, think about huge machineries. If trial run is not completed, you cannot use the machinery. Okay, so the whole crux of the story is all directly attributable costs to bring the asset to its intended condition and location to be used by the management. All these costs should be added to the cost of the asset. Okay, till up to the date, up to the condition and location intended by the management, up to that point of time, whatever the cost which you have incurred, those should be added to the cost of the asset. Sir, the asset is already ready to be used in the manner which is intended by the management. So if you have incurred any subsequent cost, after the asset is ready to use, that cost will not be added. So till the time the asset is ready to use, only those costs to be added. This point you have to keep in your mind. So till the time the asset is ready to be used, only those costs should be added. And whatever the items which are incurred after the asset is brought into use, those you will not be added. Sir, can you please give me examples? Yes, I have given few examples. First item, Staff training expenses. Asset is already ready. Asset is already ready. Now the company is incurring staff training costs to their employees. Now the company is giving staff training costs to their employees. Are Baba, since the asset is already ready to be used, whatever the staff training expenses are there, na, those will never be included in the cost of the PPE because your asset is already ready. So after that you have incurred, so it should be ignored, which means it should be charged to P&L account. If I am saying this cost should not be included in the cost of the PPE, my intention is all these expenses will be charged to PL. Okay? Yes, sir. Second point, inauguration expenses. Your asset is already ready. You are just conducting one event to open that expense. Sorry, to open that asset. This inauguration also, same logic. You have to remember this. If any of the expense is incurred after the asset is brought into its intended location and condition to be used by the management, that should be, cannot be charged to P&L account. Rather, it should be expensed in P&L. Okay? Yes, sir. It should not be added to the cost of the asset. It should be expensed in P&L account in the same manner. Advertisement expenses, staff relocation expenses, organization relocation expenses, admin and general overheads. This admin and general overheads are there now. These are indirect costs. These are not direct costs. Since I have written here that we have to include only directly attributable cost, any indirect cost, if they have given, those indirect costs should not be included in the cost of the asset. Okay. Yes, sir. So one question is there, one decommissioning or restoration liability. After this, we will be solving one question. Okay, fine. If you check this, decommissioning or restoration liability. Okay, quickly come to the example, then you will be understanding. A Limited purchased a PPE for 1 crore, which has useful life of 5 years. 1 crore is the cost of the PPE. Useful life is 5 years. They are saying it has a contractual obligation to decommission the asset and restore the same, which is estimated at 10 lakh rupees. At the time of purchasing the asset itself, they are having an obligation that at the end of the period, you have to destroy the asset and you have to restore the same. You have to restore the same as an original condition, that is after 5 years. They are saying a cost which you have incurred will be 10 lakh rupees after 5 years. This is 10 lakh, not currently. This 10 lakh you will incur after the end of 5 years. And they have given the current market rate of discount also, which is 10%. Current market rate of discount, how much they have given, sir? 10% they have given. If you observe, this 10 lakh is there now. This 10 lakh you will incur after the end of 5 years. So what is the current value of this 10 lakh, which is incurred after 5 years? That is nothing but present value. So what the standard is saying is you just have to calculate the present value of decommissioning or restoration liability. Sir, what is the meaning of this present value of decommissioning or restoration liability? Simple. 10 lakh is there, which you will be incurring after 5 years. So you have to calculate the present value of 10 lakh rupees after 5 years. Sir, what is the discount rate? They have given discount rate 10%. Just open the calculators and type this 10% ka present value interest factor for 5 years. If you multiply with the 10 lakh, you will get this 6,20,921. Okay? Yes, sir. Normal purchase price of the asset is 1 crore. Present value of the decommissioning or restoration liability is 6,20,921. If I add, the total will comes to 1 crore 6,20,921. 1 crore 6,20,921. Sir, what is the initial recognition which I will be doing is, while passing the journal entry, this is the most important part. You will debit the PPE at this amount. Currently, I will be paying only the purchase price, which is 1 crore. Sir, what about this 6,20,921? This I will not pay right now. This will be paid after the end of 5 years. Sir, but you are saying after the end of 5 years, you have to pay 10 lakh rupees. But this is present value now. So every year what you have to do is, you have to recognize some finance cost to this. Sir, what exactly you are trying to say? Slowly you will understand. But please give me a heads up if you have understood this entry. PPE account debtor to bank account of 1 crore you will be writing, and 2 provisioning for decommissioning. Sorry, this DROL is nothing but decommissioning, restoration and other liabilities. Okay, so this amount is how much, sir? 6,20,921. Okay, fine, sir. So this is the value which you have to remember. Sir, now what happens? See, you are saying that after end of 5 years, though, you are saying that 10 lakh rupees will be incurred, but in current value, may this provision to only 6,20,921 is there. Sir, how this value become 10 lakh? Because after 5 years, though, I have to incur 10 lakh rupees. So this exactly you will be understanding with the help of this amortization table. I hope this amortization table, so you have been learning from your inter level. In CMA Inter also, we have learned this hire purchase ka chapter. In this, you will be knowing this how to do this, what should I say, amortization schedule and all. Just to try to understand, the same thing is going to be repeated. First year में, sir, what is the balance? 6,20,921 is balance. Sir, discounting rate is 10%. So just multiply 10% with this and you will get 62,092 rupees. You are not making any payment because complete payment will be made only at the end of the 5th year. Only at the end of the 5th year, so complete payment will be made. So just take the calculator and multiply the 6,20,921 into 10%. You will get 62,092. Add these two, you will get this item. First year ka end mein closing balance will become second year opening balance. Repeat the process into 10%. Just add this. In the same manner, second year ka closing will become third year ka opening. Just add the finance cost. Again, repeat the process. Third year ka closing, fourth year ka opening, same process. Finally, you will be getting this 10 lakh rupees. Finally, you will be getting this 10 lakh rupees. Last year may you have to do rounding off power. Last year may you have to do the rounding off because the closing balance should be 10 lakh rupees. Now, if you observe, sir, closing balance is 10 lakh rupees. After end of 5 years, so I have to incur 10 lakh rupees, which means the balance is matched. Are you understanding this or not? This process is called as unwinding of finance cost. This process is called as unwinding of finance cost, which is clear-cutly explained in another standard, which is Ind AS 109. This is with respect to financial instruments ka chapter. Is there in our syllabus? Very, very important. We will discuss that in depth. First of all, have you got this basic idea? Whatever the table which I have written, the same table though I will be passing as a journal entry. Sir, this is my closing balance. Every year my closing balance has to be increased. If liability have to be increased, I will be crediting that every year. Obviously, we have to give the debit. Sir, what debit I have to give? That debit will be called as finance cost. So whatever the first year ka interest which is there, no, finance cost account data to provision for drawl account. Drawl means decommissioning, restoration, and other liabilities. In the same manner, at the end of year 2 also pass the same entry. Year 3 also pass the same. Year 4 also pass the same. And year 5 also pass the same. If you observe year 5 ka closing balance, your balance will be exactly 10 lakh rupees. Your balance will be exactly 10 lakh rupees. Okay. So please confirm if you have understood this concept or not. This concept again I will be explaining in Ind AS 109 also, wherein you will exactly understand, sir, what is the meaning of unwinding of discount and all. You will get a complete clarity there only. Okay. But at least have you got a basic idea or not? Please confirm. Yes, sir. Clear. Super. So what they have given is brilliant. Brilliant Renuka, brilliant Pankaj, super. Banu Teja, fine. So like this. Here I have given one format also. So what you have to do is just remember this format. You can just by heart this format also. The same points are going in to come in your examination. Okay, all these items I have covered in the above discussion also. So all these items, so you have to understand. Present value of the decommissioning, restoration, and other liabilities also you have to add. Okay, yes sir. So all these items you have to include. Fine, sir. These items are there now, self-constructed or bearer plant, etc. So all these items, though, these are okay. I will be coming these items at the end of the chapter, But currently, you have to move to this subsequent recognition of PPE. And through this subsequent recognition of PPE, because this is the most important concept. This is the most important concept. So I want 100% attention for this. So quickly come to, I think it is there in page 10, I guess. So quickly come to subsequent recognition of PPE. Based on this also they are going to ask number of questions. First, let me just open Index 16. Whether we are able to solve any question or not. Okay. So check this question, guys. Question number 2, let us check, and then we'll move to the subsequent recognition ka part. Okay. Yes, sir. Sir, on 1st April 20x1, this notes I have already shared in the group. I mean, in the WhatsApp group, I have shared this notes. Okay, this notes I will be uploading in the free resources section of this class plus also. You don't need to worry at all. Okay, in the app, you will be finding this at the free resources section. You don't need to worry at all. But first, focus on this question. Question number 2, you only have to tell me, guys. First one, list price of the machine. Do we have to include this list price of the machine in the answer or not? You have to quickly tell me. You have to tell me yes or no so that I will be proceeding. Okay. List price of the machine, they have given 80 lakh rupees in the question. So do we have to include this 80 lakh rupees in the price of the asset or not? Answer is 100% yes. I'm getting the answer, so I'll quickly move. Second part, sir, import duty. Just now I have said that, sir, import duties also you have to always include in the cost of the asset. So this 5 lakh rupees also will be added in the cost of the asset. Next part, if you observe, sir, delivery fees they have given. Are Baba, without this delivery fees, your asset will not be in the intended location and condition to be used by the management. So that is the reason why we have to add this delivery fee also in the cost of the asset. So next part though, electrical installation cost, same logic. All the directly attributable costs to incurred to make the asset intended to be used by the location and condition used by the management. Okay, so all those costs should be added. Electrical installation cost also will be added. Pre-production testing also is mandatory thing. Without testing, you cannot use the asset. So this testing cost also you have to add. Purchase of 5-year maintenance contract with a vendor, 7 lakh rupees. Are Baba, if you observe this purchase of 5-year maintenance contract with vendor, this is not a directly attributable cost to use the asset, to bring the asset to the intended condition and location used by the management. Because without this 5-year maintenance contract also, you can use the asset. Which means this is not a cost which I have to incur, which should not be added to the cost of the asset. Okay, that will be treated as a prepaid expenditure. Prepaid expenditure, which means you just have to understand this item should not be included in the cost of the PPE. And if you further read the question, they are saying, sir, XYZ Limited was granted a trade discount of 10%. So what we have to do the trade discount? Trade discount also we have to adjust in the price. And they are clearly saying trade discount of 10% on the initial list price of the asset. Sir, what is the list price? List price to 80 lakh rupees. And what is the trade discount? 10% they have given. So 10% of 80 lakhs will be deducted. 10% of 8 lakhs will be deducted. And they are saying settlement discount of 5%. Sir, what is the settlement discount? The settlement discount is nothing but cash discount. I have already said that this cash discount should not be included in the cost of the PPE. They have clearly saying that if payment is made earlier, you will be getting 5% discount. That is not included in the cost of the asset. If you observe, 80 lakh paid trade discount they have adjusted. 72 lakh it have become. All the costs whatever we have discussed they have added. Okay, in examination, so they have, note point also they have mentioned that maintenance contract is there now, that will be treated as a prepaid expenditure, and the settlement discount also they have given that cash discount also will be included in the profit and loss account is what they are trying to say. ठीक है. So this question is completed. आराम से basic question they have been given. So what all the costs which we have to include and all they have nicely explained. So if this question is clear, let us move to the subsequent recognition of the PPE का part. Just a moment. ठीक है. Yes sir. Subsequent recognition of the PPE. Please confirm if this is clear. If yes, we will be moving to the subsequent discussion. Okay, fine Ramya. Super Pankaj. Brilliant. Let's move to the subsequent recognition of the PPE. Try to understand. The standard is saying it have clear-cutly given two methods of valuation. First one, if you want, please value your PPE at cost. Second type of model is, okay, if you want, you can go with revaluation model also. Sir, why this revaluation model is necessary? For example, I have purchased the building 15 years ago. In my bookstore, the value is 1 lakh rupees at the time of 15 years back. But now I am saying, since 15 years are completed, the value of the building is now 1 crore rupees. But if you observe my books may value is how much? Only 1 lakh, which is not a clear-cut representation of the existing situation. So what they are saying is, Ind AS have given the option which is called as revaluation model. Ind AS have given the option which is called as revaluation model. Okay? Yes, sir. So either you can go for cost or either you can go for valuation. But remember one thing, you can either choose cost or revaluation based upon your any choice you can do. For example, remember this one thing, if building is there, you want to apply revaluation model for building. Assume sir 5 buildings are there. For all these 5 buildings, you have to apply revaluation model only. You cannot apply for first building, I want cost model. For second building, I want revaluation model. For third building, again, I want cost. No, like this, you cannot do. If you want any cost or revaluation, either any of the models, if you want, apply the same for all assets in the same class. Building may, if I have 5 buildings, for all the 5 buildings, you have to apply either cost or revaluation, but not both. But like this, you can do. For all the furniture, if you want, you can do the cost model. And for all the buildings, if you want, you can do the revaluation model. Same class though, same model only have to be applied. But it is different class. Even applying different models is also totally fine. Okay? Yes, sir. So cost model, revaluation model is completed. You can choose the cost model for one class of PPE and revaluation model for another class of PPE. This also they have explained. Now let us try to understand. First one, sir, cost model में what is the treatment and revaluation model में what is the treatment? ठीक है sir. Cost model is nothing but whatever the cost which is there minus if there is any accumulated depreciation that you have to deduct. Accumulated impairment loss also should be deducted, and then you will be getting the carrying amount of the value. Okay, yes sir. But revaluation model may you have to give the effect for this fair value at the revaluation date minus subsequent accumulated depreciation you have to do minus subsequent accumulated impairment loss also you have to do. Finally, we'll be getting the carrying amount. This is not okay. Slowly you will understand. No need to discuss this. So straight away come to the example. Straight away come to the example. Very, very simple. Two methods are there, guys, for accounting this revaluation. First one is depreciation elimination ka approach, and the second one is gross carrying amount ka adjustment approach. This also same you have already seen in your interlevel. So I will be moving it quickly. First one, if you observe, sir, plant and machinery ka what is the cost which is there? The cost is 1 lakh rupees. Accumulated depreciation is 55,000 rupees. Accumulated depreciation is how much, sir? 55,000 rupees. If you calculate, what should I say? If you calculate the carrying amount of the asset, sir, 1 lakh is the cost and 55,000 is the carrying amount. Sorry, 55,000 is the depreciation. If you calculate the carrying amount, you will get 45,000. Currently, your carrying amount is 45,000. Fair value is 65,000. Fair value is 65,000. Correct or not? Yes, sir. So here what they are trying to say is apply the depreciation elimination approach. If you observe the word itself, you will understand. So what is the meaning of depreciation elimination? Whatever the depreciation which you are having, please eliminate the depreciation. This accumulated depreciation is a credit account ka balance. So in order to eliminate that, it should be debited. Accumulated depreciation will be debited. Sir, on which account I have to adjust this balance? You have no option. You have to adjust with asset only now. So accumulated depreciation account data to asset account. So now your asset account ka balance is, sir, 1 lakh rupees to debit is there, 55 to credit is there. So my net asset ka balance is how much, sir? 45,000 is your net asset ka balance. Fair value of the asset they have given 65,000 rupees. Sir, currently my value is 45,000, but now the asset is increased to 65,000. So how much is the increase? 20,000 is the increase. That 20,000 should be debited. That 20,000 should be debited. Sir, and where the credit have to be given? This credit should be given to something called as revaluation reserve account. This credit should be given to something called as revaluation reserve account. Simply, you have to eliminate the depreciation. So accumulated depreciation account data to asset account. And now whatever the increase which is there, that should be added. So asset account data to revaluation reserve account. Sir, what will be the carrying amount? 1 lakh minus 55,000 you have credited plus 20,000 you have debited. So the total carrying value of the asset is how much, sir? 65,000 is the total value. 65,000 is the total value. So what is the fair value? 65,000. Like this, you have to do the accounting for depreciation elimination approach. I hope this is understood. So now let us quickly check the second part, which is gross carrying amount ka adjustment approach. So here what they are trying to say is, try to understand. Carrying amount as on date of revaluation ka 45,000. Sir, have you got this? 1 lakh minus 55,000. Now they are saying, sir, fair value as on the date of revaluation is 65,000. You just have to calculate the percentage of increase. Sir, it is 45,000. Now it is increased to 65,000. How much is the percentage change of increase? Just do this formula. 65,000 minus 45,000. Divide by 45,000 into 100 if you do. You will get this 44.44%. Simple. Check the calculator. You will get the answer. So 65 minus 45 upon 25. Sorry, upon 45. You will get 44.44%. This is another way of doing the adjustment, guys. Very, very simple it is. So gross carrying amount ka adjustment is there na. This is how you have to do like this. Okay, sir? Yes, sir. So here what the standard is saying is increase the asset value also and accumulated depreciation also. Simple. Asset account is there na. Asset account to be increased by 44.44%. Accumulated depreciation also increased by 44.44%. Sir, what about the balance? Balance will be again going to this revaluation reserve. Balance will be again going to this revaluation reserve. Very, very simple discussion. Okay? Yes, sir. So currently the value of the asset is how much, sir? One second. The value of the asset is normally 1 lakh rupees. So, sir, for this, what have happened is 1 lakh plus 44,000 triple four I have added, which means the value of the asset will become 1 lakh 44,444. From that, if you subtract the depreciation, 55,000 minus 24,444, you will get 65,000. Net effect will remain same. Okay? Yes, sir. So if you observe, the net carrying amount in both the methods should be 65,000 only. These are just the methods of how to do the accounting, guys. That's it. First method is depreciation elimination approach. Second method is gross carrying amount adjustment approach. These two are a little bit important, so you have to place the complete focus. There is nothing much conceptual which is there. So after completion of the class, you just have to check these points. You will exactly understood what I'm trying to say. Okay? Yes, sir. Now comes another important thing. Another important thing which is called as treatment for revaluation gain or loss. Super important from exam perspective. So I want 100% clarity on this. Just a moment. Sir, what is the treatment for the revaluation gain or revaluation loss? Let us try to understand. Always remember first thing. Sir, if it is first time revaluation, if it is first time revaluation, what they are trying to say is, sir, if it is upward revaluation, If it is upward revaluation, they are saying recognize such revaluation surplus in OCI. Recognize such revaluation surplus in OCI. Sir, what they're exactly trying to say? Let us try to understand. Okay, fine, sir. Sir, assume asset ka value is 1 lakh rupees. Assume this is the carrying amount of the asset. Carrying amount of the asset is 1 lakh rupees. Sir, and they are saying, sir, fair value as 1,50,000 rupees. Carrying amount of the asset is 1 lakh rupees. Fair value of the asset is 1,50,000 rupees. Sir, how much is the increase in value of the asset? It is 50,000 is the increase in value of the asset. Since the asset ka value is increasing, I have to debit the asset. Sir, how much you have to debit? 50,000 I have to debit. So credit what you have to do, that is explaining in this part. So you have to write revaluation reserve or OCI account. This is what they are trying to say. So this 50,000 will be transferred to revaluation reserve or OCI account. Okay, fine, sir. Now let us understand the second example. Sir, second example में carrying amount is 1 lakh rupees. Fair value to just 80,000 rupees. Sir, here what have happened, sir? Here my asset value has decreased. If your asset value is decreased, you have to credit the asset account. So here I have to write to asset account. Sir, how much? 20,000 I have to write. Sir, debit what I have to do? Debit you have to give to P&L account. Debit you have to give to P&L account. This you have to understand. So P&L account that are 20,000 to asset account 20,000. This is an example of downward revaluation. This is an example of upward revaluation. Sir, why upward revaluation? Because the asset value is going up. Why downward revaluation? Because the asset value is going down. Now come to this part. If it is first time revaluation, what the standard is asking is if it is upward revaluation, recognize such revaluation surplus in OCI. In our example, this 50,000 is the surplus. So this 50,000 will be recognized in OCI. Second pay, in case of downward revaluation, recognize such revaluation loss in P&L account. Oh, in this downward revaluation the case you are getting loss now, so that loss will be debited to P&L account. Simple. Okay, so now comes the little bit important discussion. So check this part. Upward revaluation case में what I have to do, sir? Upward revaluation का case, it is subsequent revaluation, which means already one time revaluation is completed. Now subsequent revaluation is done. Sir, what is this subsequent revaluation? Let us try to understand with the help of an example. OCI means other comprehensive income. OCI means other comprehensive income. Okay, that is a separate part of the P&L account. That is a separate part of the P&L account. If you want complete clarity on this OCI, what I have did is I have already recorded a separate video which is showing class 1 to 10 of CFR regular batch. In that I have clearly explained the OCI ka discussion. Okay, you have to check that part because OCI is a little bit important. Okay, fine. So here what you have to check is, sir, if there is upward revaluation earlier also upward revaluation only, now also upward revaluation only. Now it is upward, earlier is also upward revaluation, which means if you observe this example, sir, earlier the fair value is 1,50,000. Now what have happened is again next year I have revalued. Next year ka fair value also I have calculated. Sir, next year ka fair value is 1,80,000 rupees. Sir, what is the carrying amount? 1,50,000. Next year to carrying amount is 1,50,000 and the fair value is 1,80,000. So this difference is there now. This difference is also upward revaluation. Since this difference is also upward revaluation, sir, how much is the exact increase in my value of the asset? Earlier it is 150, now it is 180. So how much, sir? 30,000 is the value. This 30,000 I will be adding. Sir, credit me what you are giving. Same OCI reserve I will give or revaluation reserve, anything is fine. So how much, sir? 30,000 I will be giving. Same value, 30,000, sir, because earlier also upward revaluation, now also upward revaluation. Okay, sir. Now comes the little bit interesting part. If there is downward revaluation earlier, earlier to check this example. Earlier to the carrying amount is 1 lakh rupees, but the fair value is only 80,000 rupees. So asset ka value is 80,000 rupees now. Now what have happened is, sir, again at the end of second year, what is my carrying amount? Your carrying amount is 80,000 rupees. Now I have checked the fair value. Oh, this time the fair value is 1,20,000 rupees, which means now I am having an upward revaluation. Since you are having an upward revaluation, you have to check, sir, earlierly whether I have upward revaluation or downward revaluation. Answer is downward revaluation here, which means earlier you have already debited this 20,000 rupees. Now think like this. How much increase is there? 40,000 increase is there. Correct or not? Yes, sir. How much increase is there? 40,000 increase is there. So first of all, what I will be writing is asset account debtor. How much? 40,000 rupees. Credit I have to write. Sir, how much credit I have to write is check how much you have debited earlier. Sir, how much I have debited earlier is I have already debited this 20,000 to PL account. Now, first reverse what you have debited earlier, which means here I will write to P&L account. How much, sir? 20,000. Still balance is there. That 20,000 will be transferred to revaluation reserve or OCI account. Simple guys, nothing conceptual. Carrying amount is 80, fair value is 1,20,000. How much asset should be increased is 40. Now you have to check. Earlier there is downward revaluation, correct? So how much downward revaluation you have already charged to P&L account? First reverse that P&L account. Balance if there is, that will be charged as OCI. Okay, sir. So if you check this, that's what they have been explained in the words. First, adjust such increase against the loss which is previously recorded in P&L account. Balance amount will be recognized as revaluation surplus in OCI. Okay? Yes, sir. This upward revaluation ka part is totally clear. Now comes the downward revaluation ka part. Sir, what is this downward revaluation ka part? Let us slowly understand. You have to check, sir, whether earlier also downward revaluation is there or not. If earlier also downward revaluation is there, now what you have to do is, okay, sir, assume in this case, fair value is not 1,20,000 rupees. Sir, earlier downward revaluation is done. Now also fair value is 70,000. Assume. Earlier I have checked. Earlier also downward revaluation. Now also downward revaluation. Sir, what I will be doing? Earlier what we have did exactly do the same thing. Which means your asset ka value is reduced, which means it should be credited. So 10,000 is the value which I have to be reduced, and debit the what we have to do. P&L should be debited. That's it. Simple. So 10,000 to 10,000. Okay, sir. But now comes a little bit interesting part. Sir, what is the interesting part? Check this. Now downward revaluation is there. Now downward revaluation is there, but earlier upward revaluation is there. Sir, how it should be done exactly? Let us understand with the help of an example. See, earlier this is the value. Earlier पे my revaluation reserve में 50,000 balance is there. Earlier revaluation reserve में 50,000 balance is there. Sir, now what have happened is in the next year though my carrying amount will be 1,50,000. Now I did upward revaluation. Sorry, now I did revaluation again. But now what have happened is unfortunately, sir, my fair value is 70,000 rupees. Your fair value is 70,000 rupees. Can you tell me in this case, is it upward revaluation or downward revaluation? Sir, it is clearly downward revaluation. Sir, how much asset ka value should be reduced is to asset, if you observe, 80,000 will be credited. Now you have to check, sir, how much debit do I have to give? Here you have to understand one thing. Sir, earlier because the asset is upward revalued, you would have sent some amount to revaluation reserve. How much you have sent? Sir, 50,000 I have sent. How much you have sent earlier, that same amount should be coming back here. Which means revaluation reserve account debtor. So 50,000. Sir, whatever the balance P&L pay, balance 30,000 will be transferred. P&L pay, balance 30,000 is going to get transferred. Okay. Yes, sir. If you check this part, if there is downward revaluation earlier, You have to recognize such loss because earlier also downward, now also downward. Sir, but this now it is downward. Earlier it is upward. Then what they are saying is first adjust such a decrease against the surplus which is previously recognized in OCI. Sir, whatever the balance amount which is there, na, that balance amount will be treated as revaluation loss in P&L. Okay? Yes, sir. I hope you have understood this. Please give me a confirmation if you have understood this. If yes, we will move to the next important part. Then also we will be solving another very brilliant question. Please confirm if you have understood or not. If yes, we'll be moving it next part. Waiting for your response. Brilliant. Super Suchitra. Very good, Ramya. Super Pankaj. Okay, quickly check this part. Next one. This is a little bit interesting, so try to understand the things. Sir, what exactly it is? First one, treatment of revaluation surplus ka balance. This is very, very important, so try to understand. Sir, when revaluation surplus will come? When there is upward revaluation, then only upward revaluation ka surplus will come, correct? Sir, assume carrying amount is 1 lakh. Fair value is, assume it is 3 lakh rupees. Here only we are having revaluation surplus. Sir, how much surplus is there? 2 lakh rupees is the surplus which I am having. What is the treatment of this 2 lakh rupees ka surplus? That only they are trying to say right now. So try to understand. Very, very, very important. First one they are saying, option number 1 though, when the asset is de-recognized or classified as held for sale. So what they are trying to say is, if the asset is de-recognized or classified as held for sale, if the asset itself is sold, what you will do with that revaluation ka balance? For example, sir, this asset is sold for 3,50,000 rupees. Still, in your revaluation reserve page, this 2 lakh is there. Are Baba, if asset itself is not there, then what you will do with this revaluation reserve ka balance? So what they are saying is, sir, if the asset is de-recognized, which means it is already sold, then what you are doing is that asset related revaluation surplus will be transferred to retained earnings directly. Sir, why it should be did like that? Because it is a non-reclassified item. Sir, what is the meaning of this non-reclassified item that I have already explained in the basics? I have released a separate video in YouTube. You have to check that. 1 to 10 classes, you will understand what is the meaning of non-reclassifying item and reclassifying item. Okay, so what they are saying is, keep the balance in the revaluation till the asset is sold. Once the asset is sold, transfer the balance. Once the asset is sold, transfer the balance. Sir, where I have to transfer? Transfer to retained earnings. This is the first part. Sir, second part is, okay, if you don't want to transfer the entire balance at the end, entire balance when you have sold the asset, you have another option also. Sir, what is my another option? Another option is you have to transfer some portion of the surplus every year to retained earnings. Some portion though you have to transfer every year to retained earnings. Sir, how I have to do this? Try to understand. Very, very simple classification. Just remember what I'm trying to say. Whatever the excess depreciation you are charging only because of revaluation, that excess depreciation will be transferred to retained earnings every year. Understand little bit conceptualities. How much excess depreciation you are charging only because of that revaluation, that excess ka balance will be transferred to retained earnings. Which means in our example, if you check, sir, depreciation ka rate is 10%. Depreciation ka rate is 10%. Now you have to use your brains and tell me, sir, how much is the excess depreciation I am charging only because of revaluation? Think and tell me What is the excess depreciation which I am charging only because of revaluation? I'm waiting for your answers. I'm expecting an answers from you. So please tell me. What is the excess depreciation because of the revaluation? Excellent. It is 20,000 only. Brilliant. Sir, have you got that depreciation on fair value, which means 30,000 is the value on, depreciation on revalued amount, minus you have to charge the depreciation on original cost. Sir, how much it is? 10,000. So this 20,000 जो है ना, ये वाला 20,000 is nothing but excess depreciation due to the revaluation. I hope you are getting the things. So because of this, this excess depreciation every year you have to calculate, and every year you have to transfer this amount to retained earnings. I hope you are getting. This is what I have written here. Depreciation on revalued amount you have to take, minus original cost में depreciation you have to calculate, and excess depreciation due to revaluation should be transferred to retained earnings. Okay. Yes, sir. Now what we'll be doing is we'll be quickly solving with one question. We'll be quickly solving with one question. So which question we'll solve is, let us check this question number 8. Very, very important. 1 second. Where is it? Okay. Yes, so question number 8. Check this very, very quickly. It will be completed within 5 minutes only. I'll be just explaining the points. Aram, so you can understand this. Yes, sir. First one. Heaven Limited purchased a machinery of 1/4/2001 for 30 lakhs, which is reflected in its books at a written down value of 17,50,000 on 1/4/2006. Okay, yes, sir. The company has an estimated upward revaluation of 10%. Upward revaluation. You know what to do. Okay, sir. 1/4/2006. To arrive at the fair value of the asset, Heaven Limited availed the option given by the Ind AS of transferring some of the surplus as the asset is used by an enterprise, which means here I have explained the two options, correct? Out of these two options, what they are trying to say is they don't want to transfer the entire balance at the time of derecognition. Rather, they want to transfer proportionate amount as and when, some portion every year to retained earnings. This is what they are trying to do. This is what they are trying to say. Which means if you observe this, okay, sir. On 1/4/2008, the machine was revalued downward by 15%, and company also re-estimated the machinery's remaining life to be 8 years. Okay, let us directly come to the analysis part, which I have written here, so that you will be exactly understanding what they're trying to say. Important question, so complete focus on this only. Yes, sir. Sir, they are clear-cutly given the cost is how much, sir? 30 lakh rupees. But this 30 lakh rupees is on 1/4/2001. Written down value also they have given, sir. How much it is? 17,50,000. Sir, during this period, 5 years are completed. During this period, how many years are completed, sir? 5 years are completed. They have given the written down value of 17,50,000 and cost is 30 lakh rupees they have given. If you calculate the total depreciation, you will understand that 12,50,000 will become the total depreciation. Only then, if you deduct the depreciation from cost, you will be getting written down value. Sir, but this 12,50,000 is for 5 years. So every year, how much depreciation, sir? 2,50,000 is your depreciation every year. Okay, sir. But if you read the question is silent about the useful life of the asset. but you can calculate that useful life. Because the cost is 30 lakh rupees, annual depreciation is 2 lakh 50,000 rupees. If you want, you can calculate the useful life. Sir, how I will get 30 lakh by 2 lakh 50,000? If you do, you will get 12 years as the useful life of the asset. If the useful life is 12 years, then only annual depreciation will be 2 lakh 50,000. Basics are calculation. Okay, sir. Now what have happened is, on 1/4/2006 pay, upward revaluation is there. Sir, what will be the journal entry which I have passed on this upward revaluation? Very, very simple. PPE account data to revaluation reserve, or OCI you have to write. Sir, but how much is the upward revaluation? If you check the question, they are saying 10%. Sir, on 10% on what amount you have to take? 10% they have given on this written down value. 17 lakh 50,000. 1 second. 17 lakh 50,000 into 10%. If you do, you will get 1 lakh 75,000. So the entry will be PPE account to revaluation reserve. So 1 lakh 75, 1 lakh 75. Okay, sir. Now, if you observe, sir, from now onwards, my asset ka value is how much, sir? 17 lakh 50,000 plus 1 lakh 75,000, which means if you add, you will be getting 19 lakh 25,000. Okay, sir. But what is the remaining useful life, sir? So total useful life is 12 years. 5 years are completed. So balance useful life is how much? 7 years. If you calculate the annual depreciation, 2,75,000 will be the value. Okay. Yes, sir. This 2,75,000 will be the value of the annual depreciation. Okay, sir. Sir, now what have happened is, on 1/4/2008 pay, again there is revaluation. Oh, they have given in the question only that 1/4/2008 maybe there is certain revaluation. The machine was revalued downwards by 15%. First of all, calculate the carrying value till this 1/4/2008. Sir, as on 1/4/2006, though, my value is 19 lakh 25,000. But if you observe, as on 1/4/2008, 2 years are completed. Sir, every year I have to charge the depreciation of how much? 2,75,000. Sir, 2 years are completed. So for 2 years, the depreciation is 5,50,000. If I deduct 2 years ka depreciation, my carrying amount is 13,75,000. This is what I have explained here. 13,75,000. Sir, again they are saying out of this 13,75,000, also they are clearly saying at this time also what have happened is 15% downward revaluation. Oh, which means if you calculate 13,75,000 into 85%, if you do, you will get 11,68,750 as the revised carrying amount. Sir, my balance is 13,75,000. Revised carrying amount is 11,68,750. So, if you observe the revaluation loss is 2,06,250. Revaluation loss is 2,06,250. Now you have to understand. Sir, current carrying value is 13,75,000. Revalued amount is 7,68,750, which means now it is downward revaluation. Sir, what should be the treatment? Arey Baba, you have to check earlier what is the treatment, sir. Earlier there is upward revaluation. So now you have to check how much balance earlier I have recognized earlier. That balance should be reversed right now. Sir, earlier though you have reversed 1 lakh, earlier though you have charged 1,75,000 to revaluation reserve. But if you observe that 1,75,000 balance is not there for you, because they are saying some part of revaluation reserve ka balance should be transferred to retained earnings every year, is what they are trying to say, correct? Arey Baba, sir, because of this depreciation, because of this revaluation, my depreciation is increased. Sir, how you are saying, Arey Baba, because of this revaluation only it is 2,75,000. Sir, if there is no revaluation, my depreciation is only 2,50,000 na. Which means what is the excess depreciation due to the revaluation? Arey Baba, excess depreciation due to the revaluation is 25,000 every year. Sir, have you got that? 2,75,000 minus 2,50,000. If you do, 25,000 is the difference every year. Sir, how many years are completed? 2 years are completed. So total balance to revaluation reserve ka balance is reduced by 50,000. Revaluation reserve ka balance is reduced by how much, sir? 50,000. Sir, total balance is 1,75,000, out of which 50,000 ka balance is reduced. So my revaluation reserve, my net balance is how much? 1,75,000 minus 50,000. If you do, 1,25,000 will be the net balance. If 1,25,000 is the net balance, if 1,25,000 is the net balance, what they are trying to say is adjust this 1,25,000 from revaluation reserve, and balance amount is there now. That balance amount you have to write from P&L account. Balance amount you have to write from P&L account. So with this, your revaluation, your closing value of the asset will become 11,68,750. And they are saying just the last point is there. On 31st March 2020, okay, here they are saying, sir, useful life is now 8 years, re-estimated to 8 years. Earlier, if you observe, total useful life is 8 years. 1 second, where is this? Where is this? Earlier, if you observe, total useful life is 8 years. Yes, sir. 5 years are already completed. Another 2 years are also done. Now they are saying, okay, there is some re-estimating useful life. It is 8 years now. If it is 8 years, sir, 11,68,750 is your carrying amount. If you do annual depreciation, you will get 146,093.75, approximately 146,094 as your depreciation. This is change in accounting estimate, guys. Change in accounting estimate means you have to give the prospective effect. Change in accounting estimate means you have to give the prospective effect. Oh, since I have to give the prospective effect, for 2008-9, my depreciation will be 146,094. Okay, sir. 2008-9, though, this is the depreciation, sir, but the asset is sold on 31st March 2010, which means further depreciation for 1 year also should be charged. Sir, if you observe, further depreciation ka 1 more year, which is 2009-10 pay, again 146,094 to be charged, which means, sir, my carrying amount is 876,562. Sir, first of all, how you got this amount? Very, very simple. 11,68,750 minus 146,094. See, this is depreciation for 2008-9. If you charge this, you will get this 1022,656. Further 1 year ka depreciation, if you charge, you will be getting 876,562 as the value of the asset. Okay? Yes, sir. Sale value is 9,35,000. Carrying amount of the asset is 8,76,562. Difference will be transferred to PL account because that is profit on sale of asset. That is profit on sale of asset. Just to calculate the difference, you will understand 9,35,000 minus 876,562. If you do, you will be getting this 58,438. Whatever I have explained in the answer, they have given it in the form of a ledger account. Every detail you will understand if you see this ledger account. Okay. Yes, sir. All the calculations they have clear-cutly given, guys. See, this 2,75,000 is the annual depreciation which they have charged. That also we have calculated. This 11,68,750. This also they have calculated. Even this also, for that matter. 25,000 in 2 years, 50,000. Everything they have been explained very nicely at the end of this chapter. Okay. Yes, sir. We will be solving further 3 questions which are there, but I think your DT class ka exam oriented batch ka time is going to be commenced. So what we will be doing is we will be stopping our discussion till here. In the evening class we will meet and we will try to complete the balance portions also, and we'll be immediately starting with index 38 also will be completed. Very nicely it will be done, and we'll be starting with index 36, which is related to impairment in the evening class. Okay, sir. Yes, sir. So that's it for now, guys. Please revise whatever we have discussed in the current class. This concept notes, so anyways I have shared in the WhatsApp group. Now I will be uploading the same in the free resources ka section in the class plus ka app. Maybe I will be uploading this. Okay. And question bank, I think CFR ka workbook you have already received. Most of the students have already received. So with this, I'm closing the today's session and we'll be meeting once again at evening 6:30. Okay, from 6:30 we will be continuing the balance portion. So that's it, guys. Thank you so much. We'll meet in evening class. Class timing to 6:30. 6:30 to 8:30 or 9:30. Probably it will extend. Okay, fine. So thank you so much. We'll meet at evening. So good evening, Renuka. Good evening, Banu. So Renuka is like, sir, shall we have class till 10 p.m.? Okay, for me, there is no problem. If you're okay, let us continue. Let us keep the class for 1.5 hours right now. So till 8:30. And let us take half an hour break. And again, we'll join at 9 to 10. If it is fine for you, we can do like that only. If you have enough, what should I say? If you're enough patient, we can do like that only. Okay, so till since it is 7 to 8:30, we will continue a class, and 8:30 to 9, let us take a short dinner break kind of a thing. And again from 9 to 10, to we will continue. Fine, if it works for you, then no problem for me. Let's do the same thing. So yes, guys, let's quickly start where we have stopped in the last class. Okay. So in last class, I just wanted to revise only the crux of whatever the discussion which we are having in the last class. So directly let us start with the main thing which we have discussed is this subsequent recognition of PPE. I think there is no need for poll, Pratiksha. Most of the students are asking. So we'll be doing the same thing. Okay, no worries. We'll be doing the same thing. Okay, yes. So check this. We have been checking the subsequent recognition of PPE, and they are saying that basically there are two methods of valuation. Sir, what is the first one? First one is cost model, and second one is revaluation model. And they are clearly saying that you can either choose cost model or revaluation model. That is completely your wish. But if you are choosing a cost model for a specific class of assets, you have to apply for the other assets also in the same class, the same model you have to apply. But for different classes, you may choose different models. That is also fine. We have understood. And last May, sir, what is the accounting treatment in case of revaluation? That also we have understood. Basically, we are having two methods. First one is a depreciation elimination approach. And second one is they will be saying that gross carrying amount ka adjustment approach. Both methods are there. So both methods are basically through these methods, we can do the revaluation ka treatment. First method says whatever the depreciation which is there, that depreciation should be completely eliminated against the asset. Fine, sir. So this depreciation elimination approach works in that case. And the second type of method basically they are saying is gross carrying amount ka adjustment. Sir, what is the meaning of this gross carrying amount ka adjustment? Gross carrying amount adjustment means first you have to calculate the percentage value of increase, and whatever the percentage value of increase which is there, that percentage increase, so we have to correspondingly increase both the asset value along with that accumulated depreciation ka value also you have to increase. So that net effect, if you observe, either you follow this gross carrying amount adjustment ka approach, or either you carry this, or either you do this depreciation elimination approach, both are going to give you same results. Okay, yes, so then we have understood the treatment for this revaluation gain or revaluation loss also. So the first one, what they are trying to say is, if the asset is first time revalued, if you are getting an upward revaluation, such gain should be transferred to OCI account in the name of revaluation surplus. We can call this as revaluation reserve also, no problem. But if the first time, so if it is downward revaluation, then whatever the revaluation loss which you are getting, such loss will be transferred to PL account. Okay, yes, sir. Then we have understood the subsequent revaluation treatment also. Sir, what is the treatment for this subsequent revaluation? You have to check whether currently we have upward revaluation or not. If currently you are having upward revaluation, then you have to check what about the previous revaluation. If previously also it is upward revaluation, now also it is upward revaluation, so you are happy. whatever the thing which you have done in the past, the same thing should be repeated, which means now also I will be recognizing such revaluation surplus in other comprehensive income. But if there is downward revaluation earlier, which means some amount you have already charged to P&L account. So whatever the amount which you have charged in the P&L account, adjust such increase first, and if still there is any balance, that balance will be recognized as revaluation surplus in OCI. And then if you observe the downward revaluation cutting, and if you observe the downward revaluation cutting, Pankaj, I think there is little issue at your end only. So let's wait for 1 minute. If the issue still persists, I'll do any corrections. I'll be going a little bit slower. If still this issue comes, we will be I'll be creating the live once again. Please check and let me know if this issue still continues. Okay? Yes, sir. This downward revaluation, if you observe, you have to check, sir, what happened in the earlier. If earlier also there is downward revaluation, now also there is downward revaluation. So whatever the thing which you have done in the past, just repeat the same thing, which means now also you have to recognize the loss in PL account. But sir, if there is any upward revaluation earlier, first, how much upward revaluation is happened earlier? You have to recognize the current loss. You have to recognize the current loss against such increase. If such loss is still more, so balance loss will be recognized as revaluation loss in PL account. Okay, yes sir. Now comes the most important discussion. Sir, I have some revaluation surplus. So what I have to do with the revaluation surplus? Very, very simple. You have two options. First option, don't do anything with the revaluation surplus. You have to make the adjustment only when the asset is de-recognized or classified as held for sale. So till that date, you have to maintain that balance. But once the asset is sold, what you will do with the revaluation reserve balance? So at that time, though, you can transfer that amount to retained earnings directly because it is a not reclassified item. Okay, yes, sir. Sir, we are having another option also. Yes, Baba, we are having another option. Sir, what is this another option? Rather than sitting idle till the end of the, till the asset is derecognized, you can transfer every year some portion of revaluation surplus to the retained earnings. Sir, how much I have to do? Remember the words very carefully. Whatever the excess depreciation because of revaluation, only that difference will be transferred to PL account. Sorry, only the difference will be transferred to retained earnings every year. Okay, yes, sir. So this option number 2 also we have nicely understood. And if I am not wrong, morning we have solved one good problem as well. So what we'll be doing is first let us complete other concepts also which we have left earlier. And once those are done, we will be solving with questions so that the standard will be completed in just 1 hour, I think. So yes, we can nicely focus. So take this part. This self-constructed or bearer plant wala thing, you can just aram se observe. It is very normal thing. So whatever the principles which I have applied earlier, for example, sir, if there is any directly attributable cost which is necessary to bring the asset to the intended location and condition used by the management, all those costs will be capitalized. Guys, another thing also you just have to remember, borrowing cost. For this, we are having a separate standard, which is in days 23. I have marked that as what should I say, B category ka standard. But the thing is, we will be solving at least some 2 to 3 problems. Okay, some important problems are there. We will be only solving those problems. But sir, what this is trying to say is we are having one question also. So through that, I will explain you the concept of this borrowing cost. Simple. Assume you have taken a loan. Assume you have taken a loan and you are using that loan to purchase or to construct a qualifying asset. So if the asset is a qualifying asset, then only we have to add that to the cost of the asset. If the asset is not a qualifying asset, then you should not add that to the cost. So then what we have to do, if it is not a qualifying asset, whatever the borrowing cost which is there, that will be transferred as an expense to PL account. But if it is a qualifying asset, always remember such borrowing cost will be added to the cost of the PPE. Okay? Yes, sir. Then incidental operations. This is also not that much important from exam perspective. So what we'll be doing is we'll be quickly moving with this part. So what is the meaning of this incidental operations? Guys, if you observe, assume there is one vacant site which is there. On that vacant land though, what you are thinking is you are thinking to construct a big building. Okay? Yes, sir. So till the time the land is vacant, what I have did is I have just given that vacant site as a parking site. I mean, so whoever basically parking in that site, they will be giving me some sort of income. In this case, Are Baba, we just have to understand only one principle, whether that operation, whether that expenditure, or whether that cost, or whether that income, if it is necessary to bring an item to the location and condition intended by the management, then only it will be adjusted in the cost of the asset. Sir, here it is immaterial for me, it is unnecessary, it is not at all required. Whether I have given the asset as a parking site or not, that is no relation, that has no relation with the construction of the PPE, sorry, construction of the building. So simply they will say that whatever the incidental operations pay, whatever income or expense you are getting, that will never be included in the cost of the asset. So what we have to do, we have to treat that as an expense or income in your P&L account. Okay? Yes, sir. Another important point. This point we have already understood. If any asset is in the location and the condition which is intended to be used by the management, guys, you have to remember this term, because maximum cases in this standard pay, if any question is coming, you have to highlight this word. Sir, what is this word? If any asset is in the location and condition which is intended to be used by the management. Once the asset is ready, whatever the cost we have incurred subsequently after that, those will never be capitalized. Okay? Yes, sir. Any subsequent cost if incurred, they should not be capitalized. For example, they have given initial operating losses. First of all, these operating losses are there. Now, these are losses. But once your asset is already ready to use, then only you are incurring these losses. So as per the principle, since the asset is already ready to use, we should not capitalize the same item. So that is the reason what we have to do is we have to, what should I say? You should not be capitalizing once the asset is already ready to use. Okay, sir? Yes, sir. Next point. Acquired by way of government grant. Guys, this government grant related also, there are many other accounting treatments also which are possible. So one type of income is you can recognize that government grant as, what should I say, that should be treated as an income. That also is allowed in the standard. But here what we are talking is, if that government grant is specifically related to purchase of acquisition asset, to purchase of one asset, in that case, you have to reduce that from cost. In that case, you just have to reduce that from cost. Okay? Yes, sir. Simple. Assume the cost of the asset is 10 lakh rupees. Government have given you 2 lakh rupees grant. Then what you have to do, you have to deduct this 2 lakh rupees from 10 lakh and you have to recognize the value of the asset as 8 lakh rupees only, because this 2 lakh rupees is nothing but the government grant. So that is the reason why this government grant should be excluded, should be reduced from cost of the asset. Okay? Yes, sir. Next, little bit important. So you have to understand this part. Sir, what is this? Acquired by way of deferred payment credit. Acquired by way of deferred payment credit. Sir, what is the meaning of deferred payment credit? Simply it is nothing but EMI. If you purchase anything on EMI, what the standard is saying is, Are Baba, you have to record at cash price. Sir, what is the meaning of cash price? Cash price means pure price of the asset only you have to recognize. Because Ind AS always love this word, which is called as substance over form. Sir, what is the meaning of substance over form? Let us try to understand with the help of the following example. Okay? Yes, sir. If you check, sir, plant and machinery I have purchased for how much, sir? 33,33,333. Three payments I have to make. I no need to make entire 33,33,003, sorry, entire 99,99,999 on the first day itself. Sir, what I have to do is, you can make three payments of 33,33,333. First payment though, right now you have to pay. So still you are having two payments. One payment though at the end of first year, second payment though at the end of second year is what you have to do. Okay? Yes, sir. They have clear-cutly given implied interest rate equals to 5.36% per annum. Sir, here what you have to do is, Are Baba, if you observe, if you are a student who multiplies this 3 and 33 lakh 33,333, you will get 99 lakh 99,999. If you record the asset at 99 lakh 99,999, you are stupid. Let us repeat the example very quickly. Okay? Yes, sir. Plant and machinery is there. I am making 3 payments of 33 lakh 33,333. Not immediately, because we can see the notes in the app while we can't attend the class simultaneously in the system. Fine, no worries. So quickly check this. So 33 lakh 33,333 should be paid in 2 years, which means currently you have to pay 33 lakh 33,333 as a down payment. Next 2 payments to 1 year. I mean, at the end of the first year, you have to pay 33,333,333, and at the end of year 2, you have to again pay 33,33,333. Okay, fine. So, and they are saying since first payment is down payment, if you recognize 3 into 33 lakh 33,333, which means if you calculate this 99 lakh 99,999, it is totally stupidity. Because if you observe carefully, this 33 lakh 33,333 into this 3, there is some interest component also which is included here. This interest component is actually interest. That is what Index is teaching us. Are Baba, since this is clearly treated as interest, you should not include that in the cash price of the asset, na? In other words, implied interest rate, they will give 5.36% per annum. So what you have to do is you just have to calculate the present value of the asset. Okay, so how we will be getting the present value of the asset? Very simple. Year 0, year 1, year 2. Year 0 may I have to pay 33 lakh 33,333. अरे बाबा ईयर 0 में 33,33,333 का प्रेजेंट वैल्यू इज आल्सो 1 rupee, बिकॉज करेंटली वी आर चेकिंग. सो 33,33,333 फर्स्ट ईयर का एंड में सर आई एम मेकिंग 33,33,333. what is the present value interest factor at 5.36% 1 year? The value comes to 0.949. you can check this, then you will get this amount. ठीक है sir, last year तो भी I will get this figure. Put together if I add, I will get 95 lakh rupees. ठीक है? Yes sir. Sir, entry how we will be passing, sir? Very simple. PPE account data to bank में initially you have to pay 33 lakh 33,333. Vendor pay you have to pay 61 lakh 66,667. Sir, year 1 का end में finance cost will be recognized. Year 2 के end में भी finance cost will be recognized. Sir, how we will recognize the finance cost? That morning only we have understood one example, correct? If you observe amortization table will be making, this kind of amortization table will be making, and at the end of the year 2, so the balance is going to be anyways 0. Okay, you can try that guys, it will happen like that only. Okay, fine sir. Next comes little bit not that much important, so we'll move quickly. Exchange of an asset. Sir, what is the meaning of exchange of an asset? Simple baba, one PPE is there, it is exchanged for another PPE. One old plant and machinery is there, it is exchanged for new plant and machinery. Sir, now at which value you have to check? You have to recognize. First, remember, if there is any commercial substance which is there, if there is any commercial substance which is there, then what you have to do is the first preference, so you have to always give to the fair value of the assets given up, which means whatever the assets you have given up, that ka fair value you have to take. Sir, it is not possible. Only in the question they have not given the value of the fair value of the assets given up. Then baba, second preference, so if you want you can recognize at the fair value of the asset received. Okay, yes sir. Sir, this is also not available, this is also not available, or exchange may there is no commercial substance only. Fair value of the asset given up is also not available, fair value of the asset received is also not available. Sir, first of all, there is no commercial substance only. In all these cases, what they are asking is, Are Baba, you just have to simply record at the carrying amount of the assets given up. Okay. Yes, sir. Sir, if you are paying any cash also, please add that cash to the above amount. If you are paying any, if you are receiving any cash also, please deduct such from any amount which you are going to receive. Fine, sir. Sir, first of all, what is the meaning of commercial substance? Commercial substance means change in configuration of the cash flows. Sir, what is the meaning of this? Simple. Assume you are having one existing plant and machinery which is having the ability to produce only 10,000 units. So what I did is, that machine is not sufficient for me. So what I did is, I went to another trader and I have asked him to exchange the plant and machinery. For example, another plant and machinery which is having the capability to produce 15,000 units per month. Now I will exchange my plant and machinery and I will pay some amount in cash. If you observe here, there is a change in cash flows. Earlier, whatever the machine which you are having that have the capability only to produce 10,000 units, but since you are having the new machine, you are having the ability to produce 15,000 units, Baba, which means there is a change in the configuration of the cash flows. So here I will say that there is a change in configuration of cash flows. For example, if you observe, you can remember like this, you are having one iPhone 16 Pro Max black color. If you are exchanging this iPhone 16 Pro Max wala black color with iPhone 16 Pro Max titanium, there is no commercial substance in this case because both are exactly same. Both ka functions are exactly same. Another example, you have one Continental GT which is chrome color. If you want to exchange that for Continental GT which is in red color, in this case also, where is the commercial substance? There is no commercial substance. Sir, if there is no commercial substance, then always you have to remember that you will be recording at the carrying amount of the assets given up. Okay? Yes, sir. Again, not that much important. So we have quickly moved the things. Yes, sir. We have already completed this parts also. This revaluation ka part also we have already completed. So now let us quickly check this subsequent costs ka discussion. Okay? Yes, sir. Fine. Yes, guys, we are moving towards the end of the standard. So let's quickly check this part. Sir, subsequent cost means already the asset is ready to use. Already the asset is ready to use, but subsequently, if you have incurred any cost, then what is the treatment? It is said in this first one, sir, repairs and maintenance. Simple, Baba. Once the asset is already ready, if you do any day-to-day servicing ka things, if you do any labor-related expenses, any consumables, any replacements, small, minor changes, small parts ka replacements and all, those will be recognized as an expense in P&L account because it is very, very simple. Okay, asset is already ready to use. So whatever the subsequent cost which have been incurred, all those will be recognized as an expenses in PL account. I hope you are understanding. Yes, sir. So next part, guys, replacement parts. This is important. Replacement of parts. Very, 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 very important. Very, very crucial. Next two questions are based on this concept only. Sir, what is this concept? Try to understand. Some items or parts of the PPE may require frequent replacements, while others may not require frequent replacements. Sir, can you please give us examples? Please check the following. You will be understanding. Example, airplane interiors are there. If you check the interiors of the airplane, those requires frequent replacement because customers will judge upon their interiors. Most of the customers will do like this only. So that is the reason why those airplane interiors, so always they need a frequent replacement. And not only this, there are some guidelines also. Okay, in ICMAI, if you are traveling, basically, if those interiors and all, if they have become old, they may carry some sort of air pressure, and because of which severe injuries also may happen. So that is the reason they will be very frequently checking the interiors, and even huge replacements also will be taken place in these airplanes. In this case, it is a frequent replacement. Sir, but if it is not a frequent replacement, for example, interior walls of a building are there. If once the building is constructed, I am damn sure that for the next 5 to 10 years, though, there is no frequent replacement. Replacement can be any type. First of all, it can be a frequent replacement, and second, it cannot be a non-frequent replacement also. So here, what the standard is suggesting is recognize as PPE if the recognition criteria is met. Otherwise, record as an expenditure. Sir, what is the recognition criteria? Very, very simple. It should be probable that the future economic benefits should be flow to the entity. And second part is, sir, cost can be measured reliably. If both the criteria are satisfied, then only we have to recognize the same as a PPE. Sir, if nothing is satisfied, then you have to aram se record the same as an expenditure. Okay? Yes, sir. Next, super important. Major inspections or overhauls. Major inspections or overhauls. You have to remember this word, which is overhauls. Generally, these will be performed for huge equipments or aircrafts or ships. It is mandatory in the respective act itself to undergo few inspections or overhauls. It is mandatory. If you don't undergo these inspections or overhauls, it is very difficult for you. Okay, they will not allow you to fly, or they will not allow you to travel only. That much stringent they are. Okay, yes sir. Sir, when each major inspection is performed, you have to recognize the same as PPE. Again, they will say the same point. The recognition criteria should be met, sir. Once again, the recognition criteria is very, very simple. Cost should be measured reliably. Future economic benefits should be flowing to the entity. Okay, sir. Last point, if you observe, if any expenditure increases the capacity of the PPE beyond its originally assessed standards of performance, it will also be capitalized. Sir, what is the meaning of this? Simple. Assume there is one big machinery, and in that big machinery, though, there is some small part which is there. Because of that part, I am able to produce only 10,000 units. 10,000 units of a certain item. So now what I have did is, I have decided to replace that part with a new part, which has the capacity to produce 12,000 units. Since I have replaced that, my performance is increased, my capacity is increased beyond the originally assessed standards of performance. Therefore, it should be capitalized. Therefore, it should be capitalized in all the cases. As and when I have said the word, you have to capitalize. Capitalize, simply you have to check one thing. Sir, whether I am getting future economic benefits because of that or not. Second part, sir, whether the cost can be measured reliably or not. You have to check this, both the items. If both the items are satisfied, then only you have to check the things. Okay, this inspection ka cost ka example, if you go through, you will be understanding what I am trying to say. Okay, yes, so next, if you observe, guys, we are moving towards the end of the standard. Just a moment, I'm checking whether if there is any important part which is left. Okay, yes sir. Guys, quickly come to questions. So which question let us solve is, quickly come to this fourth question, guys. It is little bit important. So let us open the fourth question. Okay, yes sir. Fine, sir. So check this question. Sir, what they are trying to say. Sir, A Limited have purchased an aircraft at a price of 6,300 crores that requires major inspection and overhauling every 4 years. They are saying, sir, there is one cost. There is the cost of the aircraft, which is 6,300 crores. And they are also saying, sir, it requires major inspection and overhauling every 4 years. Since it is a major, what we will be doing is, since it is a major inspection and overhauling, we have already understood that, sir, it will be obviously satisfying the recognition criteria of a PPE. Therefore, it should be capitalized. Let us read the question further. Sir, what they are trying to say is, the estimated life of the aircraft is 15 years. Try to understand. Here you have to understand two different things. Sir, first one though, this overhauling and inspection ka component ka useful life is how much? 4 years. But the useful life of the aircraft is 15 years. They are saying, sir, the aircraft was purchased in 2015 and major inspection and overhauling is made in 2019 at a cost of 100 crores. Try to analyze the question. Sir, aircraft is purchased in 2015. Okay, fine, sir. If you read the last line of the question, they are saying, sir, aircraft ka residual value is estimated at 300 crores. एयरक्राफ्ट का रेसिडुअल वैल्यू इज एस्टिमेटेड एट 300 crores. अरे बाबा, useful life, sorry, cost of the aircraft is 6,300 crores. Useful life is 15 years. Scrap value, residual value is 300 crores. Can you calculate and tell me the annual depreciation? The annual depreciation of this aircraft is 6,300 minus 300 divided by 15 years you have to do. If I do this, I will be getting 400. What is this? 400 crores per annum will be my depreciation. That will be my annual depreciation. Here you have to understand only one thing, guys. This inspection and overhauling component is there na, that we have to depreciate separately, and this aircraft ka amount we have to depreciate separately. So why we have to do like that? Because this inspection and overhauling is a separate useful life item. Aircraft is having separate useful life. So we cannot see, this is what we have learned even in your CMA Inter also, which is called as component wise accounting. If your PPE have multiple components with different useful lives, you can choose to value each of the component separately depending upon their useful lives. If you observe the question, very, very simple. Sir, aircraft though, it should be separated, it should be separately depreciated. And this, what should I say? Overhauling and inspection, the cost also should be separately depreciated. Sir, how this inspection and overhauling should be depreciated? Useful life is 4 years. Now, let us read the question further. In 2020, A Limited further incurred repairs and maintenance in the engine to raise its capacity by 10%, amounting to 70 crores. Here they have specifically given that, sir, it will increase the capacity by 10%. Just now we have written one point. If any expenditure have the capacity to improve or increase the originally assessed standard of performance, that is going to get capitalized, which means the 70 crore also will be capitalized. Again, they are saying one more thing. Sir, one worn out component in the wing was replaced at a cost of 80 crore rupees. Sir, there is one replacement of a component which is there. One component was totally damaged. So I have decided to replace the component. Sir, the cost of the new component to 80 crore. Carrying amount of the old component to 30 crores. Scrap also you have got, and that scrap is 12 crores. The question is very simple. Let us try to solve the question directly. Okay? Yes, sir. So whatever the data which we have studied, just stuff I have copied here. Sir, cost of aircraft is 6,300. Residual value is 300. Useful life is 15 years. Per year ka depreciation is 400 crore. Okay? Yes, sir. Sir, overhauling is made in 2019 at a cost of 100 crore rupees. 2020 may they have increased subsequent costs because of which the capacity is increased. So this 70 crore also will be capitalized. Okay, sir. Replacement of the old component though, 30 crore will be carrying cost of the old component. New component ka cost to 80 crore. Sir, scrap is also there, sir. How much scrap is there, sir? 12 crore ka scrap is there. Very, very simple calculations. Sir, what the question is asking you to calculate, it is asking you to calculate the amount to be recognized as an expense and as an asset. Expense means depreciation. Because assets though, you will be charging depreciation. So they are indirectly asking you to calculate what is the amount of depreciation and what is the amount which is to be capitalized. 2 years they have asked. Sir, in 2019 also we have to calculate, and 2020 also we have to calculate. And they are also asking you to calculate the carrying amount also now. So very, very simple. Quickly come to the question. Sir, carrying amount of the aircraft as on 1/4/2019, let us calculate. Since you have purchased the asset on 2015, if you want to calculate the aircraft ka value as on 2019, 4 years are completed. If 4 years are completed, sir, my accumulated depreciation is 4 into 400, which is 1600 crore. Sir, the cost of the asset is 6,300 crore. The accumulated depreciation is 1600 crore. If you calculate the carrying amount, it will be 4,700 crore. Guys, please give me a heads up if you have understood this carrying amount ka calculation. My carrying amount as on 1/4/2019 is only 4,700 crores. I'm waiting for you. If you have understood this, please give me a heads up. Then I will be moving to the next part of the question. Please go through this. You have to understand how this carrying amount is calculated. Okay? Very good, Ramya. Very good, Banu. Very good, Pankaj. Super. Excellent. Super. Now, sir, as per Ind 16, overhauling cost and inspection cost will be capitalized to the cost of PPE when the recognition criteria are met. Sir, in 2019 May, we have to include this overhauling cost also. Which means current carrying amount is 4,700 crore. This major inspection and overhauling cost, which is 100, will also be added to the cost of the asset. Now, if you ask me to calculate the depreciation for the year 2019, simple. Arey baba, aircraft ka value is there na. Sir, aircraft ka value is how much, sir? 4,700 crores. Sir, but again we are having 300 crore ka scrap value. Minus balance useful life is how much, sir? 11 years. Sir, why you are saying 11 years? Initially, the useful life is 15 years. But 4 years are completed. Sir, what is the balance useful life? Arey baba, balance useful life is 11 years. Sir, because you have to do the depreciation separately component wise. Aircraft to 11 years useful life you have to take. 300 ka scrap also you have to consider. Sir, but overhauling to 100 is the expenditure, but every 4 years I have to do the overhauling. Therefore, this 25 crore, sir, have you got this 25 crore? 100 by 4 if I do, I will be getting 25 crore. Sir, if you calculate the net carrying amount as on 31st March 2019, 4,700 is your initial carrying amount plus 100 you have to add this cost of, overhauling amount minus 425 you have to add. Sorry, 425 you have to deduct. Then you will be getting 4,375 crore. Please give me a heads up if you have understood the calculation still here. Have you understood this point or not? You have to do the component wise accounting, and this is exactly the meaning of component wise accounting. So please give me a heads up if you have understood. If you have understood till here, let us move to the next point. Let us move to the next point, guys. Brilliant, Ramya. Fine. I hope you guys are getting clarity. Super. Very good. Very good, Pankaj. Excellent. Clear going. So now let us check the things. Sir, still the question is not over. Another small point is there. Sir, what is that small point? Arey baba, replacement of worn out component and capacity enhancement. Sir, now what have happened is cost to be included in the PPE is, sir, this is the 70 crore the capacity enhancement is there. Because of this 70 crores, they are saying that 10% pay, there is some change in capacity. So what I will be doing is, since capacity is increased, will be capitalized. So next part here, what you have to capitalize is whatever the new component which is there, recognize the cost. Recognize the cost of the new component, sir, but currently also I am having some value now. So whatever the value which is there, that you have to de-recognize. That you have to de-recognize, which means what, sir? This 70 plus 80 you have to add, since this is a new component, minus 30 you have to do. Sir, why I have to minus 30? Because this is existing component na, that should be de-recognized, and whatever the new component which you are purchasing, please recognize the asset. Sir, this 70 is also new capital expenditure only. So the net cost which I have to be added is 120 crore. 70 plus, sorry, minus 30 plus 80. If you do, you are going to get this 120 crore. Sir, next part, last part में. Sir, what is the carrying amount? Simple बाबा. Sir, carrying amount तो है ना. Earlier तो 4,375. But now 120 is added, which will give me 4,495. Now try to understand. Now also you have to do the depreciation component wise only. Sir, if you observe in this 4,495 may 75 is relating to the overhauling cost, because earlier the cost is 100, 25 is depreciated. Sir, what is the balance value? 75 is there. Sir, what about the balancing figure? Balancing figure is nothing but 4,420. Arey Baba, this should be depreciated separately. This should be depreciated separately. This is what I have exactly did here. 4,420 may say 300 you have to deduct. Sir, but now the balance useful life is not 11 years, it is only 10 years. Which means your depreciation is going to be 412. Sir, overhauling a cost also I have to depreciate right now also na. Sir, at which value? 75 by 3 if you do, it should be depreciated at 25. Sir, if I add the total, 437 is the total value. So, sir, net carrying amount at the end of 2020 is 4,058 crore. So, please check this if you have understood the concept or not. If you are fine, let us quickly go through the question, and this question is completed. Okay, so please give me a heads up if you have understood till here. Then we'll immediately move to the next part. I hope this is clear for you. Yes, sir. Fine. So we have whatever the depreciation which I have written, that will be charged to the P&L account. And here some amounts I have written as capitalized. So that will be capitalized, which means if you observe, this 100 also will be capitalized. This 120 also will be capitalized, and that's it. Okay, fine. So if you read the question, this scrap is there na, scrap of 12 crores. This 12 crores also will be recognized as income in P&L account. Okay, this is what they have given. If you observe, so this 4,375 also we have got, 425 depreciation also we have got, 400 depreciation also we have got, and last May, this please change this to 437. I think they have written some different amount here. Okay, so please change this to 437. Depreciation for the year 2020, we have calculated this 437 to this one. Okay, yes sir, this 437 you have to correct. Old component derecognized amount is there now. This 18 rupees also should be transferred. Okay. Okay, just a second guys, small thing. If you observe this, sir, carrying amount of the old component is 30 crore. Carrying amount of the old component is 30 crore. If you pass the journal entry, you will be slowly understanding the thing. Sir, how much amount I have received? Arey Baba, you have received the bank account debtor 12 crore. Two, sir, what is the carrying amount of the old component? Sir, old component, so I will be debiting. Sir, old component, so 30 will be crediting. Sir, what is the difference figure? Difference figure is nothing but P&L account. Because that is nothing but loss on sale of plant and machinery. Sir, 18 crore is the value. I hope you are getting the point. Yes, sir, we have understood the point. So this 18 is there now. This 18 also will be charged as a loss. This 18 will be charged as a loss in PL account. Okay? Yes, sir. Yes, sir, we have exactly understood this question. Nice question it is. If it is fine for you, what let us do is, let us quickly start this 9th question. Okay? Guys, this 9th question though, okay, I will explain the crux of this question and you have to definitely check this question. Okay? Yes, sir. Just a moment. Fine. So quickly check this. So question number 6, a little bit important. So check this. Sir, Alpha Limited has a machinery at a cost of 4,800 and provision for depreciation of rupees 1,600 as on 1/4/2018. Slowly let us understand the question. We have to break down the question. Cost is 4,800, depreciation is 1,600. Sir, can you calculate and tell me what is the carrying amount? Even if I don't read the question also, I am getting a feeling that, sir, cost they have given, depreciation also they have given. So immediately I have to calculate the carrying amount. Sir, what is the carrying amount? Carrying amount is 3,200. Carrying amount is 3,200. Fine, sir. On that date, though, remaining life is 6 years. Residual value is 800. Sir, my carrying amount जो है ना, my carrying amount is 3,200 minus residual value is 800 divided by useful life is 6 years. If you calculate depreciation per annum, you will be getting 400. You will be getting 400 rupees will be the depreciation which I am charging. Okay, sir? Yes, sir. Next one. On the same date, they are saying one component of the machine is replaced. The price of the new component, they are giving 600, which means this 600 is there now. This 600 should be added to the cost of the PP. Sir, old component ka carrying amount should be de-recognized. Na. Sir, what is the old component ka carrying amount? That also they have given. Old component ka carrying amount is 500 with accumulated depreciation of 200. If you calculate the carrying amount of the old component, you will get 300. Okay, sir. Sir, the supplier of the new component took the old component at a fair value of 360. The carrying amount is 300, but the supplier is taking over at 360, which means you have got a profit of 60. New component ka value, sorry, old component ka carrying value is 300, but the supplier is saying, okay, I will accept this at 360 only, which means there is a profit on such sale. Na. Okay, sir. Next one. On 31st March 19, the machine is revalued as per company policy at 5,000. Okay, sir. On 31st March 2020, an impairment loss of 900 has been recognized. This makes this question very, 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 very important. They have combined Ind AS 16 also and Ind AS 36 also in this standard. Sir, what is the Ind AS 36? Impairment of an asset. Okay, let us analyze the question. Very, 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 very important. If you check this, whatever the things which I have summarized everything in this. Okay, you have to understand this. First one, because the cost is 4,800. Sir, provision for depreciation is how much, sir? 1,600. So carrying amount is 3,200. Sir, scrap value is 800. Remaining useful life is 6 years. Are Baba, if I calculate the annual depreciation, my annual depreciation will be 400. Just now I have calculated. Sir, have you got that? 3,200 minus 800 divided by 6. Okay, sir. Sir, replacement is happened na. Are Baba, old component ka carrying amount will be de-recognized and new component ka cost will be recognized. Old component carrying amount will be de-recognized. New component ka cost will be recognized. Sir, earlier my carrying amount is 3,200. So if I add 600 and if I deduct the 300, obviously my revised carrying amount will be 3,500 na. Okay, sir. Please charge the depreciation for the year 2018-19. Sir, what will be the depreciation? Very, very simple. 3,500 is the carrying amount minus 800 is the scrap divided by 6. If you do, you will be getting 450. Okay, sir. Sir, my carrying amount as on 31st March 19 will be 3,050 rupees. My carrying amount as on 31st March 2019 will be 3,050. Okay, sir. Yes, sir. Check the question. Sir, on this date, suddenly they have given the fair value. Oh, sir, fair value though is 5,000. Carrying amount is 3,050. Now you have to tell me, sir, is it upward revaluation or is it a downward revaluation? Right answer is obviously it is upward revaluation because your asset ka value is more than the carrying amount. Okay. Yes, sir. We have understood. Increase in carrying amount is there in 1950. If you remember the accounting treatment, sir, this will be transferred to revaluation surplus. Na. Since this is upward revaluation, asset will be increased and credit I have to give to the OCI account, which is revaluation reserve. Now, if you understand the things, sir, on 31st March 19, revised carrying amount is 5,000. From next year onwards, I have to charge the depreciation on this 5,000. Na. For the year 1920, if you calculate, sir, 5,000 is what, sir? 5,000 is the carrying amount ka value. Minus 800 is the scrap. And now your balance residual life is how much, sir? 5 years only. Because earlier it is 6 years. Sir, 1 year have completed, na? Therefore it is only 5. If you calculate right now, you will get 840. You will get 840 and your revised carrying amount is how much? And your revised carrying amount, if you calculate how much it is, 5,000 minus 840. How much? 40? 4160. Okay, here I have calculated the, no worries. Okay, sir. So here I have got 4,160. Now you have to understand only one thing. Sir, we already know that we are having two methods basically. First method is, sir, you please keep the revaluation reserve ka balance as it is till the asset is derecognized. Second option is you have to transfer depreciation every year. Sir, how much depreciation do I have to transfer? Are Baba, how much excess depreciation due to the revaluation which is there, that excess ka depreciation only should be calculated. Are Baba, here if you observe, sir, now my depreciation is 840 because revaluation has happened. So if the revaluation is not at all happened, my depreciation would be only 450. Sir, if depreciation is not at all happened, what is my depreciation? Sorry, if revaluation is not at all happened, my depreciation is only 450. Because the asset is revalued to 5,000, my depreciation is 840. Oh, if you observe, difference is there na. That the difference is nothing but excess depreciation because of the revaluation only na. Sir, what is the difference? 840 minus 450 if you do, you will get 390. Sir, earlier I have 1950 credit balance in OCI account, but now unfortunately this 390 have to be deducted now. So what is your carrying amount? What is your balance amount? Balance amount will be only 1560. Balance amount will be 1560. Okay. Yes, sir. Sir, they have also given the gross carrying amount is 4,160. 4,160 is the gross carrying amount. So this is different thing. Okay. Yes, sir. This 5,000 minus 840, if you do, you will get 4,160 here. But they are saying one more thing, guys. Sir, what they are saying on 31st March 2022, impairment loss of 900 is also there. Oh, impairment loss of 900 is also there. Yes, sir. Impairment loss will be reduced from the carrying amount. Sir, why we have to do this and all? We are having a separate standard. In days 36, we will discuss that. But now, 4,160 minus 900, if you do, you will be getting 3,260. Please check this part whether it is correct or not. Okay, sir. Now understand the things. They are saying, pass the journal entries and show the accounting treatment. Okay? Yes, sir. If you see, they are asking you to do for 2021 also, which means you have to also calculate the depreciation for the year 2021 also. So the carrying amount is 3,260 minus 800 scrap is still there. 800 scrap you have to deduct. Sir, now what is the balance useful life? 4 years. So please calculate this. 3,260 minus 800 divided by 4. If you do, you will be getting 615. You will be getting 615. Now also try to understand. Sir, only because of this revaluation, my depreciation is 615. Sir, if depreciation itself is not there, sorry, if revaluation itself is not there, my depreciation is only 450. Sir, whatever the excess depreciation which is there, Are Baba, excess depreciation is 165. This 165 also will be adjusted from revaluation surplus. Now try to understand one single part. One small point is there. Sir, this impairment loss is there. Now, what is the treatment of this impairment loss? Normally speaking, impairment loss will be charged to P&L account. Sir, so what is the entry? Impairment loss account data to PL account. Impairment loss, sorry, P&L account data to impairment loss. Okay, it is loss, so it will be debited to the P&L account. So P&L account data to impairment loss will be the normal entry which you have to pass. But if there is any balance in revaluation surplus, instead of PL, please take revaluation surplus. That's it. Normally, impairment loss should be debited to PL account, sir. But if there is any balance in OCI, please utilize that balance first. Aram se. Through journal entries, you will exactly understand what I am trying to say. Through journal entries, you will be exactly understanding what I am trying to say, guys. Slowly check this journal entry. Okay. First journal entry, if you observe. 1 second, is it relating to this question only, by the way? Fine, sir. So quickly check this. First journal entry, if you observe, sir, question mein they are saying, sir, 600 is the cost of the new component. Old component ka cost is 500. So that should be de-recognized. Sir, first that old component is having a debit balance. So first it should be credited. First it should be credited. Okay, sir. Sir, accumulated depreciation will be generally having a credit balance, since in order to cancel that, it should be debited. So accumulated depreciation account at R2, 200. Sir, now what have happened is, normally the component ka value is 300 rupees only, but supplier have taken it 360, which means I'm having a profit only. Which means I'm having a profit only na. So 360 minus 300, if you do, you will be getting this 60 rupees. Sir, balancing figure is there na, balancing figure. So I have to pay in cash. What have happened in this transaction is, supplier is there. Supplier is there. What supplier is saying is, okay, let us try to understand this like this. Sir, new component is there, sir. New component ka value is 600 rupees. Sir, existing component ka carrying amount is how much, sir? Existing amount ka carrying amount is 300 rupees. But I am saying that I will give you not 300, I will give you 360. I will give you 360, which means extra 60 also. Extra 60 is also old component ka value. If you observe, the difference is 240. And this 240 is nothing but you have to make the payment. And this 240 is nothing but you have to make the payment. I hope this point is clear. 500 is the existing, new old component ka existing value. 200 is the accumulated depreciation. So the balance, if you observe, 300. But supplier is saying, no. The value is not 300. The value is 360. Which means you have to pay the difference of 240 only. Please give me a heads up if you have understood this journal entry or not. If yes, then we will be moving further. Waiting for the answer. Please give me a heads up if you have understood. Guys, this is net entry going on. Okay. If you observe this journal entry, sir, 600 is the total cost of the component. 300 is the old component ka value, but supplier is saying, no, Baba, no, this is not 300. This is 360. So that extra 60 is nothing but the profit. Sir, then what about balance 240? Balance 240 you have to pay now. Then only supplier will be giving you the component. I hope this is clear. If yes, whatever the things which I have calculated upwards, I have just written the journal entries. If you check first one, depreciation account data 2, provision for depreciation. Sir, what is this? 450, 450. Check the 450 where we have got the amount. Here, Baba. 450 is done, sir. Yes, sir. 450 I have passed it, sir. First entry, sir. Sir, this depreciation is there now. This P&L account, from this P&L account, this will be transferred to depreciation. From this P&L account, this will be transferred to the depreciation. Okay. Yes, sir. Are Baba, here if you observe, sir, machinery account data to revaluation reserve, because the machine is upward revalued. So 1950 will be debited. Okay, sir. 1950 will be debited. Next part, Baba, try to observe, sir, 31st March 2020 May, Second year pay 840 is the depreciation which they have charged. So I will be passing the entry for the same amount to depreciation account deduct to provision for depreciation, which is 840. So this will be transferred to PL account. So P&L to depreciation 840. Next year pay what have happened is, this also we have already calculated now. Sir, excess amount is there now, 390. This will be transferred from revaluation reserve to other equity. Just now I have said now, excess depreciation due to revaluation should be transferred to other equity. Sir, what will be the journal entry? Simply speaking, Baba, revaluation reserve will be reduced and other equity will be increased, or retained earnings, anything you can say that. So revaluation reserve will be increased, decreased, retained earnings will be increased. Okay, 390. Fine, sir. But sir, impairment loss is also there na. Arey Baba, because of this impairment loss, your machinery ka value will be reduced. So first the entry will be impairment loss account at to machine accounts are how much, sir? 900. Arey Baba, this 900 is there na. This 900 should be normally transferred to P&L account. But sir, I am having revaluation balance. Why you have created the revaluation reserve ka balance? Because you know that, sir, asset is upward revalued. But no, it is not the case. Your asset is actually impaired. It is contrasting. You are saying that your asset is having upward revaluation. Again, you are saying that your asset is impaired. So both should not exist hand in hand. So first utilize this impairment loss ka balance against the earlier, whatever the gain you are having. So first one, sir, you have to utilize this revaluation reserve only to set off this impairment loss, which will give me 900. Okay, sir. Next, Baba, next year May 615, sir. How I got this 615, sir? 615 also we have calculated, guys. And not only this is the amount which should be transferred to equity. Okay. So if you observe the entries which I am passing, depreciation account added to provision for depreciation 615, P&L account added to provision for depreciation 615, revaluation reserve to retained earnings 165, which means my question is completed. So what I am asking you to do is please go through the entire question for 2 minutes. If you have understood, please type yes in the chat box. Then we will be moving with very another important question. Okay, so please go through the entire calculations, all those things you have to do. If it is fine, please give me a heads up. Then we will be solving with the next most important question. Okay. Yes, sir. I was waiting for your answer. So if you are completed, so please give me a heads up. We will be solving with another set of important question, which is this question number 8, guys. From Pankaj. I think only Pankaj is doing. What about others? Are you there or are you sleeping or whatever it is? Please reply and then sleep. Okay. 14 members are there in the chat box, but only one person is responding. I don't like it. See, messages have to flow like anything. Okay. 25 members are online right now. Everyone have to participate because based on your participation only, my interest will be there. Okay. If you guys are participating, I will be explaining more nicely and more fastly. Otherwise, okay, I will explain like fine. So very good. The responses are fine. So let me take my calculator also. We'll solve this together. Thank you so much, Renuka. Thank you so much. Okay, so quickly check this. Question number 12. Slowly understand this question. On one hand, your calculator should be there. So whatever I am saying, you have to calculate those items and you have to be very much ready with the things. Okay? Yes, sir. So just a moment. Okay, so quickly read the question. So if you check the things, they are saying Paramatma Tulsi Limited provides you the following information. Okay, so the first point, guys. So on 1/4/2015, what have happened is, sir, on 1/4/2015, though they have borrowed 5 lakh rupees at 12% per annum to construct 10 machines and incurred 8 lakh rupees on materials, 2 lakh rupees on labor, 50,000 towards freight and insurance, 20,000 towards carriage inwards, and 10,000 on site preparation and installation. Okay, sir. So they are also saying estimated total physical life is 10 years, but the company considers it is likely that it will sell the property after the 4 years. First point you have to tell me, sir, what are the expenses which will be included in the cost of the asset? Ignore this interest component for the time being, and other than this interest component, what all the items which should be included in the cost of the asset? Quickly calculate and tell me. I'll be giving just 30 seconds time. You have to calculate and tell me, sir, what all the items other than this interest which should be added in the cost of the asset. Okay, quickly calculate the things. I'm waiting for your answers. You guys have already know that, sir, this 8 lakh is a direct expense which should be added to the cost of the asset. Okay, sir. Labor cut 2 lakh also should be added to the cost of the asset. I already got an answer from Pankaj. Bharat have also typed in the answer. So very good. I think that answer is correct, but let me just quickly check that. 50,000 towards freight and insurance also should be added. Sir, 20,000 towards carriage inwards also. 10,000 on site preparation also. And last pay, one thing you have to remember, sir, morning only. So just now you have said that borrowing cost is there now, which means if you have borrowed some amount to purchase the asset or construct the asset, sir, if it is a qualifying asset, I have to include that borrowing cost also to the cost of the asset. Okay? Yes, sir. If it is a qualifying asset, you have to even include the borrowing cost also to the asset ka cost. Sir, what is the meaning of qualifying asset? Are Baba, qualifying asset is nothing but asset which takes substantial period to be ready to use. Asset which takes substantial period to be ready to use, that is going to be called as a qualifying asset. Sir, what is the meaning of substantial period? That is nowhere defined in the standard. Entity ka accounting policy it is. It can either choose 15 months as a substantial period, or if it wants, it can choose 6 months also as substantial period. There is no hard and fast rule in the standard. But the thing is, sir, nothing is mentioned. Then you can take 12 month as the substantial period. I still don't know. Whether this is, what should I say? Whether this is qualifying asset or not. Okay, till I don't know that. Okay, sir. So till now you have said that, sir, 10,80,000 rupees. 10,80,000 rupees. Most of the students are saying I am not recalculating also because I completely trust you. I trust you that the answer is going to be 10,80,000 only. I got the feeling. Okay, sir. Sir, check this date. On 1st October 2016, what have happened is, sir, machines became ready for trial run ka production after incurring expenses on trial run 20,000 rupees. Guys, if you remember, sir, whether you have to include this trial run ka expenses also as the cost of an asset, please let me know. If the answer is yes, please type S in the chat box. Sir, do we have to include this trial run ka expenses also in the cost of the asset? Morning, we have already discussed this point. Sir, sale proceeds of goods also they have given 5,000. Are Baba, if you remember, net value you have to add. Sir, 10,000 is my trial run ka expenses and 5,000, sorry, 20,000 is my trial run ka expenses and 5,000 to scrap ka value. Sir, my net asset is how much? My net asset ka value, sorry, my net cost ka value is 15,000. Net cost ka value is 15,000. I hope this point is also clear to you. Okay, sir, still I don't know whether my asset is a qualifying asset or not. Because if my asset is a qualifying asset, interest on such will be capitalized. I hope you are getting the things. ठीक है sir. Now check this. 1st January 2017. Sir, what have happened in this 1st January 2017? Try to understand. Sir, machines became ready for commercial production. Oh, machines became ready for commercial production, which means 1st January 2017 is the date on which the asset is ready to use. They are also saying, sir, estimated residual value is 2 lakh rupees. Government grant received for these machines is 2 lakh rupees. Once again, Are Baba, you have to tell me, sir, what should be the treatment for this government grant? Quickly, I want answers. What should be the treatment for this government grant? Are Baba, if you observe, this government grant should be deducted from the cost of the asset. This government grant should be deducted from the cost of the asset. Very good, Pankaj. Brilliant. Everyone brilliant. Okay. Yes, sir. Now, if you understand, sir, see, the date on which you have taken the loan is 1/4/2015, sir, but machine have become ready for commercial production on 1st January 2017. Sir, if I calculate the time period for this to this, it is obviously more than 12 months. Oh, which means my asset is a qualifying asset. Are Baba, if your asset is a qualifying asset, interest cost should be capitalized. Interest cost should be capitalized. Okay, sir, quickly come to the solution. 1 second, guys. Sir, if you observe the solution pay, sir, this 10,80,000 is there now. Whatever you have exactly said, the amount is matching. Sir, plant and machinery account 2, if you have made the payment, you will be crediting the bank. Sir, if I do not make the payment, I will be crediting the vendor account. Sir, what is the balance? 10,80,000 is the balance. Okay, sir. Sir, from this till this date, 1 year have completed. So 1 year ka interest I have to calculate. Because this is my qualifying asset now. Sir, if the asset is a qualifying asset, if the 1 second, where is it? If the asset is a qualifying asset, I remember just do 5 lakh into 12%. That also should be included in the cost of the asset. So, sir, here I will be writing plant and machinery account data to interest on loan account. Sir, why you have written this? The answer is very simple. Normally, while making interest payment, sir, what will be the entry which I have to pass? Sir, you will be passing interest account data to bank account. Okay, sir. Are Baba, but this interest, so normally it have to go to P&L account. But sir, since it is a qualifying asset, this interest should not be transferred to P&L account. This interest should be transferred to plant and machinery account. Sir, now the journal entry will be plant and machinery account data to interest. Sir, how much? 60,000 will be the interest. Now you have to tell me, sir, will I charge the depreciation? Will I charge the depreciation? Are Baba, right answer is no, Baba, no. You have to charge the depreciation only when the asset is ready to use. Till the asset is ready to use, you cannot charge the depreciation. Okay, sir. Yes, sir. We have exactly understood. So here there is no depreciation. So whatever the balance which is there, 10 lakh 80 plus 11 lakh, sorry, 60 will become 11 lakh 40,000. And this will be my balance carried down. The same balance will be again forwarded to 11 lakh 40,000 as on 1st April 2016. Okay, sir. Yes, sir. Now check the things. Sir, now what have happened is till 1/10/2016. They are saying, sir, trial run ka expense is there na 20,000 to expense, 5,000 to income. Sir, what is my net cost? Net cost is 15,000. You can debit this 15,000 also here, or you can write like this also, 20,000 debit, 5,000 credit. Anyways, you can do, but our institute have solved it like this. So let us also do like this only. Sir, expense, because of which my PP ka balance will be increased. Because of income, my PP ka value will be decreased. So to bank pay 20,000, by bank pay 5,000. Okay, sir, exactly understood what you are trying to say. Now, Baba, if you check the things, sir, On 1st January 2017 itself, machine have become ready for commercial production. Sir, what is the interest cost? You have to understand. Till the machine is ready to use, whatever the interest which is there, if the asset is a qualifying asset, that should be capitalized. Sir, 5 lakh is the principal, 12% is the interest. So you have to charge the interest till the asset is ready. The asset is ready from 1st January 2017, which means 9 months ka interest you have to charge. Quickly calculate and tell me, is 9 months ka interest, is it correct or not? Quickly tell me, just 10 seconds time. 10 seconds time, sir, is this interest on loan 45,000 or not for the 9 months? Have you understood why you have taken this 9 months only? If yes, we will proceed further. If yes, we will proceed further. Because from 1st January itself, your assets are ready for use na. So you have to charge the interest till that 9 months only. Okay, sir, we have understood. Are Baba, one more thing is also happened. Sir, on this date though, I have received one government grant also na, because of which my asset ka value should be reduced. Sir, what will be the entry which you will be writing? Are Baba, government grant money. I will be receiving money from the government. So bank will be debited. Credit though I have to give to plant and machinery. Oh, bank will be debited and credit though you have to give to plant and machinery na, which means by bank 2 lakh rupees have to be charged. Okay, sir. Yes, sir. From now you have to charge the depreciation. Brilliant. Brilliant, Renka. That's correct. From now you have to charge the depreciation, sir. From which date I will be charging? Are Baba, you have to charge the depreciation only from 1st of January till 31st of March. Oh, 1st of January till 31st March only you have to charge the depreciation. Na. Sir, how I will be charging the depreciation? Are Baba, for that we have already created one working note. So quickly come to the working note. Quickly come to the working note. 2. Sir, what is the cost of the PPE, sir? 11 lakh 40,000 plus 20,000 plus 45,000 minus 5,000 minus 2 lakh. Sir, from where you have got these figures? Are Baba, this ledger may, whatever the debits are there, I have added. Whatever the credits are there, I have deducted. You can do here also, guys. Please add all the debits and from this deduct these credits and now tell me what is the value. Okay, 11 lakh 40,000 plus 20,000 plus 45,000 minus 5,000 minus 2 lakh. If you do, you will be getting 10 lakh rupees, and this 10 lakh only they have taken there. Sir, but in the question, so if you observe, they are clearly saying that residual value is also 2 lakh rupees na. Sir, my depreciable value will be 10 lakh minus 2 lakh, that is 8 lakh rupees. Sir, useful life to 4 years ही है. Sir, but the company is saying estimated physical life is 10 years. Are Baba, ignore estimated physical life. You have to consider only how many years the company wants to use. Which means in this case, they want to use the asset only for the 4 years. Oh, they want to use the asset only for the 4 years. Okay, sir. So 10 lakh is the cost, 8 lakh is the depreciable value. Sorry, 8 lakh is the residual value and 8 lakh will be your depreciation. If you check the question. Okay, sir. Useful life to 4 years. Sir, but I have to charge depreciation only for 3 months. Oh, but I have to charge the depreciation only for the 3 months na. Yes, sir. So this 8 lakh is there na. 8 lakh divided by 4 into 3 by 12. If you do, you will be getting 50,000 rupees. And this 50,000 will be the exact depreciation which I have charged here. Okay. Yes, sir. Sir, then I will be getting by balance carried down of how much, sir? 9,50,000. So this 9,50,000 will be exactly transferred to the next year. Okay, sir. Now let us read the question further. Sir, they are saying company does not begin using the machine until 1st April 2017, which means they are saying, okay, you are using the machines from 1st April 2017 only. Are Baba, this is not income tax going on. Income tax may you will get the depreciation from the date when you actually put the asset to use. But here, Baba, put to use is not relevant, na. Ready to use is relevant. So since the asset is ready to use on 1st January 2017 only, we will be charging the depreciation from that date only. We will be charging the depreciation from that date only. Okay, sir. Yes, sir. We have understood that point also. So this 1/4/2017 say we will not charge the depreciation. We will be charging the depreciation from the 1st January 2017 itself. Okay, sir. Quickly come to the next point. Sir, on 1st October 2017, they have sold one machine for 93,500. Oh, suddenly they have gone ahead and sold one machine for 93,500. Are Baba, understand one thing. Sir, only one machine is sold, which means, sir, only one machine is sold na. Are Baba, which means if you observe, 10 machines you are constructing. Sir, so 9 machines are there na. So those 9 machines though, I have till the end of the year, which means on those 9 assets though, on those 9 machines though, you have to charge the depreciation for the full year. Try to understand. Sir, only one machine is sold on this date, which means 9 assets are still there na. Sir, on those 9 assets though, you have to charge the depreciation for the full year na. But this asset is there na. But this asset though, since the asset is sold on 1st October, please charge the depreciation till 30th September only. Oh, one asset to depreciation I have to charge only for 6 months, because after 6 months the asset is sold. But for 9 assets you have to charge the depreciation for all the full 12 months. Is this point clear or not? Please give me a heads up if you have understood this point. This is the most typical point. Other than these points are very, very simple, guys. You just have to understand this calculation. If it is fine, rest of the things are very, very simple. Sir, one machine though, I should calculate depreciation only for the 6 months. Balance 9 assets though, I have to calculate the depreciation for the whole year. Is this point clear or not? Yes, done. Brilliant. Super. I got the answers. So now if you observe, sir, on one asset though, I have to charge the depreciation for 9 months. Come to the working note number 3. Sir, whatever the asset which is sold, on that what is my depreciation I am calculating. Sir, cost is 10 lakh rupees, but that 10 lakh rupees for 10 machines. Cost is 10 lakh rupees, but that 10 lakh to for 10 machines. Now, sir, how you got this 10 lakh? Arey Baba, here I got the 10 lakh. ठीक है सर. Sir, scrap value to 2 lakh rupees. Sir, but this 2 lakh is also for 10 machines, which means per machine ka cost is 1 lakh and per machine ka residual value is 20,000 rupees. Sir, useful life is still 4 years. So, sir, depreciation is there na. Depreciation is 1 lakh minus 20,000 upon 4 into, sir, I have to do the calculation only for 6/12 because 9 months, sorry, 6 months only na. So this amount, if you observe, 10,000 is the value of the depreciation. 10,000 is the value of the depreciation for the asset which is sold in the middle of the year. Is this point clear or not? Yes, sir. If this point is clear, here I have to write the 10,000 ka depreciation ka value. Sir, how much you have sold the asset? Sir, I have sold the asset for 93,500 na. Are Baba, if you sold the asset, obviously there will be either profit or loss. Obviously there will be profit or loss. So first I have to calculate the profit or loss. Nah, that also I have calculated. Sir, on the date of sale though, you have to charge the carrying amount. Sir, what will be my carrying amount? Are Baba, 1 lakh is there minus 50,000 is the depreciation for the 10 assets which you have charged in the first year. If you observe, see guys, 1 second. This is the 50,000, correct? Which is the depreciation which they have charged in the first year. But this 50,000 is for 10 machines. So we have to charge only for one machine. Sir, for one machine, how much is the value, sir? For one machine, if you observe, 5,000 is the value. Sir, but current year, though, 10,000 also we have charged it. So my carrying amount is how much, sir? That is 85,000, Baba. Sir, but sale though I have did for 93,500 na. Sir, carrying amount is 85,000, but sale value is 93,500, which means I have got the gain. Gain of 8,500 rupees I have got. Okay? Yes, sir. Sir, gain of 8,500 I have got. Okay, sir. Yes, sir. Sir, what will be the entry which I will be passing? Are Baba, bank mein you have received 93,500. Sir, PP is there na. PP ka carrying amount to 85,000. This I have credited. Sir, what about the balance? Are Baba, balance is nothing but the profit on sale of machinery na. Balance is nothing but the profit on sale of machinery. Okay, sir. Yes, sir. We have understood this point also, sir. This entry effect I have to give in the PP account. Bank pay I will credit this. P&L debit pay, sorry, PP ke debit pay I will debit this item. Okay. Yes, sir. So quickly check this question, guys. It should not take this much time. So let us slowly understand the question. Okay, sir. Sir, what about balance 9 machines? Balance 9 machines, so you have to charge the depreciation till the year. Yes, sir. So that also I have calculated here only. Calculation of depreciation for 9 machines. Sir, for one machine, what is the value? For one machine, to 1 lakh minus 20,000 by 4, it is 20,000. Sir, for 9 machines, it is there. Na? So 20,000 into 9, if you do, you will be getting 1,80,000. And this 1,80,000 is nothing but the depreciation for all the 9 machines. Okay. Yes, sir. So please check this. This is fine. So the balance carried down is how much, sir? 6,75,000, and this will become the opening balance as on 1/4/2018. Okay. Yes, sir. Sir, quickly check the question. And here they are saying on 31st March 19, remaining useful life of the property is assessed as 4 years and the residual value is re-estimated at 2,20,000 and the property is revalued upward by 45,000. Try to understand whatever the things which have happened in this case. Sir, first one, scrap value has been increased at 2,20,000. Useful life is 4 years. Useful life is still 4 years. Balance still is 4 years. They are saying remaining useful life. Okay, sir. Last one, though, they are saying property is revalued upwards by 45,000. Arey Baba, if the property is revalued upwards, obviously the property ka balance is increased. Which means, sir, here I will be debiting the revaluation reserve ka OCI ka part. Now depreciation you have to charge. Think very carefully, Baba. Sir, 6,75,000 is the opening balance plus 45,000. 45,000 minus residual value is how much, sir? Residual value is 2,20,000. Residual value is how much? 2,20,000. Very good, Renuka. It is exactly correct. You have to add this 45,000 and from this you have to deduct the scrap value. Then you will be getting the residual value. Okay, sir. Sorry, depreciable value will be getting. Divided by 4 if you do, you will get 1,25,000. Please check this and confirm whether you are getting the correct answer or not. You just have to do 6,75,000 plus 45,000 minus 2,20,000 upon 4 if you do, you should get this 1,25,000. So please tell me if you are getting this correct answer or not. If this is the correct answer, your balance carried down will be 5,95,000. So please give me a heads up if you have understood till here. If you have understood till here, please give me a heads up. Guys, again, you have to practice this question because it is a little bit comprehensive question. If you don't practice this, you will not understand this question. Okay, sir? Yes, sir, we have understood this point. Sir, now what have happened? Check the question once again. Oh, sir, in the question, so they are saying on 31st March 2020, the company decides to adopt the written down value method by charging depreciation at 20%. Oh, till now we are following straight line. Company suddenly decides to change it to written down value. Written down value, very, very simple, Baba. Opening balance into 20% you have to do depreciation. Sir, what is the opening balance? 5,95,000 into 20%. If you do, you will be getting the depreciation at the end of the year and your balance carried down will be 4,76,000. Your balance will be 4,76,000. Okay, sir, we have understood this closing balance also. Fine, sir. This closing balance will be the opening balance for the next year. Oh, as on 1/4/2020, oh, the balance is 4,76,000 now. Sir, on this date also depreciation, because if you check the next change is on 31st March 2021, Baba. So till 31st March 2021, they are saying one point. Sir, machines become idle and are retired from active use but not held for disposal. remember one thing, depreciation you have to charge till the asset is retired. Sorry, till the asset is sold or till the asset is held for disposal. In the question, they will say that, sir, the machine have become idle and the company have started using, the company have stopped using those machines. It does not stop you from charging the depreciation. Still, the depreciation should be charged. Sir, when the depreciation will be stopped in that case? Depreciation will be stopped only when the asset is when the asset is recognized, de-recognized, or when it is held for disposal. That point is already there in our theory discussion. Last I will speak this point. Okay. Yes, sir. So they have said this on 31st March 21. The asset is retired from active use, but still you have to provide the depreciation. You have to stop the depreciation only when the asset is de-recognized or when the asset is held for sale. Okay, sir? Yes, sir. If you check this part, depreciation you have to charge 95,200 till 31st March 2021. It will not stop you from charge the depreciation. Sir, next year ka balance to 3,08,800 is there. Now comes the point. Sir, on this date, 31st March 2022, they are saying the value is held for disposal. Sir, what I have to do if the value is held for disposal? Understand this point. Sir, if any non-current asset is held for sale, you have to always recognize the asset. You have to always recognize the asset at something called as FVLCTD. Sir, what is the meaning of FVLCTD? Very, very simple. Fair value less cost to disposal. Cost of disposal, you can write. This is the value which you have to bring your asset to. Sir, will I charge any depreciation also? No, because your asset is already at a fair value, so no depreciation is needed. So no depreciation is needed. So depreciation will be charged till the asset is held for sale. If the asset is held for sale, you have to always charge the depreciation. Sorry, you have to always recognize the asset to this value, which is called as fair value less cost to disposal. Read the question. Sir, they are saying machines could not be disposed of till the end of the year when realizable value of the machines is 75% of the carrying amount. Subject to 10% realizable expenses. Very, very simple. Just check the question. So this is my value, 3,80,800. Just do 75% of 3,80,800. You will get 2,85,600 minus they are asking 10% ka realizable expenses are also there. Minus 10% if you do, you will get 2,57,040. Please check whether you have got this answer or not. Sir, this is my closing balance, sir. If this is my closing balance, if this is the opening balance, the difference should be going and sitting in P&L account because this is a loss. This is a kind of a loss, guys. If you are transferring, if you are recognizing the asset at fair value less cost to disposal, whatever the difference which you are getting, that will be treated as either a loss or a gain. Here in this case, you are getting it a loss. Okay, so please check this part. So this should be the 123,760 is the value which I have to recognize the loss. Okay, yes, sir. Sir, again this balance will become 257,040 in the next year. Nah, fine, sir. Sir, by bank may, if you check the last part, they are saying idle machines are disposed of at 75% of the carrying amount. Sir, what is the carrying amount currently? 2,57,040 into 75% you have recognized. Into 75% you have recognized, which means 192,780 is the value. Sir, what is the difference? Difference will be transferred to P&L account. Difference will be transferred to P&L account. So please confirm everyone, have you understood this question or not? Guys, if you don't solve this question after completion of this, you will forget this question definitely. And trust me, this is a very, 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 very important question which they have asked in the examination. If you don't practice this question, even if the similar question comes in the exam also, still your minds will not work. Okay? So you have to be very, 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 very careful while solving these type of questions. So my suggestion is this question is a must. This question is a must. Okay? Yes, sir. So we have completed Ind AS 16. So only theoretical point which is pending is that you can also self study on your own, guys. So what is that self study ka point? This is a depreciation ka point. Okay. All these are pretty theoretical points. You can just check these items. This we already know that the residual value will be and useful life both are treated as estimates. Both are treated as accounting estimates, and if there is any revision of accounting estimate, prospective effect will be done. So what is the meaning of prospective effect? Prospective effect means from the date of change only we will be giving the effect. Whatever previous periods are there, don't adjust those items. Okay? Yes, sir. This is important. Try to understand. Commencement of depreciation will be charged when the asset is available for use. In the location and condition intended to be used by the management. Asset is available for use. It is not actually put to use. If the asset is ready to use, you have to charge the depreciation. Okay, sir? Yes, sir. Now comes the point which is cessation of depreciation. Sir, what is the meaning of cessation of depreciation? Cessation meaning it will be ceased at the earlier of the date when the asset is classified as held for sale or when the asset is de-recognized. Whichever is lower, you have to take. Whichever is lower, you have to take. Okay, sir? Yes, sir. This is the most important thing. Even if the asset is idle or retired from use, depreciation will still be provided. Depreciation will still be provided. Okay, sir? Yes, sir. It should be classified as held for sale or should be classified, it should be de-recognized. Only then you have to stop charging the depreciation. Otherwise you have to provide the depreciation. Okay? Yes, sir. Guys, these point to just to check this, it is very simple. Sir, depreciation is there now. If residual value itself is more than the carrying amount, sir, my carrying amount is assume 1 lakh rupees. Sir, my residual value is also exactly 1 lakh rupees. Will I charge the depreciation? No, it will be zero. Okay. Yes, sir. Sir, if the asset is held for sale, then also depreciation should be ceased, Baba. Then also depreciation should be ceased. Okay. This is normal point, guys. Depending upon fair value, it is not correct only. So, sir, as and when your carrying amount is more than residual value, you have to charge the depreciation. Okay. Yes, sir. So with this, we have completed in days 16. Very in depth we have covered. Maximum possible, toughest or typical questions I have covered in the class. Okay. Yes, sir. So now LDR questions. LDR ka questions also. See, what my suggestion is, since you are doing this EO batch, what you have to do is you have to follow, at least for the first time practice, do whatever the questions which I have been discussing in the class. LDR though I will be providing a little bit later, because if I provide those LDR questions right now itself, your focus will be only on those LDR. You will never practice other questions. So in the EO batch, I am only picking limited questions only. First of all, I just wanted you to clarify. Okay, only limited questions are being picked up by me. So since this is the first time practice, most of the students are practicing this for the first time. At least you have to practice this for sure. LDR, I will come up towards the end. Okay, I hope you have understood this. Okay, fine. So now, guys, we are having two standards basically. Should we start with the Index 36 or should we start with Index 38? Both are very important standards from exam perspective. So Index 36 is super important standard, and Index 38 though questions are not that much, what should I say, that much tough though they are not there. So shall we start with Index 36 or shall we start with Index 38? So just a moment. So please check me. Please confirm whether we should start with Index 36 or 38. I was waiting for your responses. So based on your responses, let us check. Okay. So only two students are responded. What about other 15? Are you sleeping or what? 38. Fine, 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 fine. Oh, 38, 38, 38. So most of the students are basically want me to start with this index 38. Okay, sir. Just a moment. We'll be immediately starting with index 38. Then no worries. Where is this index 38? Here is the index 38. Okay, fine, sir. So I'll be taking just a 2 minutes break. Okay, you also just have some water and stay here only. Stay in the live only. Don't go anywhere. Just a 2 minutes ka break. Okay, we will be completing this index 38 also right now only. Fine, sir. Okay, sir. Yes, sir. So let us slowly understand this question. Fine, sir. Let us take this question. So fine. Sir, the next standard, super important standard, IND is 38. Sir, here they will talk about intangible assets. Here they are talking about intangible assets. Okay, just a moment. Yes. So fine. First, basics the point. Scope. Just go through the scope. You will find nothing important. But sometimes, even if they ask in the examination also, you have to write all these points. Okay. Yes, sir. So the first one, Arey Baba, please write all the other standards. Okay. Intangible assets held for sale in the ordinary course of business. Sir, what is the meaning of intangible assets held for sale in the ordinary course of business? Are Baba, try to understand. I think you all or know that, sir, Tally is there. Tally is an accounting software, correct or not? So that Tally is going to be an intangible asset. If I purchase Tally from the, what should I say, Tally company, okay, that is going to be my intangible asset, correct or not? Yes. Are Baba, but try to understand from the Tally company perspective. From the company Tally India, those intangibles, that Tally ka software is just like an inventory. It is just like an inventory to Tally Limited, na? Yes, sir, it is correct. It is just like an inventory for Tally Limited. So, if it is inventory, then Ind AS 38 is not applicable. Okay, sir. Again, if it is a deferred tax asset, then also not applicable because we are having a separate standard. Sir, if it is for lease of intangibles, we are having a separate standard. Sir, if it is asset arising from employee benefits, from this also we are having a separate standard which is Ind AS 19. Sir, goodwill arising in business combination, for this also we are having Ind AS 103. Sir, non-current intangibles held for sale, for this we are having Ind AS 105. Assets arising from contact with customers, Ind AS 115. Financial assets, Ind AS 109. Measurement of exploration and blah 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 point. Are Baba, no need to by heart these standards, though anyways you will remember because all these are standards in our syllabus only. So even if they have asked any question on this scope, nowadays they are not asking that type of questions. But even if they ask, you just have to copy some 6 to 7 standards. Okay, yes sir, at least 4 5. So anyways they will be correct only. Yes sir. So first one, guys, try to understand. Sir, what we have to understand? Quickly tell me, sir. Yes, we have understood. So first one, intangible assets contained in or a tangible asset. Try to understand. Sir, assume I have purchased one computer and along with that computer, so sir, assume there is one software also which is installed along with the computer. Example, Windows or Mac OS, etc. Without this Windows or Mac OS, etc., I cannot operate my computer. In this case, if it is integral part of the computer, which is hardware, because normally speaking, this software is there now. See, this hardware cannot be supplied without this Windows or Mac OS. Generally, it is an integral part of the computer. By default, these computers will be supplied with this Windows or Mac OS now. In this case, you should not separate this computer software separately and this hardware separately. Rather, what the standard is asking you to do is, okay, that software also will be included in the hardware only, and I will be accounting as a tangible asset only is what the standard is suggesting. Oh, which means this Windows and Mac OS are not treated as separately, both will be treated as a hardware only is what the standard is saying. Okay, sir. But there are another thing, sir. Custom ERP software which is installed in a computer. For example, in your computer, though, you have installed SAP ka software. This SAP ka software is not at all an integral part of the hardware. So in this case, this SAP should be accounted for as a separate intangible asset. Okay, sir. Yes, sir. This SAP should be accounted for as a separate intangible asset. Now, quickly come to the meaning of intangible asset. You just have to understand and you just have to remember, you have to get the feeling of an intangible asset. Okay, only for this I am explaining the meaning. Fine, sir. Guys, only with the help of an example, you will understand. Sir, first one, it should be identifiable. It should be identifiable and it should be a non-monetary asset and it should not be having any physical substance. If these three conditions are satisfied, then only I can say that any asset as an intangible. Sir, first one, this no physical substance means it should not be seen or it should not be felt. That is the first one. Sir, identifiable money, it should be separated from the entity. Sir, what is the meaning of separated from the entity? Which means if you want, you can separately sell that asset to any person. If you want, you can separately rent the item to any person. If you want, you can give that an intangible to license to any other person. Example, sir, assume I'm having one patent. Assume I'm having one copyright. That copyright, though, if I want, I can sell to any other person. Assume I'm having one secret formula. Sir, that secret formula, though, if I want, I can separate from my entity and I can sell it in the outside persons. I can sell it to outside persons. Or if I want, I can rent the same to any outside persons. Or if I want, I can license the same to any third party. This is the meaning of identifiable. Identifiable means it should be separated from the entity. Now you have to use your brains and tell me the question which I am asking right now. Guys, 17 out of 17 answers have to come in the chat box with respect to the question which I am asking right now. Assume I have started my business 10 years ago. Assume I have started my food business 10 years ago. I love food, Baba. Okay, assume I have started food business 10 years ago. I have, over the period, I have developed something called as goodwill. Over the period, though, I have developed something called as goodwill. Okay, sir. That goodwill is there. Na? That goodwill will be called as internally generated goodwill. That goodwill will be called as internally generated goodwill, which means I only have developed that goodwill. I only have internally generated the goodwill. Now you have to tell me, sir, can I separate that goodwill from the entity and can I sell that goodwill separately to any other person? Which means without selling the entity, can I separate only goodwill? And if I want, can I sell that goodwill only to any other person without selling the entity? Answer is obviously no. That is the reason. That is the reason, sir, this internally generated goodwill cannot be identified as a separate asset. So that is the reason. It should not be treated as an intangible, is what the standard is trying to say. Oh, but some guidance they have given, with respect to something which is called as acquired goodwill. Okay, that discussion is there. So slowly we will discuss that part also. Okay, sir. So this no physical substance ka point also we have understood, and the meaning of identifiable ka point also we have understood. Identifiable mane it should be separated from the entity. It should be separated from the entity. Okay, sir. Yes, sir. Very good. I got most of the responses, but some people are still sleeping. I got only 10 to 15 responses. What about other 3%? Are you sleeping or what? Okay, fine. Next one, sir. Sir, it should arise from contractual or legal rights. Sir, what is the meaning of contractual or legal rights? Are Baba, try to understand. Sometimes, sir, sometimes some items are there. For example, assume I have opened a small shop which is called as tea time. Assume I have opened a small shop which is called as tea time. I think this tea time, though, you have seen in number of locations. Okay. Yes, sir. So what I did is I have taken the franchise from the tea time. I have taken the franchise from the tea time and I have opened a small shop. I have opened a small shop. Now what have happened is, Are Baba, try to understand this very, very carefully. Sir, because of that franchise only, I am running that business. Because of that franchise only, I am running that business. Sir, but I have purchased that franchise from another person. But I have purchased that franchise from whoever the owner which is there of the tea time. I have purchased that franchise. Answer is yes. Sir, yes, sir, you have purchased the franchise from that person. Now try to understand. Sir, the reason why I am running the business is only because of that franchise. If that franchise is not there, I will be closing the business. If that franchise is not there, I will be closing that business. Are you understanding or not? Sir, if I wanted to sell that shop to any person, I should definitely do along with the franchise. Which means without that franchise, I cannot sell that. Can I say that, sir, in this case also, that franchise is there now, that franchise should not be separated from the entity, because other than the franchise, that business itself is not there. But here try to understand. Here you have purchased the franchise, which means you have contractually purchased that franchisee rights. So in this case, even if it is not separable from the entity, still it will be treated as an intangible asset. Guys, that much conceptually they will never ask in the question, but only for the feeling I am explaining the definition of the intangible this much. Okay? Yes, sir. Next point, it should be controlled by the entity. Sir, what is the meaning of controlled by the entity? Controlled means another important discussion. So listen very, very carefully. Entity have to obtain future economic benefits from the intangible asset. And it should restrict the others from accessing the benefits from those assets. I will give you one example. You have to tell me. I will give you one example. You have to tell me. So first one, sir, assume there are 200 employees working in my organization. Sir, what I have did is I have given the best training to them. I have given the best training to them, and each employee is now capable of working. Each employee is now capable of working 10 employees ka work. Now you have to tell me, sir, do I have any control over those, what should I say, 200 employees? Okay, how many employees I have said? Assume 200 employees are there. Okay, 200 employees, so I have given quality training. Now, those skilled workforce is there, na? Sir, those skilled workforce, so do I have any control over them? Which means if they want, they can easily change the organization. If they want, they can easily change the organization. Do I have any control over them? Answer is no, Baba. No, you have any control over that asset. Of course, I may get future economic benefits, but the thing is, I cannot restrict others from accessing the benefits from that asset. Assume that employee have joined in my competitor. In that case, I cannot restrict my competitor to getting the benefit of that. So it fails to satisfy the definition of intangible. And remember always, this skilled workforce, customer list, goodwill based on praise and all these items though, entity have no control in assets. Entity have no control in assets. Are you understanding or not? Contract basis is a different thing, but even if it is a contract basis, still if you observe, entity have no control over employees. Sir, no control means it should not restrict others from accessing benefits. It is still possible that employee is working in your company only, but still if he wants, he can provide the benefit to any other entity, na? Which means you don't have any control. If you don't have any control, first of all, it is not an asset only. If you don't have any control, first of all, it is not an asset only. And in this case, it is not an intangible asset also. First one. Okay. Yes, sir. So have you understood till here or not? At least have you got the feeling of the intangible asset or not? Now I will be moving a little bit quickly, guys. Okay. We'll be focusing only on what are the important areas. Okay. Fine, sir. Recognition criteria. Are Baba, from the starting in day 16 onwards, I have been saying this recognition criteria very, very simple. Sir, first one, though, future economic benefits are probable that they will be flowing to the entity. And second point, sir, cost can be measured reliably. Okay. So, guys, quickly check these items. Quickly check these items. Most important. 5 items here I have written. Every item is very, 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 very important. First one, intangible assets. First one, there are 5 items which are not treated as intangible assets. So first, internally generated goodwill. I have already explained the reason also. Marketing and promoting costs. Sir, why it is not advisable to treat them as an intangible asset? The reason is very simple, because at the time you incur any marketing cost or promotion cost, are you certain that future economic benefits are probable? Answer is no, na. It may come or it may not come. If it may not come, why you account them as an intangible asset? That is not correct now. So what they are saying is, okay, if it is not certain, then don't recognize that as an asset. Next part, staff training programs. This is what just I have explained. Since there is no control over the staff, what the standard is asking is, don't treat that as an intangible only, first of all. Okay, sir. Next part, research cost. This research cost you have to understand. Okay, let me give you an example so that you will be exactly understanding what I am trying to say. Sir, this research cost is there, na? Are Baba, assume while preparing COVID ka vaccine, now you have to tell me, sir, in the research phase only, is it possible that future economic benefits are coming to the entity? Sir, what is the meaning of research phase? Research phase means how the vaccine will be prepared. That also I don't know. Sir, what are the ingredients which I have to use in the vaccine? That also I don't know. What are the compositions of the vaccines? For example, how much percentage of this chemical I have to make? How much percentage of this chemical I have to make? That also I don't know. That is called as research phase. Strictly speaking, this research is nothing but trial and error. I will check this. If it do not work, I will check this. I will check this. If this do not work, I will check another option. Even if you observe Robo movie also, Rajnikant will make number of research, too much amount of research he will be making. But now you have to understand, sir, at the research itself, is it possible that you will be getting future economic benefits? Think and tell me. At the time of research itself, is it possible that future economic benefits are probable? The right answer is no, sir, it is not possible. Since it is not possible, research costs will be always charged to P&L account. It will never be recognized as an intangible is what I am trying to say. Okay, sir? Yes, sir. Last one, Baba, startup costs. Sir, if there is any startup cost which is incurred also, those items also should not be charged as an intangible asset. Okay, sir? Yes, sir. Now, guys, check this point. Initial recognition of intangible asset. Since we have just now completed in days 16, check this quickly and try to understand whether you are understanding this point or not. Okay, so till here you have to understand all the items. So quickly revise for 1 minute what all the items which I have written here, and you have to confirm sir, whether you are remembering all the points or not. Okay, quickly check this. We are moving towards the end of the standard, guys. So quickly check this parts. Are you remembering what all the items which I have been discussed in Index 16 or not? Most of the points are very, very similar. Okay, yes, sir. Quickly go through this and please give me a heads up. So quickly check this. Purchase price, so you have to recognize plus all directly attributable costs. You have to check all directly attributable costs. You have to check. And next one, any trade discount and rebates if they have given, we have to reduce those items. Yes, sir. Non-refundable duties and taxes also will be included. Directly attributable costs. These are somewhat customized to intangible assets. There are no transportation costs for intangibles. Correct? There are no transportation costs for intangibles, sir. So what will be having, sir? Legal fees will be there. Professional or consultant or advisory fees will be there. Testing costs will be there. Any other development phase for any other internally generated intangibles. This will also be there. If you add all these items, you will be getting the value of the cost of the asset. Guys, remember these items. These items will never be included in intangible asset. These items will be never be included in intangible assets. Okay, sir? Yes, sir. You have to remember all these points. Logic, I have already explained, guys. Similar to Index 16, whatever the logics which I have explained, most of the items are like that only. Okay? Yes, sir. So with this, we have completed this most important discussion and another most important discussion from the exam perspective. And it is nothing but this item, which is if asset is internally generated intangible. This you have to understand. This you have to understand. Guys, this is very, 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 very important. If all the students are there, then only I will start this. Otherwise, let us end the class till here. If you are interesting, then only I will continue. If you are sleeping, I also want to sleep. If you are still there, then only I will start, because this is the most important part of the standard. From this only they will be asking the questions. Internally generated intangibles, the most important part. Okay. So once this is done, we will be immediately starting with the 3 to 4 questions we will complete, and we will be completing the standard. Okay, only one person, Suchitra, is there. What about others? Everyone is sleeping, I guess. Let's do. Okay, got another response. Fine. Now people are waking suddenly. Now people are waking up suddenly. Ramya, 70 Akshaya. Now everyone is waking up. Wow, nice. Which means I have to wake you up. I have to wake you continuously so that you are there or not. I will be checking. Okay. Yes. So quickly check this. Research phase, development phase. Try to understand. Sir, first of all, assume the COVID vaccine only let us take. First, you have to do lots and lots of research. Sir, what is the meaning of research, sir? Research means different types of chemicals I have to check. Sir, how many chemicals I have to mix? What are the chemicals which I have to mix? Okay. Next, if you find out what are the chemicals which you have to mix, then you have to next check, sir, how I have to do, how I have to, what should I say, prepare the vaccine. Next one, if you identify how also and what also, next one is, sir, next question which will be generally coming in your mind is, sir, what are the compositions which I have to take? Sir, what is the meaning of compositions? Compositions means how much dosage I have to include, how much is the amount which I have to, I mean, how much ml, how much mg ka dosage which I have to do and all. Everything is very, very big process. It is not easy, like I am saying. That's why if you observe, pharma companies are there now. Pharma companies, those are the value of preparing one medicine, it is only 10 rupees. But they will keep the price as 500 rupees. Sir, why they will keep the price as 500? Because of the research which they are going in order to prepare the product. They have to recover that research cost also, correct? So that is the reason why they have priced it at that much huge amounts. Ideally speaking, if you observe the cost of manufacturing a tablet or a pill, it will not take more than 5 to 10 rupees, but they have to recover the research amount also. So that is the reason why it is priced that much. Okay. Yes, sir. Now try to understand what the standard is saying. Internally generated intangible, every kind of internally generated intangible have to pass into these two phases. Sir, what is the first one? Research phase. Second one, development phase. Okay, sir. So first, if you observe, sir, intangible asset is not recognized because FEB are not probable. The same logic you have to apply. Sir, at the time of research itself, I will not understand whether FEB are probable or not. So that is the reason I will be recognizing it as an expenditure. Okay. Yes, sir, we have understood. Now comes the development part, guys. Sir, what is the meaning of development part is? Development part is nothing but application of knowledge which is developed from the research. Even if you have researched completely, still you may find different challenges while developing the asset. And whatever the knowledge which you have gained during the research phase, you have to apply that knowledge. This will be recognized as an intangible asset if the following conditions are satisfied. Remember these 5 conditions, most important from exam perspective. So quickly repeat along with me these 5 conditions. Sir, what is the first condition? Future economic benefits should be probable. Second condition, reliable measurement of development costs. Third condition, intention to complete the asset for use. Management is having the intention to complete the asset. Sir, fourth condition, it should have the available resources. And fifth condition, it should have the technical feasibility also to complete the asset. Always remember, Baba, these 5 conditions should be satisfied. Only an intangible asset will be recognized after satisfaction of these 5 conditions only. Sir, what is the first condition, sir? First condition is nothing but probable future economic benefits. Second condition, reliable measurement of development costs, which means I have to measure the development costs. That also reliably I have to measure. Sir, third point though, intention to complete the asset for the use. And fourth point, sir, available resources to complete the project. And last but not the least, you should have the technical feasibility also. Sir, first of all, resources are there, technical feasibility is there, but the management have no intention to complete the asset. Still, it would not be capitalized. Sir, but management is having the intention, but there are no resources to complete the asset only. Oh, in this case also, that is not possible for you to complete the project. So the next part though, resources, technical feasibility, intention, everything should be there. If these 5 conditions are satisfied, then only you have to recognize the development expenditure as intangible. Always remember, revenue expense will be always charged to revenue account. Revenue expenses will be always charged to, what should I say, P&L account only. Okay? Yes, sir. Just a moment. Okay, sir. Next, you have to understand these items, guys. Cost of internally generated goodwill, intangibles. Simple. Inclusions. Materials you have to include. Employee benefits you have to include. Fees to register legal rights. These 3 items you have to include. Okay, sir? Yes, sir. Exclusions. Selling administration overheads, selling overheads, administration overheads. These are not directly attributable costs, so please ignore. So reach and operating costs also should be ignored, and cost of training staff also should be ignored, Baba. ठीक है. Yes sir. So the last point, this is the most important. If research project is acquired in a business combination, it will be recognized as an intangible asset at fair value. Remember this point. This related discussion we will do when we are doing business combination. ठीक है sir. Now quickly check this. Sir, if intangible asset is acquired on deferred settlement terms, deferred settlement means EMI. Then you have to recognize at cash settlement. If you observe the Ind AS 16, same as that. Sir, if any exchange of assets, same as Ind AS 16. If it is acquired in a business combination, then also, sir, then also same as Ind AS. Sorry, here we are having Ind AS 103. This we will be discussing in detail while discussing business combination standard. Because as I have been saying repeatedly from the starting itself, business combination, though you have to get 10 out of 14. That is my assurance. Okay, so at that time we will be discussing this in detail. Okay, sir. Fine, sir. Now, the most important concepts are completed. Okay. This is their recoverable amount concept. This I will be explaining while understanding Ind AS 36. Okay. This one, if you check, sir, subsequent recognition of intangible asset, again same baba. Sir, there we are having two methods: depreciation elimination approach and gross carrying amount adjustment approach. Here also we are having amortization elimination approach and gross carrying amount adjustment approach. Okay. Yes sir. Sir, amortization how will be doing, sir? SLM to cost minus residual value by useful life. Reducing balance method to opening WDV into amortization rate and last 1 units of production method. Okay. Yes sir. That's it guys. So most of the points are already completed. So quickly come to questions. Let us solve some 2 to 3 questions and then we'll be completing this in days 38 also. Okay. Yes sir. So quickly complete this question. So very, very important. So check this question guys. 1 second. So here also I guess impairment loss ka value is there. So which will not cannot be solving this. Check this third question. Check 1 second. What have happened? Check this third question. Guys, this is 40 lakh rupees. Nahi, this is 4 lakh rupees. This is 4 lakh rupees. Now you have to understand, sir, Venus Limited have acquired a software for its internal use costing 10 lakh rupees. The amount payable for the software is 6 lakh rupees immediately and 4 lakh rupees in 1 year ka time. Since 1 year ka time is there, sir, what I have to do is I have to calculate the present value of this. Sir, other expenses also they have given, sir. Purchase tax they have given. Entry tax 10%, but that is recoverable later from the tax department. Sir, if it is recoverable later from the tax department, which means can I say that it is a refundable tax? If those are refundable taxes, then those should not be added. Okay? Yes, sir. Legal fees 87,000 will be added. Consultancy fees for the implementation will be added. Sir, cost of capital. Why they have given the cost of capital? To calculate the cost of the asset. Sorry, to calculate the present value of this 4 lakh rupees. Very, very simple. 6 lakh you do. Deferred consideration to 4 lakh upon 1.1. Guys, this please change this. This is 6 lakh rupees and this is 4 lakh rupees. Okay. Yes, sir. Deferred purchase tax to 1 lakh. Entry tax will not be included. Legal fees to 87,000. And last but not the least, consultancy fees to 1,20,000. So if I add all these items, I will be getting 12,70,636. Guys, please confirm these answers. If you have any doubt, please let me ask. Okay. Check this question, question number 3. And if you have any doubts, please let me know. Guys, just 10 minutes we will have. After 10 minutes, we will be done. In days 36, 38 will be completed. Okay. Very good. Now guys, quickly come to this fourth question. Let us quickly check this. Guys, read this question carefully. You will understand. Sir, they are saying X Limited is engaged in developing the computer software. The expenditures incurred by X Limited in pursuance of its development of software is given below. Sir, first one they are saying paid 2 lakh rupees towards salaries of the program designers. Fine, sir. Second one, incurred 5 lakh towards the other cost of completing the project design. Check the third part. Incurred 2 lakh rupees towards the cost of coding and establishing the technical feasibility. Arey Baba, remember one thing. Remember one thing. If you check this concept, sir, technical feasibility to complete the asset. If this technical feasibility is established, then only you have to charge the intangible asset. Then only you have to recognize the expenditure as an intangible asset. Sir, so whatever the cost which I have incurred to get the technical feasibility, which means still now technical feasibility is not received. I mean, still now technical feasibility is not established. So that is the reason these items, where are those? These three items are there. Now, these three items are incurred to establish the technical feasibility. Sir, but one second, what have happened? What have happened? But sir, if you observe, after establishing technical feasibility, whatever expenses you have incurred, those will be treated as an intangible asset. Which means this is 7 lakh after establishment of technical feasibility, so which will be charged as an intangible. This 2 lakh also testing cost, that also will be charged as an intangible. Sir, but try to understand this. A focus group of other software developers was invited to a conference for the introduction of this new software. Cost of the conference, Arey Baba, inauguration cost will never be added. Inauguration cost will never be added. Okay, yes, sir. On 15th March, this is 15% March, not 15th March, the development phase was complete and a cash flow statement budget was prepared. Net profit they have given. How should they account for the above mentioned cost is what they are asking to do. So this 2 lakh, 5 lakh and 2 lakh will be charged as an expenditure. Sir, why? Because those expenses you have incurred to establish the technical feasibility. To establish the technical feasibility, you have incurred those expenses. Nah. So that is the reason. That is the reason. That is the reason why we have to recognize those expenses. But sir, if you observe rest of the items, if you observe the rest of the items, sir, here this I have incurred after establishment of technical feasibility. And last one though, testing cost also should be added to the intangible cost. Okay, sir. Yes, sir. We have understood this question completely. So this question number 4, we have understood, sir. Guys, I want to stop our discussion at today's class till here because this June 2023 question is there, which is stupid question according to me. But this question they have asked in the examination. Sir, if similar question comes, what we have to do? So that this is a very stupid question. So I will explain this question only in tomorrow's class. Okay? Yes, sir. Another question also I will explain, but that question though, not now I will explain. I will not explain that question now. What we will be doing is, we will be immediately starting in the next class, which is there, which will be there by tomorrow morning. So what we'll be doing is, we will be quickly checking this question number 5 and we'll immediately start with index 36. So the morning class itself, our target is to complete the index 36 ka discussion. Okay? Yes, sir. So that's it for today, guys. Thank you so much for your time. Even at this time also you have responded and the session is really interesting because of your responses. So we'll continue tomorrow morning. So the same activeness is what I am expecting from you even in the next class also. So what you have to do is, guys, if you are a person who are listening to this EVO batch for the very first time, you have to definitely do the practice. If you don't practice, trust me, all the efforts will be wasted. But I want, sir, it will be little bit painful for you, but you will enjoy the fruits later. Okay? Thank you so much for all your messages. I'm very happy. But what you have to do is you have to definitely practice. If you practice, only then you will get the complete benefits. Okay? Good night. Thank you so much, everyone. So we'll meet tomorrow. That's it, guys. Thank you so much. So yes, guys. Good morning, everyone. So have you got some time to revise what we have discussed in last class? Because whatever concepts we are discussing, if you don't do revision, basically you will not be getting the entire benefits from that. So it's my sincere request that you have to definitely go through the revision. So yes, in last class we have already started with this index 38 and we have already completed index 16. Okay. So in this index 38 though, so most of the questions are basically very straightforward and very simple questions only. But what should I say? We have already completed this. So you just have to remember this recognition criteria, because if any question from intangible asset has asked in the exam, you should be able to write these things. So which makes this recognition criteria a little bit important. So you have to completely focus on this. This list of items which are not intangible assets also you have to remember. So what are the items which we have to remember? Internally generated goodwill you have to always remember, because I have already explained the logic also. It will not be separately identifiable. So that is the reason why internally generated goodwill will never be treated as an intangible. And marketing and promoting advertisement costs, etc. These are also not recognized as an intangible because future economic benefits are not certain. And even if you observe the staff training program also, the logic I have explained is, since entity have no control over the staff, it is said that it is not an intangible. Research costs also we have explained, because in the research stage itself it is not possible to to get this FEB. So that is the reason why they are saying at the research phase only you cannot estimate the future economic benefits. So that is the reason we cannot recognize research cost also as an intangible asset. And last May we have understood some startup costs also, if they have mentioned, even if any startup costs are there, those costs also should never be treated as an intangibles, is what we have to remember. ठीक है sir. These items also you have to just check these parts. If intangible asset pays at which value I have to recognize, this is very similar to Ind AS 16. So what we have studied there, it will say that sir, all the trade discounts should be reduced, rebates should be reduced, non-refundable duties and taxes will be added, plus we have to also add directly attributable costs also. Okay. Yes sir. Next, this is the most important, internally generated intangible. Super important. So you have to remember this. Two phases may generally internally generated intangible will be generated. First one is research, second one is development phase. Sir, how we have to remember? Whatever the expenses which you have incurred in the research phase, they will never be capitalized. The reason is simple, because future economic benefits are uncertain at the research stage itself. So the standard is asking you to charge these research expenses, charge these research may whatever expenses you have incurred into P&L and not recognize as an intangible. Okay. Yes, sir. This development phase also, you have to charge the expenses. You have to charge whatever the expense which you have incurred into P&L only till the time, sorry, till the time technical feasibility get established. Okay. Yes, sir. So when we can say that technical feasibility will be established? After satisfying these 5 conditions. Only these 5 conditions are satisfied. From that time only, if you have incurred any development expenditure, the same will be capitalized. The same will be capitalized. Otherwise, we have to always charge these development expenses also in P&L account. Okay. Yes, sir. Next, we have understood all these items. And yeah, this recoverable amount concept we will be discussing along with Ind AS 36 only, will be just started after completing this Ind AS 38. Okay. Yes, sir. So as I have explained, we are having one stupid question which the institute have asked in the recent examination. So without wasting any time, let us quickly check that question. Okay. Just a moment, guys. Sir, what is that question? Quickly come to question number 5. I will be quickly explaining the question. Since this is a stupid question, there are high chances, since it is asked in examination, there are high chances that once again, if they want to ask, they will ask the similar question only, because they will copy paste the previous questions. Okay. They will never change the concepts. They will directly change the figures and they will repeat these kind of questions only if they have asked in the examination. I will categorize these type of stupid questions as something which is called as ambiguous questions. Okay. Sir, why you are categorizing these questions as ambiguous questions? The logic is very simple. Normally speaking, 95% of the questions which are being asked in the exam will be solved through application of concepts along with logics. Okay, normally you have to learn that manner only, but some questions though, if you apply the logic, you cannot be able to solve the question. And some set of questions, so the question itself is being wrongly asked by the institute. But what we have to do, we have no options. In order to get full marks, what we have to do is we have to understand the stance taken by the institute and we have to proceed accordingly. Okay, so in this question there is some fundamental mistake which the institute have asked. So what we'll be doing is we'll be trying to understand what is the mistake which the institute have did and how it is basically expecting us to answer this type of question. Because the reason is very simple. If they want to ask this question once more, they will just change the figures without changing the question. Okay, so let us understand what is the ambiguity which is there here. Okay, yes sir. So if you observe, they are saying Ginger Tulsi Limited acquired a patent at a cost of 80 lakh rupees. I think here some other figure have come percentage, so you can strike off that. So they are saying cost of 80 lakh rupees on April 1st, 2019. Okay, while formatting some another number is added here, I guess, so you can just remove this. So April 1st, 2019. Okay, yes. So the company started amortizing the asset at, again X I got, I think X is there here, so you can strike off that, 5 lakh rupees per annum till 31st March 2021. Okay, 5 lakh rupees per annum till 31st March 2021. Why I have striken this also you will understand. First listen. Since 31st March 2022, the company started amortizing the asset as per Ind AS 38. This is what they have given in the, what should I say, question. Examination question where they have used the similar wordings in DAS 38. And they are again saying, sir, on 31st March 2023, it was found that the product life cycle may continue for another 5 years from then. On 31st March 2023, what they are trying to say is it was found that the product life cycle may continue for another 5 years from then. The net cash flows from the product during another 5 years are expected to be, they have given some few set of cash flows. Okay? Yes, sir. On 31st March 2025, it is felt that no further benefit will be accrued in the future, and they are asking you to pass the necessary journal entries to record the amortization of the cost of the patent at the end of the year for 21-22 to 24-25. Okay? Now, with the first reading of the question, students have to immediately tell me, sir, in this case, what will be the useful life as on the date of purchase? As on the date of purchase means, sir, on this 1st April 2019, you have to tell me, sir, what is the useful life which they have given in the question. They have given amortization cost per annum, and we know the cost also. Cost also we have know that, and amortization also you have know that, sir. So what we have to do is you have to quickly tell me, sir, what is the useful life in this question. I am waiting for your answers. I will be waiting only for 30 seconds. In these 30 seconds, I want the answers. Okay, what is the useful life of the intangible? I think, can you type in chat box? 16 years is what some members are typing. I've already got the answer. 16, 16. 16, 16, 16. Super, super. Most of the students are saying that it is 16 years. But yes, now comes the institute. Now comes the ambiguity. The first ambiguity which the institute have thought is they haven't considered this 16 years ka useful life. They haven't considered this 16 years ka useful life. Sir, then what they have considered? Now they have did the mistakes, or whatever the mistake which they have did is try to understand the concept. Sir, Ind AS 38 is there now. Ind AS 38 is related to intangibles. Similar standard, similar corresponding AS we are having, and that AS is nothing but AS 26. AS 26, if you remember, you have studied at your inter level, that is also related to intangibles only. If you remember one point there, sir, what is that one point is? Management can take one rebuttable presumption that maximum life of the intangible can be 10 years. This is the point which is there in AS 26. Sir, what you are trying to say? I am trying to say, as per AS 26, the maximum useful life of an intangible asset, if nothing is given, you can take a presumption that maximum life of the intangible asset is 10 years. Sir, are you saying that it is not possible in accounting standards to take a useful life of more than 10 years? Answer is no. If management have reasons to believe that it is having a useful life of more than 10 years, you can do so. But generally speaking, if nothing is given, if the management cannot estimate the useful life, then what they are saying is maximum 10 years. So you can keep that as a useful life. But this kind of point is missing in our index. But suddenly our institute, this type of question though, they will be asking in AS26. But they have copy pasted the question. But they have copy pasted the exact question just by changing this name. So instead of AS26, they have asked it in AS38. But the thing is, such concept itself is not there in AS38. But still, institute is institute. So how they have solved is they have solved. So if you observe clearly, they are saying since 31st March 2022, the company started amortizing the asset as per Ind AS 38. Ind AS 38 means they have assumed that they have applied AS26, but wrongly they are saying in the question that it is Ind AS 38. Okay? Yes, sir. So now what they are trying to say is, since 31st March 2022, though, they are estimating the useful life as 10 years only. But a balanced useful life as 10 years only is what they are trying to estimate. Okay, let us check the question, that you will exactly understand what I'm trying to say. First of all, listen, this is ambiguous question. So if you apply our normal concepts, you cannot able to solve the question. So what we have to do, we have to remember this type of question, because some types of questions the institute will ask like this only. There are 90% chances that if they want to ask this type of question, same copy paste question will be repeated. Okay, yes sir. So quickly check the question. Sir, April 2019 May, what is the cost, sir? My cost is 80 lakh rupees. April 2019 May, my cost is 80 lakh rupees. And 31st March 2021, what they are saying, sir, amortization of 5 lakh rupees have been charged. How much they have charged, sir? Amortization of 5 lakh rupees they have charged. That is clearly mentioned in the question. Second line only they have given. Okay, yes sir, 5 lakh rupees they have charged. Now you have to understand, sir, till this period, April 2019 to 31st March 2021, sir, how many years are completed? 2 years are completed. Now you have to understand, sir, if based on our presumption, if useful life is 10 years, if useful life is 10 years, now you have to tell me, sir, 80 lakh is my cost and useful life is 10 years. Can you calculate the annual depreciation? Then you will understand 8 lakh per annum will be the annual depreciation which you have to charge. Sir, but 2 years are completed now. Therefore, 2 into 8, if you observe, 16 lakhs should be the depreciation, should be the amortization which have to be actually charged. I hope you are getting the point. Sir, amortization for the 2 years which should be charged. That's why I have written amortization to be charged, sir. How much it is? Amortization to be charged is 16 lakh rupees. Okay. Yes, sir. But how much amortization you have charged? Sir, I have charged 5 lakh only. If the cost is 80 lakh, if you have charged 5 lakh only, then your carrying amount is how much? Then your carrying amount is 75 lakh. But if you charge the amortization correctly, sir, then what will be my carrying amount? Your carrying amount will be 80 lakh minus 16 lakh, which is going to be 64 lakh. 80 lakh minus 16 lakh, which is going to be 64 lakh, which means my asset ka value is 11 lakh more than what it have been, because it should be 64, but currently it is 75, which means my asset ka value is 11 lakh more than what have to be, which means this amount is there now. This asset ka balance have to be decreased in the current year. This asset ka balance have to be decreased in the current year, which means intangible asset will be credited. Intangible asset will be credited, sir. But how much it have to be credited is 11 lakh though till this 31st March 2021 they have to charge. But unfortunately they have given another word in the question. Sir, what they have given in the question? Where is the question? Here, if you observe, since 31st March 2022, the company started amortizing the asset as per AS26, which means if you observe during this year also, 21-22 also, we have to charge the amortization. That means for the third year also, we have to charge the amortization. Oh, In this case, this third year ka amortization is there na. This will be charged to P&L account. Sir, then what about balance 8 lakh, balance 11 lakh? That 11 lakh though, that is not related to the current year ka profits. That is related to previous years. Sir, why you have charged retained earnings is, the reason is very simple. Sir, I have forget to charge my amortization, because of which my profits for the earlier years are increased. Now I have to reduce that profits. So that is the reason why I have debited this retained earnings of 75 minus 64, which is 11 lakh. And current year to amortization, current year ka amortization to you have to charge to PL account only. So amortization accounted are 8 to intangible asset, which is 19. Narration, if you observe, you will understand. Being prior period ka rectification and current year ka amortization have been charged here. Sir, but unfortunately, this amount is there. Now, this amortization will be charged to the P&L account. This is the first catch which a student have to do. Okay? Yes, sir. Sir, now suddenly what have happened in 31st March 2023? Quickly check this. On 31st March 2023, they are saying it was found that the product life cycle may continue for another 5 years from then. Another 5 years from then. So, sir, as on 31st March 2023, what is my balance useful life? Your balance useful life is only 5 years. And they have also given the cash flows from the product during another 5 years also. Sir, how much? 36 lakh for the first year, 46 for the second, 44 for the third, 40 for the fourth, and 34 for the fifth year. Very, very simple you have to do. If you observe, this is there now. 31st March 2023, the amortization you have to calculate. Sir, how I will be getting this? I have already written in the concept notes. Sir, it is called as units of production method, which means based on the cash flows you have to amortize. Based on the cash flows we have to amortize. Quickly check the question. Sir, how much is the cash flows for the first year? First year ka cash flows to 36 lakh. Please add. Suchitra, I will explain that point. Okay, I will come to that point. Don't worry. I will explain. That is the ambiguity, which is what I am referring to. Okay, that is also another ambiguous point. I will explain that. But first, let us try to understand. That's what I am saying. This question is completely ambiguous. Okay, so check this. 36 lakh, 46 lakh, 44 lakh, 40 lakh, and 34 lakh. Please add all these amounts and tell me what is the total. 36, 46, 44, 40, 34. If you add all those amounts, you will suddenly get 200 lakh. You will get 200 lakh. But first year ka cash flows, expected cash flows to 36 lakh. Sir, the value of the asset is 56 lakh. The value of the asset is 56 lakh. Sir, how have you got 56 lakh? Very, very simple. Sir, this 64 is there. Na? 64 to before charging this depreciation. But now you have to even charge this year ka amortization also. So 64 minus 8 if you do, you will be getting 56. Okay, yes sir. So this 56 into 36 by 200 if you do, you will be getting the amortization for the year ended 31st March 2023. Okay, yes sir. So sir, here what will be the entry which I will be passing, sir? Amortization account debtor to intangible account, which is 10 lakh 8,000, 10 lakh 8,000. I hope you are getting the points. This is amortization for the 31st March 2023. Okay, yes sir. This is correct, sir. We have understood the point. Next, guys, quickly check for 31st March 2024. Sir, 31st March 2024, my expected cash flows are this 46 lakh rupees. My total cash flows will be, if you do, you will be getting 200 lakh only. Okay, yes sir. Sir, 56 lakh into 46 lakh by 200 lakh if you do, you will be getting 12 lakh 88,000. Guys, basic math going on. Basic math is going on. So this 12 lakh 88,000 is nothing but amortization. Amortization which will be charged to intangible is 12 lakh 88,000, and this amortization will be transferred to P&L account. I hope you are getting the point. I hope you are getting the point. Yes sir, we are understanding the point. Next part, Baba. Last point, if you observe, sir, they are saying pass the necessary journal entry to record the amortization of the cost. Okay, on 31st March 2025, they are saying it is felt that no further benefit will accrue in the future. Oh, they are trying to say that future economic benefits are stopping from coming, which means you have to stop your amortization. Sir, but I'm still having 33 lakh 4,000 rupees ka balance. Completely, you have to write off that intangible asset because from that asset, no future economic benefit is going to accrue. I hope you are understanding the point. Yes, sir, we are understanding the point. So please confirm, just look at your soft copy, what I have shared. Have you understood this amortization? Have you understood this amortization or the last amortization? Have you understood the three entries or not? Please confirm and tell me. Suchitra, I will be solving your doubt. No need to worry at all. That is the ambiguity, which I will show you why it is ambiguous. Okay. Have you understood this entry? Have you understood why I have written 11 here? Have you understood this calculations? Please confirm if it is yes. So what we'll be doing is now I will be explaining the doubt of Suchitra which he have raised. Okay. So please give me a confirmation if you have understood this. Now I will be explaining, sir, why you are telling like this. So just give me a moment. I will be showing the suggested answers of the institute. Then you will understand. Then you will understand why I have solved. Come on, guys. Check this question. So this is the question what they have given. So quickly try to understand, sir. They are saying Ginger Tulsi Limited acquired a patent at a cost of 80 lakh rupees on 1st April 2019. Okay, sir. They are saying, sir, the company started amortizing the asset at 5 lakh rupees per annum since 31st March 2021. While reading the question for the first time, every student should understand like this only. Sir, what we have to understand is 5 lakh rupees is per annum ka amortization, which means 2 years are completed. So how much amortization they would have charged, sir? They would have charged 10 lakh rupees is what is person with a common sense will understand. Okay. Yes, sir. But let us look at the suggested answers what the institute is trying to do. If you observe, check this part. The first entry which they have passed is amortization account debtor to patent, which means they have passed only 5 lakh rupees. Sir, ideally speaking, this 5 lakh rupees though should be passed every year. Answer is yes, but our institute have assumed the solution like this and they have debited only 5 lakh rupees as amortization. That is the reason, if you observe, they have debited 11 lakh rupees. They have debited 11 lakh rupees. Are you understanding or not? Sir, why they have debited this 11 lakh rupees? It is very, very simple because they will debit 11 lakh only when the amortization which they have charged is 5 lakh rupees, not per annum. Total amortization, if it is 5 lakh, then only our carrying amount will become 75 lakh. If it is 75 lakh, sir, our should be carrying amount is how much, sir? 64, sir. Have you got the 64? 80 minus 16. Then you will be getting 11 lakh. Okay. So this 11 lakh is there now. This 11 lakh though have to be adjusted from retained earnings. Amortization should be debited and credit will be given to intangible asset. So this question is completed, guys. So whatever it is relevant, I have explained in the question. Sir, is the question correct? Definitely not. 100% the question is wrong. Since the question is wrong, even if you write the correct solution, unfortunately, they will not be giving us the marks because whoever the valuationists who are valuing the exams, they will only follow the suggested answers blindly. Okay, so that is the reason we have to remember this type of ambiguous questions if you want full out of out marks. Okay, yes, sir. So with this, we have completed in days 38 all complicated topics. Only one question is there, which is a little bit complicated. Since that is asked in the examination, I am worried about this. Sir, what if the same type of questions comes in the exam? Then we have to solve it similarly. Then we have to solve that similarly. So that's it, guys. With this, we have completed in days 38 intangibles. So please give me a heads up if you have understood. We'll be quickly moving with another super important standard, which is nothing but in days 36 intangibles. Super important standard. Okay. If you have understood this, so is the question. I know that most of the students are a little bit confused about this, but this is the approach which the institute have been following. Okay. Yes, sir. So if you have understood, please give me a heads up. Then we will be moving to next standard, very, very important, which is in days 36. Yes, no logic in this question. That is correct only. But since it is exam question, I am stressing it this much. Otherwise, I would have ignored this question. I'm a little bit worried, sir. What if the same question comes? Then we have to do like this only. Okay. So that is the reason why I have selected only this question in this chapter. But that is little bit important is what I'm expecting, because our institute will definitely ask the same copy paste question if they want to ask. Okay, so that is the reason why we have to be a little bit careful and we have to solve the question accordingly if you want 7 out of 7 marks. That is the assurance which I can give you. Okay, yes sir. So now, okay, whoever the students, if still you guys are having a little bit confusion in your mind, let us leave the confusion aside, because in days 38 is completed. From in days 36, we will be having very good questions. Okay, so nice questions are asked in these chapters. There are no ambiguous questions. So this is also very important. So high chances that in your December 2025 in days 36 is going to come in your examination. Okay, so please leave aside all your worries and tensions. I am saying you will not be having enough clarity because the question itself is wrong. Okay, but fine, that is okay. We can leave that question, and we'll be starting immediately with this Ind AS 36, which is the meaning of impairment of assets. Okay, let's get quickly started. So listen to this very carefully. First one, sir, what is the scope of the assets? Very simple. Quickly check the scope. Quickly check the scope. There is nothing important conceptually, but we'll be just going through aram se. So first one, they are saying inventories. Sir, why inventories are excluded? Because for inventories, we are having a separate standard. We are having a separate standard. Ind AS 2 is there. They will explain the accounting treatment completely for this inventories, so they are not covered in this Ind AS 36. Okay. Yes, sir. Next one, sir. Biological assets. For biological assets, also we are having a separate standard. Biological assets means yesterday only we have discussed in the class that bearer plant. Other than bearer plant, some biological assets are there, and animals also there, which are treated as a biological asset. Sir, for those we are having a separate standard, which is Ind AS 41. That is also not there in our syllabus. Okay, sir. Yes, sir. Financial assets. Ind AS 109. In that standard only they will be mentioning how to do the impairment of financial assets. So please don't come to Ind AS 36 is what they have clearly clarified even in the scope also. Okay, sir. Yes, sir. Next part, non-current assets held for sale. Sir, this non-current assets held for sale, though, what the standard is saying is for this also we are having a separate standard, which is Ind AS 105. And of course, in the last class only I have said that, sir, any non-current asset held for sale should be recognized at something called as FVLCTD. FVLCTD. I am confident that you guys have remembered the full form of this FVLCTD, which is nothing but fair value less cost to dispose. Okay? Yes, sir. Before tax asset also we are having a separate standard, which is there in our syllabus. So that related impairment is also not covered in Ind AS 36. Last May insurance contracts are also there. Sir, we have understood all the assets for which impairment is not applicable. Now we want to understand for which assets impairment is applicable. This is more important. So listen this. First one, sir, for PPE, Ind AS 16, impairment is applicable. For intangible, Ind AS 38, impairment is applicable. For Ind AS 40, investment property, that is not there in your syllabus. But for that also, impairment will be applicable. Last but not the least, 103. Sir, what is this 103? Business combination, super important standard. That related also, some guidance is there in this Ind AS 36, which we will be studying a little bit later. Okay? Yes, sir. Now, the reason why this Ind AS 16 and 38 impairment is applicable, because of that only, because of that reason only, institute will love asking these questions which are having a combination of 16 plus 36 or 38 plus 36, because these can be asked combinedly. So that is the reason these standards are super important. Okay. Yes, sir. Now let me give you an example. Through that you will be understanding, sir, why this impairment ka concept is really essential. Okay. Just a moment. Where it is, I'm just checking. Just give me a moment. Okay. Yes, sir. Now try to understand what they are trying to say. Sir, carrying amount in my books Carrying amount of assume 1 pp in my book says, sir, how much, sir? Sir, it is nothing but 10 lakh rupees. Okay, yes, sir. Carrying amount means cost minus accumulated depreciation. If you do whatever the amount which you will be getting, that will be called as carrying amount. Okay, sir. Sir, but this impairment ka standard is using another word which is called as recoverable amount. Sir, what is the meaning of this recoverable amount? Let us slowly try to understand. Sir, recoverable amount is nothing but how much amount you are expecting to get recovered from the asset. Which means how much amount, how much cash flows in the future you are expecting from that asset you have to calculate. If that asset pay, how much you are expecting, assume, sir, from this asset pay, I am expecting only 8 lakh ka cash flows. Oh, you are expecting from that asset only 8 lakh rupees ka cash flows. But in your books, though, you are showing the asset at 10 lakh rupees. Now the institute, now the standard is saying, no, we cannot show the asset more than its recoverable amount. Since it is very clear, you are only saying that I will be recovering only 8 lakh rupees from that asset. So why will you keep your asset at a higher amount? Which means this is not correct. Because your recoverable amount is 8 lakh rupees, but still in your books, though, the value of the asset is 10 lakh rupees. Okay, sir. The difference is there now. This difference is called as something which is called as impairment loss. After charging this impairment loss, sir, currently my carrying amount is 10 lakh rupees. If I charge the 2 lakh rupees ka impairment loss, sir, your revised carrying amount is how much, sir? My revised carrying amount is 10 lakh rupees minus 2 lakh. If you do, you will be getting 8 lakh rupees. Now check the logic. Sir, from the asset, I will be recovering 8 lakhs, and in my books also the value is 8 lakh only. This is the concept of impairment. This is the concept of impairment, and you have to remember one thing in your mind. Sir, impairment will be applicable only when your carrying amount is more than the recoverable amount. Only when the carrying amount is more than the recoverable amount. This point you have to fix in your mind. And impairment loss will be calculated as carrying amount minus recoverable amount. Okay? Yes, sir. Now try to understand another side of the coin. Sir, carrying amount is 10 lakh only. Recoverable amount is 11 lakh rupees. Assume it is like this. Now understand the consequences. Sir, carrying amount though it is 10 lakh only, but recoverable amount though from that asset I am expecting to get a cash loss of 11 lakh rupees. Arey Baba, if you remember from the starting childhood days onwards, we are having something called as a conservatism and prudence ka concept. You have to recognize for known losses, but known gains though we should not recognize. So that is the reason, sir. In this case, our carrying amount is less than the recoverable amount. What will happen? Nothing will happen. But if your recoverable amount is less than the carrying amount, then we have to alert the investors. Okay, alert, be alert. Our carrying amount is 10 lakh, but from that asset, we are not expecting a cash flows of 10 lakh. We are expecting only 8 lakh. Then we have to be alert and we have to charge the impairment loss of 2 lakh rupees. Sir, but what happens in this case? In this case, nothing will be happen. So always remember, impairment loss will be applicable only when your carrying amount is more than recoverable amount. In this case, carrying amount is less than recoverable amount, so impairment loss is not applicable. Impairment loss is not applicable. Are you understanding this point or not? Students, what are you doing? Are you there or not? Please give me a heads up if you have understood the difference between whatever the 2 points which I have said. Okay. Fine, sir. So quickly check the point which I have written. The first one, impairment of an individual asset. An asset is said to be impaired if its carrying amount is more than recoverable amount. Okay, sir. Sir, what is the logic of this impairment? Very, very simple. Entity have to bring the carrying amount to its recoverable amount. Oh, entity have to bring the carrying amount to its recoverable amount. Sir, it should recognize impairment loss. Sir, how I will be getting impairment loss? Simple, Baba. Carrying amount minus recoverable amount you have to do. Sir, what is the treatment of this impairment loss? What is the journal entry? Simple. Asset will be credited, correct? So what will be the debit? Debit will be given to impairment loss. So where this impairment loss will be transferred? This impairment loss will be transferred very, very simple. Generally to the P&L account it will be transferred. Sir, earlier जो है ना, my asset is revalued upwards. Oh, if your asset is revalued upwards, you are having some balance in revaluation reserve. This is totally contradictory. You are saying earlier that my asset is having an upward revaluation, but now suddenly you are saying my asset is impaired. These two contradictory items should not be there. So first what we have to do, adjust this revaluation reserve against the impairment. If it is having, sir, I don't have any revaluation reserve, so aram se charge that to P&L account. Have you understood this journal entry or not? Because based on this journal entry only, we have to solve the further questions. Normally, asset will be reduced, impairment loss will be debited. Sir, where I have to transfer the impairment loss? Generally to PL account. Sir, but earlier I have some revaluation reserve ka balance. Now adjust that revaluation reserve ka balance. Okay? Yes, sir. We have understood this question. So nice. Next one. Depreciation will be charged on revised carrying amount. Journal alone, please repeat. Okay. So first one. Sir, because of this impairment, my asset is going to be reduced. So first of all, asset will be credited and I will be debiting the impairment loss. Sir, normally speaking, the impairment loss will be transferred to P&L account because we know the basic rule in accounting, golden rules of accounting, all expenses will be debited to P&L account. So that is the reason this impairment loss will be generally debited to P&L account. Sir, the entry which I will be passing is P&L account debtor to impairment loss account. This is the normal entry. Sir, but unfortunately what have happened is in my account though I have some revaluation surplus ka balance. In your account, if any OCI ka balance is there, then we have to debit the OCI and you have to credit the impairment loss. Okay? Yes, sir. I hope it is clear for you now. Then we'll be moving to the further. This will come. This is not that much important. Will come a little bit later. Now come to this part. Concept of recoverable amount. Sir, how we will be calculating the recoverable amount? Let us try to understand. Okay? Yes, sir. First one. Recoverable amount is nothing but how much amount you are going to get from the asset. Sir, I have two options. Like how I am getting the cash flows, that will be dependent upon the way I am using the asset. Sir, first option is if I want, I can directly sell the asset. If I sell the asset, then also I will be getting the cash flows. Second option is, sir, if I want cash flows, I have to use the asset in the business. If I use the asset in the business, from that also I will be getting the cash flows. From that also I will be getting the cash flows, which means very, very simple. You have two options. First one, if you want, you can sell the asset. Second one, if you want, you have to use the asset. In both the cases, you will be getting the cash flows. You will be getting the cash flow. So the concept of recoverable amount is like that. First one, sir, please calculate the value, how much you will get if you sell the asset. Sir, how I will get that? Very, very simple. FVLCTD. Sir, what is the meaning of FVLCTD? Fair value less cost to disposal. Sir, first we have to take the fair value. Sir, fair value, you are saying from the starting itself, how you have to calculate the fair value? For that, we are having a separate standard, which is Ind AS 113. B category standard. Okay. Fair value, you have to calculate as per Ind AS 113. This will be given in the question. Sir, but cost to dispose also, they will be giving in the question only. Example, legal fee, stamp duty, removal cost. Finally, we will be getting the carrying amount. Sorry, we will be getting the FVLCTD. Which means this is the value which you will be getting once you sold the asset. Okay, sir? Yes, sir. So FVLCTD I got, sir. What is the second value? Second value is nothing but value in use. Sir, what is the meaning of value in use? If I use the asset in the business, whatever the cash flows which I will be getting, that will be getting in the future. For example, first year end, I will be getting 60,000. Assume. Second year end, I will be getting 1 lakh rupees. Third year end, I will be getting 2 lakh rupees. Fourth year end, I will be getting 1 lakh rupees. Just example. Sir, what we have to do? Just calculate the present value of the future cash flows. You will be getting something called as value in use. You will be getting something called as value in use. So value in use is nothing but present value of future cash flows expected to be derived from the assets use and disposal. Now try to understand what they are trying to say. Sir, one asset is there. From that asset, year 1 पे end में I will be getting 1 lakh रुपए का cash flow. ठीक है? Yes sir. Year 2 पे end में I will be getting 2 lakh rupees का cash flow. Year 3 का end में I will be getting 5 lakh rupees का cash flow. And year 3 though is the maximum useful life, which means after year 3 I am having only a residual value of 50,000 rupees. Are Baba, always remember this 50,000 is also a cash flow for you. If you sell the asset, this 50,000 is also cash flow for you, na? So while calculating value in use, you have to calculate the present value of future cash flows expected to be derived from the assets use and disposal. Even the scrap value also should be included while calculating the value in use. Okay. We have one question. Through that question, we will be exactly understanding what I am trying to say. Okay. So FVL CTD, how you will be getting fair value less fair value as per Ind AS 113 minus cost we have to do. Value in use, how will be getting, sir? Present value of future cash flows expected to be derived from the assets use and disposal. Okay, sir? Yes, sir. Now we'll quickly solve with one question. Sir, what is the question which we are solving is, quickly come to ninth question, guys. Ninth question, where it is. Check this question, ninth question. You only have to tell me this question ka answer. Okay, everyone open your calculators, and this concept is very, very simple, guys. Theoretically speaking, this impairment may not give you enough comfort, but trust me, while solving questions, this is the most easiest standard. Okay? Yes, sir. So first one, guys, a major depreciable asset of Padma Limited was purchased at a cost of 45,000 million. 45,000 million on 1st July 2021. Okay, sir. 1st July 2021 में they have purchased the asset. Sir, the asset has useful life till 31st March 2029. ठीक है sir, asset have useful life till 31st March 2029. The estimated residual value is 650 million. Sir, estimated residual value is how much, sir? Estimated residual value is 650 million. And they have given selling price of the asset as on 31st March 2024 is expected to be 25,000 million, and the cost of disposal is expected to be 500 million. Guys, can you please tell me? Sir, can you please tell me what will be the FVL CTD ka value? Fair value less cost through disposal ka value. Can you see the question and you have to tell me 30 seconds time. Everyone have to tell me what is the fair value less cost through disposal in this question. Okay, very, very important. It is 24,500 is what most of the students are saying. It is exactly correct. Very, very simple, sir. 25,000 minus 500. If you do, you will be getting 24,500 million. It is exactly correct, Suchitra. Thanks for the answer. This is nothing but fair value less cost to disposal. Sir, it should be compared with something which is called as value in use. Sir, how I will be getting the value in use? Arey Baba, very, very simple. You just have to calculate the present value of the future cash flows. Sir, they have given the future cash flows. Sir, but have they given the discount rate? If you check the question, they have given the discount rate. And they are very kind enough. They have also given the present values also. Okay, sir, simply we have to do, sir, what we have to do is just multiply first year ka cash flow with first year ka present value. They have given the table also. So please calculate and confirm whether the value is 25,710 or not. Take 1 minute ka time and please confirm the value. I have already said that, sir, this 650 residual value also should be included in the cash flows. Okay? Yes, sir. So take 1 minute of time and quickly tell me, sir, is the value which they have calculated, is the value in use 25,710, is it correct or not? Just a 1 minute time, you have to confirm this value in use ka calculation. Someone was saying 25,710. Someone was saying 25,714. I think you have to get this 25,710 only because they have given these figures. If they have given specifically the present value factors, please use those factors only. If they have not given, then you can take in your calculator. At that time, so approximation may happen. But here, since they have given, you just have to आराम से calculate the what should I say value in use का calculation. ठीक है? Yes, sir. We have guys. We have to calculate the carrying amount first of all. Okay, sir. Carrying amount to how I will be getting, sir. Arey baba, carrying amount is super important, sir. First of all, cost minus depreciation I have to do. Sir, depreciation how I will be getting? Depreciation how I will be getting is simple. Sir, I have to take the cost minus scrap value I have to take. That should be divided by useful life. That should be divided by useful life. Sir, quickly check and tell me in the question what is the scrap? Sorry, what is the cost? Sir, the cost is 45,000 million minus. Sir, they have given the residual value is 650 million. They have given the residual value as how much, sir? 650 million. Okay, here let me write 45,000 minus 650 divided by. Now you have to tell me, sir, what is the useful life in the asset? Sir, what is the useful life in the asset? Here I have written, I think wrongly, 8 years as the useful life. But if you observe, the asset is purchased on 1st July 2021, which means 3 months have already passed. 3 months have already passed. It means 0.25 year have already completed. 0.25 years have already been completed. So since they are saying the useful life is till 31st March 2029, which means the useful life of the asset is 7.75 years. 7.75 years. Sir, if they have purchased the asset on 1st April 2021, then the useful life is 8 years only. But since they have purchased in the middle of the year, in the first year, though, you have to calculate the depreciation only for the 9 months only. That is the reason why I have taken the useful life of the asset as 7.75 years. If this is 7.75, I think they have calculated it like this only. So 45,000 minus 650 divided by 7.75. Sir, how many years are completed? 2.75 years are completed because we are standing on which date? We are standing on 31st March 2024. We are standing on 31st March 2024. From the date of purchase, how many years are completed? 2.75 years are completed. Okay? Yes, sir. So quickly speaking, my depreciation will be 15,737 million. Then the carrying amount is 45,000 million minus 15,737, which will give me 29,263 million will be the carrying amount. So can you please confirm if this carrying amount is clear? Guys, very, very basic question. The question will be very simple if they have given the date of purchase as starting of the year. But intentionally they have given in the middle just to make you confused, because most of the students, even me also, by reading the question for the first time, I have assumed as 8 years only. But this should not be done like this. Okay, fine. Only one student is there, I guess. She is only responding. I think others are just sleeping. Okay, yes, so clear, super. Now let us write all the values. Sir, carrying amount is, where is the carrying amount? Carrying amount is 29,263. It should be compared with recoverable amount. Sir, what is my recoverable amount? Recoverable amount is nothing but fair value less cost to disposal. I think you have already said me fair value less cost to disposal, which is 24,500. Okay, yes sir. So this recoverable amount जो है ना 24,500 minus sir value in use तो 25,710 millions. Whichever is higher means 25,710. Now quickly use your brains and tell me, sir, asset ka carrying amount is 29,263, but recoverable amount is only 25,710. Is impairment loss applicable in this case or not? It is applicable because in your books, your value is more than whatever you are able to recover from the asset, which is the reason if you deduct that amount, 3,553, 3,553 is going to be your impairment loss. I hope you have understood the question. Very, very basic sa question. 3,553 million is the value which you have to understand. Okay? Yes, sir. So just give me a heads up if you have understood this basic question or not. If you understood this basic question, we will be moving into little bit advanced question of this. Little bit advanced version, which is called as CGU. 90% chances they will be asking a question from that CGU only. Very good. Very good. Fine. Just a moment. Okay. Very good. I'm receiving responses. Yes, yes, yes. Okay. Excellent. Now, let us try to understand the next super important concept, which is 90% important from the exam perspective. Sir, where is it? Where is it? Where is it? This one you have to understand. 24,500 and 25,710. Why compare it? Where? 1 second. See, this is what I have written, correct? If you check this Ind AS 36, recoverable amount ka value, you will be getting like that only, na? Recoverable amount is nothing but fair value less cost to disposal or value in use, whichever is higher. Okay, let me try to give you the logic, then you will be understanding. Sir, as an entity, I am having two options with the asset. First option is if I want to sell, I will be getting 24,500. But if I want to use the asset, I will be getting 25,710. Try to imagine from the entity point of view. Sir, if it sell the asset, it will get 24,500. But if it uses the asset, it will be getting 25,710. Sir, which is beneficial for the entity? It should use the asset now. That's why it will get more value. It should use the asset. That's why it will get 25,710. So that is the concept of whichever is higher. We have to compare this fair value less cost to disposal and value in use. Whichever is higher will become your recoverable amount. Okay, sir? Yes, sir. I hope the logic is fine. Now try to understand. Sir, FVLCTD. If FVLCTD is not available in the question, always remember value in use will be directly considered as recoverable amount. Sometimes it is not possible to sell all the assets in the outside market. Okay, sir, first of all, what is the meaning of fair value? Fair value is nothing but, for example, if any asset ka fair value you are finding, sir, if I sell this asset to somewhere in the market, which I have no relation with the party, if we both are related, then it will never be fair value. Okay, if the asset is sold to any two unrelated parties, that will be called as fair value. The definition itself is there in Ind AS 113, but that is okay. Even if you don't know, you can understand the definition of fair value. Sir, is it possible to sell all assets to someone? First of all, there are some customized machines which are there. It is not possible to find out the fair values of those items. So the standard is saying if this value is not available, then value in use will be directly considered as recoverable amount. Okay, sir? Yes, sir. But now comes the super important point. Sir, if value in use also is not available, then they are saying recoverable amount of such asset cannot be determined. Sir, what they are trying to say, let us understand with the help of an example. Okay, slowly let us understand. Sir, in the entity, there are assumed two machines are there. Two machines are there. First one, machine 1, and second one, machine 2. Sir, what is the job of these two machines? Let us try to understand. Sir, machine 1 jo hai na, machine 1 will be manufacturing bottle caps. Machine 1 will be manufacturing bottle caps, and this machine 2 will be manufacturing empty bottles. And this machine 1 will be manufacturing empty bottles. Now try to understand. Sir, this machine number 1 is there now. This machine number 1, sir, is it having the ability to sell these bottle caps itself in the market? Which means without inserting these caps to these bottles, is it possible for the M1 to sell only these caps in the outside market? The answer is it is generally not possible. Which means this machine 1 independently have no ability to generate the cash flows. If this machine 1 independently have no ability to generate the cash flows, sir, how I can calculate value in use for this machine 1? Arey Baba, value in use is nothing but present value of future cash flows na. Sir, but this machine 1, there are no future cash flows only, because it is not possible for me to estimate the future cash flows only of this machine. Similarly, try to understand machine number 2 ka perspective also. Sir, machine number 2 can only manufacture empty bottles, but without fixing these bottle caps, these empty bottles also cannot be sold in the market. Just assume like this. Those bottles, though, some stupid bottles, if this cap is not inserted. So their intention is not to sell empty bottles in the market. Which means, now you have to tell me, sir, is it possible for the machine number 2 to generate the independent cash flows? Answer is no. If it is not possible to generate the future independent cash flows on its own, which means there is no value in use for this machine number 2 also. Try to understand. For machine number 2 also, it is not possible to generate the independent cash flows. Correct, sir? Now comes the concept of combination of assets. Sir, what is the meaning of combination of assets? This combination of assets is exactly called as cash generating unit. Cash generating unit. Let us slowly understand the meaning of cash generating unit. So try to understand, if value in use is not available, recoverable amount of such asset cannot be determined. Then we have to check for impairment will be done for CGU. Impairment will be done for CGU. Sir, first of all, what is the meaning of CGU? CGU is nothing but smallest identifiable group of assets which are capable of generating largely independent cash flows. Another example I will be giving, try to understand. For recording classes purpose, I am having one laptop, I am having one projector, I am having one light stand also which is there. Okay, and I'm having one green mat, everything is there. Try to understand, is my laptop itself have the capacity to generate the future cash flows? Or is my projector itself have the capacity to generate the future cash flows? I am asking for myself. Generally, outsiders, it may be possible to generate exclusively future economic benefits through those assets. But you have to understand from the entity's own perspective. Is it possible for the entity to generate the independent cash flows only from the laptop? Answer is no. Only from the projector? Answer is no. Only from the light stand? Answer is no. Now, if I add all these items, if I add laptop, if I add projector, if I add light stand, if I add green mat, it is possible for me to generate the independent cash flows. Which means till I can generate the independent cash flows, I have to add all the assets into a group. This adding of all the assets into a group is exactly called as CGU. This CGU is also called as cash generating unit. Okay, sir, this CGU is called as cash generating unit, and it is saying, sir, smallest identifiable group. Sir, till the time those assets are not generating independent cash flows, I have to keep on adding the assets. For example, I have combined laptop and projector. These two also will not be generating future cash flows. So I am adding the light stand also. Okay, I am adding the inverter power backup facility also. Like this, we have to add all the assets till you are able to generate the future cash flows. Are you understanding or not? Okay, this is the very important point. Sir, in this case, how we have to do is, one second. Okay, sir, in this case, how we have to do is, we have to find out the carrying amount of CGU. Sir, how I will be getting the carrying amount of CGU? Are Baba, assume 5 assets are there in the CGU. You have to find out the carrying value of all the 5 assets. And this 5 assets का CGU का carrying amount will be compared with recoverable amount of CGU. Sir, how I will get the recoverable amount of CGU? Are Baba, the purpose of CGU itself is to find out all the number of assets which are having the capacity to generate the future cash flows. If this CGU have the capacity to generate the future cash flows, can't I calculate the recoverable amount? Answer is 100% you can calculate. Sir, how I will calculate? The concept will remain same. You have to calculate the present value of the future cash flows. These two should be compared. Assume my carrying amount is 1000 lakh of the CGU. Sir, but recoverable amount is only 750 lakh of the CGU. Oh, carrying amount is 1000 lakh, recoverable amount is 750 lakh, which means your CGU is impaired. Sir, how much is the impairment loss? 250 lakh is the impairment loss. Now what you have to do is you have to apportion this impairment loss to all the assets. Sir, this 250 lakh should be apportioned with this 5 assets. Sir, how we have to do the apportion and all? We are having one question. We will be understanding aram se. Okay, you can relax and we can solve the question nicely. Okay? Yes, sir. Fine, sir. Now comes to this point. Very, 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 very important note. So check these items. First one, goodwill and corporate assets. Goodwill and corporate asset. Guys, now you have to tell me goodwill related question I will be asking. Sir, is it possible to generate future cash flows only based on goodwill? Without selling the entity, I am asking only from the goodwill, because goodwill is also an asset. From that goodwill, is it possible to generate the future cash flows? Answer is no, no, no. 100 times I'm saying this point. It is not possible for the entity to generate standalone cash flows on the basis of goodwill. Next, try to understand another thing. Sir, corporate assets. Sir, what is the meaning of corporate assets? Corporate assets means, for example, head office building is there. From head office building, sir, what will be happening in that head office building is, head office building may assume HR ka function is there, finance ka function is there. See, HR function and finance function do not have any direct interlinking with the sales. If you observe, sales team will be having the direct interlinking with the sales. Finance team and HR team are internal departments only. These are responsible for the internal functioning of the companies only. If you observe that head office building is there, that head office building can never generate future cash flows, because that is not the front end department, it is the back end. It will do the back end work. Now you have to understand, if this head office building cannot be generating future cash flows, sir, what we have to do? We have to include in the CGU. We have to include in the CGU. Now try to understand the point what I have written. Sir, goodwill I cannot test for impairment individually. Corporate assets also I cannot test for impairment individually. Sir, what is the reason? Because they can't generate the independent cash flows. But indirectly, if your corporate asset is not there, my sales would not have been at that much, because indirectly it will be contributing. So now what they are saying is, but such goodwill and corporate assets indirectly contribute other assets in generating the cash flows. Therefore, impairment of goodwill or corporate assets should be only checked in CGU. Should be only checked in CGU. Okay? Yes, sir. Now what we'll be doing is, quickly let us solving another question. Okay? Through that question, you will be exactly understanding the concept of this CGU. Okay? Fine, sir. So let us quickly solve which question, sir. Easy question is there. Let us solve this sixth question, guys. Little bit easier and little bit interesting. So quickly check this sixth question. Very, 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 very important. Okay? Yes, sir. Guys, this is important. You have to be a little bit careful while understanding this question. Okay? Yes. So check this. Is the screen blurry by any chance or is it fine? Fine. Okay. So come on. Question number 6. Sir, ABC Limited have 3 cash generating units. Sir, what are those? A, B, and C. A is also a cash generating unit. B is also a cash generating unit, and C is also a cash generating unit. Okay, sir. Carrying amount of which as on 31st March 20x1 are as follows. They have given A cash generating unit का carrying amount is 500 crores. B का cash generating unit का carrying amount is 750 crores. C cash generating unit का carrying amount is 1100 crores, and they have given the useful life of the each CGUs also. Useful life of the each CGUs also they have given. Okay, sir. ABC Limited also have 2 corporate assets. 2 corporate assets they are also having. Sir, the meaning of corporate assets is this X is also cannot generate future cash flows on its own. This Y is also cannot generate future cash flows on its own. Sir, so now what I have to do? I have to apportion this X ka value to A, B, and C. I have to apportion the X ka value to A also, to B also, to C also. Okay, sir. They have given the point that only corporate asset X ka carrying amount is how much, sir? 600. The carrying amount of the X can be allocated on a reasonable basis to the individual cash generating units. Oh, sir, check this Y. Check this Y. Y ka value to carrying amount is 200. But sir, understand this word. The carrying amount of Y cannot be allocated on a reasonable basis to the individual cash generating units. Now you have to tell me, sir, is it possible for us to apportion this Y to A, B, and C? Quickly tell me, is it possible for us to apportion the Y to those individual cash generating units? Answer is no. Sir, but is it possible for X to be apportioned? Answer is 100% yes. Because they have given in the question, can be allocated, cannot be allocated. Let us follow the question. Let us follow the question. Okay, sir, in the question they have given recoverable amount as on 31st March 20x1. Sir, A ka recoverable amount they have given 600, B ka recoverable amount they have given 900, and C ka recoverable amount they have given which is 1400. And ABC Limited also. Sir, what is this ABC Limited? Are Baba, this ABC Limited means entire entity. Entire entity ka recoverable amount is how much, sir? 3,200 crores. Okay, sir, because ABC is having 3 cash generating units. So they have given the recoverable amount for the ABC Limited also, which is 3,200 lakh. Okay, yes, sir. Let us understand this question. If you observe, they have given carrying amount of A also they have given, carrying amount of B also they have given, carrying amount of C also they have given. Recoverable amounts also they have given for A, B, and C, and they have clearly mentioned this X ka carrying amount jo hai na, this X ka carrying amount can be apportioned between other assets, which means quickly come to question. I think I have given us a solution in this question. Question number 9 we already completed. Question number 6. This is the thing. Okay? Yes, sir. Guys, just to do some basic calculation. Sir, what is the calculation which I have to do? Just write the cash generating units. Sir, first what I am doing is I am allocating the X to all cash generating units. First what I am doing is I am allocating the X to all cash generating units. Okay. Most of the students, what they will do is they will be allocating this 600 in the ratio of their carrying amounts. 600 will be allocated in their carrying amounts. But hold on, here you have to do one adjustment. Don't directly allocate this amount in the ratio of their carrying amounts. Sir, what I have to do is please multiply these two amounts. Carrying amount into useful life should be multiplied. Here also you have to multiply this. Here also you have to multiply this. So in the question, what I have written is carrying amount I have written, useful life also I have written, and in the next step though I have multiplied carrying amount into useful life. Carrying amount into useful life I have multiplied. Okay, sir, is there any reason? Answer is yes, there is reason. Try to understand. this x is there now. Try to understand the carrying values and tell me, sir, which asset will use this x more if you observe based on carrying amounts, which means, sir, highest carrying amount should get more allocation. Highest value ka asset should get more allocation, and obviously the lowest value will get lowest allocation. Are Baba, but it should be also based on the useful life also. Sir, how you are saying it will be also based on the useful life? Are Baba, simple. Sir, if any asset ka useful value is more, which means I will be getting the highest allocation. If useful life of the asset is less, I will be getting the lowest allocation. Since two bases are there, we have to take the combined ratio. Sir, what is the meaning of combined ratio? Take the product. Take the product. Simply speaking, no need to remember the logic also. Just by heart this part. Carrying amount into useful life you have to take, and based on this ratio based on this ratio we have to allocate the x. Based on this ratio we have to allocate the s or allocate the x. And what is the ratio? 5,000 is to 15,000 is to 22,000. Guys, since zeros are there, I have removed these two zeros, which will give me 50 is to 150 is to 220. Basic math. You can do in the ratio of 5,000 is to 15,000 is to 22,000 also. Anything is fine. Please confirm, is the value of the allocation of the x correct or not? I think you know how to calculate this. Sir, how I will be getting is simple. If you want this value, you just have to do 600 into 5,000 divided by 5,000 plus 15,000, 20,000 plus 22,000, which is 42,000. Please confirm if this value is correct or not. 71. Like this, please confirm for other three items also. Correct? Yes. Now try to understand. Now try to understand the question, guys. Very, 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 very simple question it is. Sir, this x will be added to A. This will be added to B. This x ka value will be added to the C. Now, in the second step, what I have did is, Are Baba, check the question. Sir, they have given the recoverable amount of A also, B also, C also. Sir, carrying amounts also they have given 500, 750, 1100. But now you have allocated the X also to these carrying amounts now. So can you please calculate the revised carrying amount? Very, very simple. Sir, first carrying amount may other assets are also there. Other assets ka carrying amount is 500 given in the question, 750 again given in the question, 1100 also given in the question. Sir, whatever the X ka value which I have allocated, that X ka value will be added. Sir, 71, 214, 315, which will give me my carrying amount of the asset is 571 for X, 571 for A, 964 for B, and 1415 for C. Please confirm, have you understood this point or not? Please confirm, have you understood this point or not? Very, very important discussion, guys. This will give me my total carrying amount. Okay? Yes, sir. They have given the recoverable amounts also, na. A ka recoverable also they have given, B ka recoverable amount also they have given, C ka recoverable amount also they have given. Just copy paste these amounts. Just copy paste these amounts. Now you have to tell me, sir, now you have to tell me, this impairment loss is only applicable for B and C. But I am having one doubt. Sir, why this impairment loss is not calculated for A? Please let me know. I want answers from everyone. Sir, why you have calculated impairment loss only for B and only for C? Why it is not calculated for A? I want answers from everyone. Sir, you have written here it as nil, but for B and C you are having certain values. Okay? No, it is not about useful life. It is wrong, Renuka. Carrying amount is 571, recoverable amount is 600. But here if you observe, carrying amount is more than the recoverable amount, therefore the difference is impairment loss. Carrying amount is 1415 less than the 1400, which means it is what should I say? It is impairment loss. But here if you observe, carrying amount itself is 571, but your recoverable amount is 600. Recoverable amount is 600. So in this case, we will not be getting impairment loss. Guys, if they repeat similar question, there are high chances that for one of the CGU though, there will not be having any impairment loss. Just to be a little bit careful. Just be a little bit careful. I'm not saying in all the cases it will be like this only, but in the exam questions though, there are high chances that for two CGUs or two assets, there will be impairment, and for one, there will not be impairment. Okay? That is the standard procedure which our things will be, what should I say, following. Now try to understand. Sir, this, okay, now impairment loss is not there for A, so let us eliminate A for some time. Okay, sir? Check this B. Sir, in this B, two assets are there. First one is other assets, second one is X also. Correct or not? Yes, sir. Sir, impairment loss is there, na? Impairment loss, so how much is there, sir? Sir, 64 impairment loss is there. But now you have to use your brains and tell me, sir, can I allocate this complete impairment loss to other assets? Or can I allocate this complete impairment loss to X? Or should I do proportionate allocation? Very basic. Should I allocate this complete to other assets, or should I allocate this impairment loss to X? The answer is, by doing both, you just have to do proportionate valuation. Okay? Proportionate valuation means very simple. Sir, here I have written allocation of impairment loss to assets in CGU. X ka value, sir, 64 is the impairment loss. Carrying amount of X is 214 divided by total value is 964. Please confirm, have you understood these calculations or not? Like this, we have to calculate the impairment loss ka allocation to balance assets in the CGU. Okay? So please confirm, have you understood these calculations or not? I have did nothing. Whatever the impairment loss which I have got, I have allocated this impairment loss to carrying amounts. That's it. So please confirm whether this value is correct or not. I'm getting responses, but I want responses from everyone. So please check. Okay, guys, nothing conceptual. Very basic sa question is going on. Okay, yes sir. Now try to understand. Sir, let us calculate the carrying amounts after impairment. Let us calculate the carrying amounts after the impairment. Sir, X ka value in B, if you observe, sir, earlier it is 214, but now 14 to impairment is charged. Sir, what is the carrying amount after this impairment? Arey baba, 214 minus 100, which is, sorry, 214 minus 14, which is 200. Sir, if you observe other assets ka carrying amount is 750 minus 50. If I do, I will be getting 700. Please confirm if you have understood this step also. In the same manner, for the C also you have to do like that. Sir, 315 is the carrying value, minus 3 if I do, I will be getting 312. And 1100 is the carrying amount of other assets, and if I deduct the 12, I will be getting 1088. So please confirm whether you have understood these calculations or not. Whether you have understood these calculations or not, I want confirmation. Brilliant, guys. We did nothing. Just these losses will be deducted after the things. Okay, sir? Yes, sir. Understood. Understood. Now, sir, after impairment is done, After impairment is done, what is my carrying amount? I have written down here. What is my carrying amount? I have written down here. Guys, just to try to understand. Sir, here they have given recoverable amount of ABC Limited also. Here they have given recoverable amount of ABC Limited also, which means here you have to test the impairment for ABC Limited also. Try to understand the feeling. They have given recoverable amount of ABC Limited. Sir, how I will get impairment for ABC Limited? You have to calculate the carrying amount of ABC Limited. Correct or not? You have to calculate the carrying amount of ABC Limited. Sir, how I will get the carrying amount of ABC Limited? Check the question and tell me, sir, have they given the carrying amount of ABC Limited in the question? Answer is no, Baba, no, they have not given. Sir, how I will be getting, sir? Simple. Here in the question only they have given, sir, ABC Limited is having 3 cash generating units, which means A is also, B is also, C is also. Sir, can I say that? Can I say that if I add the carrying amount of all the 3 assets, Are Baba, this X also I have already allocated to ABC, which means now in my carrying amount of this ABC, this X is also added. But what is not added, sir? What is not added? This Y is not added. This Y is not added. Sir, why we have not added this Y? Because they have clearly given it cannot be allocated to the individual cash generating units. But can you please confirm, sir, this Y also belongs to ABC Limited only? Answer is yes. This Y also will be belonging to ABC Limited only. So now try to understand what I am doing. Sir, carrying CGU ka A ka other assets to how much, sir? 500. Sir, have you got this 500 suddenly? Are Baba, there is no impairment for this A na. So whatever the value which is there, the same value will be coming. Same value of A will be coming, which means, sir, A ka value to 500. Sir, B में other assets ka value 700. C में other assets ka value to 1088. Okay, let me write here also the amounts. X ka value is 71 and 500. Guys, you can change these amounts later. Okay, X ka value to 71 and 500. Now tell me, guys, sir, whatever the value of other assets in the CGU which is there, 500. A CGU B में other assets to 700. CGU C में other assets to 1088. Sir, other than this, we are having X ka value also. Sir, what is the X ka value? This 71 is also X plus 200 plus 312. Have you understood this point or not? Please give me a heads up. X 71 plus 200 plus 312. Sir, what is the value of the total X? Total X ka value is 583. Please confirm if it is correct or not. Total X ka value, sir, is it 583 or not? Please check and tell me 583 or not. ठीक है. Yes, sir. Sir, A ka other assets I have added. B ka other assets I have added. C also I have added. X ka value also I have added. And last me Y value also I have to add. Because Y is also belonging to ABC Limited only. That is the reason why they have given in the question that carrying amount of Y cannot be allocated on a reasonable basis. Okay, sir? Yes, sir. So this Y ka carrying amount also will be added. And now what you have to do is quickly tell me the carrying amount of ABC Limited. All these carrying amounts you have to add. I'll be just giving only 30 seconds. So please add all these amounts. Is it coming to 3071 or not? Is it coming to 3071 or not? Now try to understand. Sir, this carrying amount of ABC Limited should be compared with recoverable amount of ABC Limited. Oh, sir, but recoverable amount of ABC Limited itself is higher, na? So quickly tell me, sir, is impairment loss applicable in this case or not? Is impairment loss applicable in this case or not? Quickly tell me, guys. Not applicable, which means the reason I have written here, impairment loss to be charged at entity level is how much, sir? Nil. It is charged at nil. Bharat, are you feeling disappointed that impairment loss is not applicable for this because of the emoji which you have shared in the chat box? Okay, very good. All of you are correct. In this case, impairment loss is not applicable. Guys, just try to understand the intention of the question. Just to do what the question is saying. Here, the first catch what you have to follow is this X should be allocated not in the ratio of the carrying amounts, not in the ratio of the useful life. You have to do the product on this ratio. You have to multiply. First catch. Second catch, Y should not be allocated. Y should not be allocated. First, we will be allocating X to all these items and then we will calculate impairment loss of ABC separately. If any impairment loss, okay, no worries, Bharat, I just asked it casually. Okay, no worries. So, sir, whatever the things, after charging impairment loss of this ABC to each assets, I will be finding the revised carrying amount of those items. Okay, sir. Those revised carrying amounts are there now. Those revised carrying amounts, though, those will be first charged. Along with those revised carrying amounts, we have to add even this Y also. So Y will be adding this Y because it is not allocated. But still, they have given the cash generating unit ABC Limited ka recoverable amount also, which means you want carrying amount of ABC Limited. While calculating carrying amount of ABC Limited, don't forget to add this Y. Okay, sir. Yes, sir. We have exactly understood this question. So please give me a heads up if you have understood the most important question in this in days 36. I am expecting this type of question to be asked in an exam. Okay. So have you understood or not? Yes, 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 yes. I have been receiving number of SS. So it is totally fine. Now what we'll be doing is, actually I am deciding basically to solve another two questions from this impairment just to be on a safer side. Since this is the first question which we have solved, we will be solving another similar question, which is this question number 5. But if you really understood this question, only then you will get the answer of this question number 5. Here, solution may, okay, there is little ambiguity, not little ambiguity, but suddenly they have taken rounding off in a different manner. But I have already shared the solution of this question. Okay, so my sincere request is first understand this total question. Understand this total question. Once you have understood this, guys, another thing is, sir, here if I observe, one second, here if I observe, there is no impairment loss, correct? Sir, but what if there is any impairment loss? But what if there is any impairment loss? For example, understand, sir, here only there is 3000. If there is 3000, then what I have got, sir, 71 will be my impairment loss. Sir, now what I will do this 71? This 71 should be apportioned between all these items. Just like how you did here. You just have to apportion this loss to all the assets. Have you understood this part or not? I mean, this part, this 71 should be apportioned between all the assets in the carrying amounts. Since in the example, impairment loss is nil, our answer is completed till here. Okay? Yes, sir. So what you have to do is, after understanding this question, my suggestion is try this question number 5. I will be explaining in evening session a little bit fastly, but this is also most important question number 5. Okay, question number 5 also will be solving, and another important question, which is this, where it is. This question number 12 is also there. This is very advanced question. I will just make you refer this question from the workbook itself. But if this kind of question is the maximum toughest question which they can ask. Okay, but again I am saying this is also of least importance. This much tough also our institute will never going to ask in our examinations. Okay, sir? Yes, sir. So fifth question though we will be solving in the next class. But now you have to really understand this question, practice this question nicely. Okay, you have to solve this question like this only in order to get the full marks. In the evening session though, we will be discussing this question number 5. And then once it is completed, we will be moving to next super important chapter, which is valuation of financial instruments. Compulsory 7 marks question. So financial instruments valuation, which will be starting in the next class. After completion of this, our in-day statistics also gets completed. So we'll be moving to the next chapter, which is called as financial instruments. Super important chapter. Okay, compulsory question will be coming from that chapter. And that's it, guys. So probably we will try to complete this financial instruments by today evening. So next classmate, tomorrow we'll be starting with valuation of goodwill and shares. And after that, we will move to business combinations. Okay, very important standard. As I have already said that we will be covering all the A category chapters in our discussion in our EVO batch. Okay. Yes, sir. So with this, I want to close today's discussion, but you have to definitely practice this question number 5 and question number 6. Okay. So that's it for today. So please practice. Let us stop till now because other students are having DT class at 11 o'clock, I guess. So we'll stop our today's discussion. Okay. Sujitra is asking doubt. What is the doubt? Tell me. Today. In the group, but I have other classes now. So. Okay, but the thing is, I have some other classes, so that is the reason I can't take. So impairment of 71, how it should be apportioned. Okay, fine. So for example, here I have got 3000. Sir, my impairment loss is 71. Are Baba. Now, please apportion that 71 to all these assets. Sir, how I will get that? Simple, Baba. 71 into 500 divided by 3071 for the first asset. Second asset though, 71 into 700 divided by 3071. Third asset though, 71 into 1088 divided by 3071. Like this we have to do for all the assets. Okay? Yes. I hope this is clear. So please give me a confirmation if you have understood this part. Yeah, I will give that. Surya. So no need to worry at all. I will be definitely sharing important theory questions from government accounting and recent developments in financial reporting. Okay. Yes. See, try to understand the difference what we have tested. First, you have to give the importance to testing the impairment assets individually. If it is possible, we have to do like that. Sir, it is not possible to do the impairment testing individually. Sir, why it is not possible? Because I am unable to generate independent cash flows. So our next preference will be to test the impairment at CGU level. That is what we have did. CGU level pay, we have to check the impairment. Sir, this is also completed. But now the last thing is you have to check the impairment at the entity level. entity level impairment. See, that's what I have written after impairment at CGU level. And here though, impairment loss to be charged as entity level. In this case, it got 71, but normally in our example, it is, what should I say, 0. Okay. Yes, sir. We have to do this subsequent impairment at all levels. What is the least possible thing which is possible? You have to do that thing. Okay. Yes, sir. I hope this point is clear. Brilliant. Brilliant question it is. You will exactly understood this after solving this question number 5. So that is the reason why I am asking you to solve this question number 5. Okay, sir? Yes, sir. So that's it for today, guys. I will let you know what is the next class timings in the group itself. Okay. So yeah, whatever the chapters which we are doing, if our luck is there, from these three standards what we have discussed, only 2 standards are going to come. If our luck is very good, 2 standards are going to come only from these 3 standards only. Okay, so practice very well all the concepts we have to check along with the questions. Okay, yes, so next class we will be solving valuation of financial instrument chapter. Let me just give you an overview of what all the chapters, sequence of order of the chapters and all. Let me give you. Sir, we have completed this in AS16 and where is it? 38 is also done, 36 is also done. So next importance is basically we'll be starting this revenue also I will be discussing, but I will not be discussing this revenue immediately. Okay, because that is a completely theoretical standard. If I discuss now, it will be a little bit boring for you. So what we'll be doing is we'll be starting with this accounting of financial instruments ka chapter next. A very important question. So high chances that in the exam to next 7 marks they will be asking from that chapter only. After that, we'll be starting with first I will be starting with financial instruments. Next, we will start with valuation of shares and goodwill. Next, we'll start with NBFC provisioning norms. Okay. Next, I will start with business combination. Next, we'll move to internal reconstruction. Internal reconstruction is also covered in this chapter only. So internal reconstruction will be asked for 7 marks. Mandatory question. Plus business combination, 114 mark. Plus 8C ka question they are asking from business combination. So 4 mark. Plus 2 MCQs, which means 4 marks. So all these marks are from business combination only. So you have to understand how much importance it is. 14, 4, 18, 4, 22, 7, 29 marks are coming from business combination only. You have to understand the importance of this chapter. You should never skip business combination. Trust me, after listening to business combination, you will at least score 15 plus. Worst case, I am saying you will easily score 15 plus. Even if you don't want those 15 plus also, still you can able to score. Okay, so with the level of formats and all which we will be discussing in detail, it will fetch you definitely 15 plus marks. Okay, other than this business combination, next concept will be consolidation financial statements, another super set of important chapter. From this consolidation itself, we are having 114 marker and 2 MCQs. Sorry, 2 MCQs means 14 marks. So total 18 marks minimum will be coming from consolidation. Understand the level of importance from these chapters. If you are a clever student, even if you focus these 2 chapters, you will get 50 plus. But other type of students, they will take these 2 chapters as choice. Still they can get 50 marks. Okay, see, total is for 100. If you choose only these 2, you will get 50. If you choose others also, ignoring these 2, you will still get 50. But since we want 90 plus, we have to cover this business combination, we have to cover this consolidated financial statements, and we have to cover also other chapters also. Because these chapters are also very simple. Recent developments, easy 14 marks, 7. Government accounting, another 10 marks, completely theory. So again, 24 marks. Like this, we have to plan. Okay? After completion of EVO batch, you have to decide which chapters may you are having the maximum grip, so that we have to plan accordingly to get 90 plus. Okay? So that's it. We'll be ending the session today. I'll be updating the next class ka timing in the group. Okay, so that's it, guys. But please practice whatever the question which I have asked you to do, and also practice the 5th question also, by the way. Okay, so that's it for today. We'll continue in next class. Rubel. Yep. Done. So Morning, we have already started with impairment of assets related standard, which is basically in days 36. And we have solved one very good question. Okay? Yes, sir. We have solved one very good question also. And then if you observe this in days 36 impairment of assets, okay, let us quickly understand. Sir, first we have to do impairment of an individual asset. Individual asset ka impairment though we will be doing, it is said that an individual asset will be impaired if carrying amount is greater than recoverable amount. If in your books you are carrying the asset more than its recoverable amount, then the standard is showing no, you have to bring the carrying amount to its recoverable amount. Sir, what is the difference which is there? That difference is there, na? The difference will be called as impairment loss. Okay, sir? Yes, sir. So the difference between carrying amount and recoverable amount is called as impairment loss. Yes, sir. Sir, what is the journal entry which I will be passing at the time of impairment? It is very simple. Asset ka balance have to be decreased. Therefore, you will be crediting the asset and the debit will be given to impairment loss. Okay, sir? Yes, sir. Sir, now what will happen is, whatever the impairment loss which is there, na, generally speaking, that impairment loss should be transferred to P&L account. But please check one thing that, sir, if this asset have any balance which is relating to revaluation reserve, which is created earlier because of the upward revaluation, we have to check. If there is any such balance, then what you have to do is we have to adjust this impairment loss against that balance. Sir, if that balance is not there, or in normal case also, we have to give the first preference to this P&L account only. Okay, sir? Yes, sir. Next, what they will be saying is, sir, depreciation will be charged on revised carrying amount arrived after deducting the impairment loss. From next year onwards, what we will be doing is we will be charging depreciation after deducting this impairment loss. Okay, sir? Yes, sir. Now, this part though not that much important from exam perspective, but fine. What it is basically saying is, sir, impairment though we will not be doing all in impairment we will not be doing in all the cases. There are some conditions which they will be checking. Sir, of course, three assets are there. For these three assets, what you have to do is you have to check for amortization. Sorry, you have to check for impairment annually. You have to check. Sir, what are the three assets? First one, this is important. Goodwill acquired in business combination is an important example. So this intangible asset not yet available for use with indefinite useful life. So you can even ignore these items also. Fine, it will still work. From exam perspective, this is the most important. If any goodwill acquired in business combination, this related discussion we are having, we will be doing very detailedly when we discuss business combination ka chapter. Okay, sir? Yes, sir. So for these three assets, what they are trying to say is, sir, for these three assets, you have to check for annual impairment. Sir, what about other assets? Other assets, so you have to check for impairment testing only when there are indicators of impairment. Only when there are indicators of impairment. Sir, what is the meaning of indicators of impairment? Then you have to check. These indicators can be sometimes internal, sometimes external. Sir, if you observe external indicators, sir, for example, sir, one product is there because of which we are having a good market share, but suddenly what have happened is significant changes, that significant decline in market value have happened, because of which my asset ka value will be impaired. Sir, suddenly there is a new substitute which have emerged in the market, because of which the demand for my product got greatly reduced. In this case, I have to check for this impairment, whether it is there or not. Yes, sir. Sir, adverse changes in technology or market also you have to check, sir. If there are any adverse changes, then also we have to be a little bit careful and we have to check for whether if there is any impairment is there or not. Sir, some factors though, even internal factors can also be there. So the first one though, higher operating costs. If the costs are very higher, or if the asset is generating significantly lower cash flows, or if any physical damage have been occurred, even in these cases also, the standard is saying we have to check if there is any impairment or not. Okay, sir? Yes, sir. Next, we have understood how to calculate this recoverable amount. Sir, how will we getting this recoverable amount? The concept simple. You have to take fair value less cost to disposal, or value in use, whichever is higher you have to take. Yes, sir. We understood how we will be getting this FVL CTD and how we will be getting this value in use. Both we have understood, sir. Fine, sir. Next, CGU का concept also we have understood. Sir, sometimes it is not possible for the asset to generate independent cash flows in all the times. Therefore, what the standard is saying is, it's okay. You can combine with any other asset. So till the time you are able to generate the independent cash flows, till then what you have to do is, you have to add your assets to the single unit. And that unit is exactly called as cash generating unit. And that unit is called as cash generating unit. Okay, sir? Yes, sir. What they are saying is another important thing, sir. Goodwill and corporate assets. Goodwill and corporate assets cannot be tested for impairment individually because they cannot generate independent cash flows. Okay, sir? Yes, sir. But since they indirectly contribute other assets in generating the cash flows, what we'll be doing is we will be checking the impairment of goodwill or corporate assets in CGU only, not individually. I have explained you the logic also that it should not be done. Okay, sir? Yes, sir. Guys, quickly come to this part. Impairment loss recognition for CGU. This we have already understood without even looking at the concept. We have already understood how we have to do the impairment loss calculation for the CGU with the help of one problem. Okay? Yes, sir. So what they are saying is you have to compare the carrying amount of the CGU with the recoverable amount of the CGU. Fine, sir. So here what they are saying is whatever the assets which are there, all those assets we have to take. Then you will be getting the carrying amount of the CGU. Okay? Yes, sir. First, calculation of impairment loss we have to do, sir. Carrying amount of CGU minus recoverable amount of CGU will become the impairment loss. Fine, sir. Fine, sir. We have understood the things. So check this part. Sir, this goodwill, this impairment loss should be allocated to assets in the following manner. First, the preference you have to give to the goodwill. First preference you have to give to which items are goodwill. So you have to check in your CGU if goodwill is there. First, you have to completely eliminate the goodwill. Okay? Yes, sir. Second, if any individual asset is impaired already, impairment loss calculated on that asset should be adjusted. Third part to, sir, balance impairment loss will be allocated to other assets, including the corporate assets in the ratio of their carrying amounts. One question is there, then let us understand the exact calculation of this. Yes, sir. But listen one item. You have to listen one thing, guys. Starting itself, I have understood that Ind AS 36 will be applicable to all assets except inventories, which means now you have to understand inventories are clearly out of the scope of Ind AS 36. Ind AS 2, that is inventories, are clearly out of the scope of Ind AS 36. So here what they are trying to say is, sir, in your CGU, if any asset is there with inventory name, then remember for that impairment loss will not be adjusted. Okay? Yes, sir. We'll have one problem, then you will exactly understood what I'm trying to say. Check this part, guys. Little bit important. This also we have already solved with the help of an example, but we don't know the theoretical part. Now let us understand the theoretical part. Sir, goodwill and corporate assets are allocated to multiple CGUs on the basis of ratio given in the question. If in the question, if they have given any specific kind of a ratio, what we have to do is, sir, we have to give the first preference to that ratio only. Sir, if nothing is given, or if the question has asked you to allocate on pro rata basis, sir, then what we have to do is we have to check the carrying amount of other assets in the CGU multiplied by useful life of the CGU. Guys, please give me a heads up that have you remembered this point or not? Have we did this calculation or not? You have to tell me. I'm waiting for your response. In morning class, in the problem what we have discussed, you have to confirm me, sir, whether we have allocated corporate asset X. If I am not wrong, this X though we have allocated to CGUs based on the ratios of carrying amount multiplied by useful life. Very good. Thank you all for confirming, which means you guys are totally understanding what we are exactly discussing in the question. Like this, if you continue till the end of the EVO batch, trust me guys, getting 60 plus, 60 to 70 plus is just a cakewalk. Okay, no need to worry at all. Fine, sir, sometimes if there is any unallocable goodwill or corporate asset, if there is any unallocable goodwill or corporate assets. Sir, what they are saying, Are Baba, if you remember, in our question, we have two assets, X and Y. Sir, X is an allocable asset and Y is not an allocable asset. Sir, with respect to this Y, what we have did, we have tested for impairment when the entire unit is tested for impairment. Please confirm, have you remembered the treatment of Y in the question or not? Have you remembered the treatment of Y or not? For individual CGUs, though, Y will not be tested for impairment, but while checking the impairment of the entity as a whole, which means last case may we have checked this ABC Limited. Understanding or not? Yes, sir. Last case may we have checked this ABC Limited. This ABC Limited ka impairment, while testing, I have included the carrying amount of any unallocable goodwill or corporate asset. Okay? Yes, sir. Thank you so much for confirming. So there is another concept which is called as reversal of impairment loss. Reversal of impairment loss, though I will be coming at the end, but now what we'll be doing is quickly open the question bank. We'll be solving another beautiful question so that we will be exactly understanding the concept. Sir, quickly come to question number 12. Quickly come to question number 12. Let us quickly read the question. Okay? Yes, sir. So quickly read the question, guys. We'll be understanding slowly. Sir, first one go. Elia Limited is a manufacturing blah blah blah. They have given the story. Now let us only focus on whatever the relevant thing which is there in the question. Later you can read the question when you have the time. Okay, so first I will be focusing only on the key data from the question. So first one, check this, guys. Machinery A can be individually having an output and also sold independently in the open market. Machinery B cannot be sold in isolation, and without clubbing with machine A, it cannot produce output as well. Guys, now you have to tell me, now you have to understand and tell me, sir, is it possible to estimate, is it possible to calculate the recoverable amount from the machine A or not? You have to tell me. Okay, you do one thing. In the chat box, you have to type me, sir, for machinery A, is it possible? And for machinery B, is it possible? Both you have to identify and tell me. Is it possible to estimate the recoverable amount for machinery A also and for machinery B also? Please identify and tell me in the chat box. Or is it possible only for one machine? That also you have to type in the chat box and send me. Okay, just by reading these two questions, just by reading these two lines, we have to tell me whether is it possible for us to estimate the recoverable amount for the machine A and for machine B. You have to tell me. Brilliant. Brilliant. I got the correct answer. Sir, for A though it is possible, but for B though it is not possible. Excellent. Excellent. Everyone is giving the correct answer. So now try to understand the intention of the question. Since machinery A though it is possible for us, to generate the future cash flows independently, machine A will be tested for impairment separately. But for machine B, it is not possible. Machine B have to definitely club with machine A. Oh, which means while testing machinery B ka impairment, we have to do in the CGU. We have to do with the CGU, which consists of again machinery A in that CGU. So you will understand the question, guys. No need to worry at all. Okay, sir. They are saying the company considers this group of assets as a cash generating unit. Sir, what they are trying to say is, sir, in the cash generating unit, in the CGU, we are having machine A, machine B also there, and they are saying, sir, goodwill is also there and inventory is also there. Okay. So, sir, goodwill is also there. Inventory is also there. Okay, sir. Quickly come to the question. Sir, machinery A was purchased on 1st April 20x3 for 10 lakh. Residual value is 50,000. So check this. Machinery A was purchased on 1st April 20x3 for 10 lakh rupees. And they are saying, sir, residual value is 50,000. Down they have given useful life of both the machine A and machine B is 10 years. Both machine A and machine B is 10 years. Sir, if you check, they are asking you to calculate the impairment loss as on 31st March 20x8. On which date they are asking, sir? They are asking as on 31st March 20x8. Are Baba, based on the information. Sir, they have given the cost of the asset also, residual value of the asset also they have given, and useful life also they have given. Sir, can you please tell me, the carrying amount of the asset as on 31st March 20x8? In the same manner, if you observe the BCA cost also, sir, BCA cost is 5 lakh rupees. There is no residual value. Useful life is 10 years. Useful life is 10 years. Sir, here they have nicely calculated the question. So let us quickly check the solution page. Okay, quickly come to the solution, then you will be exactly understanding. Sir, impairment loss and carrying amount of the each asset they have calculated. Sir, cost of machine A to 10 lakh rupees. Residual value to 50,000. Useful life to 10 years. Sir, as on 31st March 20x8, if you observe, 5 years are already completed. So, sir, yearly depreciation to 95,000. So, total depreciation, if you calculate, can you please multiply 5 into 95,000? Can you please multiply 5 into 95,000? Then you have to tell me, sir, is the answer correct or not? 95,000 into 5, if I do, I will be getting 4,75,000. Sir, this is my depreciation and the cost of the asset is 10 lakh rupees. Sir, can you tell me the written down value of the asset? The written down value of the asset is nothing but 5,25,000. This is nothing but carrying amount of the machine A. Fine, sir. Machine B, though, if you observe, there is no residual value. Useful life is 10 years. Sir, machine B is purchased on 31st March 20, where it is 1020x5. Sir, 20x8, matlab 3 years are completed. Yes, sir. So 3 years are completed. Sir, 5 lakh is the cost. If I calculate the depreciation will be 1,50,000. Depreciation will be, 1 second. Depreciation will be 1,50,000. Cost will be 5 lakh rupees. So the depreciation, carrying amount will be 3,50,000. Please confirm whether you have understood the carrying amount of this or not. 3,50,000 is the carrying amount of machinery B, and sir, 5,25,000 is the carrying amount of the machinery A. Okay? Yes, sir. So what we'll be doing is, let me write those amounts here. Sir, machinery A ka carrying amount is 5,25,000. Machinery B ka carrying amount is 3,75,000, if I'm not wrong. Sorry, 3,50,000. 3,50,000. Okay, sir? Yes, sir. Now, if you read the questions, sir, they are also saying, and see, read this item, then you will understand. Sir, the company considers these group of assets as a cash generating unit, and they are saying inventory amounting to 2 lakh rupees and goodwill amounting to 1.5 lakh is also included in the CGU. Sir, now what they are trying to say is, sir, let me include goodwill ka value also. Let me include goodwill ka value also and inventory ka value also. Sir, how much goodwill is there? Goodwill ka value is 1,50,000. Inventory ka value to 2 lakh rupees. Sir, these are the items which are given in the CGU. These are items which are given in the CGU. Guys, now try to understand the question. This is the most toughest question if they want to ask. Other than this, they cannot ask. Okay? Yes, sir. Sir, you have already confirmed that for machine A, individual impairment also have to be tested because it is possible for machinery A to generate the cash flows independently. Are Baba, so now what you have to do is, sir, I have to calculate the recoverable amount of machine A. Recoverable amount of machine A, you have to calculate, sir. How I will be calculating the recoverable amount of the machine A? Quickly read the question. They have given the cash flows. The company expects the following cash flows in the next 5 years pertaining to machinery A. So they have clearly given the cash flows from machinery A, sir, and in the last year, though they are saying 1 lakh rupees excluding the residual value. Sir, what is the residual value for machinery A? Sir, they have given 50,000. So while including the cash flow for the last year, I have to even add the 50,000 also. Okay? Yes. So 1 lakh 50, 1 lakh, 1 lakh, 1 lakh 50, 1 lakh, and last year ka residual value also I have to include while calculating value in use. Guys, check the calculation. Whatever the present value factor, see, they have given in the question, sir, 10% is the cost of capital or incremental borrowing rate. So you have to use this 10% as the discounting rate. So now what you have to do is quickly check these calculations, or whether the present value interest factor is correct and whether the present value, is it calculated correctly or not? Please confirm. Is this 4,89,650 correct or not? I will be giving just 1 minute time. So please confirm and let me know. Guys, value in use is very, very simple. Na? Value in use is nothing but present value of the future cash flows. You just have to calculate. Okay? So please confirm and tell me whether this calculation of present value, is it correct or not? I'm waiting for your answer. I will be giving just 30 seconds. So you have to really confirm me fastly. I think you guys have know that how to calculate this present value interest factor. So I am not explaining. Okay? Yes. I got already confirmation from Srevanti saying that it is the correct value, but I want confirmation at least from 10 members. Then only we'll be proceeding further. So fastly you have to do, super fast. Okay. So I'm receiving the answers. Present value calculation, guys, you have to be very quick because CFR is going to be the lengthiest paper. You have to be quick in your calculations. Conceptually, though, they may not ask that much tough questions. Okay, you have to be a little bit conceptually, you have to be a little bit faster in your calculations. Then the CFR is going to be very, 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 very easier. Okay, sir. Sir, while calculating recoverable amount, value in use, though I have calculated. Second part is I have to calculate something which is called as FVLCTD. Sir, what is the meaning of FVLCTD? Fair value less cost to disposal. So quickly check the question whether they have given anything with respect to the fair value less cost to disposal or not. Try to understand. Sir, on 31st March 20x8, they are saying the professional valuers estimated that the current market value of machinery A is how much? 7 lakh rupees. Sir, if I sell the asset, I would be getting 7 lakh rupees is what they are trying to say. The valuation fee though they have given how much, sir? Valuation fee is 1 lakh rupees they have given. There is a need to dismantle the machinery before delivering it to the buyer. The delivery fee, the dismantling cost is also 1.5 lakh, and they are saying specialized package also they have given would be 25,000 and legal fees would be 75,000. So they have given so many costs. See, this is the fair value, and whatever the other items, valuation fee is also an expense. Dismantling cost is also an expense. Specialized packing cost is also an expense, and legal cost is also an expenditure. So use your brains and tell me till here, from here, sorry, from here till here, they have given the list of expenses. So can you please tell me quickly within 30 seconds, what is the value of FVLCTD? Only 30 seconds. FVLCTD का value I want. ठीक है? I know that you will be calculating fastly because I know your capability. Please confirm once again, Bharat. I think it is wrong. Is it 3,50,000? No, I don't guess it is 3,50,000. So quickly check that. Are you calculating wrong or what? 1 second. There is a need to dismantle before it is delivered to the bed. The dismantling cost is 1.5 lakh. 1 second, guys. I think there's little mismatch printing mistake is there or what? Okay. Yes. So now check the things. So they are saying there is a the valuation fee is how much, sir? Valuation fee is 1 lakh rupees. There is a need to dismantle the machinery before delivering it to the buyer. This is also a cost, sir. How much it is? 1.5 lakh. So you just have to do 7 lakh minus 1 lakh minus this 1.5 lakh also you have to do. Sir, from this specialized packing cost would be 25,000 and the legal fees would be 75,000, which means minus 1 lakh if you do, you will be getting 3,50,000. You will be getting, 1 second guys, 2,50,000. 3,50,000 will be the residual value. But here I think they have calculated it wrongly. Dismantling cost they have taken, packing cost they have taken, legal value also they have taken. But what about this valuation fee? I think they have forgotten this. Okay, valuation fee also have to be taken. Valuation fee also have to be taken. Fine. So now check the thing. It will become 3,50,000, but it is totally fine because, sir, whichever is higher will be only our, what should I say, recoverable amount. So quickly tell me, this is the value in use, this is the FELCTD. Sir, what is higher? Whichever is higher will be obviously 4,89,650. 4,89,650 is the higher ka value. So, sir, it will become my recoverable amount. It will become my recoverable amount. 1 second, what exactly they have given this valuation ka cost? Acha, 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 correct only. Yeah, that is correct point only. So, see, guys, here the professional valuers are saying it is estimated at the current. Okay, I have missed this point. Very good observation, Suchitra. I think yes, since it is specifically related to the valuation, what they have did is, since it is specifically related to the valuation, we have to only deduct the cost which are related to the disposal. Okay, this valuation जो है ना, this valuation is not related to disposal, so that is the reason I have missed this point. So this dismantling cost, whatever the cost which you have to dispose the asset, this I have to add. This specialized packing cost also will be added, and legal fees also will be added. Okay, yes sir, this valuation fee should not be included. So whatever they have calculated is correct only, so excuse me for that point. So this is fine. 4,50,000 is the correct thing only. So whichever is higher still will become 4,89,650 only. Okay, yes sir. Now try to understand, sir. Here I have written carrying amount of the machine A is how much, sir? 5,25,000. But recoverable amount of how much they have given, sir? Recoverable amount of 489,650 only they have given. Recoverable amount of 489,650 only they have taken, sir. So if you write recoverable amount 489,650 here, sir, machine A ka carrying amount of 5,25,000, whereas recoverable amount of 4,89,650. Quickly tell me, sir, is there any chance of impairment loss? If yes, can you please tell me what is the impairment loss? What is the impairment loss of this machinery? Excuse me, guys. What is the impairment loss for the machinery? Quickly calculate and tell me. 35,350. I am getting answered only from first person. What about other persons? I want response from all of you. So most of the students are saying, sir, impairment loss जो है ना, ये तो 35,350 तो है. I think it is correct. It is correct. Fine, sir. Now, what we have to check is, sir, see guys, where it is. Yes, sir. So here it is the thing. Impairment loss is 35,350. Understood, sir. We have totally understood what you are trying to say. Now what have happened is, other than this, if you observe, sir, where it is, they have given the recoverable amount of the CGU is 11 lakhs rupees. Sorry, not this, I think. Huh. Recoverable amount of the CGU is 31 is 10 lakh as on 31st March 20x8. Sir, as on 31st March 20x8, though, what is the recoverable value of CGU, sir? The recoverable value of the CGU is only 10 lakh rupees. Is only how much, sir? It is only 10 lakh rupees. Okay, sir. Yes, sir. We have understood. Are Baba. Just okay. Here, if you read the question only, sir, we have already understood that these are the items which are there in the what should I say CGU. So here let me write all the carrying values before impairment loss. Sir, machinery A to 5,25,000. Here I have written B to 350, goodwill to 150, inventory to 2 lakh. So same values I have copied. Here it is total. Here it is total. But if you check the recoverable amount of the CGU, sir, what is the recoverable amount of the CGU, sir? Recoverable amount of the CGU is 10 lakh rupees. Sir, but the carrying amount of the all assets put together, if you add, you will be getting 12 lakh 25,000. Sir, see, recoverable amount, where they have given, okay, recoverable amount is 10 lakh rupees only, Baba. Recoverable amount is 10 lakh rupees only. Now, if you calculate the impairment loss, sir, the carrying amount of all the assets are 12 lakh 25,000 and recoverable amount is 10 lakh rupees. Sir, what is the impairment loss? Impairment loss is nothing but 2 lakh 25,000. Impairment loss is nothing but 2 lakh 25,000. Okay, sir. Now try to understand what I am doing. Sir, whatever the impairment loss which you have got now, you have to allocate that to other assets in the CGU. You have to allocate this impairment loss to other assets in the CGU is what the standard is trying to say. Sir, that point also we have written, if your CGU contains goodwill, first you have to completely utilize that goodwill. So out of this 2,25,000, first I have to utilize 1,50,000 for goodwill only. Next, I have to check, sir, is there any asset which is out of the scope of Ind AS 36? We have to check. Sir, unfortunately, here inventory is there. So inventory, though, you will not be giving any impairment loss because inventory will be valued as per Ind AS 2. At that, if you remember, inventories have to be valued at cost or NRV. NRV, whichever is lower, they will be saying, sir, NRV is also nothing but one type of a fair value calculation only now. So don't allocate further impairment loss to the goodwill, sorry, to the inventory. Now, whatever the other assets which are there, please check. Sir, machinery A is also there, machinery B is also there. Sir, but machinery A, though, if you observe, I have already tested that for impairment. I have already tested that for impairment and 35,350 should be charged to machinery A. So out of this 2,25,000, 1,50,000 will be charged for goodwill. 35,350 will be charged for machinery A because it is already tested for impairment individually. Guys, can you please calculate the balancing figure? This out of this 2,25,000, 150 to goodwill के लिए and 35,350 to machinery A. Can you please calculate and tell me whatever the balancing figure which is there? Please confirm and tell me whatever the balancing figure which is there. Is it 39,650 or not? Please confirm. Brilliant. 39,650 is exactly correct. So have you understood the allocation of impairment loss or not? Always remember one thing. Always remember one thing, sir. First, we have to allocate that to the goodwill completely. Once goodwill is completed, then we have to check other assets. Sir, if any asset is out of the scope of Ind AS 36, for that also I cannot allocate the goodwill. Then we have to check one thing, sir. If any asset is impaired already, whatever the impairment loss which is there for that asset, you have to charge that. And other balancing figure though will be charged for balance assets is what you have to understand. Sir, here carrying amount after impairment loss. Sir, what is the carrying value after the impairment loss? Simple. This is the carrying amount before impairment. If you charge this much impairment, it will be the carrying amount of asset A. Asset B though, difference. Same you have to calculate. As inventory though, there is no change. So 2 lakh will remain 2 lakh only. Sir, goodwill 150 is there. Completely it is eliminated. So my revised cost of goodwill will be 0. If you take the total 10 lakh, you will be getting. I hope you are understanding the point. Okay, sir. Yes, sir. Very, 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 very important. So have you understood the goodwill? Have you understood the impairment loss allocation in the CGU part or not? Please give me a heads up if you have understood. Guys, whatever we have did in the question, everything I have calculated here. Everything I have written here. This should be allocated to other assets. First, against goodwill, if individual asset is impaired already, impairment loss calculated on that asset should be eliminated. Balance impairment loss should be allocated to other assets, including the corporate assets in the ratio of their carrying amounts. Okay, sir? Yes, sir. We have understood what you are trying to say. Yes, I am getting responses. So fine. So if you read the question further, 1 second. If you read the question further, check this part also. Compute the prospective depreciation for the year 20x8 and 20x9 for the above assets. Sir, now my revised carrying amounts are these amounts. Based on these amounts, you have to charge the depreciation for the next year, that is 20x8, x9. Sir, machinery A ka value to how much, sir? 4,89,650 minus 50,000 is the residual value. Balance useful life is 5 years. If you calculate, you will get 4,01,720. Just to calculate the machinery B ka value, sir, 3,10,350. We have purchased it 3 years ago. Therefore, the balance useful life is how much, sir? The balance useful life is 7 years. 1 second. The balance, what have happened? The balance useful life is 7 years. So my machinery B ka value is how much, sir? 266,014. So please confirm and check. Have you understood this portion or not? What have happened? So this is the carrying amount of the asset. Okay? Yes, sir. We have understood till here. Guys, we are moving towards end of the standard. I hope this point is pretty clear to you. Whatever the carrying amount is there, now this will become your carrying amount. So next time onwards, while charging depreciation, you have to take this as the base. Fine, sir. We have exactly understood what you are trying to say. Now, Baba, one last concept is there. What I am expecting is if our institute wants to ask this question, they will stop till here. They will stop till here is what I'm expecting, because for 7 marks, this itself is more than sufficient. For 7 marks, this itself is more than sufficient is what I am trying to say. But sir, unfortunately, if they have given this also, every student will be terrified, because no student will ever try to check this concept, which is called as reversal of impairment loss. Which is called as reversal of impairment loss. Guys, I am also saying I am not expecting that our institute is going to ask till here. Okay, even asking till here also is very, very advanced question. Okay, but unfortunately, if they have asked, let us try to understand the concept of reversal of impairment loss. Guys, very, very simple. Sir, see, normally impairment loss will be recognized when your recoverable amount is less than carrying amount. But if opposite happens, if recoverable amount is more than carrying amount, then also you have to do whatever the impairment loss which you have booked earlier, that should be reversed. Generally, it will be done in P&L account only. But earlier though, if you have debited revaluation surplus instead of P&L account, now what you have to do is you have to reversal will first recognize in OCI up to the extent of impairment loss recovered earlier. Balance जो है ना, balance will be recognized in P&L account. Exact opposite what I have said earlier. That thing you have to follow. Okay? Yes, sir. Now try to understand. Sir, this reversal of impairment of loss will be done to CGU also. Guys, again I am saying this though 95% our institute will not touch this concept. But just to be on a safer side, I am discussing this concept. Hope you are understood. Even if you don't understand this completely, it is still totally fine, because I am saying 95% institute will never test on this. But still, just to be on a safer side, I am explaining this part. Sir, whatever the reversal of impairment loss which you have explained for individual asset, the same concept we have to apply even for CGU also. Sir, here how I have to do, sir? Same concept, guys. Recoverable amount, if it is more than carrying amount, then you have to reverse the impairment loss. While charging impairment loss, you have charged for all assets in the pro rata basis. This reversal also should be done on the same manner, that is pro rata basis. But remember one thing, while doing this reversal, goodwill cannot be reversed. Which means goodwill though you can never add back. Goodwill can never be added back. This is what you have to understand. Once impairment is charged to goodwill, later reversal of impairment for the goodwill is not allowed by the standard. This is the only part you have to understand. Okay, but one item you have to remember. Sir, after reversal, carrying amount of such asset should not exceed. This is the thing which you have to remember. Recoverable amount or carrying amount, if there is no impairment, whichever is lower, maximum our amount should be this much only. Maximum carrying amount of the asset is how much, sir? Recoverable amount or carrying amount, if there is no impairment, whichever is lower, that will be the maximum carrying amount. Okay, sir, let us understand what the question is trying to say. Compute the carrying value of CGU as on 31st March 20, X9 is what they are saying. Sir, in X9 what have happened, try to understand. Sir, CGU ka value to 11 lakh rupees, it have increased to 11 lakh rupees CGU ka value. The recoverable amount of the machine A is 4 lakh 50,000. A ka value is 4 lakh 50,000, and the combined machine A and B put together is 7 lakh 60,000. Now try to check the question. Sir, what are the carrying amounts after charging the depreciation? Guys, these are the carrying amounts after charging the depreciation for 20x8. Now check the thing, guys. Now check the thing, sir. Here what I have written is, sir, what will be my carrying amount? What will be my carrying amount if there is no impairment? What will be my carrying amount if there is no impairment? Sir, how you will get this amount, sir? Very, very simple. See, if there is no impairment, my carrying amount is how much, sir? 5,25,000. From this 5,25,000, if I charge 1 year ka depreciation, which means, sir, my value will be 4,30,000. Sir, have you got this 4,30,000? Try to understand, sir. See, 5,25,000 minus scrap value is 50,000 divided by 5 years you have to do. That is my balance useful life. Sir, I will get 95,000 as the depreciation. Just deduct the depreciation, then you will be getting 4,30,000. This is the balancing figure, which because they have given this 7,60,000 for machine A and B. And for machine A, they have given this 4,50,000. So if you find out the difference, then you will get for recoverable amount of machinery B. So that is the balancing figure, guys. So just give me a heads up if you have understood this. If yes, we will move forward. I'm getting responses. So if it is fine, If it is fine, we'll be moving with, I guess the questions are fine till here. Okay, guys, let's do another exam question in this standard. You just have to tell me, sir, whether we are able to do this question or not. Okay? This question, though, there is little bit interlinking between intangible asset and impairment. Sir, what is the intangible asset ka standard? 38 plus 36. This question is an interlinking between Index 38 and Index 36. Okay, sir? Yes, sir. So slowly let us understand the question. First of all, I think there is some mismatch which is there in the question. I think they have not given the information in the question. So what I will be doing is, let me just open the June 2024 question paper. 1 second, guys. June 2024. June 2024 का question paper. Just let me open that, guys. I already have that paper. This one, if you check. So come on, sir. This one. So check this question. Sir, they are saying, quickly read this question, guys, because it's an exam question. So let us try to understand with whatever the concepts which we have learned in the standard. Sir, are we able to solve the questions or not? Let us try to analyze. So first one. Y Limited is developing a new distribution system of its material. Following are the costs which are incurred at different stages of R&D. Guys, by seeing this, you have to understand, you have to remember the research and development part. Research will be always charged as revenue, and the development expense is there. Now, sir, till the technical feasibility got established, that will be treating as development expenditure, will be treated as revenue. And once the technical feasibility got established, further expenditure will be recognized as an intangible asset. Are you identifying this or not? Till the, what should I say, till the technical feasibility got established, we have to wait, we have to cap it, we have to charge the same to revenue. But once the technical feasibility got established, we have to charge that, we have to recognize that as an intangible asset. Are Baba, if you remember those 5 conditions I said, na, sir, management have, what should I say, technical feasibility to complete the asset, management have intention to complete the asset, management have resources to complete the asset, future economic benefits are certain, and the cost should be measured reliably. And if you observe in days 38, may have discussed 5 conditions, correct? So once those 5 conditions are satisfied, then only I will be recognizing that intangible asset. I hope this point is clear to you. Sir, but they have given 29-20 May research expense to 16. Are Baba, they have given straight away research, so you have already know that this amount will be charged to P&L account. 2021 maybe research 20 will be charged to P&L account. Now 21-22, hold on, they have given specifically it as a development. Sir, okay, let us read the question further. On 31st March 2024, they are saying the company identified the level of cost savings at 32 crore per annum expected to be achieved by the new system over a period of 5 years. Sir, why they have given this level of cost savings to Hena? It is nothing but future economic benefits. It is nothing but future cash flows of the entity. Sir, why they have given? Because they want you to calculate the impairment. Based on this future ka cash flow, sir, what I will be getting is you will be getting the recoverable amount. You will be getting the recoverable amount, sir, which means I will be calculating value in use. Along with that, they are saying the system developed can be marketed by consultancy, which will earn additional cash flow of 20 crore per annum. Sir, not only 32 crores, what they are saying is you will be getting extra 20 crore per annum over the 5-year period, which means 32 plus 20, which will become 52 crores you are going to save every year for the next 5 years. Sir, they have also given fair value net of cost of disposal, which means, sir, FVLCTD, though they have given as 190 crore. Sir, here what we have to do? Is we just have to calculate the value in use for this item. Are Baba, look at the solution. I think I have already shared this. Huh. If you observe this, let us read the question what they are asking you to answer. Sir, first, if you observe the amount chargeable as expense. Are Baba, quickly tell me by seeing the question, sir, how much amount is chargeable as expenditure? I want answers from you. You will be solving this, no doubt at all. This is an exam question, by the way, which they have been asking for 7 marks. Okay, check the question, quickly check the question and tell me how much expense is charged as expense. Sorry, how much amount is charged as expense? I am getting correct answer from Bharat. Sir, 16 plus 20 jo hai na, I think 36. I think a small mistake. 16 plus 20, which is 36, have to be correct. 36 have to be charged as an expenditure. Okay? Yes, sir. Sir, another thing, the amount to be capitalized as an intangible asset up to 31st March 2024. Are Baba, sir, they are saying on 31st March 20. Okay, I think here they have given. Huh. Y Limited demonstrated it met the asset criteria for asset recognition on 1/4/2021. Sir, they are trying to say that on 1st April 2021, though, those 5 conditions are satisfied. From that date, you have to start capitalizing the asset. Sir, 60 is there, 72 is there, and 80 is also there, which means 60 plus 72 plus 80, if I do, I will be getting 212 crore. Please confirm. Sir, 212 crore is the value of the intangible asset. Please check and confirm whether this is correct or not. 212 lakh, which means these 3 years ka cost will be capitalized and that will be treated as an intangible asset. Brilliant. 212 is the correct answer. 212 is the correct answer. Very good, guys. That is what I have written in the answer here. If you check, I have written the concept. Okay, in order to get 7 marks, I have written as per Ind AS 38. Any amount incurred by the entity towards the research will be recognized as an expenditure, which means it will be debited to P&L account. So amount to be recognized as an expenditure will be 16 in 2019-20, 20 in 2021, which means 36 crore is there. Correct? Yes, sir. Second point, quickly copy. As per Ind AS 38, development expenses of intangibles will be capitalized only when the asset recognition criteria is met. That is, only when the technical feasibility of the intangible is established and it will be capitalized till the asset is ready to use, Baba. So the total 212 crores. Total is 212 crores. Now check the third part, guys. Sir, third part, if you observe, they are asking you to calculate the impairment loss to be recognized for 23-24. Are Baba, if you want impairment loss, you have to calculate recoverable amount. Sir, FELCT though they have given, but what I have to calculate, sir, I have to calculate value in use. Sir, value in use, so they are saying 32 plus 20, which means 52 crore I will get for next 5 years. Sir, next 5 years means, can I say that it is an annuity? Answer is yes. Sir, in the question, they have given the annuity factor. Sir, how much it is? 3.79 will be the annuity factor. So can you, sorry, 3.79, I guess. Yes, sir. So can you calculate and tell me what is the value in use in this case? So 52 into 3.79, if you do 197.08, 197.08 will become your value in use. Please confirm, have you understood this value in use calculation or not? Sir, the question may, they are saying 32 crore will be the savings per annum and additional 20 crore also you are going to get, which means I will be getting a savings of 52 crore per annum. And if I multiply that by 3.79, I will be getting 197.08. Yes, it is correct. It is correct. सर वैल्यू इन यूज तो 197.08 है, लेकिन if you observe FEL CTD, it is 190 crore only. Sir, but recoverable amount will be whichever is higher, obviously. Recoverable amount is nothing but, sir, higher of FEL CTD and the value in use, na, which means 197.08 CR is the recoverable amount. Sir, but my carrying amount, if you check the answer, 212 crore तो कैरिंग अमाउंट ही है, लेकिन रिकवरेबल अमाउंट तो 197.08 crore, therefore impairment loss of 14.92 crore is there. Impairment loss of 14.92 CR is there. ठीक है? Yes sir. So have you understood this concept or not? Please give me a heads up if you have understood till here. 14.92 crore is the impairment loss which I have to charge. If you understood, please give me a heads up. Brilliant. I am getting responses. Still, I want responses. Brilliant. Guys, we have one more point in the question. Sir, they are asking final carrying amount after recognizing the impairment loss. Arey Baba, just check the question. Sir, 212 is the tangible asset ka value. 14.92 to impairment loss. So the balance will be 197.08. So the balance will be how much, sir? 197.08 will be the carrying amount after impairment loss. Guys, try to understand how much easy questions they are asking. How much easy questions they are asking, you just have to understand. So with this, we have completed the most super important standard, which is Ind AS 36. Ind AS 36 is also we have completed. 16 also we have completed, and 38 also we have completed. So the most three comprehensive standards. If you are lucky enough, 2 questions so they will ask only from these 3 chapters. Another question though we have to think. Either Ind AS 115 they will ask, or either Ind AS 116 they will ask, or Ind AS 102 also they can ask. Okay. Yes sir, we have understood what you are trying to say. Now, so what I wanted you guys to do is, this time I am expecting one question that they will be testing on CGU is what I am feeling. So I am expecting this type of question will be asking in your examination. So you have to be definite while solving this question number 6. You have to practice it like next level. Okay, just 5 minutes may you have to complete the answer. There is no complications involved at all. So this question though, please practice nicely. And along with this, whatever the next question which we have discussed, Elia Limited ka question. What is it, sir? Elia Limited or Elia Limited? Elia Limited ka question also we just have to discuss that nicely. You have to practice that nicely, because this is the maximum possible extent which they can ask. Other than this, they will never ask. Okay? Yes, sir. So now what we'll be doing is, guys, the time is 8:30 now. So, okay, we will be starting the new standard basically post the dinner break. But the thing is, where is it? Yes, we will be sharing accounting of financial instruments ka standard. Pakka 7 marks question. Pakka 7 marks question. So my objective is to complete this standard post the dinner itself. It will be done. It will be done provided you have the knowledge of calculating the present values. You have the knowledge of identifying the IRR and all. If you understand these concepts quickly, Aram say entire 7 marks will be completed in the next 2 hours. In the next 2 hours, entire 7 marks is going to get completed. Provided you know the little bit ka time value of money, little bit ka IRR ka calculations, little bit ka effective interest rate ka calculations and all. If you know this, we can complete the chapter today itself. Otherwise also still it is totally fine for me. If you don't know, I will be discussing from the very basics itself. Okay? No need to worry at all. Even if it takes time, I want complete 7 marks to be there in your pocket if any question of this financial instruments comes in the examination. Okay, I am ready to discuss from the very basics itself. But the thing is, if your basics are fine, we can probably complete this chapter in the next 2 hours. Sir, but we are not that much good enough. Don't worry, we will practice. Okay, don't worry, we will practice. Fine, sir. So what we'll be doing is we'll be taking a half an hour dinner break and we'll be meeting at 9 o'clock exact. 9 o'clock sharp. So before 9:05, our session is going to get started. Okay? Ind AS 109. Super important standard according to me. And another thing is, so students who want to practice this impairment, I will be giving a few questions which you have to definitely practice. So if you practice, your concepts will be even more stronger. So what you have to do is, if you want, check this first question. Just to practice this first question, little bit important. So practice this first question. Not important, just you will understand, just you will get a comfort. Check this question, guys. Question number 4. Nice question it is. Question number 4 is also very, very nice question, but this much in-depth thought they will not ask. But just to try to understand the flow of the transactions, the flow of the journal entries and all. If you look at this question number 4, you will exactly understand. Okay? If you have time, please check that. 5 though, anyways, you have to solve. I think in the morning class only I have said. So if you have time, please solve this question number 5. Okay, yes sir, guys, tomorrow you have to definitely solve this. I don't think today you will be having time, but you just have to solve this question number 5. 6, super important because I am expecting a question like this in the examination. Next, if you observe, okay, at least you have to practice these questions. Other than this, whatever the question which they have been given in the exam, you can aram se attempt. Okay. So that's it, guys. So that's it for today's session before dinner break, by the way. So post dinner break, that is exact 9:05 p.m. we will be resuming our financial instruments section. Super important standard. It is going to, you are going to love that standard. Okay, little bit interesting it is. So with this, I want to stop today's session and we will be meeting at 9:05 p.m. Okay. Yes. So, hi guys. Hello, hello. Is the audio and video fine? Please confirm if it is fine. So, yes, hi Renuka. We'll get started. Just let us wait for one more minute. I think most of the students are yet to come. If they comes, probably we can resume the things. Okay, fine, guys. I think some other students are after taking dinner, they are in deep sleep, I guess. So that is the reason why only limited students have joined today's live. But okay, let us make the worth. Okay, since we have joined, let us take the complete benefit out of it. So quickly, let us try to understand the things. Oh, where is it gone? Okay, here it is. So yes, sir. Accounting of financial instruments. Mandatory question according to me, 7 marks. Sometimes they will ask NBFC provisioning norms. So either this question or this question. But maximum, if you compare 4 attempts, out of 4 attempts, 3 attempts though they are mainly asking this financial instruments. And in one attempt, they will ask NBFC provisioning norms. They will ask NBFC provisioning norms. ठीक है sir? Yes sir. So highest priority. So 75% probability out of 3 out of 4 questions though, 3 out of 4 questions though, then the thing is financial instruments only they will be focusing. Okay? So that is the reason we will be learning this financial instruments from the very basics itself. Okay? Yes, sir. So first let us try to understand, sir. Okay, only will be focusing on exam perspective because this Ind AS is very comprehensive standard. Strictly speaking, this financial instruments made 3 standards are there. So first one to Ind AS 109 is there, second one to Ind AS 32 is there, and third one to Ind AS 107 is also there. Forget about these standards. We will be directly jumping into the examination perspective. 109 may they will be focusing on recognition, measurement, and de-recognition of a financial asset. Ind AS 32 may they will be focusing on presentation. Ind AS 107 may they will be focusing on disclosure aspects. Okay? Yes, sir. Let us understand the things. Sir, what is the meaning of financial instruments? What is the meaning of financial instruments? Try to understand. Sir, financial instruments refers to a contract which creates a financial asset for one entity and a financial liability or equity of another entity. Okay, just a moment, guys. We will be understanding the things with the help of an examples. So, just a minute. Just a moment. Just a minute, guys. Okay, yes, sir. Just a little bit disturbance. So fine. Huh. Try to understand this. Okay. Yes, sir. Sir, assume Geo Limited is one entity and Reliance Limited is another entity. Guys, try to understand just whatever I am explaining. It is more than sufficient for you from the examination perspective. Sir, Geo Limited have made an investment in the Reliance Limited pay. It have made an investment in debentures of Reliance Limited. Geo Limited have made an investment in debentures of Reliance Limited. Guys, can you tell me either for Geo Limited or Reliance Limited, you have to tell me out of these two persons, in which person ka books of accounts this investment in debentures of Reliance Limited will become asset, and in which books of accounts, I mean out of these two persons, which person's books of accounts may this debentures of Reliance Limited will become a liability. Just think and tell me in which books, in whose person's books it is an asset, in whose person's books it is a liability. Please respond in the comment section, in the chat box. I already received the responses. Very good. For Geo Limited, it is going to be an asset, and for Reliance Limited, it is going to be a liability. This is the definition of financial instrument. Sir, a contract which creates a financial asset for one entity and for another entity, it should be either a financial liability or it should be an equity. For another entity, it should be either a financial liability or it can be an equity. Sir, what is the meaning of this? Quickly check the thing. Sir, second time pay, Geo Limited have made an investment in equity shares of Reliance Limited. Now, if you observe, for Geo Limited, it is going to be an asset. And for Reliance Limited, this is going to be there in equity share capital. Which means for Geo Limited, it is an asset. And for Reliance Limited, it is an equity. I hope you are understanding the things. Yes, sir. So this is nothing but the definition of the financial instrument. Sir, first though, contract which creates a financial asset for one entity and the financial liability or equity of another entity is called as financial instrument ka definition. Okay? Yes, sir. Now, quickly come to the financial asset ka definition. Sir, first of all, cash is always a financial asset. Second one, investment in equity shares of another entity, that is also a financial asset. If I am making an investment in equity shares of Geo Limited, equity shares of TCS Limited, equity shares of Geo Limited or Reliance Limited or whatever the company is, my investment will be treated as a financial asset. Understand the third point, little bit important. Sir, if I am having a contractual right to receive the cash or other financial asset, that also will become my financial asset. Contractual right to receive the cash or other financial assets. Sir, can you please give me an examples of what you are exactly meaning by contractual right to receive the cash? Arey Baba, assume, sir, my books mein debtor ka value is there. Debtor ka value is 1 lakh rupees. If you observe, sir, what is the meaning of this debtor ka value 1 lakh rupees? Arey Baba, it is very, very simple. That me and the debtor are having a contract. Because of that contract, I am having a right to receive the cash. Assume I have given a loan to X. Both have entered into a contract, and from X, I am having a contractual right to receive the cash. In this case, this loan to X will become my financial asset. I hope you are getting the things. Contractual right to receive the cash or other financial asset. So these three items are called as financial assets. Guys, other definitions are also there, but that is very much complicated and complex, which our institute will never touch only. That's what I have said. This Ind AS 109 is very, very comprehensive standard, but our institute is only testing basic areas. So if you remember the definition of the financial asset, these three items, it is more than sufficient. These items are not there only, first of all. Just remember like this, sir, financial asset money cash, investment in equity shares of another entity, and third one to contractual right to receive the cash or any other financial asset. So these three items you have to remember, only these three items are financial assets. Sir, are you saying that whatever the other four items are there, aren't they financial asset? They are also there, but our institute is not focusing that much. These three are very, very complicated definitions. They will talk about derivatives and non-derivatives things they will do. Okay, so we will be ignoring this since it is not that much important from the examination perspective, and we'll be moving to the next part. I hope you guys have understood what is the definition of the financial asset from the exam perspective. If yes, please give me a heads up quickly so that we will be starting with the next things. Okay, only cash, investment in equity shares, and third one is contractual right to receive the cash or any other financial asset. That's it. These three items, if you remember, more than sufficient from examination perspective. Next comes classification of the financial asset. Sir, what is this? Next comes classification of the financial asset. Very good. I have receiving the responses. Super. Thank you so much. Now, financial assets are classified into three categories. Financial assets are categorized into how many categories, sir? Three categories, Baba. Sir, what is the first category, sir? First category is called as amortized cost method. Second category is called as FVT OCI, and third category is called as FVTPL. Very, very easy. Just make these words familiar to you. Once I explain the concept, these three methods are going to be a cakewalk to you. So first one, amortized cost method. Second one, FVT OCI. Sir, what is the meaning of FVT OCI? FVT OCI is nothing but fair value through other comprehensive income. If you observe the wordings, you will understand. Sir, what is the meaning of FVT OCI? Are Baba, if there is any change in fair value, that change though it will be recorded in OCI ka account. Sir, what is this FVTPL? If there is any change in fair value, that will be recorded in P&L account. Three methods, Baba. First one, ACM, amortized cost method. FVTPL, fair value through P&L. FVT OCI, which is fair value through other comprehensive income. Sir, what is this amortized cost? Are Baba, if you remember, amortization schedule we will be preparing. Every year, though, some sort of interest cost will be recognized. Amortization schedule, year, opening balance, interest cost, installment paid, closing balance. Similar kind of amortization we will be doing for the assets. Very easier thing, Baba. This amortized cost method though will be solving with the help of an examples. Then you will exactly understand. Okay? Yes, sir. Now comes the first part. So first of all, remember these three words: ACM, amortized cost; FVT OCI, fair value through other comprehensive income; FVTPL, which is fair value through P&L account. Okay? Yes, sir. Now, Baba, first one. Always remember the one thing, sir. If you are making any investment in debt instruments, if I am making investment in debentures of a company, that will become my investment in debt instrument. Or, sir, assume I have made an investment in bonds, that will become my debt instrument. Or assume I have given loan to any other person, that will also be covered in this part only. Are Baba, just remember two items. If these two conditions are satisfied, then I have to classify the asset. I have to classify my investment in that instrument as amortized cost method. Sir, how many conditions are? Two conditions. First condition is the reason why you are making this investment is your intention, your objective is to hold the asset till the maturity. Your objective is to hold the asset till the maturity. Sir, why I am holding the asset? Because to collect the contractual cash flows. Sir, if you observe, first condition means my objective is to hold the asset till the maturity to collect the contractual cash flows. Which means my objective is not to sell this investment before the maturity. If your objective is to hold the asset till the maturity, then they are saying the first condition is satisfied. Okay, sir, we have understood. Now comes the second question, Baba. Sir, second question. Sir, what is the meaning of this contractual cash flows? Are Baba, assume I have made investment in debentures. Then what all the amounts which I will be getting? Are Baba, every year though you will be receiving coupon payment, na? Along with the coupon payment, at the end of the maturity or at the end of the redemption period, though, you will be obviously getting the principal payment also. Those are the meaning of contractual cash flows. Those are the meaning of contractual cash flows. I hope you are understanding the things. Second thing what they are trying to say is, sir, those financial assets are there now. Those financial asset may, it is clearly defined that on these specific dates, you are getting specific cash flows. What they are saying is, sir, terms of the financial asset will give you fixed amount of cash flows at specified dates. Second alone, please repeat, sir. What second alone? I didn't get you. Okay, you will understand. I will repeat that. No need to worry. Sir, financial asset जो है ना, financial asset say I will be receiving fixed amount of cash flows at specified date, which consists of only principal and interest. Only I will tell. Don't worry. I have not completed the word. I have not completed these words. I will come to these words a little bit later. Now try to just understand these points. Second point is, sir, that financial asset is only giving me principal and interest. That's it. If you are getting only these two items, and first condition, if your objective is to hold the asset till the maturity to collect the contractual cash flows, oh, both the conditions are satisfied. And if both the conditions are satisfied, then you have to classify your asset as amortized cost method. They have given names to these items also. Sir, what is the first one? Business model test. Second one, contractual cash flow characteristic test. If both the tests are passed, they will be saying that amortized cost method will be applicable for you. Guys, very basics are discussion is going on. Sir, first one, while making the investment itself, if my objective is to hold the asset till the maturity, my first condition, business model test is passed. Sir, my financial asset is only giving me principal and interest. That's it. In this case, though, second test, which is contractual cash flow characteristic test, is also satisfied. If both these tests are satisfied, I will be following amortized cost method. Have you understood this point or not? Please let me know. If you understood, please give me a heads up. Then we'll be immediately moving with the second part, which is called as FVT OCI. Okay? Only you have to receive principal and interest, and only you have to hold the asset till the maturity. Brilliant. I'm receiving responses. Fine. You are understood? Yes. That's it. I think others are sleeping, I guess. Okay. Yes, sir. Now let us check this. Sir, first one though we have understood. Now what about second one, sir? Second one though FVT OCI. Correct? FVT OCI may again, sir, same two conditions. Second condition is exactly same as above. Second condition, okay. Banu Teja and Sujita are typing yes for now. So are you typing S for the question which I have asked? Are you sleeping? Or you have typed S for the question which I have asked as whether you have understood or not? Okay, fine. Option 2 to FVT OCI. FVT OCI says same two conditions are there. Second condition to exactly same as above. Sir, exactly same as above means simple. It means full form of FVT OCI, fair value through other comprehensive income. This I have already explained in the last class, and I have also asked you to watch 10, what should I say, 10 classes ka video may I have discussed about this FVT OCI. Very important. So you have to check that part. Otherwise, you will not understand. Okay, so my suggestion is check those FVT OCI ka discussion. Fair value through other comprehensive income. Yesterday also I have explained that. You have to check that. Now, sir, second model though exactly same. But first business model test means my objective is to collect the contractual cash flows without holding till maturity. Without holding till maturity, as and when the price changes, I will sell the investment. Sir, at the time of purchase, assume the value of the each debenture is 100 rupees. But assume 2 years are completed. The price of the debenture is 110 rupees. Sir, but 5 years for redemption period is there. But since the price have increased, my intention is to sell before the maturity only. Try to understand the difference between FVT, OCI and ACM. Here they are saying, okay, my intention is to hold the asset till the maturity. But here they are saying, no, Baba, no, your intention is not to hold till maturity. Oh, if my intention is not to hold till maturity, then your first test in business model test is failed in ACM. So now comes FVT OCI. Second test to exactly same. Second test money, sir, same principal and interest should be there. Other than principal and interest, nothing should accrue to you. Oh. Have you understood the difference between amortized cost method and FVT OCI or not? Please give me a heads up if you have understood. If you have understood, our discussion for this investment in debt instruments is completed. FVTPL जो है ना, it is theoretically they will say that if something which is not measured at FVT, OCI or ACM, it will be classified as FVTPL. But strictly speaking, for examination perspective, nothing they will classify as FVTPL. Even from practical perspective also, from all debenture instruments, you will be receiving only principal and interest. Other than principal and interest, you will generally receive not other than principal and interest, you will not receive anything. Which theoretically they will give, if something is not classified as FVT, OCI or ACM, it will be classified under FVTPL. But Baba, exam perspective, ignore this FVTPL. Investment in debt instruments always be classified as ACM or FVT OCI. If nothing is given, we will assume ACM. If nothing is given, we will assume ACM. Okay? By looking at the data of the question, you will understand whether they are trying to say ACM or FVT OCI. Okay? Yes, sir. Now, Baba, another thing which is called as investment in equity instruments. Sir, what is that investment in equity instruments? Now try to understand, Baba. Sir, investment in equity instruments. First thing you have to understand. Sir, if I made an investment in equity, if I have made any investment in equity, is there any contract between me? For example, I have invested in Geo Limited. Is there any contract between me and Geo Limited that I have to get fixed amount of dividend every year? Or after 5 years, let us assume whatever the amount which I have invested, do you have to exactly repay me? Are there such kind of contractual obligations if I have made an investment in equity? Answer is no, Baba, no. That is the equity ka benefit. See, debentures though you will get periodically coupon and you will get the redemption value also. But investment in equity may, if you are making, you will not get fixed amount of cash flows. That is the reason ACM method is not possible only. That is the reason ACM method is not possible only for investment in equity instruments, because they fails to satisfy the contractual cash flow characteristic test. Investment in equity instruments may ACM is not possible. Now comes the second part. If nothing is given, always assume investment in equity instruments will be classified as FVTPL. But sometimes entity may choose to value investments as FVT OCI. Rarely they can give. Sir, when we can choose any investment as FVT OCI is if you are making any strategic investments and any long-term investments. This they will say in the question if they want you to use this FVT OCI. Any strategic investments and long-term investments are there, those will only be classified as FVT OCI. But understand, entity have only one time irrevocable choice. If it decides to value any equity instrument under FVT OCI, later it cannot change its choice. Once you have entered into FVT OCI, till lifelong you have to choose that investment in FVT OCI only. Sir, what kind of investments I can value? Strategic investments and long-term investments. Only these two items, FVT OCI, will be applicable. In all other cases, what is applicable, sir? FVTPL only will be applicable. In all other cases, FVTPL only will be applicable. ACM, it is not possible only. But FVT OCI, though rarely it is possible. But they have to specify strategic investments and long-term investments. Sir, if nothing is mentioned, investment in equity will be measured at FVTPL. Will be measured at FVTPL. I hope you are getting the concept. Yes, sir, we are understanding the concept and we are understanding the logic also. Now, to summarize what we have learned till now. To summarize what we have learned till now, understand this part. Sir, first of all, we have understood investment in debt. Investment in debt instruments may say two kinds of classifications are allowed. First one, amortized cost method. Second one, FVT OCI. Sir, FVTPL to ignore. Generally, it will not be coming. This is investment in debt, Baba. Okay, sir. Sir, ACM, when it will be satisfied, sir, first objective to hold the asset till the maturity. To hold the asset till the maturity. Sir, second option is to realize only principal and interest ka component. Only these two items. FVT OCI may, sir, even before maturity also, if I want, I can sell the asset. Second one, though, again, principal and interest only will be there. FVTPL, though, aram se. You can ignore that part from examination perspective, not at all relevant. Sir, next part, investment in equity. Sir, investment in equity, though, amortized cost method is not allowed only because contractual cash flows are not there. Sir, FVTPL, if nothing is said, you have to assume investment in equity is valued as FVTPL. Sometimes FVT OCI ka valuation is also allowed. Sir, when it is allowed, if they are strategic investments. If they are strategic investments, then FVT OCI ka valuation is allowed. Okay? Yes, sir. We have understood the part. Yes. Now, what we'll be doing is, okay, quickly check this. Let us understand, sir, how to do accounting for amortized cost method. How to do accounting for amortized cost method. Let us try to understand, guys. Very, 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 very important. Quickly open your calculators. I want you to calculate quickly. Whatever the basics which we require in order to solve the financial instruments that I have already made you explain. Three methods are there. Amortized cost method, fair value through OCI, fair value through P&L account. Okay? Yes, sir. Quickly come to the things. Sir, first one, amortized cost method. Let us learn in detail. Always remember, Baba, initial recognition will be done at cost. Initial recognition will be done at cost. Only remember one thing. Transaction cost, if they have given, that will be always included in cost of the financial asset. Sir, what is the meaning of transaction cost? For example, brokerage, any commission. If you are making any investment in debt instruments or equity, that commission or brokerage is there. Na? That brokerage or commission will be added in the cost of the asset. But remember one thing, this same point I will explain even while FVT OCI method also. But FVTPL method may, if any transaction cost they have given, that will be charged to P&L account. That will be charged to P&L account. Guys, this point though I have written here. If you read this, you will understand. Sir, transaction cost, if they have given, if a financial asset is classified as FVTPL, transaction costs such as brokerage, etc. will be expensed off in P&L account. However, it is classified as amortized cost method or FVT OCI, they will be included in the cost of the financial asset. Theoretically, you will not get complete comfort while solving the example, you will slowly understand. Okay? Yes, sir. Quickly come to the example, guys. Sir, assume there is persons here, Ravi Teja, who have made an investment in debentures in ITC Limited. Investment in debentures of how much, sir? ITC Limited may he have made the investments. Sir, 10,000 debentures of 100 each he have purchased. 10% is the 10% is the what should I say, sir? Coupon rate. 10,000 debentures of face value 100 rupees each, whose tenure is 3 years. Whose tenure is 3 years. Transaction cost also I have incurred 10,000 rupees. Sir, transaction cost also I have incurred, sir. How much is the transaction cost, sir? 10,000. They have clearly said amortized cost. You have to add this transaction cost to the cost of the financial asset. Next one, bond redeemable for 10,50,000. Sir, what is the meaning of redemption value? After 3 years, you will get 10,50,000 is what they are trying to say. After 3 years, they are saying that you will be getting 10,50,000. Okay? Yes, sir. Now, this is the most important concept. We have to calculate the effective interest rate. We have to calculate something which is called as effective interest rate. Sir, what is the meaning of this effective interest rate? Are Baba, if you remember our childhood intermediate days, CMA intermediate days, we will be solving something called as IRR. We will be calculating something called as IRR. Let us slowly understand, sir, how to calculate this IRR. Are Baba, try to understand what I am trying to say. Try to understand the cash flows, then you will exactly understood what I am trying to say. Sir, initially, as on year 0, I am paying 9,80,000 plus 10,000. Totally, in order to purchase the debentures, how much I am paying, sir? 9,90,000 so you are paying. But year 1 ka end May, I will be getting 10% of 10 lakh rupees, because on face value only coupon will be always calculated. 10,000 debentures are there. Into each debenture ka value is 100 rupees. Into 10% if I do, I will be getting 1 lakh rupees coupon amount. At the end of the year 1 also I will get. At the end of the year 2 also I will get. At the end of the year 3 also I will get. Along with the coupon amount for the year 3, I will also get the redemption amount which is called as 10,50,000. Are you understanding the cash flows cut series or not? Year 0, I have to pay 9,90,000. Year 1 end, I will get 1 lakh. Year 2 end, I will get 1 lakh. Okay, let me write the amounts here. Sir, year 0, I have to pay 9,90,000. Year 1 end May, I will get 1 lakh rupees. Year 2 end also same amount I will get, sir. Year 3 end also same amount, and year 3 end May, along with this 1 lakh rupees, I will be getting something called as 10,50,000. 10,50,000 also you will get at the end of the year 3, guys. Okay. Okay, sir, we have understood this. So, okay, let us write the first initial recognition ka entry. You have purchased an investment, which means it will become an asset in your books. So you have to pass the entry like this, sir. Financial asset account debtor or investment in debentures account debtor to bank. Sir, how much I have to add? 9,80,000 will be the total debenture ka value plus 10% transaction cost also should be added to the cost of the asset, because it is amortized cost method. Okay, sir. So financial asset account debtor to bank is how much, sir? 9,90,000, sir. Okay, sir. Understood, sir. Now comes the last important concept, which is called as effective interest rate. Now try to understand, sir, how to calculate this effective interest rate. Very, very focused. I think you guys have already know this in your SFM. How to calculate interpolation. Have you remembered this word or not in SFM, interpolation? While calculating IRR, we will be using this technique which is called as interpolation. Simply speaking, it is nothing but trial and error method. It is nothing but trial and error method. Now try to understand, guys. Sir, initially my current cash flow as on year 0 is 9,90,000 and these are the future cash flows what I have written. These are the future cash flows what I have written. Sir, I have to calculate that discount rate. I have to calculate that discount rate at which the future, at which the present value of the future cash flows will be exactly equal to the current investment which I am making at year 0. Okay, you may not understand what I am saying theoretically, but if you do problems, you will exactly understanding. Sir, let me do some trial and error. Trial and error money, just calculate the present value at 12%. If you calculate the present value at 12%, these are the values which you will be getting. Just confirm and tell me whether these values you are getting if you calculate the present value interest factor or not. You have to type 1 by 1.12 in your calculator. 0.8929 equal to 0.7972 equal to 0.7118 equal to 0.7118, because this is also at the end of the year 3 only. If I multiply each cash flow with respect to the factor, and if I add all those amounts, I will get something called as 9,87,580. 9,87,580 will be my, what should I say, present value at 12%. Sir, but my initial investment is how much, sir? Your initial investment is 9,90,000. Your initial investment is 9,90,000. Arey Baba, if you remember basics of your SFM, bond valuation ka chapter. Sir, I want 9,90,000 ka value. But here the value which I have got is 9,87,000, which means I have to increase the value. If you want to increase the value of the bond, your discounting rate should be decreased. SFM bond valuation ka chapter. Very, very basic point. If your discounting rate is decreased, your present value will be more, Baba. Basic logic. So here what I will be doing is, I will calculate the present value interest factor at 11%, because if I reduce this, obviously I know that my present value will be more. Just calculate the present value at 11% and you will understand. Please confirm and tell me 1 by 1.11 equals to 0.9009 equal to 0.8116 again equal to 0.7312 again. Again the same figure 0.7312. If I multiply this along with this, this along with this, this along with this, and this along with this, and if I add, I will be getting 10,12,130. I will be getting 10,12,130. So are you understanding or not? This, if my discounting rate is 11%, sir, the value which I will be getting is how much, sir? 10,12,130. Sir, if my value, if discounting rate is 12%, I will be getting 9,87,580. Now try to understand. Sir, if my interest rate is 11%, if my discounting rate is 11%, the present value is 10,12,130. But sir, if my discounting rate is 12%, my interest value is 9,87,580. 9,87,580. Just try to understand. Sir, what is the difference in this percentage? This difference is 1%. Here, if you calculate the difference, you will get 10,12,130 minus 9,87,580. If you do, you will get 24,550 ka difference. 24,550 ka difference you will get. Are Baba, interpolation. I think basic maths you are remembering how to calculate this IRR. Sir, for 1% difference, I am having difference of 24,550 in present value. But sir, if you observe, sir, what is the value which you want? Tell me, sir, the value which I want is 9,90,000 rupees. Because effective interest rate is nothing but what is the discounting rate at which the present value of the future cash flows, if you do, you will be exactly getting initial investment. Slowly you will understand. I will prove the value also. Okay. Yes, sir. Sir, for 1% we are having this much difference. Sir, currently I am having 10,12,130. Sir, but 10,12,130 I don't need. I need only 9,90,000. Which means 22,130 is the difference which I want. Try to understand what I'm trying here. Sir, for 11%, the present value is this much. For 12%, the present value is this much. Now, if you observe carefully, for 1% increase, so my value is 24,550. Now, sir, I want 22,130. If I deduct 22,130, this value will become 9,90,000. This value will become 9,90,000. Sir, how you will get that? See, this value though, I don't know. This value is the question mark, guys. Can you use cross multiplication and can you tell me, sir, what will be the value which I will be writing here? 22,130 into 1 divided by 24,550. If you do, you will be getting 0.9%. Guys, are you understanding this concept or not? So, sir, if I want the difference to be reduced by 22,130, I have to decrease this value. I have to add this value 0.9%. Okay, fine. You can do that approximation, guys. No need to worry at all. Okay. For 1%, the difference is this much. But for 22,130, the difference should have been 0.9%. Which means my interest rate is lying between 12% and 11%. That is the reason why 9,90,000 is in between these two numbers. So, sir, my effective interest rate is how much, sir? Your effective interest rate is 11.9%. 11.9%. Sir, how you are saying that my effective interest is 11.9%? That you will be understanding if you do this amortization table. Sir, what is the amortization table? Try to understand year 1, 2, 3 ka balances. Sir, year 1 ka opening balance is 9,90,000 because this is what you have received initial recognition mein. Okay? Yes, sir. Guys, quickly check and tell me where it is. Effective interest rate ka calculation. Okay, here it is, I guess. Yes, sir. First year का end में I have to book the finance income at effective interest rate. Finance income I have to book at effective interest rate. Sir, but they have given 10% का coupon. That is irrelevant. That 10% का coupon is irrelevant to recognize this finance income. Sir, as per effective interest rate only you have to book the finance income. Please calculate 9,90,000 into 11.9%. Are you getting 117,810 or not? But sir, at the end of year 1 May, I will be getting 1 lakh rupees. So if you calculate the closing balance, you will be getting 990,000 plus 117,810 minus 1 lakh. If you do, you will be getting 10,07,810. Just repeat the same process for the second year also. You will be understanding these items. Again, repeat the same process for the third year also. Again, repeat the same process for the third year also. If you calculate some approximation, 40 rupees ka difference which I am getting, and that is totally okay because of the approximation. Because of the approximation, that is totally okay. So with this, I have proved, sir, my if my finance income is at, if my discounting rate is at 11.9%, that will be treated as my effective interest rate. That will be treated as my effective interest rate. I hope you have understood this point. Sir, how to calculate this effective interest rate? Have you understood or not? Guys, it is basics are interpolation going on. If you just understand, very, very easy it is. Okay? Very basics are calculations are there here. So if you understand this, our amortized cost method is completed. Our amortized cost method is completed. Okay? Yes, sir. See, that is very common thing. Financial asset account, if you observe, sir, initially I have to pay 9,90,000. To finance income, I have to charge 117,810. Sir, every year I will be receiving 1 lakh rupees. So I have calculated the closing balance. See, the same amortization table will be presented nicely here in an T-shaped account. Okay? Yes, sir, we have understood. So please give me a heads up if you have understood. Guys, if you have not understood this effective interest rate ka calculation, which means your SFM ka basics are not that much good. Okay? How much is essential? How much is essential? I have tried to explain this. If you still have any doubts, you have to again refer this. This interpolation ka technique though have been dealt by different teachers in different manners. Okay? But this is the very basic thing which any student can understand. So, have you understood this amortization table or not? Brilliant. Brilliant. Thank you so much. Fine. So with this, we have completed the most complicated and most interesting part, which is amortized cost method ka calculation. We are done with amortized cost ka calculation. Now let us move to the second classification, which is called as where is it? One second. Second classification though, which is FVTOCI. Sir, what is FVTOCI? Simple. Initial recognition should be done at purchase price only, which means at cost only we have to do the initial recognition. Sir, which means what will be the entry which I will be passing, sir? Very simple, sir. Initially, I will be passing financial asset account data to bank account. Sir, I will write 9,90,000, guys. How much I will write, sir? 9,90,000. Just a moment here from where I have written this. I think some page is missing here. Financial instruments ka notes mein. Just a moment, guys. Okay, sir, this will be my entry which I will be passing at the initial stages. To bank pay 9,90,000. So suddenly what have happened is, assume the value of the asset is 9,84,000. Sir, the value of the asset is how much, sir? 9,84,000 is the value of the asset. Okay, let me do one thing, guys. Here I think they have some little bit mistake is there. Example pay. Okay, sir, it is fine. It is fine, sir. Sir, assume initially the value of the asset is 9,95,000, sir. Assume I have purchased an asset for which value, sir? 9,95,000 is the value which I have purchased. Now try to understand, guys. Sir, if we follow FVTOCI approach, whatever the fair value ka changes which are there, that will be transferred to OCI account. What are the fair value ka changes which are there, those will be transferred to OCI ka account, guys. Now just understand year end ka reporting period. Guys, I think something which is missing here. Just a moment, let me check. Some page is missing, I guess. Just a moment, guys, let me check that part. Okay, fine. Guys, one thing is mistaken here. Okay, fine, sir. Let us add the question, guys. Okay. Here, let me write same as above example. Same as above example. At the year end one. At the year one end. At the year one end, the fair value is 9,95,000. Assume this have happened. Guys, now try to understand. Sir, normally initial recognition my value is 9,90,000, sir. 9,90,000, sir. Where it is? Here it is. My initial recognition ka value is how much, sir? 9,90,000. So the same entry which I will be passing even here also. But sir, first year end May, what is the fair value, sir? Fair value is 9,95,000. Guys, quickly tell me whether the asset ka value is it increased or decreased? Quickly tell me whether asset ka value is it increased or decreased, guys? Fair value. Quickly confirm. Sir, asset ka value is increased because as on purchase date to asset ka value is 9,90,000, but we just have to check the fair values as on each reporting period, Baba. Sir, since it is increased, I will be increasing the asset ka value. So entry which I will be passing is financial asset account data to OCI account. Sir, how much I will pass? I will pass 5,000 entry. 5,000 to I will be recording. Okay? Yes, sir. Sir, now what have happened is year 2 end. Like this only we have to check. Sir, year 2 end also, I will check the fair value. Sir, now my fair value is 9,89,000. Sir, earlier my asset ka original value is 9,90,000 plus now I have added 5,000, which means my asset ka value is 9,95,000. But now it is decreased to 6,000. But now it is decreased by 6,000. So now what is the entry which I will be passing, sir? Financial asset will be credited because it should be decreased, and the opposite effect should be OCI account. Guys, fair value changes is very simple account. And okay, here first year end May, what will be doing is, I will be, what should I say? Bank will be debited, account debtor to finance income. Finance income pay this asset have to be transferred. Sir, how much I will get, sir? 1 lakh rupees. So every year financial income pay, financial asset pay, that income will be transferred. That's it. No effective interest, nothing for FVT OCI. For FVT OCI, nothing is applicable, Baba. Sir, that interest ka calculation is only applicable for amortized cost method only. Oh, okay, sir. Then second year also, I will be passing the same entry for this finance income. Now try to understand. Sir, third year ka end mein what have happened is fair value ka change is 10,30,000 rupees. Guys, quickly tell me, sir, year 2 end pay the asset ka fair value is 9,89,000, but year 3 ka end mein the fair value of the asset is 10,30,000. Can you calculate how much increase it is? Can you calculate how much increase it is? Quickly calculate and tell me, guys. 10,30,000 and 9,89,000 ka difference if you observe, I think you will get 41,000. Please confirm if it is correct. If it is 41,000, now please tell me, sir, is the value of the asset increased or decreased? Since the value of the asset increased, I will be debiting the financial asset and credit will be given to the OCI. ठीक है? Yes, sir. Financial asset का value will be increased and credit will be given to OCI. Fine, sir. We have understood. Third year का end में भी the same entry will be passed. Third year का end में भी the same entry will be passed. ठीक है, sir. Sir, now suddenly what have happened is de-recognition have happened na. Oh, sir, I will be getting 10,50,000. So bank pay you have to debit, sorry, bank pay you have to, what should I say? Debit 10,50,000. Sir, but financial asset ka carrying value is how much, sir? Carrying amount is the fair value, which is 10,30,000 only. Sir, again the difference will be transferred to OCI. Wherever the difference comes, that will be transferred to OCI. Okay? Yes, sir. Now, guys, asset itself is already sold, which means asset itself is already redeemed. So now check, sir, what is the balance which is there in the OCI because of this asset? Sir, earlier 5,000 credit is there for OCI. I have written that part. 6,000 debit is there for OCI. Again, I have written that part. 41,000 credit is there for OCI. I have written that part. And finally, 20,000 credit is there. That is also OCI. That is also OCI. So finally, if you calculate the net effect, sir, 5,000 credit, 41,000 credit and 20,000 credit. If you add all the credit items and if you deduct the debit item from the credit item, you will understand you are having a net balance of 60,000 on credit side. Correct. Sir, my asset itself is not there, but OCI balance with respect to that asset is there. Oh, so now whatever the OCI ka balance which is there, now you transfer that amount to the PL account. Now you transfer the balance to the PL account. Have you understood the concept or not? That's it. So whatever the OCI ka credit balance is there now 60,000, I have to cancel that. So I will be debiting that OCI account data to PL account. That's it, guys. Guys, this FVT OCI is there, na? This is, what should I say, a new accounting basically for you. But very, very easy. Just listen and try to inculcate in your mind while solving problems. I will be explaining you what all the important concepts in this chapter which you have to remember. Okay? But first you have to just understand all the accounting, all the types of methods. Then only you will understand what we are exactly doing in the examination perspective. According to me, amortized cost method ka accounting is very, 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 very important. ACM, you should never miss that. This fair value through OCI may nothing you have to do. Everything will be given in the question only. I hope you are understanding. If yes, please give me a heads up. We are coming with the last method, which is FATPL. And once this FATPL is done, next we'll be moving with the most important part, which is financial liability, which is very, 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 very important from the examination perspective. Okay, so please give me a heads up if you have understood this FVT, OCI classification, and all related things are not. Then we'll be moving with FATPL method, which is a very short and sweet method. We'll be completing in the next 5 minutes. Okay. Yes, sir. Guys, one last method, just for example sake, just to make it complete, let us try FATPL method also. Sir, just now you have said earlier, transaction cost is there, na? Transaction cost should be added to the cost of financial asset only in two methods. Guys, quickly type in comment box, what are the two methods where the transaction cost should be added to the cost of asset? Quickly type in comment box. I was waiting for your answer. But sir, unfortunately, in FVTPL method though, that transaction cost will not be added to financial asset. Will not be added to financial asset, sir. But what we have said is, we will be transferring this transaction cost to P&L account. You have said, na? Very good, Renuka, you have said correctly. Under amortized cost method and FVT OCI, you will be adding the transaction cost to the cost of the financial asset. But FVTPL may, no, Baba, no. Please don't add. Rather, we can directly charge the transaction cost to the PL account. Sir, How much I have paid? You have paid 9 lakh 90. But how much is for the asset? 980 only. This transaction cost, please don't charge to the asset. This will be charged to P&L account. I hope this entry is clear. Now same treatment guys. Sir, year 1 का end में fair value is 9,95,000. Sir, asset का value 980. At the end of the year pay, the value is increased to 995,000, which means 15,000 is increased. So asset will be debited to 15,000 and credit will be given to P&L account. Sir, every year you will be receiving same amount, Baba. Bank account to finance income 1 lakh, 1 lakh. No change. Second year end pay 9,89,000. Sir, first year का end में my fair value is 995 sir, but second year का end में it is 989, which means 6,000 got reduced. If your asset got reduced, asset will be credited and P&L will be debited. Again, I will be passing the same to same entry sir. Bank account to finance income. Third year pay be fair value 1030. Sir, bank pay, I will be receiving only 1 lakh rupees ka coupon. But financial asset may, if you observe, fair value ka difference is 989 and 1030. If you do, you will be getting 41,000. Last pay, I will be receiving 10 lakh 50. Carrying amount is 10 lakh 30. Difference will be transferred to PL account. Please confirm if you have understood this classification or not. Guys, I have went little bit faster because this is nothing to explain. This is completely self-explanatory. So please take a minute to review what I have copied and please confirm if you have understood. If you have understood, let us immediately start with the most important discussion from examination perspective, which is financial liability. Financial asset ka portion is done, guys. So take 2 minutes and try to understand the exact difference between amortized cost method, FVT OCI and FVTPL. Then I will be asking few questions which you have to respond in the chat box. If you give correct answers, then I can assume that you have understood the concepts correctly. Okay? So please check and let me know if you have understood or not. Take 2 minutes of time and go through amortized cost method, FVTPL and FVT OCI. Okay, 3 minutes are very, very essential. And once you have cleared, I will be asking few questions. Then if you give correct answers, I can assume that you have understood the concepts correctly. So I hope you guys have understood. Now let me ask the first question which I wanted to ask. Sir, first thing, effective interest method. Effective interest rate will be calculated in which method? Effective interest rate will be calculated in which method? Either in ACM or either in FVTPL or either in FVTOCI. Please type quickly the answer in the chat box. Effective interest rate will be calculated in which method? Okay, I am receiving responses. Excellent, excellent, excellent. Second question. Transaction cost will be expensed in P&L account in which method? Transaction cost will be expensed in P&L account in which method? FVT. FVT OPL is not there. FVTPL. Unfortunately, I think that is a typo, but fine. FVTPL. Super. Super, guys. You guys are understanding. So with this, we have completed a complete new set of accounting for financial assets. Okay. But from our exam perspective, more than financial assets, financial liabilities are more important. More than financial assets, what are more important, sir? Financial liabilities are more important. Try to understand, guys. So first one, definition of financial liability. Only the first part you have to remember. 2, 3, 4 are complicated, not that much important. Simply you can ignore those items. First part only we have to remember, sir. What is the first part? Try to understand. If you observe the definition of the financial asset, they will say like this: contractual right to receive the cash. Exact opposite definition of financial asset is financial liability. So here what they will say, sir? They will say contractual obligation to pay the cash. Oh, either cash or any other financial asset. Now, my first question, guys. Sir, can you please give me an example of financial liability? Okay, sir. Question I will ask a little bit later. If you observe, creditors are there in my books of accounts. Creditor, sir, what is the meaning of creditor? Sir, creditor, though I have to make a liability in the future, which means I have a contractual obligation to pay the cash. Correct or not? Yes, sir. Sir, I have taken a loan from any other person. I have taken a loan from Mr. X. Sir, in return, I have a contractual obligation to pay the cash. Correct or not? Yes, sir. That is also a contract to pay in cash only, which is a financial liability once again. Now comes the most interesting part. Sir, I have taken an advance from customer. I have received an advance from customer since I have not performed any work. Now, Baba, try to understand, sir, is that advance received from customer a liability? Answer is yes, it is a liability. But you have to tell me, sir, is it a financial liability? Answer is no, Baba, no. Because if you take advance from customer, after you may either provide goods to the customer or you will provide services to the customer. Correct or not? Normally, if you take any advance from the customer, in future what we will be doing is we will be either delivering the goods to the customer or we will be either providing the services to the customer. Correct or not? Yes, sir. Which means you are not having a contractual obligation to pay the cash. Rather, you have a contractual obligation to deliver the goods or services. Sir, it is a liability, but not a financial liability. Because in order to call a financial liability, you should have a contractual obligation to pay the cash, not goods or services. Have you understood the point or not, guys? Have you understood why this advance received from customer or any fees received in advance, they are liabilities only, but they are not financial liabilities. But they are not financial liabilities. Have you understood or not? If in return, if you have the obligation to pay the cash, that will become your financial liability. But if in return, you have the obligation to deliver the goods or services, no, Baba, no. That is not a financial liability, is what the standard is trying to say. Another question. Another question, guys, try to understand. Sir, equity share capital. Is equity share capital a financial liability? Answer is again no. Because try to understand from the entity perspective. Entity, sir, assume in entity books may there is equity share capital. Sir, do I have to mandatorily repay the capital? Answer is no. Answer is no. So that is the reason why equity also is never treated as a financial liability. This is why equity, sorry, Equity share capital will never be treated as financial liability. Okay? Yes, sir. We have understood the financial liability classification, sir. Completely we have understood. Now, sir, classification of financial liability. Sir, only two methods, not as FET, sorry, not as financial assets. Financial assets pay how many methods you are having, sir? Three methods are there for financial asset. Sir, but for financial liability, only two methods are there. First one, amortized cost. Second one, FATPL. First one to amortized cost method. Second one to FATPL, Baba. Okay, sir, we have understood, sir. Now, quickly come to example perspective. Quickly come to example perspective, guys. Everything is exactly same in this amortized cost method. Quickly take this example. Quickly let us solve this example. Same amortization schedule also should be prepared, and then amortization table and same, what should I say, effective interest rate also should be calculated. Guys, very basic sir question. Let us quickly check this part. Sir, Geo Limited have taken a loan of how much, sir? 10 lakh rupees. Transaction charges to how much, sir? 50,000 rupees. Interest 10% repayable after 3 years. They are asking you to classify the liability to be measured at amortized cost method. Simple, sir. 10 lakh is the cost, 50,000 is the transaction charges. Are Baba, assume you have taken a loan from the bank. Sir, 10 lakh is the loan value, but transaction charges though they have paid only 50,000, which means they will give you balance 9,50,000 only to your bank account. They will give you balance of 50,000 only to your bank account. So since this is amortized cost method, I will be adjusting this transaction charges in the loan amount only. Transaction charges will be added to the cost of financial asset in amortized cost method. But now, since it is a financial liability, transaction charges will be deducted. Okay, sir. Sir, now entire thing is exactly same. Sir, if it is a okay. So, hi guys, good morning. Can you please confirm is the audio and video fine? If yes, we can get started. Can you please confirm if it is fine or not? Yes, we can get started immediately with financial instruments. Yes. Okay. Fine. Thank you. We'll be immediately starting. Okay. In last class, basically, we have started with accounting of financial instruments, and we have understood this comprises of basically three standards. As I have said that the standard is a bit comprehensive, but our institute is not going to test that much. So we will not be discussing those areas which are not at all relevant for us. So currently our focus is only on exam oriented areas only from this standard. So we have immediately started with the definition of financial instrument. The meaning of financial instrument is a contract which creates a financial asset for one entity and which is a financial liability or equity for another entity. Okay? For one entity, it should be a financial asset, and for another entity, either it can be a financial liability, either a financial liability or an equity is what the definition of financial contract, financial instrument means. Yes, sir. Then we have understood the definition of financial asset. I have only explained you that these 3 points are only relevant for understanding purpose. So whatever the things which they have discussed afterwards, that is a bit complicated definition, but our institute is not focusing that much. So we have not gone into in depth as to these 3 points. So for exam perspective, what we have to remember, cash is always treated as a financial asset. Second, if you have made any investment in equity shares of an entity, that is also always be treated as a financial asset. And last one, if you have any contractual right to receive the cash or any other financial asset, even this is also treated as a financial asset. For example, debtors I have discussed in your books of accounts. So from debtors, it is fixed that you will be receiving, you are having a contractual right to receive cash from that party, which means debtor will become a financial asset. For example, if you have given any loan to any person, for example, Mr. X, which means in return, you are having a contractual right to receive the cash. Therefore, this loan to Mr. X also will become your financial asset. Okay. Yes. So this is totally fine. Then we have understood the classification of financial asset. Financial asset ka classification will be there based on 3 methods. So the first amortized cost method, second FVTOCI, and third one FVTPL. So these are the 3 classifications which are essential for classifying a financial asset. Okay, sir. Next, we have understood, sir, if any investment is made in debt instrument or bonds or even loan given also for that matter, we have to check 2 conditions. If those 2 conditions are satisfied, then only those item will be classified as amortized cost method. So what are the 2 conditions? First one, though, business model test. Second one, though, contractual cash flow characteristic test. So what is the meaning of business model? Business model means you have to check the intention. You have to check the intention of the person who is purchasing the asset. If your intention or objective is to hold the asset till the maturity, then they are saying that, okay, our first business model test is satisfied. Okay, which means you will not sell before maturity. Your intention is not to sell. You may sell or not, that is a different thing. But while purchasing, your intention is to hold till the maturity. Then they are saying, okay, in this case, my business model test is satisfied. Then we have to check the second characteristic, contractual cash flow characteristic tests. So what they are saying is, in the contract, if you are receiving only principal and interest, in the contract, if you are receiving only principal and interest, then they are saying, okay, if these 2 conditions are satisfied, then the financial liability, sorry, then the financial asset should be measured at amortized cost method is what the standard is trying to say. Okay, yes, sir. Then comes the second option, which is fair value through other comprehensive income. Sir, when this fair value through other comprehensive income ka condition should be applicable is contractual cash flow test, so exactly same as above, but we have to check the business model ka test. Sir, now this time my business model is not to hold the asset till the maturity. Meanwhile, if the price changes, my intention is to get the benefit of those price changes. Sir, what is the meaning of get the benefit of those price changes? Get the benefit of those price changes means as and when I want, I will be selling without holding till maturity. If my intention is like that, then the standard is saying, okay, we can follow FVT OCI ka method. ठीक है sir. Then what comes FVTPL sir? If any asset is not measured at FVT OCI or ACM, then we can choose this residuary category, which is FVTPL. But exam perspective, they will never ask any investment in debt instrument as FVTPL because it is not possible only. If you observe, most of the debt instruments, so you will be receiving either principal and interest. That's it. Other cash flows though are not uh, possible to get received. So this FVTPL classification, we will be learning only theoretically. Okay? No questions they will be asked from this part. Fine, sir. Next, we have moved with investment in equity instruments, a bit important from MCQ perspective. So we have to understand this. Investment in equity instruments may ACM is not at all possible only. First of all, you have to understand because contractual cash flows are not there. If I invest in equity, is it sure that I will be receiving dividend income every year, or is it sure that I will be receiving principal repayment? I mean, capital redemption also at the end of the, what should I say, at the end of the fixed tenure or something like that? Answer is no. That is why it is called as equity. Correct. Fixed dividend is not possible, and even redemption of capital also is not possible. So that is the reason, since the contractual cash flow test itself is satisfied, this amortized cost method is not possible for equity instruments. So then what we have to observe? Then we have to check maximum cases investment in equity instruments will be classified as FVTPL instruments. FVTPL instrument, if nothing is said, we have to follow this FVTPL. But sometimes, rarely in the question, if they have mentioned these words, which is called as strategic investments and long-term investments, you may have an option to choose these investments as FVT-OCI. But one thing you have to remember, if you choose these options as FVT-OCI, later you cannot change your choice. Later you cannot change your choice. Okay, sir, we have understood this part. Next comes the most important, accounting of financial asset. Accounting of financial asset, so initial recognition will be always done at cost. Initial recognition will be always done at cost. Sir, what is the entry financial asset account data to bank, or if it is payable, we will be crediting the payable. Okay, yes sir. One more point, transaction cost, super important. This you have to remember. If any transaction cost, if they have given in the question, if the asset is classified as FVTPL, transaction cost will be expensed. Otherwise, for example, ACM or FVTOCA, it will be capitalized, which means it will be included in the cost of the financial asset. Are you remembering this point or not? Please give me a heads up. If yes, type S in the chat box. Are you remembering this point or not? Transaction cost, most important. So you have to remember this. Okay? Yes, sir. Next. This also we have understood. Subsequent recognition may, very good. Yes, I'm getting yes responses, so fine. Subsequent recognition may, if you're opting for FVT OCI, we have to check for fair value at the end of each reporting period. Each reporting period pay, we have to check the fair values. If our asset is increased, then the entry will be financial asset account data to OCI account, because it is OCI. Fair value ka changes will be gone through OCI ka account. Sir, what if the asset got decreased? If the asset is decreased, we have to credit the asset. Sir, if the asset is credited, debit I have to give to OCI account. Okay. Yes, sir. Sir, what in case of FVTPL? FVTPL also every year we have to check the FVTPL also every year we have to check the fair value ka changes. But now the differences will be routed through PL account. Okay, sir. So if the asset got increased, asset will be debited, financial asset will be debited, and credit I will be giving to P&L. Sir, but what if the asset got decreased? Since the asset got decreased, we have to credit the asset ka balance, and the debit will be given to P&L account. Very, very simple. Very, very simple. Yes, sir. Now comes the derecognition of financial asset. Yesterday itself, we have shown the example. Sir, first of all, we will be debiting the bank at whatever the amount which we have received, and the credit I will be giving to the financial asset at its carrying amount. Whatever the difference which I got, if the difference is in debit side, again OCI. If the difference is in credit side, again OCI. Sir, but if any balance in OCI is there, will be transferred to P&L account. I think, second, let me show that example what we have discussed. This thing, if you observe, sir, when the asset got derecognized, we have to check whatever is the balance which is there in the OCI. First, if you observe, I have credited 5,000 in OCI. Second, I have debited 6,000 in OCI. Third, though, again, I have credited 41,000 in OCI. And last May, again, I have credited 20,000 in OCI. I have just taken the summary. So whatever the balance which is there, that entire balance also will be transferred to P&L account. Reason is simple. If the asset itself is derecognized, if the asset itself is sold, what will we do with the OCI balance, which you have created only with respect to that asset? So the logic is pretty simple. If you sold the asset, please transfer the asset related OCI balance also to the P&L account. Okay. Yes, sir. We have understood the concept. Next, if you observe the most important amortized cost method card, detailed discussion also we have understood. Yes, sir. What is the first step, sir? First step, we have to calculate the initial recognition at cost. While calculating initial recognition, always add the transaction cost because this is amortized cost method going on. Okay, sir. Second part, step number 2, calculate the effective interest rate. Effective interest rate is the crucial part for only one method, which is amortized cost method. And step number 3, though, we have to recognize this finance income based on effective interest rate. That also we have seen with the help of an example. This finance income, though, we have to recognize based on the effective interest rate on every reporting period, but based on the amortization ka table. Okay, sir? Yes, sir. So please confirm if you guys have understood how to calculate this effective interest rate. This is, as I have already said, that this is interpolation, which we will be learning in your SFM, how to calculate the IRR, if I'm not wrong. I think probably in your CMA Inter to FMA, we have already learned this. If I am not wrong, even in SFM also, there are many instances. Is it there or not? Yes. In SFM also, there are many instances wherein we will be calculating interpolation things. Okay. You may know some different methods, but as and when the answer is same, we can follow any of the methods. So please confirm if this part of effective interest rate ka calculation, only this calculation ka part is clear or not. If it is clear, recognition of financial income is very basic something, because we just have to prepare the amortization table like this, and that's it. Other than that, the rest of the things are very simple. Okay, financial asset account is very simple. Every year pay we will be receiving contractual cash flows only, which means if you observe here, they are saying that 10% is the actual coupon rate which I will be receiving. Okay, so that 10% only I will receive. But for accounting purposes, I will be booking the finance income at which rate, sir? At this effective interest rate. We have to practice this. Only if you practice, you will understand. Otherwise, you will not understand. Okay, so please practice this. So next, we have immediately started with the financial liability cutting. Financial liability में only we have discussed about one important point. Financial asset, if you remember, it is nothing but a contractual asset to receive the cash. So exact opposite, financial liability is nothing but a contractual obligation to pay the cash or any other financial asset. Either you have to pay the cash or either you have to pay any other financial asset also. Both are fine. But remember one thing, if you have received any advance from customer, do you have any liability to pay the cash? Answer is no. You have the liability to provide the goods or either to provide the services. Which means, sir, are you saying that advance received from customer, is it not a liability only? No, I am saying it is not a financial liability. It is a normal liability only, but it is not a financial liability is the thing which you have to understand. Okay, sir. Yes, sir. We have understood the financial liability. Next, we have understood we have two different methods for the classification of financial liability. FVT OCI is not applicable for financial liability. FVT OCI is there for assets, financial assets, but unfortunately for financial liabilities, only two things are there. Amortized cost method, exactly same. FVTPL. So generally our institute will never ask this FVTPL because this derivatives and financial guarantee, I think you guys have already known this in SFM, but accounting part will be completely explained in this standard only. But our institute has not gone into any depth, so no need to worry at all, because this derivatives and financial guarantee accounting itself will take 20+ hours to understand. Okay, so that much devotion is not at all necessary. We will not devote that much time to those useless areas which our institute is not at all focusing only. Okay, so we can ignore this part, FVTPL ka. So for our exam, only this amortized cost method is essential, is what I can conclude. So now what have happened, sir? Jio Limited ka example, if you remember, 10 lakh ka loan is there, transaction charges to 50,000, interest rate to 10%. Since it is amortized cost, I will be adjusting this transaction charges in the financial liability ka amount. Sir, 10 lakh is the actual loan. Transaction charges are 50,000. So can you tell me what is the net amount of loan which you have received? That is 9,50,000. So bank may you will debit 950 and credit you have to give to the financial liability account which is 9,50,000. Okay? Yes, sir. Then we have to calculate something which is called as effective interest rate. Exactly same as interpolation. Again, you have to prepare the amortization table. Rest of the discussions are exactly same to same. Okay, sir? Yes, sir. So end of the year though, your closing balance have to be nil. That is the main approach of preparing this amortization table. Okay, fine, sir. Now, the most important discussion in the last class which I have explained is preference share capital is no more a share capital. In your intermediate days, CMA intermediate days, you are learning that, sir, in our balance sheet, there is something called as shareholders funds. In the shareholders funds, though, first I will write equity share capital. Next, I will write reserves and surplus. And next, I will write preference share capital in earlier days. But now Indians are saying, Are Baba, this just the names are different for this preference share capital and debentures. If you observe redeemable preference share capital, sir, what is the meaning of redeemable preference share capital? Redeemable preference share capital means every year you will be receiving some sort of preference dividend, and at the same time, at the end of the period you will receive capital redemption also. Sir, what about debenture? Debenture is also exactly same. Every year you will receive coupon ka amount, and at the end of the period you will be receiving principal ka portion. Sir, if I observe here, the name is preference dividend, here the name is interest. Here the name is preference share capital, here the name is principal. Other than this name ka difference, there is nothing which is difference which is there in the nature. Oh, so that is the reason Indes is saying if nature of both items are same, if nature of both items are same, let us do the same kind of an accounting for this preference share capital and debenture also. Okay. Yes, sir, we have understood this. So now try to understand, but one thing is possible. Sir, in case of irredeemable preference share capital, sir, what is the meaning of irredeemable preference share capital? Irredeemable preference share capital means it will never be repaid. Sir, is this practically possible? Answer is no. Companies Act also have prohibited to issue irredeemable preference share capital. Sir, assume my contractual terms though, I don't have any obligation. I mean, entity don't have any obligation to pay the dividend also. Then, Baba, if you observe, sir, entity will never pay the dividend also, and there is no obligation for the entity to pay the preference share capital also. In this case, it will be treated as entirely equity. Slowly, let us understand, sir, what is the accounting treatment if the component have been treated as an equity. Let us slowly understand. Okay, but sometimes you have to remember this part. It can be hybrid instrument also. Sir, what is the meaning of hybrid instrument? It can be a compound financial instrument. Compound financial instrument means it is not completely a financial liability, nor it is not completely an equity. It have some features of financial liability and some features of equity component. Oh, so what the standard is asking is first to find out whether the financial instrument is having both features. If yes, then we have to bifurcate those features. And then we will be doing the accounting separately. Okay? Yes, sir, we have understood this part. But now, sir, how to identify whether the component is financial liability or equity? You have to understand with the help of this flow chart, which is super important. And in your exam, 95% there are chances that they will ask this, what should I say? This compound financial instrument only. 95% they will ask this only. Compound financial instruments ka discussion mein 95% they will ask this only. So there are high chances that you have to understand this part. Okay, sir. Now let us try to understand, sir, how to separate the component, how to separate the instrument into equity ka part and financial liability ka part. Let us slowly understand. Okay, yes, sir. First come to entire rate. Sir, what is this? Sir, assume they have given any preference shares or any debentures. Now, preference shares and debentures both are same only. I think you have understood this part because there is no different accounting treatment. Preference share capital also is treated as a financial liability only. It is not completely an equity. Sir, how you are saying it is not completely an equity? You will understand this part. Try to understand. First one, sir, assume the company have issued, assume the company have issued preference shares which are redeemable after fixed period. Oh, assume the preference shares are issued which are redeemable after fixed period. And the terms of the preference shares are like this, sir. Preference shareholders will be receiving fixed dividend, or if it is debentures, you will be receiving fixed interest ka portion. Guys, now just answer the question what I have asked. Sir, do the entity have an obligation to pay dividend or interest every year? And do the entity have an obligation to redeem the capital after the fixed period? I was waiting for your answer. Sir, is the entity having the obligation compulsory to pay the fixed dividend, and compulsory it have to repay the capital also at the end of the fixed period? Based on your answer only, accounting treatment will be dependent. So I'm getting answers yes. So since it is yes, always remember this is fully financial liability. This is fully financial liability. Sir, if it is financial liability, then how to do the accounting? Just hold on. If it is fully financial liability, whatever we have studied, amortized cost method ka accounting, the same method we will be applying. You will love this accounting, but just let us complete the table first of all. Okay, sir. Now comes the second part. Sir, now the type of preference shares are like this. They are irredeemable preference shares. What they are, sir? They are irredeemable preference shares, or they are converted into equity shares. Oh, they are converted into equity shares, and the company is saying only discretionary dividend or interest will be given. Oh, which means it is not mandatory. If the company wants, it can give the dividend. If the company wants, it can give the interest also. So now just listen to me question. Just listen to my question and try to answer. Sir, is the company have an obligation to pay the dividend or interest mandatorily? And second part, is the company have an obligation to compulsory pay the cash? Is the company have the option to pay the cash at the time of redemption? First of all, there is no redemption only in this case. If there is no redemption only, the company don't have any obligation to pay the cash at the time of redemption. Oh, sir, but what about dividend? Dividend is also not mandatory. If the company wants, it can give. Now you have to tell me, sir, is there any element of financial liability component in this item? Answer is no. Sir, financial liability component means either you have to pay interest or either you have to pay principal. These elements are only the elements of financial liability. But here, sir, there is no obligation for me to pay the dividend also, and there is no obligation for me to pay the capital, or what should I say, principal amount also, which means here there is no component of financial liability only. If there is no component of financial liability, then the standard is saying it is completely an equity component. Oh, if there is no component of financial liability, the standard is saying, okay, Baba, it will be completely treated as equity component. Now comes a little bit interesting part, which is hybrid instrument. Sir, what is this hybrid instrument, sir? Try to understand. Sir, the debentures or preference shares are irredeemable or convertible. Oh, they are irredeemable and convertible or convertible. Sir, what is the meaning of convertible? Convertible means they will be converted into equity shares, which means at the end, though, you will not receive cash. If you will not receive cash, that is not a financial liability. That you have to understand. Because if you check the definition of financial liability, they will use this word, which is called as an obligation to pay the cash or any financial asset. Correct or not? Yes, sir, that is correct. So now if you observe, since it is irredeemable or convertible, and they are saying fixed dividend or interest have to be paid. Oh, which means I have to pay the fixed dividend or interest. Answer is yes. So now you have to tell me, listen to my question and answer very carefully. Sir, is the company have any obligation to pay the dividend or interest? Is the company having any obligation to pay the dividend or interest? If your answer is yes, then the thing is this component will be treated as financial liability. Sir, then what about this? This is not an obligation. This is not an obligation because since it is not an obligation, it will be treated as an equity ka portion. Oh, which means in this hybrid instrument, though, some portion is financial liability and some portion is equity. And this is exactly called as compound financial instrument. And this is exactly called as compound financial instrument. Okay, sir, we have understood this part. This is stated as compound financial instrument. Sir, how we have to do the accounting of compound financial instrument? Just wait for 2 minutes, you will understand everything. Okay? Yes, sir. So please give me a heads up if you have understood all these three items. And if it is yes, so I just want you to just look at into this chart for at least 1 minute to get a complete conceptual understanding. Because if you understand this concept, then only we can move forward. Okay, so please go through this chart. Sir, when it is fully financial liability and when it is fully equity component and when it is compound financial instrument, please check this and please give me a heads up if you have understood. Okay. Okay. Yes, sir. So I hope you have understood this. If you have understood, let's move further. So fine. Now, guys, if you understand, we already know how to do the accounting. Okay, let me explain like this. Sir, now a financial instrument is there. So this financial instrument should be broken down. This financial instrument should be broken down. Just a moment. Anna? Okay, okay. Okay, extremely sorry, guys. Some person have come. So check this. Yes, sir. One financial instrument is there. This financial instrument, sir, we have two components. Okay, sir. First one is equity component. Second one is financial liability ka component. Sir, how to do the accounting if the component is a financial liability that we have already understood? Sir, what we have understood, simple Baba, we have to follow either amortized cost method or FVTPL ka accounting. But forget about FVTPL also, they will not ask even this also. So in case of the compound financial instrument, the thing which we have to focus is only on this amortized cost method. Okay, sir, we have understood this amortized cost method. Now comes the next part. Sir, how to do the accounting for this equity instrument? This we have to understand. Sir, how to do the accounting for the equity instrument? Let us understand. So check this. If an instrument is classified as own equity, the standard is saying we have to record such portion of equity in other equity of balance sheet. Which means I will explain how to do the accounting and all. Slowly we will understand. But first, let us know the treatment of equity. You have to record such portion of equity in other equity of balance sheet. Balance sheet means there is one component which is called as other equity, and in that other equity ka section may we have to recognize this equity ka component. Sir, if any transaction cost, for example, underwriting commission, issue expenses, buyback expenses, if any instrument is classified as equity, by the way, then whatever the items which are there, whatever the transaction costs, all those costs also will be adjusted in other equity only. But one thing you have to remember, fair value changes of equity are prohibited in Ind AS. Sir, what is the meaning of fair value changes of equity? Are Baba, if it is a financial liability, generally what we will be doing is we will be calculating the financial liability ka fair value every year. And what we'll be doing is we'll be finding out the changes, fair value ka changes. And if there are any changes, we will be transferring the changes either to P&L account or to OCI, correct? But that we have to do for financial liability. But when it comes to equity, equity is also owner's funds only. Even if any fair value changes are come, those are also owner funds only. So that is the reason owner itself cannot recognize the profit or loss on his funds. For example, even if it happens also, what we'll do, let us try to understand. Sir, equity means, okay, equity means we all know that other equity may assume the balance is there. Okay, sir, the balance is 60,000. The balance is 60,000. Sir, now what have happened is fair value I have calculated and fair value have increased to 80,000, for example. Fair value have increased to 80,000. If you ask me to pass the journal entry which I will be passing is C. Equity ka balance will be increased, so I will be crediting other equity. Other equity, sir, how much is the balance? Sir, 20,000 I will be crediting. But debit, what I have to give, sir? Debit we have to give to P&L account. That's what I'm saying. It is ridiculous. Sir, you are saying that, see, this other equity ka balance is also equity shareholders only. Even this P&L account ka balance is also equity shareholders only, which means equity shareholders cannot recognize their own profit or loss. Okay, if you understood this logic, then it is totally fine. Even if it is not understood also, this much in depth they will not ask. Okay, so we have to understand this part. If any instrument is classified as own equity, we have to record such portion in other equity of balance sheet. Okay, if this is fine, then it is totally okay. So now what we'll be doing is, let us do one problem, how to do the bifurcation for this compound financial instruments. You will exactly understood in this example. Okay, yes sir. So I want complete focus in this. So please open your calculators and you have to solve these questions. So first one. So the meaning of compound financial instruments, so already we have understood. If any instrument have both the components, equity and financial liability, then it will be called as compound financial instrument. Then, sir, bifurcation should be done. Sir, what is the meaning of bifurcation? Try to understand. Financial liability ka component. For financial liability ka component, what we'll be doing is amortized cost method in maximum cases we will be applying. Sir, what is how to calculate this amortized cost method? We will slowly understand with the help of an example. But the thing is, fair value of financial liability you have to calculate. What I have to calculate? Fair value of financial liability. Sir, this how I will be getting? Very, very simple. Present value using normal rate of return, which will be always given in the question. See, after solving, you will exactly understood what I am trying to say. Okay? Yes, sir. So quickly check this part. Sir, entity is having compulsory convertible preference shares. Entity have issued compulsory convertible preference shares of how much, sir? 10 lakh rupees. And these 10 lakh though are converted after 3 years. Now student have to tell me, sir, entity have issued convertible preference shares and these are compulsory convertible. What is the share capital? 10 lakhs. This will be converted after 3 years. So now you have to tell me, after 3 years, do the entity have an obligation to pay the cash? After 3 years, do the entity have an obligation to pay the cash or it can convert into equity shares? Okay, I want response from the students that, sir, after 3 years, do the entity will pay the cash? Do the entity have an obligation to pay the cash? No obligation. Correct. Since there is no obligation to pay the cash, this 10 lakh ka payment is not a principal liability. Sorry, this 10 lakh ka payment is not a financial liability. Exactly. It will be converted into equity na. Okay, sir. But every year though, you have to pay dividend at the rate 10%. So now you have to tell me, sir, do the entity have an obligation to pay the dividend at the end of each year? The answer is yes. Oh, since the answer is yes, every year, whatever the dividend it is paying, that will be treated as financial liability. Okay, sir. And whatever the principal component which is there, which is repaid after, that will be treated as equity component. Sir, what are you exactly trying to say? Let us solve the question. See, guys. So this they will definitely give. Similar preference shares without a conversion option is 11%. Oh. Sir, what is this 11%? Are Baba, if you want preference shares in the outside market, they will give you 11% preference dividend. Try to understand. But sir, the company is paying only 10% dividend. But why people will buy this company ka preference share is after 3 years, they will definitely give you equity shares. That is the reason preference shareholders are happy even if they got 1% lesser dividend than the outsiders. Preference shareholders are happy even if they got 1% lesser dividend than the outsiders. Sir, why they are happy? Because after 3 years, they will get the equity shares of the company. And they are definitely know that equity shares of the company will grow, will definitely increase. So that is the reason they are okay even if they got 1% lesser dividend. Okay? Yes, sir. So if you check the answer, we have to start like this. The given instrument is a compound financial instrument. It consists of both equity also and financial component also. Here comes the entire understanding of what you are exactly mentioned in the chat boxes, comment boxes. Entity is having a contractual obligation to pay the fixed dividend, so it is a financial liability. And it have a conversion option to be given to convert into equity shares. And this is compulsory conversion, which means it is an equity component. It is an equity component. Sir, so how I have to calculate the financial liability component? Very simple, guys. First, we have to write the cash flows of a financial liability component. Oh, sir, every year I will pay 1 lakh rupees preference dividend. Second year and also I will pay 1 lakh preference dividend. Third year and also I will pay 1 lakh rupees preference dividend. Are Baba, here if you understand, sir, this 10 lakh ka capital will never be a financial liability because we have already explained, sir, we will be converting into shares now. Therefore, that will never be treated as a financial liability. Sir, present value interest factor, so at which rate we have to calculate, sir? We have to calculate at the normal rate of return, which means 11% we have to calculate. Just confirm and tell me whether the present value, is it correct if the interest rate is 11% or not. So please do the calculation quickly within 30 seconds and you have to confirm whether the financial liability component is 244,370 or not. Two double four three seven 1.5. It's okay. Approximation is fine. No worries. Okay. Yes, sir. So I will tell like this, sir. Out of this 10 lakh rupees, financial liability का component is only 244,370. ठीक है sir. Sir, what about the balance portion? Balance portion is nothing but equity का component. Sir, how I will get this equity component ka value? Total value you have to take minus fair value of the liability you have to take. Then you will get the equity component ka value. So 10 lakh minus 244,370. If you do, you will be getting equity ka component. 9,009. What? Okay, it is 9090. Check that. I think it is correct only. 0.9009. It is correct. This is the factor. So okay, you have taken the annuity factor or what? Okay, anything is fine. Annuity or approximation is fine. Okay. Yes, sir. So now, if you observe, sir, initial recognition, though, I will be passing the journal entry like this. Sir, what is the amount which you have received? I have received 10 lakh rupees. So credit I have to give. Generally, earlier days, you will be crediting 10% preference share capital. That's it. There is no financial liability, there is no equity. But now comes the Ind AS and it is asking you to recognize financial liability separately, equity separately. So the entry which you will be passing also will be like this only. Bank account at are 10 lakh to 10% preference share capital financial liabilities. And how much it is? 244,370. Balance amount to 10% preference share capital equity, it is 755,630. So have you understood this point or not? Please give me a heads up. If yes, then this financial liability का portion जो है ना, ये वाला financial liability का portion, तो we have to exactly do the amortization table का accounting. Very simple. Year 1, opening balance, finance cost, payment, closing balance. Same accounting we have to do for the financial liability, which means at the end of the year 3, though, the value has to become 0. At the end of the year 3, though, the value should become 0. So please check, because this is the accounting which our examiners will ask. They will ask you to pass the journal entry also, and they may ask you to pass this as well. Okay, so just take 2 minutes and try to understand what is there in the screen. If you understood this, we will proceed further, because rest is very simple. We will only practice these type of questions. 2 to 3 questions are there. We will practice only this. Okay. Yes, sir. So I hope you have understood. So now, what will happen after the end of 3 years? Let us understand that thing also. Sir, at the end of 3 years, so financial liability ka balance will become nil. Okay, sir. If preference shares are converted into equity shares of 100 each, assume 7,000 equity shares of 100 each they have converted. So now what will be the journal entry which I will be passing? Are Baba, this equity ka portion is there, na? This we will never touch. That's what I said. Fair value changes will never be accounted for this equity. So this equity, what I will do, this equity now I will cancel. So 10% preference share capital equity accounted are to 755,630. Sir, but we already know that share capital, so always we have to credit at face value only. So 7,000 shares into 100 each, if you do, you will be getting 7 lakh rupees. Sir, what about the balancing figure? Balancing figure is 55,630. Balancing figure is 55,630. Okay, this balancing figure either, which means what? We will be assuming that these shares are issued at premium. So the balancing figure will be going to securities premium account, or you can write other equity also. Anything is fine. Okay, this we will pass at the time of conversion after the end of 3 years. Okay, whatever the equity balance is there, that will be debited. I mean, it will be cancelled. So balance credit will be given to equity share capital, and some part of securities premium account will be transferred. Okay, yes sir. Example that will be given in the question. They will give. Okay, yes sir. This 7,000 shares is just an example, guys. So if 7,000 shares are issued, then equity share capital pay I will be giving 7 lakh rupees. Securities premium though, let me write 55,630, which is the balancing figure. Okay, yes sir. I think now we are totally fine to solve few questions. Okay, so quickly come to question number 1. Okay, question number 1, very, very important. You will enjoy this question. Okay, in only 2 minutes, we can solve this question. Just the 2 minutes, we will be completing this question like this only. Question like this only, they will ask for 7 marks. Okay, so complete focus is required. So yes, sir. Check the question. They are clearly saying G Limited issued 6% debentures of total 10 lakh rupees on 1/4/2017. Sir, what is this 6%? This 6% is nothing but coupon ka value. 6% is interest ka value, which means every year you will get 10 lakh rupees into 6%. So can you calculate and tell me 10 lakh into 6%? It is just 60,000. 60,000 is nothing but your coupon ka value. Okay, sir. Repayable on 31st March 2022. Oh, they are saying, sir, it should be repaid also as on 31st March 2022. Which means that after the end of the 5 years, you have to repay. After the end of the 5 years, what we have to do, sir, we have to repay that. Okay, sir. Check this part. This is the most important. This is the crux of the question. They are saying the debenture holders have the right to receive equity shares at the maturity of 4 lakh rupees as an alternative to repayment in cash. Here you have to understand, sir, who have the option? The debenture holders have the option. Try to understand very, 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 very carefully. The debenture holder Hello. One second. I think there is a little bit disturbance in audio. Is what? Hello. 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 Check now. Is it fine? Wait. 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 One second. The charging with the mic is completed. I think now it is fine. So please confirm. Okay. Okay. No worries. Just let me know if in case there is little disturbance in the audio. I will correct that. So fine. Okay. Yes. So now try to understand. Here, what they are saying is the debenture holders have the right to receive the equity shares of 4 lakh rupees at maturity as an alternative to repayment in cash. Now try to understand. Now try to understand, sir, what is the intention of this question? The company is clearly saying, the debenture holders are having the option. If they want equity shares, I have to give them the equity shares. Or if they want cash payment, I have to make payment in cash. So now try to understand. Now try to understand, sir, here what have happened is if the debenture holders ask for repayment, the company cannot insist that. Company have to mandatorily pay. If the debenture holders have insisted, but sir, if the debenture holders are saying, okay, we want equity shares, then we can do. Then we can give them only equity shares only. But try to understand here how we have to do the accounting is we have to assume all the debenture holders want the payment in cash. Like that we will do the accounting. Sir, why we have to do the accounting is try to understand. Entity have an obligation. Entity as on date, so it do not know whether the debenture holders after the end of the 5 years they want cash or whether they want equity sharehold or whether they want equity shares, that the entity doesn't know at the time of accepting this 10 lakh rupees. Oh, so now what the standard is saying is in this type of instruments where debenture holders have the option to convert, where the debenture holders have the option to convert, we will do accounting. We will do accounting as if entire debenture holders wants the amount in cash. If entire holder wants the 10 lakh rupees in cash only, then this 10 lakh rupees will become my financial liability. Then this 10 lakh rupees will become my financial liability. If you observe, sir, what is your required rate of return? My required rate of return is 10%. So just to calculate the present value, just to calculate the present value of these future cash flows and just to confirm, is it correct or not? Just to confirm, is it correct or not? 848,368. 848,368. Yes, it is correct. So that's it, guys. Whatever you are saying is exactly correct. Correct, 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 correct. So if you look at the answer, what we have discussed, Check what I have written. In the question, 6% debentures issued by the company is a compound financial instrument. And I have written, it has the option for debenture holders to convert into equity shares, and such conversion is optional. Also, debenture holders are entitled to receive 6% interest every year and receive principal component also at the time of maturity if such conversion is not opted. If such conversion is not opted, what we have to do is we have to receive even the principal component also completely. So they are saying bifurcation of the above instrument will be done as follows. So while calculating financial liability component, we have to calculate the present value at the rate 10% like this. Even this repayment amount also should be included, sir. Why we have to include that I will again explain with the help of a logic also. Now my fair value is 848, 348. Equity component is how much? 10 lakh minus 848, 348. If you do, you will get 151,652 approximately, and this is my equity component. And this is my equity component. Now, just for understanding purpose, if you observe this journal entries, because in the question though they have asked us to write how the transaction will be recognized, measured, and presented in 2017-18. So we'll do like this only, no worries. Let me pass the journal entries also. Sir, bank account debtor 10 lakh rupees I have received, but 6% debentures financial liability is 848,348, and 6% debentures equity is how much, sir? 151,652. Narration being debentures issued. Sir, but effective interest rate we have to apply. For this financial liability, whatever the amount is there, 848, 348 into 10% I have to do. Finance cost will be charged of 84, 834. Okay, sir. So finance cost account data to 6% debenture financial liability I have to write. 84, 834 is the value. Sorry, this is 84, 834. A small correction. Sir, but I will receive 6% ka coupon na. So 6% coupon I have to pay na. So 6% debentures account data to bank account. So 60,000 will be the payment of interest. Sir, but this finance cost is there now. At the end of the period, so this finance cost should be transferred to P&L account because it is an expense. So P&L account data to finance cost 84,834. Have you understood this journal entries or not? If you don't understood, you have to prepare the amortization schedule directly. Okay, so that you will exactly understood what I have written here. So just take 1 minute of time and explain and just ask me if you have any doubts in this journal entries, because these journal entries, so you have to definitely pass in your examination. Second, amortization schedule you have to draw. From the schedule, you will get the amount. If anyone is having doubt that how this amount is have come, you just have to draw the amortization schedule. See, opening balance. Okay, let me draw that also if it is required. Here, 1, 2, 3. I think it is 5 years. Okay, fine. I will draw only for 3. So here, let me draw the opening balance. Finance cost, I will write at the rate 10%. Here I will write amount received, amount paid. Balance may I will write closing balance. Sir, what is the opening balance? It is 848348. 60,000 the coupon I will be paid. We will get 873,183. Like this, we have to repeat for the next 5 years. Okay, normal सा entry 873,183. 60,000 I have received. So the balance amount will be 9,501,000. Like this, we have to pass the journal entries. Okay, for all the 5 years, we have to do like this. So yes, sir, we have understood this part. If yes, please give me a heads up. Then we'll be moving to the next part of the discussion in this standard. Little bit important. We'll be moving quickly. So last 30 seconds, we have to move forward. Okay, so fine. Bharat, your answer will be clarified. Are you the Bharat which you have typed, or there is another Bharat? Another Bharat also. Okay, okay, that will be clarified. Okay, I will clarify that in another question. So basically, okay, let me explain here only. Then fine. Where is it? Okay, check this. Check this. Let me explain that part. Fourth year also, fifth year also. Sir, second year का opening balance is how much, sir? 9,501,000. So this 9,501,000 into 10% if you do, you will get 90,050. 60,000 का coupon again I will get. Okay, so 9,501,000 plus 10% minus 60,000 if I do, I will get the balance as 930,551. So this will become my opening balance for the fourth year. 930,551 into 10%, I will get 93,055. 93,055. So at the end of year 4 also you will receive 60,000. So my closing balance will be 963,606. How much? 963,606 will be the value. Here, let me write 963,606. Okay. Yes. So 963,606 is the value. Okay. Assume 60,000 coupon to we will receive even after the end of the 6th year also. Okay. See here what we have to understand is, sir, at the end of 5th year, what have happened? At the end of year 5 though, debenture holders are having an option. Either if they want, they have to convert into cash. Sorry, either if they want, they have to receive the payment in cash, or if they want, they have to get their shares converted into equity shares. Correct? So now here what I will be doing is, assume here my closing balance as 10 lakh rupees. Sir, why your closing balance is 10 lakh rupees, that you will slowly understand. See, this 963,606 963,606 into 10% if you do, you will get 96,360. But last year, May, what we'll be doing is, we'll be writing the balancing figure. 1 second. So, sir, if this balance should become my closing balance, how much interest I have to charge? How much interest I have to charge? Let us slowly understand. Okay, that is very, very simple. See, ideally, how we'll be doing is 9,63,606 plus X minus 60,000 will become 10 lakh rupees. Okay, this is how we will be passing the entries. So if you want this X ka value, which means since it is the balancing figure, it should be 96,394, which will be the balancing figure. So please confirm if you have understood this amount or not. Sir, why we have did like this, you will slowly understand. Okay. Sir, for the time being, let us keep the closing figure as 10 lakh rupees. Is the balancing figure 96,394 correct or not? If you add this item to this and if you deduct this item, you have to get this 10 lakh rupees. Okay, 963,606 plus 96,394 minus 60,000 if you do, you have to get this 10 lakh rupees. Correct. At the end of the at the end of the 5th year, though, my closing balance of the financial liability is how much, sir? 10 lakh rupees, sir. Now try to understand. Sir, all the debenture holders have come to me. All the debenture holders have come to me and they have asked for conversion. Sir, in this, what I have to do, sir, I will debit financial liability 10 lakh and I have to make the payment of 10 lakh rupees. So this will be the entry which I will be passing. If opted for cash payment, sir, what will be the entry which I will be passing, sir? Financial liability account to bank. Have everyone understood this part or not? Yes, sir. Okay. 6% debentures financial liability, correct? So let me write like that only. 6% debentures financial liability account data to bank, I will write. Sir, but earlier you have created something which is called as 6% equity. Sir, do we have any use with this 6% equity? Answer is no. Sir, why there is no use? Because you have already paid in cash now. Because you have already paid completely in cash. So whatever the balance which is there now, 6% debentures equity, that balance I don't need only, first of all. Okay, sir. So this balance I have to transfer to other equity or retained earnings. Other equity or retained earnings, may this amount have to be transferred, sir. Sir, what is the amount? Amount is 151,652. So let me transfer 151,652 there. So have you understood this part or not? Please confirm. If everyone have opted for cash, I have to pay the cash. Sir, but earlier you have created some equity now. That equity will be transferred to other equity or retained earnings. Okay? Yes, sir, we have understood this part. But now, sir, the debenture holders have not opted for cash payment. They have opted for conversion. Now what they have did, sir, they have opted for conversion. Sir, now what will be the entry which I will be passing is, try to understand. 6% is it debentures? Yes. 6% debentures. Financial liability account debtor. Sir, what is the balance which is there in your 6% debentures? That is 10 lakh rupees. Okay, sir. Sir, earlier जो है ना 6% debentures equity वाला balance that should be definitely transferred. 6% debentures equity account debtor 151,652 will be transferred, and now you will get equity shares. Oh, sir, what is the value of the equity shares? They are saying face value of 4 lakh rupees. So you will get face value of 4 lakh rupees. So you will get. Okay, sir. So here I will write 4 lakh rupees, and the balancing figure will be to securities premium. Can you calculate the balancing figure? So 10 lakh plus 151,652 minus 4 lakh. If you do, your balancing figure should be 7,51,652. Here I can write securities premium or other equity. Both I will write. Have you understood this entry or not? I will explain a little bit also. Then I think you will understand. See, Are Baba, one thing you have to understand. Sir, after end of 5 years, whether it is converted in cash or whether it is opted for conversion, sorry, whether it is paid in cash or if it is opted for conversion, one thing though you have to remember, whatever the equity balance which they have created earlier, that should be definitely cancelled first of all. If you have issued equity shares, that will be debited by crediting the equity share capital. But if they have issued, if they have paid in cash, then that will be transferred by crediting the other equity or retained earnings. Okay? Yes, sir. But the entry which they have passed, they have only passed this. Okay, debenture account data, they have debited 10 lakh rupees to equity share capital, 4 lakh to securities premium, 6 lakh. They have forgotten about this equity ka balance 151,631 also should be transferred to securities premium, which means this is a wrong entry. Or another entry they have to pass. Sir, what is the another entry which I have to pass is they have to pass this 6% debentures equity to securities premium. Sir, how much I have to write? 151,631 we have to write. What I have did is I have passed one net entry. I have passed one net entry. Okay. So this is the situation after 5 years. I am thinking even this also they will never ask in the exam. This is also more than sufficient, but on a safer side, we can understand this also. Okay. Yes, sir. What if they have opted for conversion? Sir, what if they have wanted cash payment? Both also we have discussed. Okay. Yes, sir. So with this, we have completed this part. Now let us move to something which is related to your SFM, which is derivative ka concept. I hope you have understood this derivative in your SFM. At least some basic knowledge you have in SFM. Otherwise, we will not understand this part. Okay. So embedded derivative ka concept. Sir, what is this embedded derivative ka concept? Can you please give us a little introduction about this? Yes, I will give you. See, the value of the derivative, the meaning of the derivative, if you remember in your basics chapter, derivative is nothing but which derives its value from an underlying asset, which means derivative itself don't have any value. It have to always derive its value from an underlying asset. Some asset should be there. This derivative can be anything. For example, on shares also derivatives will be there. On commodities also like gold, silver, etc. On these also derivatives will be there. Okay. On futures also there are little derivatives. Even on rice, wheat, etc. On these items also derivatives will be there. Even on weather also derivatives will be there. Okay. All these items pair derivatives are there, which means that derivative contract itself don't have any value. But what they are saying is depending upon the underlying asset, it will change its value. Okay, sir. Yes, sir. Sir, but why we are learning this derivatives? Only one concept. Just understand this. In case of an optionally convertible debentures or preference shares, where option is there with the debenture holder, where option is with debenture holder or preference shareholder, then what they are saying is, sir, whether the debenture holder or preference shareholder will opt that conversion or not is completely dependent upon the value of the share in the future. If the value of the equity share is more, debenture holders will opt for conversion in future. If the value of the equity shares are less, they don't want conversion. Which means, sir, whether to opt that conversion or not is totally dependent upon the price of the share, which is an underlying item in this case. So if you observe, this is a concept of embedded derivative. Sir, what is the meaning of embedded? Embedded means hidden. Hidden derivative. Sir, a derivative is embedded in a host contract. Sir, what is our host contract? Host contract is debenture. What is option? See, you have an option to purchase that, correct? Since we have an option, this is treated as, sir, some option is there that is embedded in the what should I say, host contract, which is debentures. This issue of debentures is a normal contract. This derivative is a host contract. So now what the standard is saying is, check the treatment. Just you have to remember this. Even if you don't know this embedded derivative concept, it is totally fine, but we have to remember this part. Sir, when to apply this? Simple. When you have when you have conversion option for debenture holder or preference shareholder. See, if you observe the first question, just now what we have solved here, they are saying that debenture holders have the right to receive. Who have the right? Debenture holders have the right to receive, which means even in this question also there is a concept of embedded derivative. Okay? Yes, sir. But even if you don't know the concept of embedded derivative, still you can do this question. So that is the reason, without explaining the concept, I have directly explained the question. But some students later, they will see this word embedded derivative and they will be confused. So that is the reason why I am even explaining that now only. Financial liability, so normally it will be calculated, that is present value of future cash flows. But this is the key part. While calculating future cash flows, we also include principal portion also as repayment part. 1 second. We should also include principal portion also as repayment part. It came. Principal portion is also as repayment part we have to include. Sir, that's what we have did now. Even 10 lakh also will be treated as principal portion. This is the only point which you have to remember. This is the only portion if you have to remember. And here comes the logic. We will assume all the debenture holders will opt for redemption, which means entire redemption value also will be included in the financial liability component. Okay? Yes, sir. If you understood this treatment, let us immediately move to the next part. 3 questions we will solve. From those 3 questions, you will complete doubts will be eliminated. Okay? So if you are fine with this concept, we'll be moving to the next question, which is question number 3. Question number 3, so we'll be moving immediately. So quickly go through the question. The treatment is nothing new. Whatever we have solved in the first question, that only I have explained. While calculating the future cash flows, what they are saying is include the principal portion also. Sir, what is the logic? Why we have to include the principal portion? Because some students will get it out later. Sir, why we have taken this 10 lakh rupees? They are saying that option is there for conversion into equity shares also. But why you have taken that as a complete financial liability? That is explained here. That is explained here, sir. We will include the principal portion also, as it is also a repayment part. Because what if all the debentures have asked for cash payment? Then we have to treat the entire principal portion as a financial liability. That is the logic which they have explained here. That's it. Nothing new. This treatment we have already did in this question. Okay? That's it. I hope it is clear now. Yeah, done. Now, let us quickly check this question number 3. Very fastly it will be done, guys. No need to worry at all. See, so first one. Excel Limited issued 2,50,000 6% convertible debentures at 10 each on 1/4/2021. Sir, 2,50,000 debentures it have issued, each value is 10 rupees. So can you calculate whatever the bank amount which I have received? So 2,50,000 debentures into 10 each, if you do, you will get 25 lakh. Okay, sir, we have understood, sir. Now, the debentures are due for redemption on 31st March 2025, which means, sir, 4 years are there. At a premium of 10%. At a premium of 10%. Debentures will be redeemed at a premium of 10%. Convertible into equity shares to the extent of 50% and balance to be settled in cash to the debenture holders. Guys, understand this very, 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 very carefully. Just read these 3 lines and I will ask one question. You have to tell me. Okay, not this line also. From here only we have to read. And I will ask one question, then you have to tell me. Listen to my question very, 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 very carefully. They are saying the debenture holders are due for redemption at a premium of 10% convertible into equity shares to the extent of 50% and balance to be settled in cash. Here there is no optional conversion. Try to understand the difference. Here what they are saying is that first of all, what is the value of the debentures? Value of the debentures is 25 lakh rupees. This 25 lakh though, after the end of 4 years, what they are saying is 50% of this will be converted into equity shares. And balance 50% jo hai na, balance 50% will be converted, will be redeemed. It will be redeemed at a 10% premium. Balance 50% will be redeemed at 10% premium. If you calculate, can you tell me, sir, what is the principal repayment which I will be making at the end of the 5 year? If you understand, sir, 25 lakh is there. Let me write the amount here. 25 lakh is there. I will not pay completely in cash. I will pay only 50%. Sir, but I have to pay at a 10% premium. So I will multiply into 110%. Then if you do, you will get the financial liability ka component, because this is only your obligation to pay the cash. Because this is only your obligation to pay the cash. Sir, if you calculate 25 lakh into 50% into 110%, if you do, you will get 13 lakh 75,000. 13 lakh 75,000. Brilliant. Sir, but this 13 lakh 75,000 I will pay after 4 years. After 4 years, we will make the payment now. So 10% is the discount rate. Can you calculate and tell me discount rate? Can you calculate and tell me present value interest factor? of 10% 4 years. Quickly tell me what is the amount? 13 lakh 75,000 into present value interest factor 10% 4 years. I think the answer should come to 9 lakh 35,000 approximately. Of course, there are rounding off errors, no need to worry at all. Approximately, it should be 935,000. 1 second. 0.68. They have just taken to 2 digits ka rounding off. Okay, 2 digits ka rounding off they have taken. Have you got that 939,143, Bharat? I'm not getting 0.683 into 1375,000. If you do, you will get 939,125. Okay, got it. I got your point. But the thing is, okay, rounding off ka errors. Just do the rounding off with 0.78 only. I think then you will get the correct answer. 9,35,000. Approximation. See, in the question though, they have not mentioned that we have to take only 2 digits ka rounding off. So even I also, if I didn't see the answer, I will be taking 4 digits ka rounding off only. But that is totally fine. Sir, while calculating financial liability ka portion, along with this equity ka component, I have to pay something which is called as coupon also. Sir, what is the coupon ka amount? See, 25 lakh into 6% is the coupon. Sir, 25 lakh into 6%, if I calculate 1,50,000 into present value annuity factor of 10% 4 years, I have to take. I think you guys have know how to calculate this present value annuity factor. So please calculate and tell me what is the present value of the interest ka component. What is the present value of the interest ka component? Is it correct or not? Whatever the 4,75,500 they have calculated, is it correct or not? Approximation. Take 2 digits and then check. Okay. Yes, sir. See, in the solution which I have solved also, question number 3, there also what I have did is I have did rounding off for 4 digits only, but that is totally fine. That rounding off we cannot avoid. Okay, so that is the reason why I have got 939 125 for principal, and this interest component also I have got some different figure which is 475 485, but that is totally fine. Okay, yes sir. So here if you observe, very simple. Sir, your equity component is how much? If you add these two items, liability component is 14,10,500. But your issue proceeds are 25 lakh. Sir, so my residuary value, my balance ka part is how much? 1089,500. My balance ka part is 1089,500. Just tell me if you have understood this part or not. So the entry which you will be passing is, that is also normal entry. Bank account that are 25 lakh will be debited to 6% debenture liability ka component to 1410,500 to 6% debentures equity ka component to 1089,500. Have you understood this point or not? Okay. So please check this. If you have understood, let us move to the next part. Brilliant. Now comes the next part. Guys, check this part. Moon Limited issued 8% debentures, 1 lakh of 100 each on par value basis on 1st Jan 2023. They are saying these debentures are redeemable at a 12% premium at the end of 2026 or exchangeable for ordinary shares of Moon Limited on 1:1 basis. If you observe here, there is an option to convert. If you want, you will get shares, or if you want, you will get cash. But while you are getting cash, you will get at a 12% premium. Here is the option. Sir, if there is option, then what we have to do the accounting that I have exactly explained in the first question. Na? We will assume that all the debenture holders wanted cash only. We will assume all the debenture holders wanted cash only. Let me show you the question. This question, guys. 1/1/2023 May, this is the thing. Sir, 31st December 2026 May, I have an option to, if I want cash, that will be redeemed at 12% premium. But if I want equity shares, those will be converted. So two options are there. While calculating financial liability component, we will be assuming all the debenture holders wanted cash only. Sir, if they want cash, they will get at 12% premium. Which means in the last year pay, principal amount, if I calculate, that will be 100 lakh into 112%. Then it will become 112 lakh. So please check this calculation and confirm if this is fine. Okay. I hope why I have taken this 112 lakh you have understood. Because it is optional conversion. That is exactly what we did in first question also. Correct? We will be assuming all the debenture holders wanted cash conversion. If there is optional convertible debenture which is there, then we will be assuming like this only. Okay. If this is clear, this equity component is also very, very simple. Then the entry which will be passing, that is also very simple. Guys, this question only they will ask. Maximum cases. I am expecting this question only. Yes, sir, we have understood this part also. If yes, we will be moving with next interesting question. Okay, what is this question? 95, 53, 600. Okay, fine. So guys, one thing we have understood is, sir, in the question though they have only asked, you are required to calculate the value of the debt portion and equity portion of the above compound financial instruments and show the journal entry at the inception of the financial instrument. They have asked only the journal entry at the time of inception only. So we have stopped our answer here. But sir, what if they have asked accounting for further years also? That also we have understood. Sir, how we will do? We will pass amortization schedule. Okay? Based on this amortization schedule, we have to pass the entries. Sir, but since here conversion is there, I will be keeping my closing balance as 112 lakh. Because if they want conversion, that entry also I have explained later. See, every year though you have to pass journal entries like this. First year ka end May 11,46,432 will be the finance cost. But the end of the year 4, if you observe, this is the entry which I want you to explain. End of the year 4 though, see, so what is the end of year 4 May? What is my finance cost? That will be 12,77,400. So finance cost accounted are 12,77,400 to financial liability this. Sir, but I will be paying cash also na 8 lakh ka coupon that I have credited. Now Baba, sir, my closing balance is 112 lakh rupees. Sir, what if all the debenture holders wanted for cash? Then I will be passing this journal entry. What if all the debentures have opted for cash, or if they have opted for redemption? This will be the entry which I will be passing. Okay? Yes, sir. This will be the entry which I will be passing. Fine, sir. We have understood the concept. This is there na. Sir, but earlier I have this 8% debenture equity ka balance. Now this balance will be transferred to other equity. That's what I have said in the first question also. Sir, but what will happen if they have asked for conversion? Arey Baba, if they have asked for conversion, this will be the entry. You will not pay cash, but 8% debenture financial liability will be cancelled. Sir, not only this, sir, 8% debenture equity also will be cancelled. 2, sir, equity share capital will be credited. Sir, who said that 1 lakh shares? If you understood the question, you will understand. They are saying 1:1 basis, which means if you have 1 equity share, you will get 1 debenture. Sir, how many equity share I am having? 1 lakh equity shares. So how many debentures? 1 lakh debentures. So 1 lakh into 100 if you do, you will get equity share capital. Sir, what about the balancing figure? Balancing figure is securities premium if you have opted for conversion. Guys, this is not something new. Exact thing which we have discussed in the first question. Exactly the same we have discussed in the first question. Okay? Yes, sir, we have understood the concept. If you guys have understood the concept, see, in the question, they will only ask till here. But we have gone way advanced and we have prepared the amortization schedule also. Sir, what will happen? What will happen at the end of the year 5 also? Year 4 also. Sir, what happen if they have opted for redemption? That also we have no. And what happen if they have opted for conversion? That also we have no. Which means we are preparing for the worst case scenario. What if they have asked it completely? Still, we are able to solve this question. Okay? Yes, sir. We have understood this concept. If yes, we will be moving to one question, which is exam question, which is there. Okay? First of all, please take 1 minute of time and try to understand. I think that there is nothing new. If you still have any doubts, just watch this video once again so that you will be getting exact clarity what I am trying to say. If you understood the first question, this fourth question is very, very simple because exactly same, copy paste. Okay? Yes, sir. So if yes, we will be starting with another interesting question, which is the last question from this chapter. Guys, if you observe, I have covered each and every question from this financial instrument chapter. Because my objective is whatever the question they have asked it, you should be able to solve 7 marks. Okay? Yes, sir. So the last question, guys. Question number 5. Last question, question number 5. And here, sir, there is a little ambiguity in the question. Here, there is little ambiguity in the question. Conceptually, you can answer this. Conceptually, you can answer this question, but there is little ambiguity in the question, which you have to understand. Okay, sir? Yes, sir. Another thing you have to understand is, I think in SFM, you have already know about effective rate of interest and compound rate of interest, stated rate of interest. I think you have heard these terms which are called as effective rate of interest. Oh, so what will be doing this? Where is the question? Half yearly, 12 months. Yeah. So where is the question? Just a minute. Let me check in. Ha. So now try to understand this question, which is question number 5. Sir, if they want to twist any question from the standard, what they will do is just to try to understand. Till now, they have said that, sir, coupon will be paid at the end of the year. Correct? Coupon will be paid at the end of the year, end of the year, end of the year. This is what they have mentioned in the all the questions. But if they want to twist, just they will give the word the coupon will be paid half yearly. That's it. 70% of the students will feel this question is out of their syllabus. Okay, they just know how to do the year end ka conversion, but they will, what should I say, because of the tension in the exam, since they have seen this word half yearly, they will immediately judge that this question is out of syllabus. Okay, but we should not do that. The question is very, very simple. So let us try to understand this. 1 second. See, fine, sir. So before understanding this, I just want you to explain one concept which is known as effective rate of interest. Okay, let me just quickly show you that part. So I'll be moving that quickly, so you don't need to worry at all. So quickly come to this part. Sir, assume I have an investment of 1,000 rupees. Assume I have an investment of 1,000 rupees, and that 1,000 rupees, if I have invested, the rate of interest which they will be charging is 5% per annum, which is compounding half yearly. 5% per annum, which is compounding half yearly. I think you guys have know about this meaning, which is compounding half yearly. Sir, year one ka end mein, whatever will be the balance which I am having, that I have to calculate. Okay? Yes, sir. See, if you observe, 1,000 into 5% into 6 by 12, I will get 25 rupees ka interest, because compounding will be done half yearly. Okay, sir. So this 25 will be added to the principal amount, and for the next 6 months, interest will be calculated on 1,025 and not on 1,000. That is the meaning of compounding now. Compounding means interest on interest. So this time, this interest on this 25 also, interest will be calculated. Sir, if you calculate 1,025 into 5% into 6 by 12, you will get 25.625. If you calculate the total interest, you will get 50.625. You will get how much, sir? 50.625 you will get. Can you tell me whatever the effective interest which I have earned in this transaction? Effective interest, as in the interest which you have earned is 50.625. The investment which you have made is 1,000. So if you calculate the interest ka percentage, you will get this 5.0625. So just confirm, have you understood this 5.0625% or not? I think that is basics question. You guys have know about that. 5.0625% will be my effective. Exactly, that is correct. So 5.0625, is it 0625 or 625? Just a moment. I think it is 5.0625. It is not 625. So please check this. It is correct only. 5.0625% is the effective rate of interest. So the same concept of it's the same, correct. Okay, no worries. The same concept here also we will be doing. Sir, how I have to calculate effective rate of interest? Arey Baba, it is very, very simple. So let me directly come to the question. This is the value which you have to calculate. If you observe the question, then you will understand what I wanted to say. Where is the question? Where is the question? Where is the question? Quickly check this part. At the beginning of the year one, Black Pepper Tulsi Limited issued 40,000 convertible debentures with face value of 100 per debenture at par. They are saying the debentures have 6-year term. Okay, sir, debentures have 6-year term. The interest at the annual rate of 9% is paid half yearly. Arey Baba, just tell me, sir, if interest is 9% half yearly, see, this interest is always per annum only, but they are saying coupon will be paid half yearly because they have given interest at annual rate is for 12 months only, but coupon will be paid only half yearly. Okay, sir. Okay, let us read the question. They are saying the bond holders have an option to convert half of the face value of debentures into 2 equity shares at the end of the year 3. Normally, in all the questions where we have solved, conversion will be taking place after the end of the redemption period, correct? For example, if the tenure is 5 years, conversion will be taken place after the end of 5 years. Sir, but suddenly some different adjustment the institute have given. Sir, normally 6-year term is there, but debentures have got converted at the end of year 3 only. Okay. Sir, if you are a bond holder who don't want the conversion, if you are a bond holder who don't want conversion, you will be paid 50 rupees at the end of year 3 only. Oh, you will slowly understand. I have explained nicely in the timeline so that you will be understanding. So you don't need to worry at all. Okay? Yes, sir. Fine. Let us complete the question. At the time of issue, they are saying the prevailing market interest rate for similar debt without a conversion option is how much, sir? 10.25%. How much they have given? 10.25% they have given. Guys, here is the little ambiguity. First one, they are asking you to calculate the compute the value of embedded derivative past the journal entry at initial recognition. Guys, if they have nothing explained in the question, generally we will look at this generally you will look at this 10.25% and we will start calculating the present value. Okay, first let me understand. Let me explain the total timeline of the question. Then you will move to the discount rate discussion. Okay, fine. So year 0 में company have issued 40,000 convertible debentures at 100 each. 40,000 convertible debentures at 100 each. ठीक है sir? Can you calculate and tell me what is the coupon amount which they will pay for 6 months? For first 6 months, how much coupon you will be getting? Please calculate and tell me. 40 lakh into 9% into 6 divided by 12 if you do, you will get 1,80,000. Okay? Yes, sir. But suddenly what will happen is year 3 mein what will happen is, sir, they have given an optional conversion they have given. Sir, what is the optional conversion? If you want, you will get 2 equity shares or you will be done redemption at 50 rupees. This is, they have mentioned in the question only. See, the bond holders have an option to convert half of the face value of debentures into 2 equity shares. So the bond holders not exercising the conversion option will be repaid at par to the extent of 50 rupees. This also they have given in the question, which means if you want, you will get 2 equity shares, or if you don't want, you will get 50 rupees. So please confirm, have you understood till here or not? Please confirm whether you have understood this point or not, then I will be moving forward. Yes, sir. Sir, here only 50% got converted. Oh, what about 50%? Balance 50% will be converted at the end of year 6, but this time at 10% premium. Oh, 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 oh. Balance 50% will be converted at the end of the year 6, but that too at a 10% premium. But that too at how much, sir? 10% premium it is going to get converted. Have you understood this point or not? Yes, sir, we have understood the point. Prepaid. What I'm saying, did I say it converted or not? Okay, no, no, sorry. After year 6, what they will be saying is non-convertible portion will be repaid, which means they will be paying you cash at 10% premium. Okay? Yes, sir. Guys, now try to understand this question. Sir, as and when they have given half yearly, just you have to divide. See, here 6 years are there, correct? So this 6 years should be divided into 12 half years. This 6 years should be divided into 12 half years, which means this 9% jo hai na, this 9% have to be exactly, what should I say? Coupon you have to calculate for every 6 months. Coupon you have to calculate for every half years. Try to understand. Yes, sir. So here I will not write years. Here I will write periods. Sir, 1 to 6 means 3 years. 1 to 6 half years means 3 years, Baba. Okay, sir. Then if you calculate this cash flow, 40 lakh into 9% into 6 by 12, how much you will get, sir? 1,80,000 I will get, sir. That also we have understood. Yes, sir, we have understood that part also. Now comes little ambiguity. Normally, if in the question this ambiguity is not there, then what we will be doing is 10.25% is there now. We will be doing exact half of this 10.25%. So 10.25 into 50% if you do, I will get 5.125%. Normally, we will be calculating the discounting factor for this 5.125% because we have made this 9% half. See, we have calculated this only for half year, correct? So ideally speaking, the discounting rate also should be calculated for half only, na? But suddenly what they have understood is this 10.25% what they have given in the question is institute have assumed this 10.25% as effective rate of interest. Institute have assumed this 10.25% as effective rate of interest. Sir, what will happen if they have assumed? If they have assumed 5.125% as an effective rate of interest, if you divide this by exact half, if you check, you will get 5.125%. But luckily, if you observe the question, they have given the present value of annuity also. Sir, they have given it 5%. But where is the 5% which is given in the question? Student have to be a little bit alert. Normally, assume if this is not given, what we will be assuming is that I will be calculating the present value factors for 10 into 50%, which means 10.25 into 50%, which means 5.125%. But here you have to be a little bit alert because they have mentioned 5% discount rate. Sir, how they got this 5%, that you have to understand. They have assumed this discounting rate as an effective interest rate. Sir, if 10.25% is an effective interest rate, then we have one formula which is square root of 1 plus r whole square minus 1. Square root of 1.1025 minus 1 if you do, you will be getting this interest correct. Guys, this is your formula which is there in your SFM, so I'm not worried about this part. Now, if you do, you will exactly get 5%. This is the reason why they have given 5% ka annuity factors. Sir, we are not understanding. If you don't understand, just take whatever the factors which they have given in the question. But what is the logic? This is the logic. They have assumed the rate 10.25 as effective interest rate. If it is effective interest rate, they are saying, sir, this 5%, this 10.25% is there now. This have already captured the effect of compounding is what they are treating. Oh, but actually speaking, the discount rate should be 5% per annum. If you have understood this concept, excellent. Your SFM basics are super. If you don't understand, just take whatever the values which they have given in the question. Yes, sir, we have understood the concept. Okay.
is an off-yearly interest. We used to double the period on them.
Yeah, we have doubled it only. See, 6 years, correct? So it are 12 months. 12 months. 12 years, 12 half years you can say. 12 half years or periods, both are same, correct? Okay, so here I have taken that only 12. Okay? Yes, sir. So another ambiguity. Sir, normally if you observe this, here they have given either 2 equity shares or redemption at 50 rupees is what they are saying in the question. Okay? Yes, sir. If they have said nothing, if it is an optionally convertible, what we'll be doing is we will be treating this complete amount as a financial liability. If you observe in the first question also we have solved it like that only. In the fourth question also we have solved it like that only. Sir, if any optional conversion are there, we will be assuming that they will be completely converted into they will be completely repaid only na. But in the question they have missed one word, which is this one. All the debenture holders at the end of the year 3 have opted for a conversion. This is the assumption which the institute have taken. Unfortunately, this wording is not given in the question. Sir, but what we have to do? If similar question comes, I recommend you to remember this question and solve this question accordingly. Because our institute will copy paste few questions. If they want to ask tough question, there are high chances that they will ask this only. Sir, they only want to ask easy question, which means our preparation for this chapter is already sorted. You will get 7 marks. But institute want to give a tricky question, then they will give you this kind of a question. Sir, but what we have to do, we have to remember, guys, unfortunately, nothing can be done. Because this is the blunder of the institute. Sir, if they have not given this word, what we'll be assuming is, I have already said this number of times, if optional conversion is there, we will assume that all the holders wanted for cash only. But here, unfortunately, it have taken all debenture holders have opted for conversion. If all the debenture holders have opted for conversion, is there any financial liability component which is there in that? Answer is no. Answer is no. Okay? Yes, sir, we have understood the concept. Now, here if you calculate the coupon, for the first 1 to 6 periods, which means 3 half years stuck, what is the coupon, sir? 1,80,000, sir. Now discount factor I have to take only 5%. Sir, why we have to take 5%? Because that is the effective rate. So we have calculated how the rate will be. But sir, we are not understanding. Just take the value what they have given in the question. Anything is fine. Anything is fine. But I don't trust your institute. Sometimes assume it may forget to give this rate. Then what we have to do, I have explained. Okay? I hope they will give these values. Because they will not make your lives more miserable by not giving this. Okay? They will give this value. Don't worry. But sir, assume if they have forgotten that, then also we have understood how to calculate the interest rate. Okay, sir. Yes, sir, we have understood the concept. Then comes the logic. Sir, see. Here what they have assumed is 50% redemption is done. What have done, sir? 50% redemption is done. Now, Baba, if you observe, see, this is annuity factor. This is annuity factor. So 1 to 5 years, if you check the question, 1 at 6 terms. 6 terms. So how much it is? 5.06076. Okay, 5.076. So I have taken this 5.076 ka value. Here it is how much? 9,13,680 will be my present value. Fine, sir. Year 7 to 12 में, if you observe, Are Baba, your outstanding debenture value is not 40 lakh. Sir, 50% have already converted now. So balance amount of debentures is only 20 lakh. So next time onwards, you will be paying interest only on this 20 lakh only now. So 20 lakh into 9% into again 6 by 12 we have to do. Basic sum math. So 90,000, sir, here they have got the value 3.787. Try to understand. If you understood the concept what I am explaining, then your SFM basics are strong. Otherwise, what you have to do is, I will recommend you to, 1 second. Where is the question? Okay. Yes, sir. See, this is the shortcut method of calculating the question. Sir, we are unable to use the shortcut. Then what I will be doing is, I will be asking you to just do the question like this, like every year you have to do. Like this, you have to do for 12 years. That is also totally fine. But it will be little bit time consuming, correct? Since it is little bit time consuming, there is one shortcut which you can do. Okay. Sir, what is this shortcut? Now let us try to understand. Where is it? Just a moment, I'm searching for the question. This one. Sir, 7 to 12. Year 7 to year 12. So, sir, what is the coupon? Sir, coupon is 90,000. But while using discounting factor, please be a little bit careful. Check the question. See, they have given, sir, for 12 terms, how much they have given? They have given 8.863. But 6 terms they have given how much, sir? 5.076. Arey Baba, try to understand like this. Sir, here they have given 1 to 12, 8.863, and 1 to 6, 5.076. Sir, but I want 7 to 12. But I want 7 to 12. Sir, how you will get? You just have to deduct this value from this value, which means 8.863 minus 5.076. Then you will get 3.787 as the discounting factor for the 7 to 12 coupons. For the 7 to 12 periods, you will get the discounting factor as 3.787. Sir, we are not understanding this. Then I recommend you to solve lengthier problem, lengthier format you can follow. Okay, every period ka discounting you have to do, but if you understood this, lots of time will be saved. Okay, yes, sir. So here my value will be 348.30, sir. And at the end of the year 12 पे balance redemption, sir, what is the balance debenture ka value? 20 lakh is the value, but this time they will be redeemed at 110%. Oh, sir, what is the last year ka value? 0.557. This also they have given, I guess. Yes. If you apply, you will be getting 12,25,400. If you add the financial liability ka components, you will be getting 24,79,910. Okay. Rest of the questions are fine, guys. Only ambiguity which I can say is this one. They have not given this word. They have not given this word. Sir, this discount rate also, it is okay because they have given only 5% in the question. So smart student will identify that since they have given 5%, okay, some adjustment that must have been made. So that is the logic of the institute. A student can understand. If he is good at SFM, he will understand the difference between effective rate and stated interest rate, and he will do accordingly. But this is a blunder. But this is a blunder. If similar question comes, you have to remember. Sir, how to remember? Just remember like this. Sir, if half yearly ka question comes, in the middle, if there is any conversion, we will be assuming all the debenture holders have opted for conversion. Okay? Yes, sir. So that's it, guys. We have completed our financial instruments ka chapter. Very, very comprehensively we have covered. So now 2 hours we have covered in the last class. Last class also I have covered for 1.5 hours, which means very comprehensively we have covered this financial instruments ka chapter because all the questions I have covered in this. Okay? So this last question, 20% chances only they are there to be coming in your examination. But we all know about our luck, correct? So whatever we have taught it as a 20%, the same question will be surprisingly coming in your examination. So that is the reason we have learned this much. Okay, I hope this question is clear. If you have any doubts, please watch the video once again and just check these calculations. This is the shortcut which I have used because I have used all the present value of factors which they have given in the question. Okay, if students have any doubt with respect to this, your SFM ka knowledge have to be what should I say? Your SFM ka knowledge have to be used here. Otherwise, sir, I am not understanding. Then please calculate every year, like how we are doing in the previous questions. First year, second half year, third half year, like this we have to do for 12 half years. Okay. So that's it, guys. We have completed the most typical concept very nicely. We have understood. So evening class में we will be starting with valuation of shares and goodwill. Another 7 marks का compulsory question we will be solving. ठीक है? So I just wanted to stop the today's class till here. So please confirm if you have any doubts till here. Please check this. And please let me know if you have any doubts in this question or not. If you don't understood whatever I have explained in the last question, I recommend you to watch the video once again. Okay, so only after watching once again you will understand the concept. Okay, so I'll be there for the next 2 minutes. If you have any doubts, you can ask. So those who don't have any doubts, they can free to go actually. Okay.
So, hi guys. Basically, in last class, we have discussed that business combination very in depth along with all the types of model problems. So, I hope you guys have got clarity. So, our objective is in examination. So, I have already said that 14 marker will be coming directly from business combination. Along with that, 1 4 mark, if you are lucky, is good. 8C ka question also they will generally ask either from business combination or CFS. So put together 18 marks you will be getting. Sir, along with this 18, at least 2 MCQs. Which means totally 22 marks you are getting from the business combination itself. I am damn confident that if you follow those whatever 8 steps which we have discussed along with all the concepts, for example, reverse acquisition, step up acquisition, demergers, common control transactions, at least you have to practice 2 problems per model. Trust me guys, only those copy paste problems are going to come in your examination. Okay? With that notion, let us quickly complete that business combination. I think it is very nicely practiced. So you just have to consistently practice that in order to get maximum comfort over that. Because I have been saying it number of times, most of the students are taking this business combination as a choice. Okay? Fine. So now, another what should I say, consistent question which they have been asking in the recent past, starting from June 2023 itself. One consistent question which they are asking is this internal reconstruction. Okay? Yes, sir. Let us understand, sir, what exactly is this internal reconstruction actually mean? Let me take an example so that you will be exactly understanding what I am trying to say. So, just a moment. Let me just open the running notes. Thing. Okay. Oh, one second. Link. This one. Okay. Yes, sir. So assume we are having a one company, so let us take it as a Reliance Limited. Earlier there is one Reliance Limited who is basically manufacturing mobile SIMs and phones, mobile phones. Okay. So that company is there. Now the company have mostly closed down its operations. But try to understand, sir, why a company will actually close its operations. There are n number of reasons. One of the reason maybe, sir, there are huge operating losses which are happening. Since huge operating losses are happening, it is beneficial for the entity to shut down its operations. One of the major reason why a company will be closing its operations is this huge operating losses. Second reason if you observe, sir, another reason is basically negative cash flows. Sir, if the entity is continuously getting negative cash flows, it is also another reason why an entity basically will be closing down its operations. Okay. Sir, another thing is bad liquidity ratios. Sir, if the liquidity ratios are not that much good enough, it can also be a factor which through why an entity has to close down its operations. Guys, but you have to understand, sir, liquidation will be the last resort. Liquidation should be the last option which is available for the company. Which means before liquidation, the company will be considering n number of alternatives. It will set up different meetings with all the board of directors, all the shareholders, and even some sort of creditors as well to come up with a revival plan. Because again I am saying liquidation will be the last resort of the entity. So what they will be saying is, if you observe your company's act, there is one section which is called as compromises and arrangements. Sir, what exactly will be happening in this? Sir, entity में huge creditors का balance which is outstanding on the balance sheet date or year end date. They are due for payment, but the company ka current assets itself are not sufficient to repay. Which means, obviously, in order to repay the current liabilities, company have to sell the PP. Other assets it should be selling. If other assets are actually sold, then what is the need of the company? How the company can survive? It is not possible. So liquidity ratios, current ratios have to be maintained nicely. Otherwise, the company have to definitely shut down its operations. Because I am saying that part, current assets should be definitely sufficient in order to meet at least the current liabilities. But if the situation is too worse, in such a manner that it should sell its assets to pay just the current liabilities, in future there is no long run for the company only in that cases. So what they are saying is, they will be setting up a meeting with creditors, the lenders, and even shareholders also to make some compromises, to do some kind of an arrangements. I hope you guys are able to connect the dots with these compromises and arrangements and with something which we will be knowing, which we will be learning right now, which is called as internal reconstruction. Which means before going into external reconstruction or any other strategy, any other liquidation kind of a strategy, please give us one last chance. This is the last chance for the revival. If it works, company will bounce back. Otherwise, the company will be sent to liquidation. Okay? These are little basics. If these things are fine, let us quickly understand the internal reconstruction. Okay? Fine, sir. If you read the first point, I have just built some story. It will be called as capital reduction or internal reconstruction or capital reconstruction. Sir, why it is called as a capital reduction? Because shareholders are saying, okay, with all the blood and sweat, we have built the company to this much level. Now what will be happening is, if we have to reduce the capital, if the company ka position will be improved, then we are happy to do that. Okay, there comes some sort of arrangement from the shareholders. Now the debenture holders are coming like this. Normally the company have to repay them 1 crore rupee debentures. But they have understood the company is unable to pay. If they don't accept this compromise, now the company is saying, okay, let us redraft our plan. We can't pay 1 crore rupees. We will be only paying 50 lakh rupees. They are asking the creditors, please waive off the balance 50 lakh. Now you may say that, sir, why the creditor will be waiving off? See, if they don't accept for this compromise, the last option which is available for the company is liquidation. If the company liquidates its current assets, so anyways it cannot be paid for the current liabilities, and even if you sell other assets also, there are other, if you remember the order of liquidation, there are other stakeholders which will get the benefit first. So if I calculate all those amounts, I will be getting only 10 lakh rupees. Which means, think from the point of view of the creditor. if I agree for this internal reconstruction, at least I will get this 50 lakh. But if I don't opt for this internal reconstruction, I will be thrown even into a very bad position and I will be receiving only 10 lakh rupees. I hope you are connecting the things. So now creditors will definitely accept this internal reconstruction. Not only creditors, even preference shareholders also, even debenture holders also, even sometimes equity shareholders also have to do this because this will obviously improve the company का future. ठीक है? Now what they are trying to say is, if the company is having huge accumulated losses or fictitious assets, etc. So the company balance sheet, if you check, there are preliminary expenses. ठीक है? Debit balance का P&L account. Debit balance of P&L account is there, sir. Earlier, as per earlier standards, those will be appearing in the balance sheets. But if you remember in AS 38, they fails to satisfy the definition of an intangible asset. Since they fails to satisfy the definition of an intangible asset, those should not be recorded as an asset. Those should not be recorded as an asset. I hope you are understanding the point. I hope you are understanding the point. Yes, sir. But still, your balance sheet may, there are only accumulated losses, debit balances of P&L account, fictitious assets, preliminary expenses. These kind of assets are only there in your balance sheet. Now company is saying, I don't have any option. I have to reduce its capital and other liabilities. Are Baba, you have to understand, sir, if liability is reduced, obviously it is benefit for the company now. Obviously, it is benefit for the company. Now, the company will be using such profits to write off these losses. For example, if the company is having huge accumulated losses, one creditor have come up and have agreed to the compromise. Okay, I don't need 1 crore rupees. I only need 50 lakh rupees. Which means that balance 50 lakh jo hai na, that 50 lakh, you have to use that to write off either such preliminary expenses or fictitious assets का thing. I hope you are getting the thing. ठीक है sir. Sir, such a reduction जो है ना, that will be done only by ESH, preference shareholder, debenture holders or creditors, etc. Baba, very simple. General entry will be, sir, normally our liabilities will be having credit balance. It should be cancelled, which means those will be debited. If the sacrifice is done by equity shareholders, obviously equity share cap will be debited. If it is done by preference shareholder, preference share capital will be debited. If it is done by debenture holders or creditors, those accounts will be debited. Sir, but credit though I have to give to some account now. That some account will be either called as capital reduction account, or it can be sometimes even called as internal reconstruction account. Anything you can give name. Or it can be even called as capital reconstruction account also. Name of the account where there is no change. If nothing is given, please follow anything as you like. Okay? But if they have mentioned something like capital reduction or internal reconstruction, then please follow the question. I hope you are getting the things. Very simple. Sir, whatever, whoever have agreed for the compromise, that will be debited. Generally, creditors or lenders only will be accepting the sacrifices, or they only will be accepting these kind of a compromises. Okay? So that's why those liabilities will be debited and credit I have to give to the capital reduction ka account. Okay? Fine, sir. Sometimes debenture holders are there na. Debenture holders though, they know that okay, company may not be performing well currently because of its what should I say, its inability to repay the current liabilities. But in future, the company ka operating model is very good. But because of some bad sort of financial management, the company may not be adequately covering the liquidity ratios. But the thing is, company ka business model is very good. So those debenture holders na, they have trust in the company. So sometimes what they will be doing is they will be accepting the compromise such that they will be receiving some sort of equity shares. And now you have to understand, if you check for example in this case may, sir, 40 lakh debentures are converted into 2 lakh equity shares of each. Because they know that company operating model, they know from the scratch to scratch. they definitely know that sir 40 lakh what the debentures are there, na, those will be converted into 2 lakh shares of 10 each. Which means 40 lakh to their debentures. I mean, if I am a debenture holder, assume I am having investment in the company of 40 lakh rupees. Now I am okay that even if I have received 2 lakh equity shares of 10 each, that is totally fine for me. Arey Baba, if you calculate 2 lakh into 10, you will be only getting 20 lakh rupees, but still you are happy. But still you are happy, and balance amount jo hai na, balance amount to gone. Gone, that is the compromise. That is the compromise. If you observe the journal entry, you will understand. Sir, what will be the journal entry? Arey Baba, debentures jo hai na, those debentures, so since it is having a credit liability, since it is having a credit balance, since it have to be cancelled, first of all, I will be debiting the debentures. Sir, but you said that you will be issuing equity shares now. Sir, how many shares? 2 lakh shares. What is the face value? 10 is the face value. So 2 lakh into 10 will become equity share capital. Sir, what about 20 lakh? That 20 lakh is the benefit which the company is getting. Since it is the benefit, please transfer to capital reduction account. Please transfer to capital reduction account. Guys, you have to understand one thing. Sir, if capital reduction account may credit balance is there, the meaning of that credit balance is the company is having some sort of profit of from such reconstruction. Arey Baba, sir, if any equity shareholder have accepted the compromise, then only my capital reduction will be credited now. If any debenture holder have accepted the compromise, then only capital reduction will be done. Then only capital reduction will be done. Oh, which means capital reduction may credit balance will be coming only when there is profit from such reconstruction. Sir, first of all, why this reconstruction is being done? Arey Baba, because you have to reconstruct your balance sheet. In your balance sheet, there are so many preliminary losses, so many fictitious assets, because of which my financial position is not that much good from the investor point of view. Welcome to internal reconstruction. So whatever the credit balance, which means profit from such reconstruction which is there, now that balance will be utilized to write off the following assets. Oh, sir, I am having debit balance of P&L account. Please write off. Whether the question is silent or not, whether the question is saying asking you to do the reconstruction or not, you have to always write off the debit balance of the P&L account. Second, if any fictitious assets if they have given in the balance sheet, please write off that also. Sir, goodwill. Oh, Arey Baba, in your books mein goodwill is there, but if you observe the financial position itself is too bad. Welcome to reconstruction. Please write off that goodwill also, because both are contradictory. You are saying in your books there is goodwill, but if you sell, no person is willing to come. Because of which my capital has to be restructured. My financial position have to be restructured. So therefore, please eliminate this goodwill also. Any other asset. For example, sir, one item is there which is an overvalued item. Use the capital reduction balance to adjust that part. I hope you are getting the things. Sir, one asset is there in my books of accounts. That asset though has no, I mean, it have no capability to realize that much amount. So why keeping that asset at that amount? Please utilize the capital reduction ka credit balance against such overvalued assets. Guys, now just remember this logic. Just remember this logic. Sir, there is one asset. Asset ka balance is increased. Sir, if asset ka balance is increased, that is my profit now. That is my profit from such reconstruction. Therefore, capital reduction account will be credited. I am saying this now. This capital reduction is nothing but profit from reconstruction. If it is having credit balance, my position will be good. Sir, if liability ka balance decreases, debenture holder is happy even if he got the lesser amount. Therefore, if he is happy, I am also happy. Sorry, if he suffers, I am happy. Which means if his liability got reduced, obviously I will be happy now. If his liability got reduced, obviously I will be happy. Which means that will also be treated as profit from reconstruction. Therefore, capital asset should be credited. Capital asset should be credited. Now, sir, ठीक है. If my asset का balance is reduced or my liability का balance is reduced, or asset का balance is reduced or my liability का balance is increased, अरे बाबा, this is a loss due to reconstruction. Sir, always don't think that liability holders will be always sacrificing. That may not be the case. Sometimes the liability holders will demand extra amount also. These kind of a settlement also may happen. ठीक है, if that is a loss, obviously your capital reduction account will be debited. ठीक है sir, yes sir, my capital reduction account will be debited if the liability is increases or asset is decreased. Now, sir, I have did all the adjustments, all the liability adjustments are sorted, all the asset related adjustments are also sorted. Sir, but my capital reduction account may still some balance is there. Array, please transfer whatever the balance which you are having to capital reserve if reconstruction ka adjustments are done. If reconstruction ka adjustments are completed, whatever the capital reduction ka balance which is there, please transfer the same to the capital reserve. I hope you are understanding. ठीक है sir, 2 last points are there guys, then we will be quickly moving to the problems. ठीक है, 2 very important questions I will be discussing. Fine sir. Now try to understand. Sir, if any reduction is done only in the paid up value of equity shares without change in number of shares. Sir, earlier though the shares are 10 fully paid up. Earlier, the shares are 10 fully paid up. If you look at the example, you will understand. Sir, 5,000 equity shares are there of 10 each, agreed to reduce their paid up value to 8 rupees. Sir, here face value is not changing, number of shares are also not changing. Sir, what is changing, sir? Paid up value is changing. Sir, what will happen if paid up value will be changed? Try to understand. Sir, normally equity shares total each fully paid up. But now shareholders are saying, okay, we will reduce the paid up value to 8. Sir, what will happen if I reduce the paid up value to 8? Arey Baba, if you reduce the paid up value to 8, which means you have paid only 8 rupees to the company. Which means you are indirectly saying, okay, further if the company demands, I will be bringing the extra 2 rupees also to make myself fully paid up. Arey Baba, I am reducing the paid up value to 8, which means if the company in futures, if you call some sort of amount from me, I will be paying you. That is the meaning of reduction in paid up value without change in number of shares. I hope you are understanding this part. Sir, earlier to 10 each, but now to 8 each. Sir, how much I have sacrificed? You have sacrificed to 2 rupees. Sir, but 2 rupees to 5,000 shares. 5,000 into 2, if you do, 10,000 is the benefit which you are getting. Sir, if I get the benefit of 10,000, please credit capital reduction account na. Face value will still remain at 10 rupees. That's what I am saying. You have reduced only paid up. Without changing the number of shares, without changing the face value. Which means as and when the company demands the uncalled amount, shareholder should pay the same. Shareholder should pay the same, guys. I hope you guys are understanding this part. Sir, the last part is contingent liability, if there is any. Sir, contingent liability, so I think you guys are sure with that. I think you guys have basic understanding with this contingent liability. Sir, this contingent liability will not be there in my books of accounts. Now try to understand. Sir, there is one contingent liability which is foregone. One customer have booked a lawsuit, but now I have made an arrangement with the customer. That customer is saying, okay, we will close the case. Company, please perform well. So my contingent liability is foregone. Now I no need to pay the contingent liability. First of all, if it is there in your books, then only you will be making the adjustment. Sir, but it is not there in my books only. So no entry. But sir, some contingent liability is there that should be settled because of this reconstruction. Now capital reduction will be utilized. Normally P&L you have to choose. But sir, since this is only because of this reconstruction, it is certain that you want to settle the contingent liability. Now you have to debit the capital reduction account. Now you have to debit the capital reduction account. Okay, fine sir. I hope the things are pretty clear. I hope through this our understanding of this reconstruction is pretty sure is what I am guessing. So now what we'll be doing is quickly let us solve three questions. Quality three questions we'll be solving within next 30 to 40 minutes. Our internal reconstruction is going to get completed, guys. Compulsory 7 mark questions they are asking from this topic, which a student should never miss this concept, should never miss this chapter. Okay, fine sir. Now let us quickly move to the questions. Let us quickly come to the question number 25. Question 25, page 200. Okay. Question 25, page 200. So, question number 25. Let's quickly get into the question. Okay. They are saying the following is the balance sheet as at 31st March 2017 of Hopeful Limited. Okay. I think this is our study material question, but similar kind of a question have also asked in examination is what I am remembering. Okay, but this is study mat ka question, so let us quickly understand this because this is very important since it is already mentioned in the study mat. Okay, fine sir. Now, sir, quickly check the liabilities ka portion. They are saying 8,500 equity shares of 100 each. They are fully paid up. 8,50,000. Okay, fine sir. And 4,000 cumulative preference shares of 100 each, which means 4 lakh. Securities premium 20k, general reserve 60k, trade creditors so 3,80,000 they have given. Okay sir, fine sir. Now, fixed assets they have given, goodwill ka value is 1 lakh rupees. Fixed assets is totally 11 lakh 80,000 and they are saying it also includes a goodwill of 1 lakh rupees. It also includes a goodwill of 1 lakh rupees. Okay, fine sir. Investments may they have given 40,000. Stock in trade they have given 2,75,000. Guys, this debtor ka balance they have moved a little bit down. So this 150,000 is debtor ka balance. And this bank balance is 65,000. Okay, you just have to move a little bit upward. You just have to move a little upward because debtors ka balance is 150,000 and bank balance ka balance is 65,000. Okay, fine sir. Now quickly come to the question, guys. They are saying sir they are having one contingent liability preference dividend in arrears to 60,000. Preference dividend is there in arrears sir. How much? 60,000. Next, sir, the board of directors of the company decided upon the following scheme of reconstructions. Upon the following scheme of reconstruction, which was duly approved by all concerned and put into effect from 1st April 2017. Sir, check the first thing. Sir, they are saying the preference shares are to be converted into 12% unsecured debentures of 100 each with regard to the 70% of the dues, including the arrears of dividends, and for the balance equity shares of 50 rupees paid up would be issued. The authorized capital of the company permitted the issue of additional shares. Try to understand. Sir, what they are trying to say is whatever the preference share capital which is there. One second, what have happened with this? Okay. Hey, what happened, man? You got stuck or what? There's one thing, I think this got stuck. Okay, let me just open that once again. Okay, yes sir. Preference share capital including preference dividends. Sir, so can you tell me what is my total due for the preference share capital? Sir, 4 lakh to capital to hai, lekin 60,000 to preference dividend to hai. Which means total amount is how much, sir? 4,60,000 will become the total due to the preference shareholders. But they are saying, sir, they will be converted into 12% unsecured debentures with regard to 70% of the dues. Which means if you take the calculator, just a moment, where is my calculator? Just a moment. ठीक है सर so total dues if I calculate I will be getting 4,60,000 into if I do 70% they are trying sir out of this 4,60,000 70% if I calculate it is coming to 3,22,000. For this 3,22,000 they are saying sir we will be giving you 12% unsecured debentures. Guys, try to understand the journal entry. Sir, my preference share capital will be debited. My preference share capital will be debited, and what will be credited, sir? I will be issuing 12% unsecured debentures. Na? So, this 12% unsecured debentures will be credited. And for the balance, they are saying equity shares of 50 rupees paid up would be issued. Sir, total balance is 4,60,000 out of which 322,000 I have issued debentures. So what is the balance? Balance is 1,38,000 and for this 1,38,000 they are saying okay we will be giving you equity shares of 50 paid up. Sir, how many shares you will be getting? Arey guys, I will be getting 2,760 equity shares. Sir, 2,760 equity shares will be credited to equity share capital account. Guys, if you observe the entry, sir, preference share capital will be debited because it should be cancelled. 12% unsecured debentures worth 3,22,000 will be credited and 1,38,000 worth equity shareholders will be credited. Equity share capital will be credited. Guys, quickly come to the journal entry, you will understand. And again, if you observe, sir, here I am having preference dividend, which is a contingent liability. Sir, if that is a contingent liability, obviously that should be adjusted with a capital reduction because this is also being settled na. So now my entry, sir, if you observe, cumulative preference share capital account worth 4 lakh will be debited. Capital reduction worth 60,000 also will be credited. Two, I have written this cumulative preference shareholders. Guys, see, they have passed two entries, but what I will be doing is, let me show you. Okay, sir, here only let me share the answer. So first one may, sir, what I will be doing is preference share capital account data and capital reduction account data. Two, let me write 12%. I think it is unsecured debentures. Unsecured debentures account and credit I will be giving to equity share capital. Sir, preference share capital so it should be cancelled worth 4 lakh rupees. Capital reduction to 40,000. Sir, 12% unsecured debentures so how much? If you observe 322,000. Sir, equity share capital though balancing figure 1,38,000. Sir, this though 50 rupees paid up, which means how many shares? 2,760 equity shares. Okay, sir. Fine, sir. This will be the first entry, but they have passed two different entries. Both are fine, guys. Okay. Yes, sir. Little changes you have to make. Please make the changes accordingly. Okay. This 1,08,000 should be changed as 138,000. There is little bit alignment ka issue. Okay. So just correct these things. Just correct these things. Okay, sir. Narration you can write aram se. Narration to you can write aram se. Now check the second part, guys. Sir, they are saying equity shares would be reduced to 50 each paid up. Sir, currently what is the equity share का paid up value? Equity share का paid up value is 100 rupees. Sir, how many shares? 8,500 shares का value is there. Sir, now they are saying, okay, we were agreed to reduce 50 rupees paid up value. Sir, the paid up value is reduced. It is not number of shares nor not the face value. Only paid up is reduced. So, sir, my equity share cap will be reduced. Sir, how much? 8500 into 50 if I do, I will be getting 425,000. So debit I will be giving to equity share cap. Credit I will be giving to capital reduction account. I hope you guys have understood the part. So sir, the entry which I will be passing is equity share cap account debtor to capital reduction. Sir, what will be the entry, sir? Guys, entry will be 8500 into 50. This should be the sacrificed portion. So the entry will be 425,000. Sir, narration you can write. Being equity share capitals, being equity shareholders agree to reduce the paid up value to 50. This will be the entry. Okay, this will be the entry. Fine, sir. We have understood the concept. We have understood this entry as well. Now quickly check the third part, guys. Okay, sir. Sir, what is the third point? Third point, though, they are saying this. Sir, goodwill has no value. Therefore, they are asking us to written off. Oh, if you check the balance sheet, they are also saying, sir, goodwill ka value to 1 lakh is there. But that goodwill is of no value only. Sir, what I will be doing? I will be writing off that goodwill with the capital reduction ka balance. ठीक है सर. So if I observe in this question तो capital reduction का balance I have to utilize to reduce the goodwill, which means goodwill I have to eliminate. So goodwill will be credited and debit I have to give to the capital reduction account. अरे बाबा, because this is the reason why we are reconstructing the company now, to eliminate useless items and to bring all the liabilities and to make the compromise with the creditors or debenture holders or whatever it is. ठीक है, fine sir. So this entry will be a 1 lakh, I guess. ठीक है sir, 1 lakh तो done. Now, next entry. They are saying, sir, the market value of the investments are to be reflected at 60,000. Market value of the investments, if you observe, sir, investment का values तो 40,000 ही है, लेकिन we are increasing the value of the investments, which means since the asset का balance is increased, asset should be debited and what should be credited? Obviously, capital reduction का account should be credited. So the entry which I will be passing is, investments account debtor to capital reduction. ठीक है, fine sir. Another entry is also fine. Sir, the last entry, sir. Check this. Obsolete items in the stock of 75,000 to be written off. Bad debts to the extent of 5% of the total debtors would be provided, and fixed assets to be written down by 180,000. Fixed assets also should be written down by 180,000. Guys, all these are assets ka reductions. If these are assets ka reduction, obviously we are having some sort of losses na. So entry C, sir, inventory ka value I will be crediting 75,000. Inventory का value तो I will be crediting ना, because it is a loss for me. ठीक है sir. So please credit the inventory का value. Sir, here I will be crediting the to stock account. And if you check, sir, bad debts also there. So let me write off the debtors का account also. ठीक है sir. Sir, another thing though, if you observe the question, fixed assets also they are asking you to write off. ठीक है sir. Now try to understand. Sir, 75,000, 1,80,000. Sir, what about debtors ka balance? Debtors ka balance, if you observe, they have given 150,000 into 5%. If you do, you will be getting 7,500. Sir, in order to write off these assets, you have to use which balance, sir? I have to use capital reduction account ka balance. So I will be debiting capital reduction account debtor. Sir, how much? 75,000 plus 7,500 plus 1,80,000, which means I will be getting a total of 262,500 debit. 262,500 का debit balance so I have got in this journal entry, guys. Okay, I hope you guys are understanding the things. Last time I have said, now, sir, we will be making all the adjustments given in the question, but still, if the capital reduction account ka balance is there, that will be transferred to capital reserve. Okay, fine, sir. Guys, let us check what is the balance which is there. Sir, see, if you observe capital reduction ka debit, we are having 40,000. Okay, let me aram se write here. A little kind of a rough. Sir, debit to 40,000. Debit 40,000 is there. Next, if you observe, sir, credit 4,25,000. Next, sir, debit 1 lakh. Credit 20,000. Next, debit 2,62,500. Sir, if I calculate the closing balance, 262,500 plus 1 lakh plus 40,000 minus 425,000 minus I think the balance will be 42,500 is what I'm calculating. It's a little bit mismatch. So what? Let me check here. 60,000 to debit is there. 425,000 to credit. Okay. Yes. Debit to 1 lakh 75,000, 1 lakh 87,000. I think everything is correct only now. One second. This is investments ka value also credit reduction debit na. It is also credit only. So if you observe 425,000 plus the balance, if you observe, it's a small mistake. Here I have taken a capital reduction account by 40,000 I have taken, but it is 60,000 actually. Okay? So let me change here. The first balance is 60,000 debit. Sir, now if I transfer the capital reduction ka balance, I am having 22,500 ka credit balance. So this capital reduction account ka debit balance, which is 22,500, if you ask me to transfer this, I will be transferring this balance to capital reserve account. Sir, how much is the amount? 22,500. This will be transferred to which account, sir? This will be transferred to capital reserve ka account. Okay, fine, sir. I hope you guys have understood this step. Okay, balance will be transferred to capital reserve ka account. Fine. Now, let us just read this last point, guys. They are saying the company carried on trading for 6 months up to 30th September 2017. This they have given on 31st March. After reconstruction, they have given some data and made a net profit of 1 lakh rupees. Net profit to 1 lakh they have got after writing off depreciation at 25% per annum on the revised value of the fixed assets. The half yearly working resulted in an increase of sundry debtors by 80,000, stock by 70,000 and cash by 50,000 also. Try to understand. Sir, what they are saying is net profit to 1 lakh they have got after writing off depreciation at 25% per annum on the revised value of the fixed assets. Revised value of the fixed assets may they have raised the value. Okay, try to understand. So first of all, what is the value of the fixed assets? If you observe, out of this 11 lakh 80,000, 1 lakh to goodwill related, which means now the goodwill got eliminated. So my value is how much, sir? 10 lakh 80,000. My value is how much, sir? 10 lakh 80,000. But out of this 1 lakh 80,000, to already written off now. So my fixed assets का balance is how much, sir? Fixed asset का balance is 9 lakh into 25% का depreciation. If you provide, you will get 75%. Into 75% if I get, the closing balance which I will be getting in my books of accounts is how much, sir? 6,75,000. Please check. Please check the balance sheet. How much? 6,75,000, but they have got some different figure. Okay, what have happened? What is the depreciation rate? 25% per annum on the revised value of the fixed asset. First of all, what is the revised value of the fixed asset? Okay, see, 11 lakh 80,000 minus 1 lakh goodwill. If you do, you will be getting 10 lakh 80,000. So out of this 180,000 to written off into 25%, if you do, the depreciation which I will be getting is 225,000. Acha, fine. Guys, here only 6 months are done now. So take 50% of the depreciation. Into 50% if I take the depreciation, okay, 1 second guys. Sir, take only 50% return on value. So 9 lakh into 75% into 50% if you do, oh, sorry, 1 second guys, this is wrong. See, sir, 9 lakh into 25% is the depreciation, but 50% only we have to take. So 9 lakh into 25% into 50% if I do, the depreciation which I will be getting is 1,12,500. Okay, fine sir, 1,12,500. Fine. So this 1,12,500 will be the depreciation, and if you deduct, I will be getting 787,500 balance sheet ka value. 787,500 to balance sheet ka value, it is totally fine. Now comes the next part, guys. They are saying the half yearly working resulted in an increase of sundry debtors by 80,000. Debtors ka balance got increased by 80,000. Sir, first of all, can you confirm and tell me what is debtor ka value? Debtor ka value to 1,50,000 into, if you remember, 5% ka provision I have already added. If I observe, 5% ka provision I have added now. So please, if I less down that, if I deduct that 5% ka amount, and they are saying, sir, 80,000 though your value is increased, which means plus 80,000 if I make, I will be getting 222,500. 222,500 I will get. Okay, so I think they have given 222,500, which is correct only. Okay, fine sir. Now if you observe next part, guys, stock ka value they have increased by 70,000. Sir, stock ka value how much they have increased? They have increased the stock ka value by 70,000, which means, sir, whatever the stock which is there now, first of all, my books may the stock is 2,75,000, but in the question they have mentioned that stock of 75,000 is reduced. So 275,000 minus 75,000 if I do, plus they are saying stock ka value has increased by 70,000, which means 2,70,000 will be the value which I will be recording in the assets cutting. 2,70,000 I think it is fine. ठीक है सर. लास्ट में if you observe, लास्ट में where is it? हाँ, half yearly working result. Okay, cash also should be increased by 50,000. Sir, cash का balance to how much? First of all, 65,000, plus I have to increase the same by 50,000, which means it will come to 1,15,000. ठीक है सर. Yes sir, 1,15,000 तो है. See, this balance I have checked, this also I have checked, this also I have checked, even PP also we have checked if you observe. Fine sir. Sir, now what have happened is, come to liability side, if you observe this 12% unsecured debenture, because of the entry I will be getting 3,22,000. Arey baba, this to entry we have already passed na, 12% unsecured debentures करें. Now equity share capital में 138,000 will be added. 138,000 will be added, but not only that, guys. But not only that, if you observe the note, What they are saying is that it has also reduced now. It has also reduced it to how many shares, sir? 50 each. 50 each share, so it have reduced it now. So now what they are saying is, sir, now what they are saying is, see, whatever the earlier pay equity, what is there, sir, earlier equity balance, so how much? 850,000, but it is reduced to 50% paid up only, which means it have become only 425,000 plus I have issued 138,000 worth of capital, which means it should come to 563,000 guys. Everything is 50 paid up. Sorry, where is it? Everything is 50 paid up. So 563,000 by 50 if I do, I will be getting the number of equity shares which are nothing but 11,260 equity shares. Sir, if you observe the other equity ka value, sir, first of all, in the question itself, they have said that securities premium is 20,000, general reserve is 60,000, and they have also said that, sir, net profit also they have given, it is 1 lakh rupees. This 1 lakh also will be added to the PL account now. Okay, sir, this 1 lakh also will be added to the PL account. Sir, next if you observe, this 1 lakh balance also will be added to the capital reserve pay. Finally, if you remember the last entry, 22,500 also will be transferred to capital reserve, which means it will be increased. So now, if you observe the reserves ka balance, 22,500 capital reserve, general reserve also, profit and loss account also. So total, if you add 20 plus 22,500 plus 60,000 plus 1 lakh, if I do, I will be getting 2,02,500. I will be getting how much, sir? 2,02,500. I hope you guys are understanding. Okay, fine, sir. Now, I think everything is matched. Yes, sir. And they are just asking you. Basically, they have asked you only to show the journal, but I have only gone ahead and asked you, and I have also given you the balance sheet also as on this date. I hope you guys have understood this part. Okay, fine, sir. So, guys, in this question, though, you have to do one catch. Sir, what is that catch? See, if you observe, they have not given the complete data in the question. See, this is not the complete information. They are only saying made a net profit of 1 lakh after writing off depreciation at 25%, blah blah blah. Data are increased by 80, stock is increased by 50. If you, okay, let me write all the increased amounts. Sir, see, 80,000 is increased, 70,000 is increased, and 50,000 is increased. Sir, if you want me to write credits, so sir, 1 lakh profit I got, depreciation, which means I got reduced. ठीक है, asset का value got decreased. Sir, how much it is reduced actually? It is 112,500. ठीक है, 112,500. Sir, if I add all the debits, my balance is 2 lakh, and if I add the credits, my balance is 2,12,500. So if you observe, sir, total credits are 2,12,500 and total debits, so it is only 2 lakh rupees, which means some adjustment have to be done for that 12,500. This is not complete. So that adjustment that adjustment should be done somewhere. Sir, in the question though where you have done is that adjustment though I have taken it as a what should I say, sir? If you observe here, non-current liabilities may current liabilities. If you observe, sir, how much is the current liabilities which they have given in the balance sheet? They have given only 3,80,000. They have given only how much, sir? 3,80,000. But I have to deduct the 12,500. Then I will be getting it as 367,500. Some adjustment should be there. In somewhere we have to do, sir. Where we have to do? See, PPE check. Done. Investments also they have given clearly. Stock also they have given. Returns also they have given. Balance also they have given. Reserves also we have done. Preference share capital eliminated. Equity share capital details also they have given. So what is the balancing figure? Creditors is the balancing figure. So that's why I have taken the balancing figure in this creditor account. Okay. Fine, sir. Now, guys, another question. See, this is very important question. In our study map, they have only asked to show you the journal till here, but trust me, if I am an examiner, I will also ask you to pass the balance sheet also, to prepare the balance sheet also as on this date. And this question may be straight away asked for 14 mark question, guys. internal reconstruction में if they want to change the trend a little bit, they can ask this question as a 14 marker. Be very careful with this question. Last day revision also you have to check this hope limited का question. Hopeful limited का question, the only question in study manual which is brilliant question in this chapter. ठीक है, fine sir. Now comes the next question. Let us quickly go through the question. ठीक है, so they have given the balance sheet of Saraswati Limited. If you check other equity का debit balance they have given. Sir, if it is negative, it means it is a debit balance of PL account. ठीक है, short term provision is there, non current assets, property, plant, non current investment. ठीक है, fine sir. Now quickly check the question. All the existing equity shares are reduced to 40 each. Sir, currently what is the value of the shares? 100 each is the value. So they are saying 1 lakh equity shares will be reduced to 40 rupees, which means equity share capital account 100 rupees paid up will be debited. Equity share capital account 100 rupees paid up will be debited, and now they are reduced to 40 each. So 2 equity share capital में 40 each I will be crediting. Sir, 1 lakh into 40, 1 lakh into 40, if I do 40 lakh will be credited to equity share capital and the balance will be credited to capital reduction account. I hope you are getting. Sir, 100 rupees का existing equity shares will be cancelled and credit I will be giving to new equity shares of 40 each face value, and the balance I will be giving to capital reduction account. This two should come here. ठीक है, fine. 60,000 will be coming to the capital reduction का account. ठीक है sir. Next question. All the preference shares are also reduced to 60 each. If you check the question, sir, preference shares of 50,000 shares are there, 100 each. Sir, now they are saying it is reduced to 60 each, which means 40 is sacrificed. So, sir, which means whatever the earlier preference share capital are there, 12% PSC wala 100 each will be cancelled, and new set of preference shares, for example 60 each will be issued. I remember they are just converted, but I have passing the entry for that, and the 60 rupees, which means 50,000 into 60 will be my new preference share capital. 30, and the balance 20 will be transferred to capital reduction account, and the balance 20 will be transferred to capital reduction account. ठीक है sir. Next, the rate of interest on debentures is increased to 12%. Currently what is the rate of debenture? 10% is the rate of coupon का interest coupon. They have increased to 12%, which means 10% debenture should be cancelled, so it will be debited. Credit I have to give to 12% debentures. They are saying the debenture holders surrender their debenture of 100 each and exchange the same for fresh debenture of 70 each. Which means now how many shares are there? 40,000 debentures are there. They have surrendered 100 and they have agreed to take only 70. Which means 40,000 into 70 will be the new debentures ka value, which means 28 lakh should be credited. 12% debentures, 28 lakh will be credited. Sir, but debit though you have given for 40 lakh, so balance will be transferred to capital reduction account at 12. ठीक है, 40 will be debited, 28 to credit because of new debentures, and the balance amount will be transferred to capital reduction account. Guys, 2 should come here, here also 2 should come here. I hope you are getting. ठीक है sir. Next thing guys. Sir, one of the creditor of the company to whom the company owes 20 lakh rupees decides to forego 40% of his claim, and he is allotted 30,000 equity shares of 40 each in full satisfaction of his claim. Sir, one creditor is there. One creditor to the company have to give how much, sir? The company have to give 20 lakh rupees. But he decides to forego 40% of his claim. Sir, if you calculate 40%, the balance which I will be getting is 8 lakh rupees. Sir, what is the meaning of this 8 lakh? This 8 lakh to creditor is saying, okay, don't pay to me. Sir, if the creditor is asking me not to pay, that will become my capital reduction ka profit na. So, out of this 20 lakh, 8 lakh though will be transferred to capital reduction account, but first of all, creditor balance will be debited. Since that is settled, I will debit the balance, creditor ka account, 20 lakh will be debited. To credit, I will be giving 8 lakh will be transferred to capital reduction, and balance to hai na, balance to it will be settled by issuing equity shares. So, how many equity shares? 30,000 equity shares of 40 each will be issued. 30,000 equity shares of 40 each will be, what should I say, issued. Sir, currently the face value is also 40, so no premium will be coming. I hope you are understanding. ठीक है sir, if you check the entry then you will understand. Trade payables 20 lakh to equity share capital, 12 lakh to capital reduction 8 lakh. Guys, आराम से you can check this question. Very basic सा question. ठीक है, fine. Next, they are saying uh, PPE are to be written down by 30%. PPE to be written down by 30%. So first of all, what is the value of PPE? PPE का value तो 10 lakh. If it is written down by 30%, which means it should be reduced by 30,000. PPE reduced, so it will be credited. So to PPE 3 lakh rupees. Sir, debit I have to give to capital reduction account. So cap reduction account deduct to PPE 30%. ठीक है, to PPE how much, sir? 1 second, guys. What have happened here? Okay, they have passed the combined entry. It is 30%. So what is the value of PPE, by the way? Again, there is a little bit mismatch, guys, in the numbers. ठीक है सर, दिस नॉन करंट एसेट्स में पीपीई का वैल्यू तो 125 0000, ठीक है. नॉन करंट इन्वेस्टमेंट का वैल्यू तो 10 लाख. करंट एसेट्स का वैल्यू तो 1 करोड़. If you take the total, it will come to 235,00,000. So 125,00,000 का 30%. If you do, I will get 37,50,000. This is the value of the PPE to be reduced. ठीक है, fine sir. Current assets are to be revalued at 45 lakh. Sir, current assets का value तो if you observe it is 100 lakh. It should be revalued, which means reduction will be done to 55. 55 will be eliminated. Now it will become 45 lakh. Sir, how much, sir? Now it will become 45 lakh. Next one, sir. The taxation liability of the company is settled at 1,50,000. Sir, first of all, they are saying the taxation liability of the company is settled at how much, sir? 150,000. If you check, provision for tax, it is already given in the books of 1 lakh rupees only. Sir, provision for tax for how much, sir? Arey Baba, they are saying, sir, provision for tax for 1 lakh is enough. But here they have said 150 you have to settle. Oh, so balance 50,000 is there now. Normally it should be debited to PL account, but now they are saying, okay, use the capital reduction. Use the capital reduction because for this the provision is not made now. So now use the what should I say, capital reserve का balance. ठीक है, fine. Investments are to be written down to their market value, which is 9,50,000. Sir, what is my investment ka value? Investment ka value is 10 lakh, and they are asking me to write off this value to 950,000, which means 50,000 will be credited asset ka value. And what will be debited? Sir, obviously capital reduction account will be debited. It is decided to write off the debit balance of the profit and loss account in full. Sir, whatever the debit balance of P&L account, I think they have given some 6 lakh or something. Capital reduction ka balance you have to use also to debit cancel this amount. Sir, even if they have not given this word, even if they have not given this last point, still we will be doing that part. Still we will be doing that part. They have passed one combined entry for all the items. It is totally fine. You can pass like this also. Sir, whatever the ultimate closing balance is there now, that ultimate closing balance so will be transferred. That ultimate closing balance so will be transferred to PL account. Sorry, capital reserve. That ultimate balance will be transferred to capital reserve. ठीक है sir, ठीक है sir, ठीक है sir. We have understood the point. Next question. Sir, we are having another very brilliant question, which is Haldi Tulsi Limited. I think this is an exam question. This is an exam question, so let us focus complete clarity. Let us focus very completely. Okay, complete clarity is required, guys. Complete focus. Fine. Equity share cap 6% cumulative preference share. P&L account and debit balance they have given 10% first debentures, 10% second debentures. Oh. Debenture ka interest outstanding, guys. If you observe, this kind of a similar question is there in my CA Inter. I have remembered this question by seeing these words, first debentures and second debentures. ठीक है, fine. Let us read further. Trade creditors also they have given, and plant and machinery also they have given. I definitely know this question because damn sure I remember this in my CA Inter. ठीक है, so check plant and machinery का value also they have given, trade creditors का value also they have given. So first one, all the equity shares be converted into the same number of equity shares of 5 each, but 2.5 only paid up. They are changing the paid up value, guys. They are changing the paid up value. Sir, currently how many number of equity shares I am having? Try to understand. Sir, currently I am having 500 lakh is the total capital. Each share का value तो 10 rupees, which means can I say that 50 lakh equity shares are there? ठीक है sir. Sir, now what they are saying is this 50 lakh shares, so 50 lakh shares are there. Same number of shares will be maintained, but it will be reduced to 5 each. It will be reduced to how much, sir? It will be reduced to 5 each. And what about this? Are Baba, out of this also only 2.5 will be the paid up value. Try to understand. Sir, earlier the face value is 10 na, but now it is only 5 each. Which means that 5 rupees ka sacrifice to already they have made. That 5 rupees ka sacrifice to already they have made. So that 50 lakh into 5 should be definitely sent to capital reduction reserve. That is fine. Sorry, capital reduction account. Now, sir, out of this also they are only asking me to treat only this 2.5 as a paid up. Oh. Only they are asking me to treat this 2.5 only as a paid up, which means they are asking me to do 50 into 2.5, which means this 125 is only my equity share capital ka paid up value. Let me explain with the help of a journal entry, then only you will understand this part, guys. सर इक्विटी शेयर कैपिटल का बैलेंस जो है ना, इक्विटी शेयर कैपिटल का बैलेंस तो फर्स्ट ऑफ ऑल equity share capital का balance, so first of all 500 should be cancelled because sir earlier तो my paid up value is 10, I am having 50 lakh equity shares. Sir, now it is reduced to 5, which means your share capital should be reduced by 50 into 5, which means 500. 50 into 10, which is 500, so should be cancelled, guys. Now what have happened is, now equity share capital, so equity share capital account में if you observe, sir 50 rupees का shares, sorry 50 lakh shares into, now I am only having 5 each, 5 only will be my paid up, 5 only will be my face value, but out of that completely it is not paid up. Only 2.5 is only paid up now, so this 2.5 value only will be transferred to your paid up capital account. Sir, what about the balancing figure 375 lakh? This 375 lakh will be transferred to capital reduction reserve. Sir, how you are saying 250? Arey Baba, earlier you have calculated this now. Now what have happened is, sir, see if you observe, what in the question they are saying is, sir, out of this 50 lakh, though they are not giving me this 5 as fully paid. No, they are only giving 2.5 paid. Oh, which means balance 2.5 paid is there na. That is also you have sacrificed. So if you take this 50 into 2.5, you will be getting 125. You will be getting 125. So the total will be 250 plus 125, which means 375 will be treated as a sacrifice. So 375 will be credited to reconstruction account or whatever it is. And credit me, this is the most important. You have to write only 125 lakh. You have to write only 125 lakh. Sir, here you have used some different account because they are asking us to prepare the reconstruction account. They are asking me to prepare the reconstruction account. Okay, sir, don't worry, sir. Fine, easy question. First point done. Quickly check the second point. Important, so check this second adjustment. Very important. So first, so the preference shares are converted from 6% to 15%. Oh, they are saying, sir, current preference shares, if you observe, they are 6%. Now they are saying that you are converted to 15%. But they are saying, but revalued in a manner in which the total return on them remains unaffected. Oh, sir, currently my preference share capital is 100 lakh. 6% is the preference dividend, which means, sir, currently what is the return which you are getting? Sir, currently the return which I am getting is 100 into 6%. Sir, 100 into 6% if I do, I will be getting 6 lakh rupees. Sir, now what they are saying is, this 6 lakh though, dividend have been changed to 15%. Sir, if the return have changed to 15%, they are saying total return will be remaining same na. So, sir, what will be my new value of preference share capital provided on that if I calculate the 15%, I should get this 6. Try to understand what I am trying to say. Sir, something is there, sir, new preference share capital ka value. If I multiply this preference share capital into 15%, I should get this 6. Then only I can say that I will be getting the same rate of return as per the earlier shares. Arey Baba, read this once again. The preference shares are converted from 6% to 15%. Sir, earlier it is 6, but now it is 15. Oh, to some share capital, they are saying in which the total return will remain same, na? Sir, can you tell me the preference share capital? Very, very simple. If you do 6 by 15%, you will aram se get 40. So 40 lakh will be the new preference share capital. 40 lakh will be the new preference share capital. Sir, if my new preference share capital to is 40 lakh, into 15% if I do, I will get 6. Earlier also I am getting 6, which means my total return will be same. I hope you guys have understood this point. ठीक है सर. Sir, what is the total figure? Total figure तो 40 lakh. Total figure तो 40 lakh. Again they are saying, okay, ठीक है, this is fine. Preference share capital का point is done. Preference share capital का point is done, sir. So what will be the entry which you will be passing? Guys, whatever the preference share capital का amount is there na, this will be debited, guys. This will be cancelled. So 6% cumulative preference shares of 10 each will be cancelled, and credit I will be giving to 15% preference share capital 40 lakh. Sir, what about balancing figure? Balancing figure तो reconstruction account पे जाएगा ना. ठीक है सर. So if you check the entry, 6% preference share capital account, 100 will be debited to 14% PSC तो 40. Balancing figure तो reconstruction account पे जाएगा. Balancing figure तो reconstruction account तो जाएगा. Reconstruction account पे जाएगा. I hope you have understood this point. Brilliant point. This is little bit trickier point, so you have to compulsory work this. ठीक है sir, we have understood the concept, sir. Quickly come to the next part. Sir, 4 equity shares of 5 rupees each, rupees 2.5 paid up to be issued for 100 each of arrears of preference dividends. Sir, first of all, where they have given this preference dividend ka point? Sir, where they have given this preference dividend ka point? Arey Baba, if you observe below the balance sheet, they are saying, sir, dividend on preference shares are in arrears for 3 years. Oh, sir, first of all, can you calculate and tell me what is my yearly preference dividend? Sir, 100 lakh into 6% I will be doing. I will be getting 6 lakh. Oh, so 6 into 3, which means 18 lakh is the total arrears of preference dividend which is due. But they are saying, sir, for every 100 rupees, they will be giving you 4 equity shares. Oh. For every 100 rupees, they are saying 4 equity shares, so they will be giving you. Sir, if my due is 18 lakh, how many shares I have to give? For every 100, they are saying 4 equity shares will be issued. If I calculate 18 lakh divided by 100 into 4, 72,000 shares will be issued. Sir, how many shares will be issued? 72,000 shares. Sir, they are saying of 5 each only, but only 2.5 paid up only will be given. Na? Sir, 72,000 into 2.5 if you do, only 1,80,000 ka balance will be transferred to equity share capital. Sir, what about balance? Gone, Baba, gone to reconstruction account. Sir, check this part. Oh, where is that? Where is that? I think it is here. Try to understand. Sir, equity share capital may, if you observe these many shares, so I want 18 lakh divided by 100 into 4 equity shares. If you do, you will be getting this amount now into 2.5. So 1.8 will be the amount which will be credited to equity share capital. Sir, what about the debit? Debit, so please go to reconstruction account. Debit will be given to reconstruction account. I hope this point is pretty clear to you. Debit will be given to reconstruction and credit will be given to equity share capital, which means 1.8 lakh will be credited, guys. 1.8 lakh will be credited. If you observe this, this is not booked in your accounts. Since this is not booked, I am not cancelling this amount. But see, this is just like a contingent liability, guys. This is just like a contingent liability. They have just disclosed. It is not presented in the final accounts. It is not presented in the financial statements. Therefore, the treatment will be, it will be adjusted against capital reduction account. Sirs, the name of other name of the capital reduction account is called as reconstruction account. I hope this point is also pretty clear. Okay, sir. Now, guys, two brilliant points are there. So I want complete clarity. I want complete focus on these 2 points. So first of all, in the question they have used this word 10% first debentures and second debentures. Sir, what is this first debenture and second debenture? Guys, you can just understand like this. Sir, at the time of liquidation, these first debentures will be given a preference over these second debentures. Okay? I think that is their intention of what they are trying to say. They are trying to say, sir, these first debentures are there. See, here also coupon is 10, here also coupon is 10. But the thing is, first debentures, second debentures. Okay, these may be given a little preference. Guys, try to understand. Sir, if I add these two amounts, I got 160. If I got these two amounts, I will be getting 160. Sir, debenture interest outstanding, if I calculate, I have got 16. Debenture interest outstanding, if I calculate, I have got 16. Sir, total interest of 160. Sir, if I observe, there is some connection between these two. Sir, here the total is 160. Okay, sir. But for both, interest is only 10%. So if I do 160 into 10%, I will getting 16, which is exactly matching here, which means, sir, debentures ka interest have been unpaid from 1 year. Oh, debenture interest is unpaid from the past 1 year. That please understand. Okay, sir. Now comes the brilliant point. So let us try to understand. C point. Complete details are there only in this C point. Guys, this C point may number of adjustments are there. See, even if you observe this B point also, two adjustments we have did brilliant adjustments. This question also, there are high chances that they are going to copy paste this kind of a question. Okay, so don't ignore this question, guys. Don't ignore this question at all. Super duper bumper important. Okay, sir. Third adjustment, even more important. See, Mr. A is holding 10% first debentures for 40 lakh rupees and 10% second debentures for 60 lakh rupees. Try to understand. Sir, out of this 60 lakh rupees, Mr. A is holding 40 lakh rupee ka debentures. And out of this second debentures also, Mr. A is holding 60 lakh ka debentures. Try to understand. He is also a creditor of 10 lakh rupees. Sir, see, out of this first debentures, A to 40 lakh is there. Sir, out of this 100 debentures to A to 60 lakh is there. And even in this creditors also, if you observe, sir, A ka value to 10. A ka value to 10. Now try to understand, sir, what they are trying to say is, Mr. A is to cancel 60 lakh of his total debt. Total debt में 60 lakh तो he want to cancel. Sir, since he want to cancel 60 lakhs, fix in your mind, sir, this 60 lakh is the benefit which I am getting. This 60 lakh is the benefit which I am getting. So this 60 lakh to anyways will be transferred to capital reduction account. That please fix in your mind. This 60 lakh to anyways it will be transferred to which account, sir? Capital reduction ka account, guys. And they are saying, Mr. A, please pay 10 lakhs. Mr. A, please pay 10 lakhs. And balance amount ke liye they will be getting 12% of the total amount. For balance amount, they are saying you will be receiving 12% debentures for the balance amount. Guys, try to understand. Sir, Mr. A is a person. I am Mr. A. I have 40 lakh of first debentures, 60 lakh of second debentures, and 10 lakh of creditor also. Guys, try to understand. Which means, sir, this first debentures may 40 lakh will be cancelled. Okay, first it will be debited. Second debentures means 60 lakh will be debited. Sir, creditor ka 10 lakh also will be debited. Creditor ka 10 lakh also will be debited. First let us understand. See, sir, 10% first debenture 40 will be debited, 10% second debenture 60 will be debited, trade creditor also 10 will be debited. Now you have to understand one thing. Sir, try to understand. Sir, Mr. A is the person who is holding 40 here, 60 here, which means 100 in total. Sir, if he is a first debenture and second debenture ka holder, whatever the debenture interest outstanding which is there, that also will be related to Mr. A only na. So out of this 16, 10 should be related to Mr. A only, because out of the total debt to 160, first debenture ka 40 and second debenture ka 60, guys, both whatever it is total is 10% only. Which means out of these two total amounts, 100 will belong to Mr. A. If 100 belongs to Mr. A, if 100 belongs to Mr. A, 16 into 100 by 160 if I do, this should be the interest which is related to Mr. A. Because they have used the word total debt here. Okay, so this interest outstanding also out of 16, 10 will be debited to, 10 will be charged to which person, sir? 10 will be charged to Mr. A. I hope you guys have understanding, which means this also should be debited. Sir, but the company is asking Mr. A only to pay 10 lakh rupees, which means we will be receiving 10 lakh rupees. So bank will be debited again. Sir, bank will be debited again, debenture interest outstanding. So, sir, 40 of first debenture, 60 of second debenture into 10% if you do, you will be getting 10. So, reconstruction pay have passed 60. Balancing figure though will be settled by issuing 12% debentures is what they have said. Okay, sir. So, balancing figure though it will be issued, balancing figure though it will be settled by issuing 12% debentures is what they are trying to say. I hope you guys have understood. Again read this. Sir, A is a person who is having 10% first debentures of 40, so please cancel. 10% second debentures of 60, please cancel. Trade rate are 10 also cancel. Debenture interest, this is important. 40 plus 60 to 10% of him only na. Sir, not only this, he also have to bring me 10 lakh rupees. Now he accepted to forego 60 and the balance with 12% debentures, so he will be receiving at 12% debentures. Guys, understand this entry. If you understand this second entry is very easy. This is the core for this question. This entry is the core for this type of a question. Okay, sir? Yes, sir. We have understood this core ka journal entry. Now, check the B point. Check here, guys. Sir, Mr. B holds the remaining 10% first debentures. Sir, first of all, first debentures remaining also and second debentures remaining also is being held by B, which means first debentures and second debentures are there. Those both are only held by A and B. If you observe, so out of this 60, A is having 40 now, which means B is having 20. Here A is having 60, so B is having 40. Now, and they are also saying creditor of 5 lakh. Try to understand, sir. First of all, 10% first debentures, 20 will be transferred. 10% second debentures, 40 will be debited. And creditor 5 lakh also will be debited. Guys, try to understand. Sir, 30 lakh of total debt will be cancelled. So 30 lakh to anyways will be going into reconstruction account only na. Sir, here also they have used the word total debt. So total debt means this interest outstanding may 60 rupees ka debt will be belongs to Mr. B only na. So 16 into 60 by 160 if I do, I will get 6 rupees. That 6 rupees also belongs to B, so it should also be cancelled. I hope you are understanding. Okay, sir. And here in this point, though, Mr. B, there is no need for him to bring any amount. So Mr. B don't need to bring any amount, so it is ignored. Balance amount, though, they are saying 12% debentures for the balance amount. So balancing figure will be 12% debentures. I hope you have understood the point. 20 debit, 40 debit, 6 debit, 5 debit, balancing figure for 12% debentures will be 41. ठीक या नहीं ठीक? ठीक ठीक है, yes sir. Narration also you can check. Being Mr. B's liability identified and settled. So here also I will be writing the same entry. Being Mr. A ka liability identified and settled. Sir, I have passed it combined entry. Will I get marks? Definitely you will get marks. I hope you are understanding this, guys. ठीक है. Sir, one last point is there, and for that, once that last part is done, let us quickly close this question. Trade creditors other than A and B. Other than A and B. Sir, if I check this 165, A is having 10 and B is having 5. So what is the balance? 165 minus 15. If you do, you will get the balance of 150. Out of this 150, they are saying given the option to either accept equity share of 2.5 paid up. Listen this. For the amount due to them or accept only 80% of the amount due in cash. See, two options they have given. Option number one though, take equity shares. Take equity shares of 2.5 paid up. Or option number two though, take cash of only 80%. Cash of 80% of creditor amount only will be paid. They are saying, sir, 40% creditors to accepted equity shares. Sir, what is the meaning of 40% creditors to accepted equity shares? Arey Baba, then the point is, see, sir, out of this 150, 40% have accepted for equity shares. So if I do 150 into 40%, they are trying to say, sir, 60 lakh to equity share capital account pe jayega. So 60 by 2.5, other if I do, I will be getting 24 lakh shares are issued to these debenture holders. Sir, they are saying 40% shares, accepted shares means sir, what about 60%? 60% though, 60% though accepted cash. Sir, how much they will get? Try to understand. 150 into 60%, but they will be paid only 80%. So if you do 150 into 60% into 80%, if you do 72 lakh will be the amount which will be paid. 72 lakh will be the amount which will be paid. If you understand, trade creditors, so 150 will be debited. Bank may only 72 will be going, and to equity share capital may 60 will be done. Sir, how many shares? 24 lakh shares. Sir, what about difference? Difference will be transferred to reconstruction account. Difference will be transferred to reconstruction account. Okay. Yes, I hope this point is pretty clear. I hope this point is pretty clear. Okay. Yes, so guys, strictly speaking, in this question though, last point also if you read, any surplus after writing of the various losses be utilized in writing down the value of the plant and machinery. In this question, they have also given this P&L account debit balance also. So first I will be writing off this and then I will be writing off other assets, because if you remember the notes, I think I have explained you that point wherein they will say that in a following manner you have to write off first the debit balance, fictitious assets, goodwill, and then what the question is saying, please do that. Okay, so whatever those debit balances and all after reconstruction, those should not be there, so those will be eliminated. Okay, sir? Yes, sir, those will be eliminated. Last way they are asking, sir, if any balance is there in the reconstruction account, please utilize that for machinery. That for machinery, which means what the question is asking is, first find out what is the balance which is there in your internal reconstruction account. First set off this business losses and balance amount will be used to write off this 520, write off this plant and machinery. That is what the entry which I have passed. Sir, in the question though, they have asked us to prepare the reconstruction account. But what I have prepared is journal entries, though very very essential in this question, because that is the key. Without journal entries, this question cannot be solved. Now, since I have already passed the journal entries, I think preparing a ledger account will not take that much time. Okay? So ledger account, you please practice, but others I think it is totally fine. Others I think it is totally fine is what I am trying to understand. ठीक है sir. We have exactly understood what you are trying to say. We have exactly understood what you are trying to say. With this, we have completed top super 3 questions as per our institute ka resources. One exam question we have solved, one study mat ka question, and another also previous exam ka question only we have solved. More than sufficient. Please do written practice of those questions. Out of these 3 questions also, I think I am expecting this type of question though they should definitely ask in our exam for 14 mark question. Okay, so I am expecting guys this question should be asked for 14 marks. Okay, fine sir. So with this we have completed internal reconstruction ka chapter. Okay, fine.